to say that the bulls believe there is some unfinished business at higher levels. So, you'll want that level to not get breached at 25,500, 25,700 going by the options data. You'll want this, the recent high as well. That'll be a bit of a resistance mark, which is at around 25,950. On the Nifty Bank, it's going to be quite crucial, and I'll tell you why. Because on a day-to-day basis, the Nifty Bank has been making lower lows. So you'll want this actually to break this lower lows kind of trend. So the Nifty Bank will have to find its form. It's seen a decent pullback from the recent high. So the Nifty is going to be starting off a little bit softish. Various technical indicators, whether there's a short positioning or the PCR indicates that maybe in today we do see a bit of a bounce. So let's see how it goes.
Okay, absolutely. By the way, across Asian screens, it's a bit of a mixed picture. Japan is today shut for a local holiday. The China market has just seen the release of the private sector PMI numbers, which are a little shy of expectations. There's also deceleration in October compared to September. But despite that, there are incremental gains, at least in the Hong Kong markets. Mainland China is a little soft, but Hong Kong, Taiwan holding up, as is Singapore. So not too bad across Asian screens, but like the implied open just told you, for us, it's still probably going to be a bit of a cautious start, 58 points lower at this point in time. Okay, so let's welcome in our first guest on the show. Matt Orton, Chief Market Strategist at Raymond James, is with us. Matt, great to have you in. Thanks for joining in. You follow Indian stocks in the India market very closely. I don't know if you follow cricket, but I can tell you that cricket is dominating markets at this point in terms of mind space. It was a fantastic evening here in India yesterday. But anyway, you tell us, when it comes to earnings and the way these numbers are rolling through, are they looking good or not to you?
Hey, good morning, Surabhi, and congratulations to the Indian women's team. Certainly a great victory over South Africa and even Australia before that, just to get into the final. So very, very exciting. And the market, like you said, is also exciting. I think earnings across the board are coming in fairly strong, in the U.S. in particular. We got through the busiest week of earnings in the U.S. last week, and the results across all of the hyperscalers were pretty good. And I think the most important piece of the earnings picture coming out of it is the fact that the capital expenditures are going to continue. So we should see the entire industrial complex, all of those AI tangential trades continue to work. So I think it supports this notion that AI isn't a bubble that we've talked about before, but it provides a lot of strong momentum, I think, for risk on to continue. And that's both in the US and globally speaking.
Got that, Matt. Good morning. Good to have you here. Between US and China, on Friday, there was a bit of disappointment. Maybe, what we heard from President Trump and China was a bit underwhelming, because I guess a lot of it was advertised very heavily as well, that there will be de-escalation, etc. What do you make of it? Does it meet expectations, or this is a temporary pause in what is a long-running strategic competition?
Yeah, Prashant, I think the fact that expectations were heightened coming into this, I think they just got ahead of themselves, because we should never expect a full trade agreement to actually come out between Trump and Xi. I think a best case market scenario, and my expectations heading into this, was that we'll agree to kick the can further down the road, and we'll come to some sort of settlement on at least a few of the main issues that the market needs. And at the end of the day, the effective tariff rate on China has come down fairly meaningfully. So that should be a win for the market. It provides additional clarity with respect to the direction which tariffs are going, although there can always be some ups and downs based on announcements, but it seems like the direction of travel is lower. And that's good enough for the US markets, and really, I think, global markets, to know that we're not going to have economic calamity or a significant shock to the system persist for any significant amount of time. So I think on the margin, it's a net positive, but we certainly shouldn't expect to have any major breakthroughs in the near future.
All right. Hi, Matt. Good to see you as always. What about the Indian markets? Have you done any kind of churning, any kind of switching? If you could fill us in with anything you've sold or bought in the Indian markets.
Absolutely. So, Nigel, coming into this, I've been optimistic on India, and being selective has been the key to success in this market. So I've lightened up on some positions where we've seen continued weakness. There's no point on holding significantly overweight positions in some of those when other parts are working. So I've lightened up on ICICI Bank, still hold it as a core position, but some of that relative weakness has been shifted into names that are working better that I've owned for a while, like HDFC Bank. So I think that's a very good trade. And Adani Ports is a name I actually added after I was in India last June and met with the management team. And that's a name that's continued to work really well. I expect to see good numbers coming out of this. And I really like the execution that the management team has been doing on really trying to capture bigger wallet share from clients. So that name I've pushed higher. And depending on how results come from M&M this week, if they're strong and there isn't a robust market reaction, I'll continue to add to my overweight position just because that's such a high quality name that gets you exposure to a premium asset with the growing middle class consumer in India. So there's a lot I think that there's to like in India. And hopefully we'll continue to see this trend of higher highs, higher lows continue. And maybe finally we can break out of last year's high to really start to push higher over the long term.
Okay. All right, Matt. Look forward to that, actually. So thank you very much. Great conversation as always. You have a super week, and we'll catch up again soon. Thank you for joining.
Thank you.
All right. Well, with that, let's move on and tell you about the top 10 stocks that we will be covering. Lots and lots of stock-specific action over the weekend. So here are the names that we're looking at. BPCL, Godrej Consumer, Bank of Baroda, Patanjali Foods, RRK Bill, CDSL, Felix Mills, all those on the back of positive news flow. Then there's Urban Company, Tata Chemicals and JK Cement, which could potentially open out on the negative side, and we'll tell you why in just a bit. Welcome back. So like we've been telling you, plenty of news flow over the weekend, lots of earnings as well to go over. The implied open is still suggesting that we'll be probably 50 points lower at the start. 48 thereabouts. So let's now drill it down to individual stocks that you should keep your eye on. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Lots of numbers. So let's start with BPCL. Sonal, morning. How do the numbers look?
Well, the numbers were good this time around, slightly lower than the poll, but refining margins were really strong. So if we look at the numbers, margins came in at 9.3% versus 8.6%. Remember, the poll was 9.9% this time around. Profits were up 5% at 6442 crore rupees. Now look at the GRM number, $10.8 per barrel, which compares with $7.5 per barrel. So refining margins were really strong. However, marketing volumes excluding exports, they fell 2% on a YOY basis. This is when the industry grew 2% this time around. There was a market share loss as well for BPCL of 80 basis points on a YOY basis. But the numbers overall were good, on the back of which Nomura has raised the target price to 470 and they've raised FY26 EBITDA by 17% on account of higher than expected refining margins amid strong outlook for diesel cracks. And Jeffrey says that valuation for BPCL is more favorable versus the peers, and that's why they have raised their EPS estimates by 25 and 23% for the next two fiscals.
Got it. All right. Thanks for that, Sonal. Let's hop across to Mangalam. Mangalam, Godrej Consumer, decent numbers, and they've done some inorganic growth as well. Tell us more.
That's correct. So if you look at the numbers, the street already had an inkling because of the cheat sheet that the company had given. So largely in line set of numbers, revenue at 3825 crores. The street was working with a number of 3850 crores. EBITDA at 733 crores. Our poll threw up a number of 731 crores. So absolutely in line. The net profit on a reported basis was a bit of a miss, 459 versus 493. But that can be explained by an exceptional loss of about 30 crores. So you add that, that becomes in line as well. Domestic volume growth at 3%. The street was working with a number of 1 to 2% as well. Home care business grew by 6% and personal care degrew by 2%, led by disruptions due to GST. The management says that going forward, they believe that margins will only improve. But add to all of that, they've gone ahead and acquired this company called Moustache, which is basically a male grooming D2C company. For over 2 tranches, they will pay about 450 crores. The company did a revenue of almost 80 crores, so scalability of that would be extremely crucial to track. Seeing mild green on Godrej Consumer on account of the acquisition, inline set of numbers and management commentary, which indicates that going forward, things are only on the mend.
All right, Mangalam, thanks very much for that. We'll talk more about Moustache later. That's quite a name, right? I mean, right out there.
Moustache, actually.
No need to wonder. Sorry, what is it called?
Moustache, if I remember that correctly. It's quite a name.
But it's pronounced Moustache. I mean,
yeah, it's a pun on the moustache. I see on the screen only Gaurav is the one that has one.
All right, well, Gaurav, you may want to pick up on the offer Mangalam is making. Bank of Baroda, though, also reported numbers. So run us through the numbers there. Morning.
Yes, when we look at Bank of Baroda, 2 things which actually make the banks stood out well in the results. First is the IT refund and second is credit cost. So when we look at IT refund, company got around 750 crores of IT refund, and that is the reason why when we look at net interest income, that increased almost by 2% on a year-on-year basis. When we come to PPOP, which is pre-provisional operating profit, the support from other income that was missing because treasury yields that declined, and that is the reason why PPOP declined almost by 20% on a year-on-year basis. But another push that came was from the provisions. Now, when we look at provisions on a sequential basis, we are seeing a sharp improvement in provisions because of the international business, and that is the reason why profit that declined just by 8%. It was at a bit higher than the street's expectation. When we look at the net interest margins, now the positive surprise came here because of the IT refunds. Net interest margins, they expanded almost by 5 basis points on a sequential basis. In fact, from here on, they are guiding for stable or some kind of increase in the next quarters for net interest margins. And credit cost, that also declined almost by 26 basis points. Now it stands at around 0.29%. So definitely a positive move was seen there. And as a result, we may see some kind of uptick in this stock today.
Okay, Bank of Baroda, so looking good. Thank you for that, Gaurav. Back to Mangalam then. Mangalam, Patanjali Foods, how did it look?
Well, Patanjali Foods was actually a lot better than what the street was fearing. And this, despite the GST-related disruption. Why do I say that? Because the weakness in edible oil margins were actually offset by strength in FMCG. Quarter on quarter, there was improvement in even edible oil margins, and FMCG results, which include the consolidation of home and personal care business of Patanjali that they had bought earlier. And there was a 141 crore tax credit as well that has boosted the net profit. So 21% revenue growth, near 20% growth in EBITDA, margins stable at around 5.6%, and the net profit coming in at 516 crores, aided by that 141 crore tax credit that has come in. Edible oil, the revenues grew 17%. The EBITDA grew just 2%, but remember, quarter on quarter, there has been an improvement. And FMCG business, which includes the consolidation, saw 30% revenue growth, 51% growth in margins. So the margin accretion playing out for them. I see green on Patanjali.
Thanks a lot for that, Mangalam. Hopping across to Vinny. Vinny, tell us about RR Kabel as well as CDSL.
Hi, both these companies have reported their Q2 FY26 numbers, good numbers coming in from both of them. Now, firstly, talking about RR Kabel, good revenue growth of around 20%, mainly led by the wires and cable segment, which saw very good growth. Volumes over there were up by 16% as well. That was in line or better than what the street was expecting. Margin guidance over there was also good. And that's why when you look at it, even in terms of the profits of the company or the EBITDA margin, that has also seen a good improvement versus last year as well. Profits up 135%, margin at 8% versus 5% as well. Only the FMEG segment, that's where a bit of a subdued performance is what the company saw. But green is what we're expecting here. CDSL also we're expecting green here. Good growth in terms of revenues on a sequential basis. EBITDA margin at 55.7% versus 50.4%. Now, obviously, what's leading to the good growth? It's better than what the BBG estimates were. That's Bloomberg estimates. IPO and corporate actions, that was also up by around 200% since last year. And the income now, IPO income accounts for around 19% of the revenue versus just 8% in Q1 of FY26. Good revenue growth across other segments as well. And that's why green expected here.
Okay, all right. Thanks very much, Vinny, for that. Let's talk about Urban Company now. Mangalam is back with us with that one. Mangalam, morning.
Morning. So it's the first consolidated quarterly performance that the company has reported ever since its listing. There has been a sharp contraction in India margins because they've upfronted some of the investments, and at the same time increased investments in InstaHelp has actually dented their EBITDA further. If you look at the native purifiers and door locks business, there has been a strong growth out there, and the reported revenue in international business has been slightly slower because of the deconsolidation of the Saudi business. So if you adjust for that, there's a 44% growth. So what exactly is the company saying? They will continue to invest in InstaHelp. They expect a consolidated EBITDA losses to continue in the near term, and ex InstaHelp, the EBITDA is actually a positive 10 crore rupees. Revenue reported basis grew 37%. The EBITDA loss increased from about 16 crores to 68 crores. And the net loss increased from about 2 crores to 59 crores. Where the stock goes today depends on what your analysis for the stock is, or rationale for investment is. If you're investing for growth, then growth is maintained. And if you're investing for profitability, then you may have to wait for a little longer. So I see some red in Urban Company because of the mood of the market right now.
All right, Mangalam, thanks for that. Moving to Sonal, tell us about Tata Chemicals as well as Phoenix Mills.
Well, for Tata Chemicals, it was a weak set this time around, Nigel. It was a decline, revenues down 3%, EBITDA down 13%, margins at 13%, but profits saw a bigger dip, 42% on a YY basis. Company said that soda ash prices remain weak across geographies, and in certain instances, it is actually at record lows. Global demand is also expected to be flat in near term, so even the outlook is not so positive. Going with red there. And for Phoenix Mills, on the other hand, it was a good set. They saw revenue growth of 22%, EBITDA growth of 29%, margins expanded 400 basis points, and profits were up 39% as well. So see some green on Phoenix Mills today.
Okay, all right. Thanks a lot for that, Sonal. Well, I'm talking about JK Cement, and the numbers appeared like a bit of a miss, particularly if you look at it in comparison to Jefferies' estimates. So it was a 5% miss on that front. The revenues came in high by close to around 18%, so that was good. And what is encouraging is the consolidated sales volumes as well were up close to around 13%, with grey cement sales up close to around 16%. They're clearly outgrowing the market, which is good. However, on the operating front, the street expected more because, it came in at around 450 crores, or the street wanted a number that was a little bit higher than that at around 470 crores. And if you look at margins, yes, on a year-on-year basis, there's a good expansion. However, on a sequential basis, there is a sharp compression, which the street may not like too much. Power and fuel cost as well did spike up, and that was one of the reasons that the operational cost was a little softer, operational performance a little softer than what the street was working with. Profit number came in higher, but not as much as what the EBITDA number came in higher. The net debt number has moved up because of the big adventurous, capex plan that they're undertaking. So the stock has already corrected close to around 18% from the recent peak, but maybe some bit of red to kickstart trade because it's a marginal miss on the EBITDA front. From cement, let's move on to metals. And the first management on the show is Vedanta. Well, it reported a pretty good set of numbers. The aluminium segment, that's looking extremely good. To help us out with how the last quarter's numbers were and what's the way ahead, we're joined by Ajay Goel, the Group CFO at Vedanta. Hi, Mr. Goel. Good morning. Thanks a lot for joining in. Well, the aluminium business, that's shaping up very, very well, right? Let's focus first on aluminium and the global demand-supply dynamics. How is it playing out, and how do you expect pricing to shape up from here on?
You're right. Across the Vedanta portfolio, and aluminium has come a long way. If you look at the last quarter, aluminium growth in EBITDA is about 35%, and our EBITDA is more than 5,500 crores, which is more than 45% of total profit pool in Vedanta. Looking at the pricing over the last couple of months, the pricing in aluminium is upwards of $2,850 per ton. Globally, aluminum remains a metal in demand. It also remains a substitute for the green metal. We do see in near future the demand for aluminum remains lofty. In that case, pricing will remain elevated. The second lever in terms of profit in aluminum is our cost of production. And over the last couple of years, Vedanta's efforts strategically has reduced cost of production by almost 27% over last 2 years. So we do see that aluminum business in Vedanta portfolio remains our highest profit business over next couple of years.
Well, that's right. That business has scaled pretty well. But just getting back to that point on aluminum pricing, we expect it to hold around current levels. And also, since your alumina plant, the second plant, has got commissioned, how much lower can your cost of production for aluminum reduce by?
Yes. So in terms of the pricing for aluminum, we do see it over the near future. It will be between the range of $2,850 per ton to almost $3,000 per ton. Now, coming to aluminum cost of production, as we know, Vedanta's integration on supply chain in terms of our refinery in Lanjigad is coming live as we speak. In that case, our COP from the current almost $1,850 per ton will go down to almost $1,750 per ton. In that case, our margins will be more than $1,000 per ton.
Okay, all right. Mr. Goel, Vedanta Limited has been doing okay, but the question is what happens at Vedanta Resources? And out there, you'll have deleveraged the books considerably. Now, the question is, will the dividend payout as well reduce? Because otherwise, you'll be paying out dividend primarily for Vedanta Resources. And now, do you think the focus will shift on deleveraging the listed entity, Vedanta Limited?
At Vedanta parent, Vedanta Resources, over the last 3 years, our debt has come down from 9.1 billion to about 4.5. So at VRL, we are at historical lowest debt over 1 decade, and that trend will continue. In Vedanta India, the operating company Vedanta Limited, you may have seen it's an OpCo, and that to a high growth path. Maybe the right metric to look at, in fact, is net debt to EBITDA, which has improved from almost 2x a couple of years ago down to 1.4x. So we do see at VRL debt going from current 4.5 billion to 3 billion. At Vedanta India, our leverage going from 1.4x to 1x. So both VRL and Vedanta India will keep deleveraging in near future, mostly from operating free cash flows.
All right. So Vedanta Resources, Vedanta Limited, both of them, the debt will reduce out there. But the street is very confused. Why would Vedanta bid for JAL? Now, there are very few synergies according to the street. Tell us, give us the rationale. Besides the power assets, the street is a little bit confused on this front.
Right now, the entire process of JAL acquisition is a work in progress. And as you may have seen, we got approval in terms of Competition Commission of India. The COC, the Committee of Creditors, is yet to vote, and that will take some more time. The key reason to acquire Jaiprakash has been our interest in the power business, which is more than 2 gigawatt, including hydropower. The remainder assets remains an opportunity. Maybe let us leave it there for now. We are very confident that Jaiprakash is coming to Vedanta.
Let's focus on the steel asset then. There's been some confusion. Scale up or sell? What is the current plan?
We work on both the path. Our position on our steel business has not changed over the last couple of years. As we look for the right valuation, Vedanta has grown both organically at the same time through acquisitions. We haven't sold assets, but at the right pricing, Vedanta remains open. Look for disposing our steel business. At the same time, we keep investing for growth at steel from current 1.6 million ton per year to 3 million tons. So both growth and potential partnership can coexist, and they will remain coexisted.
Let's focus on the biggest trigger for the stock, the demerger. And the question is Vedanta ready to give a bank guarantee to the Ministry of Petroleum to cool down their concerns with regard to the demerger? Will you do that?
So you may have seen in the last NCLT hearing, the SEBI has approved Vedanta's demerger. And the next date of hearing, in fact, is on the 12th of November. And that hearing we see as conclusive. Vedanta is agreeable to keep the corporate guarantee in case if that's a requirement. But we are very, very confident that a demerger will reach conclusion by end of fiscal, as we have earlier committed.
Okay, all right. Thanks a lot, Mr. Goel. We'll hold you to these numbers, and you're sounding optimistic about the demerger. We'll have to see, how and when it does get cleared. But appreciate you joining in. Well, time to slip into a short break. Up next, we have Dharmesh Kant of Chola Securities. He'll be joining in for some fundamental stock talk. Stay with us.
Welcome back. The countdown to India's most prestigious business awards has begun. The jury of the 21st India Business Leader Awards met in Mumbai to pick the winners. They included the biggest names in corporate India. We caught up with two industry captains, Kumar Mangalam Birla and Sun Pharma founder Dilip Shanghvi, on the sidelines of the event. Shanghvi said he was confident about the outlook for growth in Europe and America. Birla, who also chaired the IBLA jury, said he wants his group companies to be in the top two across sectors and industries.
My own assessment of our industry is that it's a very stable industry because pharmaceutical products are used for treating patients who are not well, and that's a process which gives us much more consistent business. However, globally, internationally, there are changes which are happening, especially because of certain changes in Europe and US. But fortunately, I think pharmaceutical industry has not been affected because there are no tariffs likely to be imposed.
And what do you think is your message for the pharmaceutical industry right now? What are the challenges that, according to you, they're facing? What are the opportunities here? What are the threats?
I see a tremendous opportunity for pharmaceutical industry. India already is the, what you call, pharmaceutical export or pharmacy of the world. So we are largest exporter of generic products. I think what we need to do is catch up on innovation, and that's something which I see significant progress being made.
I think being in the top one or two in the industry that they are in, with return on equity that's specifically each one's target. Largely, that's how we work.
Are you particularly chuffed about some of the forays that you've made, especially in the consumer space? With the GST cuts that have happened, that would boost consumption and the money that people have in their hands. Have you seen that on the ground?
Yeah, I think they had a very good Diwali. I think both paints and as well as retail, jewelry retail. It's our first time with such sort of hardcore consumer brands, and it's good to see them having taken off so well.
How happy are you with what you've done? And obviously, it takes a lot of capital commitment to that as well. So
I think both have gone off to a great start, much above targets and much better than I had expected.
Okay, and we'll continue to get you more voices from that Ibla jury. It's, of course, run up to the actual event, but really illustrious jury deciding on, who the prizes go to. This is the most prestigious award as far as the Indian corporate scene is concerned. Dharmesh Kant is with us, Head of Research at Chola Securities. Dharmesh, great to have you with us here. Good morning. Thanks for your time. So I'll just start. It's an open-ended question. Lots of numbers have come through, and we highlighted some of them with our research team. Any which stands out to you with regards to today and how stocks may move, Dharmesh?
Yeah, good morning, Prashant. Thanks for having me on the show. Yeah, see, numbers have come through and there has been sectoral divide between, there are few sectors which have done pretty well as far as the numbers are concerned, but they are priced to perfection, and there are few sectors where the numbers were good for Q2, but the future trajectory is not looking very encouraging. And then there are few where the numbers are also better and the future outlook is also good. So there, I think the BFSI space, the entire BFSI space, be it NBFC, banks, public or private, they are looking quite encouraging. Defense companies are looking far better. And mid-cap IT companies, which are more into the servicing part, they are looking far better. For example, Newgen Software came out with a good set of numbers. Network Technologies, again, the numbers were strong. And the deal wins were pretty strong. So I think their attraction will continue. In lines with, say, Persistent, Coforge, or Signity, all have reported a good set of numbers. So these are the baskets where I think the attraction will be there. One caveat I would like to highlight right now is, as far as automobiles are concerned, October numbers were great, considering the fact that last October, both Navratri and Diwali fell into the same month. And this time you had only Diwali. But this euphoria is now subsiding. Our dealer checks do suggest now it's business as usual. So November numbers won't be great. So traders who were then into these pockets are advised to take profits. There may be few outliers. I mean, Maruti can still see attraction going forward, but valuations are now sitting on the higher side. So one has to be very selective on what you are picking up right now. But sectorally, I think BFSI, the entire space looks attractive, followed by a few of the mid-cap IT companies and defense companies.
Dharmesh, hi, morning. Good to have you in. So let's talk about new age businesses. They're always very exciting and always stir up a debate, right? I don't know if you had a chance to look at the urban company numbers. Manglam was just telling us that because they're investing more in this Insta help business, there's again some cash burn happening. So profits are again coming under pressure, but the growth is there. Talk to us about that. What do you thought of Swiggy? Swiggy's raising more money. And then if at all, throw in a word on Lenskart as well.
Yeah, good morning, Survi. I mean, again, like quick commerce, InstaHelp is getting into play. And this is more of a 30-minute kind of a house help business which should be there. Normally, these are like ad hoc kind of an business opportunity where your regular help is not coming, you order for them. So again, cash burn is there. The thumb rule which goes by for a company which has been into a new age business for say 3-4 years, it's like that your revenue growth should be higher than your cash burn kind of a growth. So, but in this case, right now, the operating profit degrowth it has gone to around 20%, if I am not wrong. And management did cite that these losses are going to continue. So that does pose a question mark, and you have a competition also coming up in that space. Though it has all the services, say house help, electric, plumbing, beauty, therapy, and personal care for, especially for Nigel. So these services are there, but to my sense, again, they are expensive. Swiggy, the cash burn was, again, a surprise why they need to do that with so much, cash already lying on the balance sheet. That does specify one thing very clear, that competition is very high, and 1-2 years it will take before they can come to meaningful profitability. Lenskart, we have a clear avoid rating. I mean, it's exorbitantly priced, and if I may quote Mr. Shankar Sharma's article, so he was right. You price it so high that even if it falls, it looks, cheaper. So, and it's a, well-discovered business. They are into every nook and corner of the country. There is no domestic penetration where they can have an higher yield. And the growth rate has been tapering on the revenue count from 43% in FY24 to 23. And it will be 15-16%. International opportunity can be there, but the margins again will be under pressure. So, new age businesses, you have to be very, very careful.
Yeah, exorbitantly priced. That's the term that you've used. And yeah, absolutely. Shankar is really in the eye of that Lenskart storm, right, with that article. By the way, Dharmesh, what did you say? Which service that Nigel perhaps will make use of? I missed that.
Beauty care therapy and massage therapy, which is, he likes them.
Tell us more.
Nigel, that's the secret behind the radiance. Now we know.
I mean, I've never used the service actually for a massage, but I will. I have always thought about it. Yeah, I mean,
the glow.
Yeah, because at times I ask the wife, that instead of me going out, if we could arrange, but I think most of the time it's booked out. But I'll take that recommendation, Dharmesh, and maybe but yeah, that you need to ease out things. All right, Dharmesh, what else? If you could tell us about a couple of these names that we were discussing earlier. Vedanta came out with its set of numbers. The stock pullback, there was a one-off in those numbers actually. The street is sounding optimistic about prospects, on the stock. The problem is demerger, will it happen or not? And the promoter is, a tricky entity. So what's your view?
Yeah, definitely. Nigel, you summed up that promoter is a tricky entity, and financial engineering, re-engineering, they are, prone to that. Time and again, they keep on doing that. Otherwise, business, if you look at the businesses sounding great, the entire global environment is sounding great for the businesses they are into. And on the revenue count and operating profit level, the numbers were excellent because of one-off write-off, the PAT went down. But again, one is the demerger case, which is pending, and let's see how it shapes up. And secondly, the assets they are trying to acquire, which is not related to their core business. So all the business verticals are not performing that well for Vedanta. At the same time, when silver prices were shooting up, they did not produce more because of lead being produced less. So there are challenges out there. Having said all of this, if you just look on the pure valuation multiples, it's pretty attractive compared to any of its peer, be it Hindalco or others in the basket. If you look at valuations are comfortable. The only thing they have to address is that corporate outlook strategy stability out there. At the same time, what they are doing with their cash flows, either they are paying dividend or you want to repay the debt and make company more secure. To my mind, the latter should be more beneficial for the company in the long term. So people who can give a benefit of doubt and things that things are going to fall into place for Vedanta, then it's a screaming buy. But if you are a skeptic, then wait for this clarity to come by and then venture into Vedanta.
Okay, all right. We'll leave it there. For now, stay with us, Dharmesh. What we'll do is take a quick commercial break here, get you some technical trading ideas as well. So Siddharth Rai and Siddharth Rai Mangla and Mitesh Thakkar are with us today to run you through specific trades on the indices and stocks as well. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. As promised, we have Mitesh Thakkar as well as Siddharth Rai who join us on the show. Hi, good morning, gentlemen. We are pumped up in the studio after last night's win. The girls in blue are doing us very, very proud. But the markets have been a little under the weather just for the last couple of trading sessions. Mitesh, you go first. The gift Nifty suggesting we pull back 50, 60 points. Buy the dip or wait buy?
Morning. We've been advocating that there could be a pullback because the market was struggling around the previous highs, which is around 26, 150 to about 26, 220. Though we never got to 26, 150, but we had, just kind of touched that level. Having said that, we had first indicated a possibility of decline to 25,800 and in a bad case scenario, even 25,600. Looks like, we might actually go down to 25,600, but till we break below that, I would be pretty okay, and believe that the broader trend is on the upside. So having said that, I think, today's gap up opening, which is around 50 points, may not do much. But in case during the day, if there's some choppiness and if you get a decline on an intraday basis with Nifty closer to 25,600, that is when I would want to explore long positions on the index and even stocks aggressively.
Gentlemen, morning. Siddharth, what about you? How would you look at indices first?
Hi, Prashant. Good morning. Thanks for having me. See, Prashant, if we talk about Nifty, there was a very major change which took place in Nifty on Friday's session. See, there were some hopes till Friday that eventually, after all this volatility, there will be a recovery towards 26,000, 26,100, those levels. But since we saw a very big breakdown below 25,800 and, adding fuel to that fire was a closing below 25,800, which is why I think now it will be much better to just stay with the trend, and the trend is negative. So as long as we are below 25,800 now, we should look at this fall extending towards those big levels 25,600 and 25,550. Those are the next important supports for Nifty. So as long as we are below 25,800, our view should now be bearish in Nifty.
Okay, all right, got that point, gentlemen. Morning to both of you. Let's also, get down to stocks. Mitesh, let's hear your list first.
Good morning, Sylvie. I have a mix of buys and sell calls. On the buying side is BEL, which bounced back from a support level on Friday. So keep a stop at 419. Look for targets of 440 here. Aurobindo Pharma is a buy as well, with a stop below 1190. For targets of 1175 to 1180, and on the selling side is Eternal. The key short-term support of 320 was broken, so sell in the range of 316 to 320 with a stop at 326 and a target of 305. And ICICI Bank is a sell with a stop at 1363 for targets of 1310.
Okay, got that, Mitesh. Siddharth, what about you? Which stocks are you working with today?
Hi, Sulbi. Good morning. See, just like Mitesh, I have both longs and shorts on my radar. Just because I said the market does not look very strong as long as we are below 25,800. So it's much better to keep a balanced approach right now. So two stocks are there. The first one we have to buy. The second one we have to short. The first one, the one we have to buy is IDFC First Bank. See, Sulbi, consistently we have seen this stock making new highs for the past 2 weeks, but a breakout above 80, which came in Friday's session, was very big. So now there is a fresh momentum building up, which can take the stock towards those 90 levels. So IDFC First Bank can be bought. Right now, the spot is trading around 81.8-ish. So it can be bought. The stop loss will be at 78.5. And our targets being, the first target is 89. The second target being 92. The second stock is Fortis Healthcare. And this one we have to short because for the past probably 6 months, the stock was in a very strong uptrend. But just in the last 7-8 sessions, there have been signals of a strong turnaround. It has fallen quite a bit in the past 7-8 sessions. And even now, I think just if the ticker goes just below 1,000 for a while, it will be a very sharp correction, which can extend towards 960 levels. So Fortis Healthcare can be short. We can go short on this stock. Right now, the November futures are trading around 1027, 1026. You can short this one. Our stop loss will be 1048, and our targets being the first target around 980, second target being around 965.
Okay, all right. Siddharth and Mitesh, thank you very much for joining us for now. Come back to you in about 12, 13 minutes for 9-10 calls. Appreciate it. We'll take a quick commercial break here. The pre-open session comes up in just a bit. We'll also have Shankar Banerjee of Dr. Lal Path Labs. They reported numbers. So a conversation about Q2, but of course H2 as well. Stay tuned.
Welcome back. 15 minutes to go before the trading action for the day and the week kicks off. We are still going through plenty of numbers, and Dr. Lal Path Labs is the next company on our radar. It reported an inline set of numbers for the second quarter. Revenue was up about 11%. Margins came in at a healthy level as well. We have with us Shankar Banerjee, CEO at Dr. Lal Path Labs, to take a couple of questions. Mr. Banerjee, thanks very much for joining in. So I'm looking at some of the details. We'll just pull up the financials. At the end of the first half of the year, your revenue is roughly at about 1,400 crores. Your margin has risen to about 27.5%, and we have the quarterly details flashing on the screen as well. So that's the growth in EBITDA for Q2 per se. And Q2 margins up on the screen looking very, very healthy at a little over 30%. First things first, just walk us through what led to this kind of an expansion, and is this margin level sustainable?
So, thank you. Good morning, and thanks for having me. Firstly, this is, like you said, very much in line with what we had said for the year. We have guided 11 to 12% revenue growth, and we are kind of on track for delivering the same. So first half is in line. So last year, we had taken up some kind of action in terms of increasing our testing infrastructure and our collection infrastructure, which usually takes some time to mature. And, we are seeing some of the benefits of those actions and other actions that are also underway. On the margin front, the second quarter is usually the best quarter for us, and margins are typically high in the second quarter. So the second quarter margins are definitely not a reflection of what the full year margin profile for the company would be. So having said that, we are expecting our full year margins to be in the range of 27 to 28%, which will be, I think that's something we should be in line to deliver.
Okay, so 27-28% margins for the full year, they seem sort of sustainable. For Q2, can you break up the growth in terms of volume and pricing? Was it largely volume-led? Have you managed to take any price hikes? And what's the outlook on pricing in the second half?
So the growth has been primarily driven by volumes and mix improvement. We haven't really taken any price increases. And, that's something which we have been consistently holding on to, given that our growth initiative, needs us to really compete with some of the unorganized players in the smaller towns. So pricing is something which is an important metric to keep a watch on. So this is primarily, sample volume growth, which has come upwards of 10% in this quarter also, closely hugging our overall revenue growth and some mix improvement that we are seeing. Going forward also, I think pricing is something which we will keep a watch on. There isn't really an immediate plan to take any price increases even in the second half.
Mr. Banerjee, morning. Prashant here.
Good morning.
It was a very weak dengue season this time, and I think that for testing companies, I guess it takes a bite out. Otherwise, that is big business in that sense. But unseasonal rains are continuing. I mean, it's completely whacked out weather here in Mumbai. It's still raining. Is that going to add some legs to what you're seeing?
So it's like you said, it's unseasonal rains, and we had a subdued kind of fever, in quarter 2, which is usually a slightly better or slightly higher in terms of seasonal flu. So this year it has been more subdued than the last financial year same period. I don't foresee unseasonal rains to really cause any uptake because of fever pattern changing, because there are other factors besides rains which contribute to fever. So not very sure whether that's going to happen. But having said all of that, we as a company don't have a lot of exposure towards fever driving our revenues. I think we are more focused on the specialized business, the non-communicable disease burden, solving those issues, and also our detailed or in-depth working with clinicians across the country. So fever is very small part of our overall business.
Okay, let's talk about Swasthfit as well, and the contribution that's come in over there. I think it's grown 20% year on year. That's the number that I have. Can you walk us through some of the details there, and whether the contribution you expect it to go, grow higher by the end of the year? Some outlook there would help.
So Swasthfit portfolio has been doing quite strongly, and we believe that it has still quite a bit of headroom and opportunity to grow. There are multiple reasons. Firstly, the uptake of post-COVID, the uptake of health checkups has gone up, and we are also seeing traction in the smaller towns where we are reaching out. I think the newer labs and the newer collection network that we are building is also helping us reach more patients, in some of these towns and micro markets. So overall, we still see this growth momentum, higher than our company growth and substantially higher than our company growth to be there, at least for 6 to 8 quarters ahead. And then we will see how it shapes up, and how we will take this portfolio further in terms of growth.
Okay. All right, Mr. Banerjee, we'll leave it on that note. Thank you very much for joining in, and good luck for the second half as well. So that's some of the detail from Dr. Lal PathLabs at the end of second quarter. It's been a steady quarter for them. Back to Dharmesh. Dharmesh, in case you have a view on Dr. Lal or any of these diagnostic companies, also, by the way, hospitals. As we were ending last week, it was a story that our colleague Yash actually put out, that it seems that hospitals and insurers have come to some sort of an agreement with some intervention from the central government, that they will not be taking incessant price hikes because, you know, they're always at loggerheads, health insurance companies and hospitals. It did impact stocks to an extent. There was a bit of a downward pressure on Friday as well on the likes of Apollo. So just give us your thoughts. Hospital stocks that have done exceedingly well, including Apollo, and anything in diagnostics, if you like that.
Yeah. I mean, diagnostics came out with a good set of numbers. Even thyroid numbers were very good, much better than Dr. Lal Path Labs. And self-care kind of health checkups have taken a good trend and they are getting more traction. So I think that is going to continue. But one thing one has to keep in mind, because Q3 is normally a healthy quarter. So there, the businesses are not that, great for these companies. So there would be some downtick coming into play. And as the guidance was there that the margins are going to not be 30% plus, but it will be 27 to 28%. So some, profit taking can happen out there. But I do think Thyrocare, Dr. Lal looks pretty attractive at current levels, and one can continue as an investment by going forward as corporate health checkups and self-care health checkups makes more traction into the system. Hospitals looks pretty attractive to me. I think they are this is one segment which is likely to continue with their upside trajectory, though valuations are higher, but that has been the case with them historically. So Apollo Hospital look pretty attractive after the correction. And if there is some more dip because of market correction taking into place, one can buy that. Narayana Health is another hospital chain which we have been liking quite a while. And they have done an acquisition in UK. So their foray into the normal health checkups gains further traction with beds coming into play. And surgeries are on uptake in the UK part of the market. So that will augur well, and it would be EPS accretive for Narayan. Maybe not this year, but FY27 onwards, it will start contributing quite healthy to that. So these are the two hospital chains which we have been liking from the entire basket. Having said that, the entire sector looks pretty stable and attractive to us.
Okay, all right. What about Vodafone Idea? Any view out there? Various reports suggest that probably some money is coming their way. It's unconfirmed, but I think it'll, hinge on what comes out of the government and the Supreme Court. What do they have to say about it? At around 9 rupees, would you look to get in, or do you think that it's too risky? You'd rather stay out of it?
Nigel, it's more of a punt to my mind, because see, even if that IGR things get settled, it's only 30-40% of the total liability on the company balance sheet. So 1,10,20,000 odd crores will still needs to be addressed by Vodafone Idea, and that's a huge liability because the interest burden itself is higher than the operating profit. Forget about the depreciation part. So I don't think these small measures, ad hoc measures, can keep the oxygen flow or the ventilator working for Vodafone Idea, but it's either a ventilator or oxygen flow. It's not that the patient is becoming healthier. So something more drastically, more meaningful has to be done if they seriously want to revive this company. Otherwise, it's a slow, that kind of a scenario for Vodafone Idea to my mind.
I want to say one thing, Nigel. This report of infusion, I think it's come at least 10 times, right? In the last 3 years.
Yeah.
This one is putting in, that one is putting in. So while stock is up for retail investors, it's a trader's favorite because it's a small unit value share. Be careful. I mean, just see what happened last week. It was up 10% and then it was down after the clarification from the Supreme Court, limited amount. So it's very volatile, not for the faint-hearted. I'm not dissing what some of these reports are saying. It's good if it comes in and we need that player, etc. But if you're trading, you've got to have all these things in mind.
I think Dharmesh put it quite well, right? It's not changing things drastically. Dharmesh, very quickly before we let you go, I think the PSU banks, that's been a sector that's been looking very good. If I remember correctly, and you can correct me if I'm wrong, I think Bank of India is a stock that y'all had liked maybe a couple of months or so ago. That stock has done well. Has it played out or more to go?
Yeah, there's more to go because if you look in the PSU basket itself, Bank of India is the cheapest stock available. I mean, it's trading at around 0.7 times price to book 1 year forward. While others in the pack has gone above 1.2, 1.3 times price to book. So that technical de-adjustment of valuation re-rating is there to be on the cards. At the same time, the numbers were excellent, 13-14% kind of an advances growth with asset quality, getting more firmer out there. And the one thing which will play out for public sector banks, the reported PAT numbers were weak for most of them because of the treasury income reversal. But Q3 onwards, I think if there is no further interest rate cut, this will again get reversed in favor of most of the banks. And then again, you will have 15-20% kind of upside. So initial target price which we have been working for Bank of India is 155, but I think going forward it would be revised upwards.
All right, Dharmesh, thanks a lot for joining in, helping us out with that, all that fundamental ideas, and also I'll take your inputs with regard to using some of the services of Urban Company as well, which I have until now. Thanks a lot for joining in. Have a good day ahead, mate. Going back to Mitesh, he's here to tell us about the 910 call. Mitesh, what's on your radar?
I think I had a mix of buy and sell calls, but for the timing, the stock which I would like to recommend will be BEL as a buy call for targets of 440.
BEL, okay. Got that, Mitesh. Thanks for the call. By the way, just checking some of the stock reactions also and how they're playing out. Bank of Baroda, Gaurav was telling us obviously is a good number. We'll just go to Gaurav in a bit. Watch out for RR Cable. Those numbers seem to be going down pretty well with the street, 4% up. And Dharmesh was telling us that he'll be very cautious with the likes of some of these new age companies. An Urban Company is missing the mark. Additional investments in their Insta Help venture. Street is a little nervous about this. 6% down on Urban Company. But let's talk about the winners. I mean, Bank of Baroda definitely looks to be one this morning. Gaurav, just remind us, recap the numbers.
Well, as when we look at Bank of Baroda, two key positive things. First is net interest margin expansion and second is credit cost decline. Now, when we look at the numbers, net interest income increased almost by 2.5%. PPOP that declined almost by 20% because the support from other income that was missing because of the treasury income. Provisions that declined almost by 49%, and as a result, when we look at profit, that declined just by 8%. Now, when we look at profit number, and in absolute term, it was a bit better than the street's expectation. Now, when we look at the net interest margins, we saw a surprise here because net interest margins increased almost by 5 basis points sequentially. Now, this was also supported by the IT refund that the company got of around 750 crores. And apart from that, another key point is that the credit cost that declined almost by 26 basis points sequentially. And this was largely aided by the international business. We saw zero slippages there. And as a result, slippage ratio that also declined. Now, when we look at brokerages, they are now being a little bullish about it because we have got HSBC who upgraded the target price to 340. Nomura upgraded the target price to 320. And for Investec, they even upgraded the rating to buy and also increased the target price to 325 versus what it was at 250. So definitely bullish call coming up from brokerages as well. Good set of numbers, and at the same time, management also remained optimistic on their con call. So definitely watching out of this stock today.
PSUs and PSU banks were all the rage last week. 2% on Bank of Baroda, BPCL, great numbers at the bottom of the screen. So it's going to be a fair bit of PSUs today as well. Now, record sales for auto companies in the month of October, driven by, of course, festive sentiment, GST demand. There was that sort of Shraddh-related pent-up demand, which all showed up as well. So it is here with details. So
it was the first full month of the impact of the GST rate cut and the festive season, and the sales overall are largely in line or slightly better than estimates. The biggest positive was the CV segment, which is out from all the other segments, while PV and two-wheelers have reported sales largely in line. Talking about Mahindra & Mahindra, auto segment has done better, and it was led by SUV segment and also the new launches that company has made in the month of October. For tractor segment, that is also done better than estimates. Total sales have increased by 27%, 13% YY versus our expectation of around 5 to 6%. Talk about Maruti Suzuki, it has recorded highest ever monthly sales. Total sales have increased by 7%, and that was led by compact segment and SUV segment. Hyundai India has done slightly lower than other peers. Maruti and Mahindra total sales have slipped, and mainly because of domestic segment. Tata Motors has done better.
Right. No, I think so. We'll just look at the market open, and then we will come back to Sud with specifics with some of these companies and reactions up on your screen. So 25,720 is where the Nifty is starting. It's absolutely flat. Nifty Bank at about 57,800. Again, absolutely flat. Bank Nifty, the mid-cap index is 60 points higher. The small-cap index will come up on your screen, and I think there as well, there is about a 50-odd point bump. A 0.25%, 18,430 is where we stand at. So that's the overall picture. Nifty heat map coming up on your screen, and I think it's absolutely evenly poised. Look at that, not even a 1 point change on the Nifty. And I think it's kind of balanced like that on the Nifty stock-wise as well, right? So Shriram Finance on one end, and there is Maruti on the other end. So equal number of stocks up and down this morning. Surabhi.
Okay, by the way, in result reactions, I was talking about RR Kabel. That stock shot up 7% now. Their margin went from 4.8% to 8% in this quarter. And we'll be speaking with the management shortly to figure out what exactly has driven this. But just watch out for that. I mean, it's really a earnings bazooka out there. Anyway, large cap screen. Let's see what's moving. Shriram Finance doing pretty well, 3.5%. This is also management that you'll hear from in just the next couple of minutes. 4% up, but Shriram Finance is having a fantastic morning. Then we come to the auto majors, all of them revved up. Mahindra and Mahindra, 2.5%. Tata Motors, about 0.5%. Bajaj Auto's numbers just came through. They've again done over 5 lakh units in the month gone by. So about 0.5% up on that stock as well. But then it fizzles out. The Nifty is, by the way, 50 points lower. Reliance is at the flat line. It's flashing a little bit of red right now. L&T is cooling off. And then you have Eternal that's still slipping. Friday, Eternal was down almost 3%, remember? It's down another 1% this morning. There's some cool off on the likes of ITC. Then some of the bigger, stocks like HUL and TCS are, undecided, about 0.5% lower there. Maruti is slipping a lot. Maruti is down about 3%. So we'll read through the fine print on the Maruti numbers. The question is, sustainability, and that's where it's all about. The stocks rallied quite nicely, but will this post-GST bump sustain, or was it a 1 or 2 month wonder? That's the question. Anyway, that's the large cap screen for now. 60 points lower, but some green on the mid cap screens, Nigel.
Well, that's right. Zen Technologies, the stock is locked up, with a gain of close to around 5%. They've seen order inflows of around 290 crores towards upgradation of the anti-drone system and executable, and that's executable over the next 12 months or so. In fact, it's up 5.5%. It's not locked in upper circuit. So 6% higher, good move out there. Astra Micro as well, order of around 286 crores secured by their JV. Astra Rafael Cummins, that's another stock that's up close to around 1.5%. As should be mentioned, RR Cable. That's the result reaction of the morning on the upside. But giving it company on the upside is actually LG Balkrishna. That, remember, is that auto ancillary company that has a good play with regard to two-wheeler chains as well, and they've been doing various ways to re-innovate the business. The stock is up close to around 11% now as we speak. I recall we here at CNBC-TV18 had explained the company a few years ago. It seems they went to a bit of a trough and now they're coming out of it. I think we'll have the management later on today joining us, 10% higher out there. GNA Axles is another stock that's up close to around 3%. Decent volumes on that one. The reactions actually that are not very, very favorable are two of them. One is NetWeb. The stock is up close to around 30% year to date itself. The numbers look pretty okay. There is some growth on the top line. Margins as well are more or less steady, but I think it ran a little bit ahead of itself. That's the way the street is reading it. Margins steady at around 14.8% or thereabouts. Revenue growth is there 20% year on year, but the stock getting smacked. And Urban Company, that's a stock that's down close to around 6% as we speak. Big downtake on that particular name.
Okay, no, absolutely. And so that's essentially, some earnings-related reactions which are coming through. Maybe if I can just add a few more names here, which are the biggest volume-led gainers. Bank of Baroda is top of the list with the largest volume traded, 4% higher. Shriram Finance is at number 2, so financials dominating, 5% on Shriram Finance. And now that's a big, the second largest NBFC, and you'll hear from the management a little later here on the program. And there's a big reaction to results. Naveen Fluorine is at number 3. It's a 4% pop on Naveen Fluorine. So almost 5,910 on that one. RR Kabel, we mentioned, 5%. Godrej Consumer Products, Mangalam has been telling us 4% on Godrej Consumer Products, 1,170 on that one. Vedanta, you heard from the management, is a 2.5% pop coming through. And there's more. I mean, it's not for nothing. Volumes are pretty good. MedPlus is up 6%. Volumes are yet to pick up in a meaningful way, but they're not small either for this point in the day. V2 Retail is 5% higher. I think that's the daily limit. There is IIFL, which is up about 4%. Intellect Design is up 7%. Intellect Design has moved up very, very sharply. Thursday's close on Intellect Design was 1,050. It's at 1,210 this morning. So Friday was a big move on Intellect, and this morning again, it's a big move on Intellect. So, I mean, there's enough and more action. Nifty has kind of reduced its losses. It's down just about 25 odd points at this stage, 25,700 on the index. Pankaj Murarka is CEO and CIO at Renaissance Investment Managers. Pankaj, good morning. Great to have you with us here. Thanks very much for joining us. Let's just start with this PSU theme, which is once again kind of sort of recycling and making a comeback, right? It was the leader of this bull market, and then it took a break, about a year and a half long break. And even within PSUs, lots of different areas which did well successively. But then, I mean, all of them largely re-rated, and then we've had a bit of a lull. But they seem to be coming back once again. OMCs, for example, is a case in point. PSU banks, etc. What do you own here, and what's your thinking about this space now, Pankaj?
Morning, Prashant. Yeah, you're right. Especially with OMCs and banks, we've seen coming back. I think the challenge with PSUs is fundamentally there's a lot of value. These stocks, despite the sharp run that we had in these companies between 22, 23 and the first half of 24, the starting point in 2022 was most of these state-owned companies were trading at like low single-digit multiples, or some of these companies were available in terms of valuation at 2 times EBITDA and stuff like that, where 2 years of cash flows just pays for the company. So the starting point itself of the rally was so low that we had a very ferocious rally. But I think the challenge with PSUs is from here on, while these companies continue to do well, the markets needs to see more reforms from governments. And I think which is where probably the anticipation is, because in case of oil companies, at least we've seen government make some clearly nuanced announcements where they said that these companies will not be forced to cross-subsidize across LPGs, and they are now getting paid for the LPG losses that they had in last year, which helps their cash flows going forward. And oil price being benign, the underlying fundamental numbers continues to remain good. And likewise with, I think, with state-owned banks, where they're once again, we've seen a very strong interest in Indian banks. We've seen, over $10 billion of foreign money coming into financial sector in the last 8 weeks. And I think there's some expectations about some reforms in coming budget. Probably it could be another round of consolidation within state-owned banks. And I think which is what is driving interest back into these names. So from a valuation perspective, they're always cheap. I think the trigger point for PSUs rally is always the government actions in terms of reforms, because that is what can really drive a re-rating for these companies.
Okay. Pankaj, hi, great to have you on the show. So tell us on a slightly broader level whether you are looking at the portfolio in any fresh light, any major churn or changes in the last month or two as we've gone through this consolidation and with the market now practically coming back to the earlier highs.
Tell you what has worked for us and probably what has not worked, but what I think will going forward work for us in 2026, or how we are positioning ourselves. So clearly, two things that has worked for us this year or in the last year has been private sector banks. They have done well, and I think they'll continue to do well. And the other is our exposure to internet companies. Again, by and large, they have done well. What has not really worked for us is our exposure to IT to that extent. And probably we were somewhat early into the consumer sector. So we've seen some moves in terms of stock price and consumer names. But I still think it's early stages. I think both of these sectors are poised for a meaningful, healthy returns for shareholders in calendar year 26. One, in case of consumption, I think the resurgence in consumption we're seeing post the festival season is actually surprised on the upside. Someone like a Maruti, they've had like 100% Y&Y growth in their festival bookings, and they're running low on inventories on a lot of car models. You have wait periods which are like 6 weeks or 8 weeks, and something like this we are seeing I'm seeing after 4 years. Something like this happened in 2021 post COVID unlocks, and now after 4 years you're seeing that wait periods on cars. So that's very pleasing to hear or witness kind of thing, and which effectively tells us that there's a lot of latent demand that exists, and consumers now have the money in their pocket. So probably this consumption recovery will sustain over a longer period of time. So I think 2026 will see a very meaningful recovery in consumption, and probably I think some point of time this will surprise us on the upside. And secondly, while IT as a sector has not done well, but what has happened is in the last 2 quarters, we have not seen incremental earnings downgrades on the sector. So clearly, earnings have troughed out. And the way macros are poised and the environment is poised, it looks like we are in for a recovery in IT spends, global IT spends going into the next year. So logically, meaning expectation is that the growth for IT companies next year will be much better than this year. And valuations are at trough, and the stocks are down about 17-18% this year, which makes from a valuation perspective even more attractive.
In fact, just keep an eye out. What's good about this earnings season is select companies report good numbers and the street likes it. Intellect Design Arena, just pull up the intraday chart of that stock. It's moved to the high point of the day. The revenues have jumped, I think, close to around 34%. EBITDA is up by 68%. And I think the company has been talking about, 20% growth in revenue in the future as well. They've been saying that they're confident on the trajectory. So just take a look at that stock, up 7.5% as we speak. Pankaj, a more general, question to you with regard to the past quarter's earnings. It seems, I was looking at a Motilal Oswal note and various other brokerages as well. Till now, it appears quarter two actually hasn't been as bad as what the street had anticipated. They're optimistic that things improve from here on, but quarter two has been reasonably better. What's your view on with regard to your reading of earnings? And also, if you could tell us with regard to asset allocation, because the frequent asked question now is how much you put in gold, how much you put in equities, how much you put in bond. If you could give us a rough matrix according to you.
Absolutely, Nigel, you're absolutely bang on. The good thing about this earnings season has been that there's been no incremental downgrades. After 5 quarters almost, we're seeing that there are no incremental earnings downgrade. And more importantly, we are seeing some earnings upgrade. So, and I think those earnings upgrade will build on from here on, because probably after having downgrade consensus earnings for almost 5 quarters in a row, I clearly think the analysts are somewhat more circumspect and need to see more evidence of sustainability of growth before they go out and upgrade their growth estimates or earnings estimate going forward. So you're absolutely right. I think we are in the second successive year for India in terms of single-digit earnings growth for the Nifty companies. But more importantly, all of us know the second half of the year, financial year, will be better than the first half. So clearly, we are near the trough in terms of earnings deceleration, and earnings have clearly troughed out. I think we'll start seeing earnings deceleration, earnings acceleration from the second half of this year. So I think the outlook for earnings after almost 5 quarters looks pretty good, and that makes me feel optimistic on the outlook for markets as well. In terms of asset allocation, Nigel, actually, I'm not the right guy because I've been a 100% equities guy all my life. So for me, there's only one asset class that exists in the world, and that's equities. And there's nothing that excites me more than equities, So my asset allocation is very simple. A bull market or bear market, 100% equities.
All in.
All right, Pankaj, we'll leave it on that note. Thank you very much for joining us. Good to get that perspective on the markets. All in and a positive view coming in on stocks going forward. By the way, speaking of positive views, before we get to our next management, just look at Shriram Finance and how the market is standing up and saluting what is an all-round good performance. We'll be speaking to the management shortly. There is no fault you can find in the Q2 numbers. Where most lenders have reported slight compression in NIMs. They've expanded net interest margins by 8 basis points. They're guiding for as much as 15 to 17% growth. All their key segments, CV, passenger vehicle, MSME, everything is firing. ROA, ROE, everything has gone up. So it's absolutely phenomenal what they've delivered in Q2, and the market is taking note of that.
And the other one I'm looking at is Dredging Corp. Normally in a day, you see 5 lakh of volume. In the first 15 minutes, you've seen 5 lakh of volume.
Oof.
Massive volumes on that particular day as well, reacting to positive news flow. So the entire day's volume actually that we normally see on an average, in the first 15 minutes, it's almost fulfilled that quota.
Absolutely. So some stocks that are really on the move, and we'll get to them one by one. For the time being, let's address earnings and numbers that we saw from Kalpataru projects. That is the next management on our radar. It was a pretty good quarter for the company. Revenue growth was driven by robust execution, and it's been a pretty steady performance for them in their key segments. Amit Oplenchwar, director at Kalpataru Projects, is with us. Amit, thank you very much for joining in. So let me just quickly go over some of the key numbers. You've actually increased your revenue guidance from 20 to 25% to now you think revenue will grow 25% plus this year. And you're also looking at a stronger order book guidance. You're saying the order intake is going to be more than 25,000 crores. So tell us where the optimism is coming in from. Which are the segments that really seem to be firing for you?
Thanks, Surbi, and clearly a great win for India, lifting the World Cup, and your T-shirt, all of you reflects that. So we've in the same line. I think we've had a great quarter. We're at our highest ever Q2 revenue and Q2 profits, And that's very heartening to know. As you said, it's been an all-round performance. Our transmission and distribution sector is doing exceedingly well. Our building and factories, the order spends on single projects are going up 3 to 4 times as they used to be in the last couple of years. Our oil and gas business has shown large growth compared to last year and the year before that. And our urban infra businesses, which we've been seeding now for the last 2-3 years, in terms of building capabilities for the future, are all joining the show and contributing to this growth of the company in this quarter and at H1.
Okay, morning, Prashant here. So, you've given us the guidance for this year. What about the top line growth? What does all of this sort of mean for margins? What's the guidance there, and what are the levers at play which could allow you to improve margins as well?
So, 3 things. First, we said we will try and get to our revenue growth so we've already gone to between 20 to 25%, and obviously we've grown to the higher band of that, and now we've guided for 25% plus at the end of the year, both console and standalone, and that obviously adds to the margin as well when you do more revenue than you had planned. We had already planned last year that, we should try and expand our margins. We said on a console level, we'll try and go 100 bips more at a PBT towards the end of the year. And at H1, we are already at more or less 100 bips more than where we were last year. We've been again focusing on balance sheet and trying to reduce our net working capital days. Our debt levels have gone down further again. We are borrowing cheaper again, getting to, contributing towards our margin profile. The execution has been very low, looking at close to 5.5% on a standalone PBT for the end of the year. Our debt to equity now on a standalone, probably one of the lowest, it's at 0.29, which pretty much debt free when it comes to our business. And I think all of these factors with better margin profiles in sectors as T&D, B&F, etc., a lot of demand in the marketplace, we're able to get better margins. And I think all of these put together are contributing towards the margin expansion.
All right. Hi, Amit. Good morning. Good to see you in. I recall having a chat with you a year or so ago at our JLS event, and you sounded very optimistic, and seems like the numbers are flowing through. So good on you. Just to focus on one segment, which is a relatively smaller part of your business, the water segment. Out there, payments, not just for you, but for various other industry players, have been slow. Could you tell us what is the outstanding in terms of payments coming in from the water projects? And also, I think, what is the trajectory with regard to here now? You were putting in some money, investing in these projects. Will you continue to bid?
So, we are cautiously bidding. We've had a small degrowth in revenue for the water business this year, and that's primarily an industry problem at the moment as we speak. The government is trying hard to unlock the past dues for us. These numbers are close to 800 crores. If you would have got these numbers, our revenue would have been even higher. The story, if you ask me, remains intact. At the end of the day, water is a huge part of being a developed nation, and I think government is fully committed to further putting money in the water sector. I think this was it happens in our business sometimes. The sector goes slow, or if you look at, except the last 2 years, the water business grew at 20, 30, 40% CAGR for most companies in the sector. So I'm not overtly worried about our payments. We've been guaranteed by all states that these money should start flowing in the next 1, 2, 3 quarters. And we are confident of that. I think structurally the sector itself is solid. As we told you last year as well, we've been focused on building capabilities of the water business outside of India. We are bidding now in a couple of geographies, and I think in the next 2 quarters, we'll be happy to give you some good news on that as well, as we take our water sector more global and not just India-centric.
Just one word with regard to these payments. I believe, a couple of governments you have outstanding from UP and Jharkhand, if I got that correct. You all have been assured that the payments start coming in from November. Is that correct? Because, I was in touch with various
the government has always said that these payments will start coming. Obviously, they've not come at the pace that we anticipated that they would. But because they are central government projects and these monies are, central government funds, few months here and there, but we are sincerely hoping that by the end of H2 and beginning of first quarter next year, these monies should start getting normalized and the backlogs getting cleared.
Got it.
Okay, all right, Amit, we'll leave it there. Thank you very much for joining us. Good luck, good performance, and we wish you all the best of luck.
Thank you so very much.
To execute. We'll take a quick commercial break here. We're going to come back. Umesh Revankar of Shriram Finance joins in to talk about their second quarter results and, of course, the outlook going forward. Stay tuned. Coming up. Well, as promised, we have the management of Shriram Finance now joining us. Shriram Finance is the #1 volume-led gainer on the NSE right now. So it's a big name, second largest NBFC, and it continues to perform very, very well. So there you go on your screen, 5% on it, 6 million shares. So it's a big number out there, both on price gains and volumes as well. Umesh Revankar is Executive Vice Chairman at Shriram Finance. He's joining us now. Mr. Revankar, morning and congratulations on a good set. Prashant here. We're going to just highlight for our viewers what we're going to talk about. Asset quality, we want to get some guidance from you. Growth, of course, numbers going forward, and margin expansion as well. Maybe we will see more of it up ahead. Mr. Revankar, you know, it's like it's been an up and up kind of trajectory for you now for the last almost 2 years. So it's been a one-way street. This quarter, I think what kind of stands out is that overall credit costs for you have remained very much under control, 1.78 compared to about 1.73% last quarter. When we spoke with other companies, you know, in your peer set, some unlisted names, etc. as well, most people highlighted some stress in the commercial vehicle segment. It's not showing up for you. You know, and CVs, by the way, is about almost 50% of your business. So I just wanted to start there in terms of what the, you know, what's driven these numbers, especially on the asset quality front, and how you managed to keep it very, very steady.
Yeah, thank you. Good morning, Prashant. See, as far as our business model is concerned, we have a direct touch and access to customer all the time. And most of the customers whom we lend are individual and small SRTOs. And that's one big difference between us and many of the others. And the second thing, the asset values of the vehicles have remained very strong. It has not changed at all. That there is no nowhere you will see idling of a vehicle, income getting reduced, or vehicle value coming down. So these three things are very important for viability in a CV business. And since we are in touch with the customer, we have direct access to customer, we did not see any stress as of now. Even the sales numbers, if you look at, the first half in the sales numbers have gone up. The CV demand has gone up, even though most of the demand would have come in the fag end of September. But even in October, the year-on-year sales numbers have gone up. That means there is a significant demand for a commercial vehicle. The activities in the ground is quite good, and therefore I feel the business is good, and the customers are able to repay on time.
So, so that's the CV side of things, which you say is humming along quite nicely. I mean, growth has come across the board for you, right? Even in some of the other segments, for instance, MSME. And I think on the back of this, you are guiding for almost 17% AUM growth this year. So give us some more color on what makes you so confident that growth can be, I mean, it's music to the ears and your investors are loving it. Stocks up 5%. So give us some more granular detail on what makes you so confident about this kind of loan growth.
See, typically the festive period or festive time is the indicator of the mood of the customers. And this time around, the October has been all-time high sales number for all the segments, whether it's a passenger vehicle, commercial vehicle, two-wheeler, and three-wheeler, tractor. Every segment has shown big growth. Only one sector that has not shown a big growth or maybe even a growth is the construction equipment, where there has been some slowdown in the infrastructure spending, which is likely to gather momentum post-rains. Normally, post-rains, these infrastructure activities continues till the arrival of rains. So this time, the monsoon has extended. Therefore, there has been little slowdown, but I think that also will join. The other point is most of the demand coming from the rural side. When I say rural, I include semi-urban also, because that is where the hinterland, rural is a hinterland for the semi-urban area. And together, that demand is quite good. So I believe the credit demand will continue to grow, with October being the peak sales or peak demand for the business.
All right. Hi, Mr. Revankar. First of all, congratulations on a very, very good showing. No worries with regard to the numbers, but sometimes the street seems to be looking ahead and sniffing something more. Now, unconfirmed reports indicate that Japan's Mitsubishi is eyeing a stake. My question to you is, can there probably be a fresh infusion to pick up 20% stake? Because that's what the unconfirmed reports are suggesting. And sometimes there's no smoke without fire, right? You want to deny totally, you want to say that could probably be something in the works. Please go ahead, sir.
See, we are in discussion with many of the banks and institutions all the time. And this time we have not even discussed this in the board. So there is no question of raising equity at any point of time.
You're definitely denying that there's no talk whatsoever with Japan's Mitsubishi to come in and take 20% stake via a fund infusion. Is that correct, sir?
First of all, we need to discuss this in the board meeting. And since it has not come to the board, I cannot further comment on that.
But sir, you are saying that you are in talks with institutions. I don't know, is that a general statement that usually you're in talks with a lot of institutions? Or are there talks ongoing right now, but it's not come to the board level? And eventually, I mean, then it could come to the board level, right?
See, generally, as you rightly said, banks and NBFCs do look for raising resources all the time. It is your raw material. And therefore, there will be multiple discussion. And unless it is become in a very confirmed or concrete structure or a plan, then only it will come to the board.
Is there a concrete offer, Mr. Revankar, that you know of?
There's no concrete offer.
Okay, got that. So we'll
But that could probably something that we could hear in the coming month or two, right?
No comments.
Okay. I think let's just move on to the next one, Mr. Revankar, which is, of course, we've spoken about this earlier as well, a credit rating upgrade, right? What's happening there? I think we've asked you this before. When can we expect that? I mean, that perhaps a little bit more not in your control, but you have to work with rating agencies. But should we see that AAA anytime soon, sir?
We are definitely working on it. We are working with the credit rating agency. We would definitely like to improve our rating because rating upgrade and AAA gives us a lot of huge opportunity in raising resources at a lower cost, especially sovereign funds or provident funds and insurance companies' investment. Those things comes at a much cheaper rate. Therefore, we'll be working on it. Definitely, the rating agencies are very positive about it, and hopefully, we should be able to go through that or get it as early as possible.
And got that as soon as possible, and you sort of obviously effort towards that. This is not in any way related to a potential transaction, Mr. Revankar, is it? I mean, a rating upgrade and then maybe some kind of a partnership. Is there any connection at all?
There's no connection at all.
There's no connection. Got it.
Final point on the fundraising bit, Mr. Revankar. I mean, just take us through the capital ratios as of now. I mean, purely from a capital perspective, are you fully covered for growth for, say, the next 1 to 2 years? Or could there be a discussion? Because, I mean, on the growth front, you're seeing very strong growth ahead. So is there need for growth capital, or do you have enough? And then then the capital raising conversations are more about building a buffer for the future.
See, statutory requirement is 15%. We are above 20 now. So we have enough buffer for the kind of growth which we are witnessing, around 16-17% growth. That is sufficient for more than 2 years.
Okay.
So I don't really need capital for the growth.
For that. Got that. So if anything, it might be, something more strategic, and you will tell us more when it comes to the board level. Take that point, sir. So I just want to now, get back to the business and margins, because that's another very heartening, point when we look at Q2, because while most lenders have had some compression here and there, you managed to grow margins by about 8 basis points. So just tell us how things are moving, both on the cost of funds side and on the yield side. And I think you're saying by the time the year ends, you will be higher. The exit margin will be higher versus where you are right now. So just give us some details.
Yeah, see, the cost of fund in our books today, as it stands, it's around 8.83. We have improved from 8.89, around 6 basis points we have improved. Incrementally, we are borrowing at around 8.3, if you look at the number in the last quarter. We would like to improve it further. So as we keep repricing the existing borrowing, because 87% of my borrowing in the books is fixed, 13% is floating. The floating one will keep changing depending upon how the banks transmit. But as far as the fixed is concerned, it depends upon how it gets repriced at the time of maturity. So as we reprice it over the next 2 quarters, the cost of borrowing will come down, and that will flow into net interest margin. However, at some part of it will definitely be passed on to the customer as a goodwill gesture, and also to expand our customer base. So that will be done at the appropriate time. However, we would like to keep growing our net interest margin to around 8.5 level by the end of the financial year.
Absolutely. Mr. Revankar, just one personal change, right? So we have the current CFO is going to take over. Mr. Parag Sharma is being promoted to MD and CEO with Mr. YC Chakrabarti, who's after his term is completed this year, right? I mean, later in December.
Yeah, it is later in December. See, we have a very strong senior team, and a succession plan is I should say, well planned much in advance. And we do have a lot of other senior teams which will come into board. We will also have 2 COO coming into the business centrally, because they were managing it in the various geographies they'll be moving to Mumbai, and this business will be managed centrally. Because we felt that the central team need to be strengthened further to know what's happening in the ground level. We also have people we had 5 geographical unit earlier. We have made it 10 now. So there will be larger...
what about Mr. Chakravarti, sir? Will he be with the group?
He'll be with the group. He is part of a senior team.
Okay.
So he'll be remaining with the group.
Okay, so 2 new chief operating officers, CFO being promoted, so internal long-serving members being promoted and elevated. Thank you very much, Mr. Revankar. Great speaking with you. Really appreciate it, and good luck as you continue to execute very, very well. So that's Shriram Finance. Stocks up about 4.5% as things stand right now. 20-odd points. The market, of course, now coming up quite sharply from the lows. 25,750 is where we are at, which is at the day's highest point. Surabhi.
Okay, so that's the market for now. From finance, we are moving to food and FMCG. Patanjali Foods is the next stock on our radar. Now, it was a pretty steady quarter for Patanjali Foods as well. The profit was boosted by 141 crore rupee tax credit. And then the weakness in edible oil margins was offset by strength in FMCG. We have with us Mr. Asthana, CEO at Patanjali Foods, joining in. Mr. Asthana, thanks very much. Good to have you in. So I'm just breaking down the numbers for our viewers. Overall, your revenue is up 21%. Your margin is pretty steady at around 5.6%. But if I break down the segments, then there is margin improvement in FMCG. I think your margin's gone from 10% to 12% over there. But there's some pressure in margins on the edible oils business. So let's take it step by step. Just walk us through what's happening, first of all, with the whole GST transition. Is all that behind us? Did that have any bearing on your, either arms of your business in Q2? And then how are you looking at growth in the second half now? First, at the headline level.
So headline level, just a quick one on the numbers first. So on edible oils, actually, we have improved from Q1. This quarter, we did nearly 3.53% of margin, EBITDA basis, which is pretty much in the ballpark range of 2 to 4% that we typically do. FMCG, we have consistently maintained that we will be upwards of 10%. We have consolidated the numbers between the HPC and the food, so it's about 12.23%. And on a net basis, also, we are pretty much about 6% plus on the EBITDA margin basis. So broadly, the numbers are pretty positive. We are very confident. Coming to the GST part of it, yes, the impact is there. We can witness it. But as I've consistently maintained, that these are food sort of products with the price points and at the level at which it is, the instant uptick is very difficult to get immediately. It will take a couple of quarters. But our estimation is that on an overall basis, by the end of this year, we should see 300 to 400 basis points of uptake on the sales part of it. So the revenue should definitely get the GST boost of that over and above the volume growth that we're targeting in foods and HPC. So that should be pretty much there.
Okay, so you're saying 300 basis points uptick at a revenue level, that would be on the FMCG side, right? So there'll be a 300 basis points GST boost when we look at the full year pictures. Just going back to margins, as you explained, now that you've consolidated home and personal care and with the FMCG, so this 12%, is that a steady state expectation that one can have? That 12% is going to be the new normal for your FMCG business?
We should get actually better than that, because this quarter, some of the overhang of the foods continued. And so those corrections are getting taken. So I think pretty much in the ballpark range of 12 to 14% is what we're targeting. And it won't happen immediately, because there is still some bit of overhang that we're witnessing post the festive season. So typically things tend to go down a bit, immediately in November and part of December. But broadly, that's the target, that between 12 and 14% on the HPC will maintain, between 2 and 4% on the veg oil side. But pretty much at the higher end of the band, if we can do that, then that will be very positive for the company.
Just to reconfirm, sir, what is the likely edible oil margins in the second half of the year? Missed that number?
We are targeting pretty much close to 4% is what the upside target is. The markets are looking positive. That's very supportive to the overall price points. And we are reasonably confident of pretty much remaining at currently at 3.53%. The second half tends to be nearly 2/3 of the same. So I'm quite hopeful that we should be pretty much closing closer to 4%, if not exactly 4%.
Okay, all right. And what about FMCG? By when does it become 50% of of your mix? You've been guiding for that. You've been making strides in that direction. But by when does it take place?
We are making, Nigel. For example, this HPC business post the consolidation, there was a spike in the veg oil prices because of which the percentage-wise, it is still close to 70-30. But my hope is that in 3 years' time, at a target basis, that we should be pretty much close to 50-50, both for FMCG and edible oils.
And individually, for the home and personal care business, I don't know if it makes sense now to look at individual margins because you're talking consolidated as FMCG as a whole. But at an individual level, what are the margins of that business? I mean, what do you expect for the second half?
So the margins have been very positive on the HPC side. I think owing to some of the price point changes that we did and some of the gains that we got on account of the purchase efficiencies. So it has been 22% plus on the home and personal care front.
And that is to be sustained?
We would like to sustain it. I mean, margins typically the ballpark range has been close to 18%. So this is more one-off benefit that we typically got, post the acquisition in last quarter. So I don't believe it will be as much as that. But between 18 and 20%, we are pretty confident of maintaining.
So Okay. So just to revisit, like you told us on the edible oil business, you're looking at targeting 4% margin, and FMCG, the blended FMCG with HPC. What would perhaps the exit margins be, likely exit margins for the FMCG business for this year?
So this consolidation process is still on. We'd like, so currently what you're seeing 12.2%. This we'd like inching closer to 13% plus. And because we have only half a year, for the numbers. And next year, we certainly want to cross 14% on the FMCG overall on a consolidated basis. And 4% we are targeting for the veg oils.
Okay, all right, Mr. Asthana, we appreciate you joining in. Wishing you all the best. You're sounding optimistic about the second half of the year. We'll hold you to some of these numbers. Wish you a good day ahead, and we catch up soon.
Thank you.
Well, let's welcome the next management, RR Kabel. The stock is strong in trade. They reported actually a good set of numbers. Strong growth, good margins as well. We're now joined by Mr. Rajesh Jain, the Chief Operating Officer at RR Kabel. Hi, Mr. Jain. Good morning, and congratulations on a good showing. When the markets opened up, the stock was much higher. Now, in fact, it's cooled off a little bit. That aside, if you could tell us, about the growth, because I was looking at some of your peers in the cables and wire segment, and you have actually outbeaten them. So could you tell us what worked for you? This volume growth is good. Have you gained market share? Point number one. Point number two, margins are looking good, but copper prices have moved up. So do you think you can maintain the same margins, or do they trend down a little bit from here?
Yeah, good morning, and thanks for giving me a chance to give my views. So here, if you see our volume growth are very good and in line with our Project Rise planning, what we have done in the beginning of the year, and with our strong initiative in terms of volume growth and margin improvement, we are online with those plans. When we compare with industry, yes, we have done fairly good both in domestic as well as export market. And it is backed with the volume growth as well as whatever there is price rise also in good copper and aluminum prices.
Okay, so what should be the rough trajectory then, sir, from here? And market share, do you have a number? What kind of market share you had, say, a year or so ago? And since you're growing at this pace, have you gained some?
Yeah, in market share, there may be some impact, but not majorly. There will be not that much impact. But of course, since we are doing positively, so it will have an improvement in our market share. Even at year end, we are looking at good volume growth as well as margin improvement by year end.
And market volume growth is 18% for the year, right? That's what you're guiding for.
That's what we have planned.
And consolidated margins will be around 8%?
Yeah, consolidated 8%, but within wire and cable, it will be like around 8.5%.
All right. And the smaller part of your business, the FMEG business, you were guiding that it breaks even, right? Second half of the year, it moves into the green?
Yeah, by quarter end ending March 26, it will be at break-even level.
Okay, Mr. Jain, morning, Prashant here. Just, so the one commodity on which there is consensus optimism, it is copper. That it is beginning a new, same kind of optimism we had about 2.5 years back. And then, of course, I mean, copper prices topped out, but we're back. We're at all-time highs. I remember speaking with the cable and wire companies back then. And at that point, I remember some saying that if there is this, a big rally in underlying copper prices, demand does start to get hit across segments. I mean, it becomes, for a lot of end industries, it becomes not unviable, it becomes much more expensive. So I just wanted to, it's a general question, not so much about RR Kabil, but how does the business work? Because you're at all-time high copper prices, and presumably they're headed even higher.
So first, it is very hard to predict how prices will move. And but one thing, though, raw material copper is the very big raw material and an impact in our costing and as well as revenue growth also. But at the same time, see, the demand remains on the other fundamentals, how construction activities are going or how industrial growth is coming. So in short term, there may be a little bit impact, but in longer term, there will be no impact, irrespective of copper prices, how they move.
When you say short term, there may be some impact. I mean, I mean, just you're talking in the ballpark. I mean, what can we expect? I mean, if you want to talk about your company or overall.
No, in short term, I mean to say, if there is, say, a sharp movement, either upside or downtime at industry level, there may be some impact. In short term, in means there may be like people take some time to settle down, but it is not like that at the industry level or even for us, there will be any major impact in demand or growth. That's what I want to say.
Okay, all right. If you could help us out, sir, with regard to the export market as well. I think exports in the past quarter, I think the shares stood at around 25%. If you could help me out with that number, and on a steady state basis, how do you see the export market shaping up? Because there's so much of uncertainty globally now.
Yeah, so export is contributing almost 27-28% in our overall business.
Yeah.
And we have seen a similar growth in my domestic as well as the export market. Yeah, we have seen so much uncertainty, particularly about US market. But since US is was contributing almost 8 to 10% in my export business, but the same thing we have compensated through other markets, and we have not seen any major difference or deviation from our export planning.
Okay, so exports, you're not too worried. But what about the two big players who are coming in there? The Birla Group as well as the Adani Group, both of them have announced that they are eyeing your sweet spot, cables and wires business. Don't you think competition is going to get a little bit more fierce and that could make life difficult for a company like yours? Or do you think the market is big enough and everyone can prosper together?
First, yes, market is of course big enough, like India, and this industry is expected to grow at in double digit 14-15% at industry level. So of course there may be some competition, but we have to focus on our product, our strategy, and our distribution network. So we'll keep focusing on that, and we will have our own growth.
You don't fear a pricing war or something because they have the deep pockets?
No, that is, see, everyone has their own brand positioning and brand placement, distribution network. So with that, we have our own strength, and we'll work on that only.
Okay. All right, so we'll leave it on that note. Thank you very much for joining in, and good luck to you for the second half of the year. That's RR Cable at the end of Q2. All right, let's get back to the market and see what the movers and shakers are looking like. On the large cap screen, it's really, still very much about Shriram Finance. And a couple of these auto counters that are still up and about. M&M, for instance, is up 2%. Sud was earlier telling us that I think on SUVs, it's been, again, breaking previous records. One of the highest, monthly sales on SUVs. I think it's more than 30%, if I remember the number correctly. Maybe we can get Sudarshan back up. Titan is a little quiet ahead of its numbers this week, 1% lower. That's what we have for the timing. Godrej Consumer, by the way, another one that's reacting very well to numbers. Godrej Consumer is now flying 5%. And speaking of flying stocks, we all remember what Navin Fluorine did on Friday, right? Look at Navin this morning. What a move on Navin Fluorine. I think all put together, it's almost 20% since the numbers came out. 5% again this morning on Navin Fluorine.
Just a small name is Dredging Corporation. It's a PSU. It's a 2,000 crore market cap company, and it's flying away. It's done very well. 650 last week, beginning of last week. It's at about 800 and almost 900. So as I said, look at the volumes. It's not small. Some large amounts of memorandum of understanding with lots of companies, PSUs and private players. These were all public exchange notifications over the last couple of years. And there you go. That's at the bottom of the screen as well. So some MOUs worth 4,000 crores in which dredging will participate. As we'll try and actually reach out to the company and see if they want to speak. We'll take a quick commercial break here. On the other side, Manisha Gupta will be focusing on the commodities. What's top of mind? Stay tuned. Coming up.
Welcome back. It's quiet at the headline index level. It's all about individual stocks today. So let's now turn our attention to the commodity markets and see what's happening there. Manisha, good morning. Monday, what are the cues and what's topping the attention list for you?
Well, metals clearly, and within that as well, I'm going to look at gold and copper, which has started as the next gold. I'm going to talk about both of these commodities right now. Gold first, and we are trading at around $4,000 an ounce. There was a knee-jerk reaction. We did see prices go down. Actually, for the month of October, when you look back at the month, we did see an all-time high of 4,380, and then we did see a correction all the way up to 3,925 on the lower side as well, holding around $4,000 an ounce at this point in time. Well, there has been pressure, of course, because of expectations of diminished further rate cuts, especially for the month of December, as the US Fed chair has spoken that it's not a foregone conclusion that you will see a rate cut coming in for December. So while before Powell spoke, before that, the possibility of a rate cut for the month of December was at 90%, which now stands at a 70%. So that's what's bothering the gold bulls right now. The other thing also is about the US and China trade deal that is lent more money to risk-heavy asset classes and not so much for safe haven there. But more interestingly, what has happened over the weekend and that the markets are keeping a keen eye on is the China Finance Ministry coming out with a notification that says that all buyers, retail buyers, that is, whether it is about investment, jewelry buying, industrial gold buying as well, the tax incentive has been scrapped starting 1st of November. Now, this means that starting today itself, you will be looking at gold prices increasing for consumers in China. That also says that whatever gold is being bought from Shanghai Gold Exchange, the VAT offset that the retailers were getting, they would not be getting now. A positive that we've seen in the other regional markets come in, that perhaps Chinese consumers will start buying in from other countries. Now, this could be for India, Hong Kong, Singapore. These are the markets perhaps China would buy because of the tax, easy or lower taxes therein. So this is something to watch out for in the coming days there. The other thing also comes in from China, where the China state-backed Non-Ferrous Metal Industry Association says that you could be perhaps looking, or they have proposed actually, setting a capacity cap for various metals like copper, lead and zinc. Now, the reason that China Association is doing that is because there has been lower processing fees, and that has continued to hurt the smelter profitability in last couple of quarters, as we have seen. So much so that the association has not even put in a guidance on what the fees is going to be for the last quarter of 2025. And this is perhaps happening for the last 3 quarters now. Copper concentrate processing fees is at a record low and has been for the last couple of quarters. That is because of the scarcity of concentrate availability into market. China also has seen coal, solar, steel sectors struggle with excessive supply, low profitability and lower prices as well. So when you look at the overall prices right now, they have continued to decline. Remember, China did put a cap on production in sense of aluminum capacity at 45 million tons. This was done way back in 2017. 45 million tons has been hit in last year. So that means China would be curbing production of aluminum starting into this year. This is what we've done in sense of prices, really. So while gold and silver continue to shine, in this year we've seen prices gain up by 53% for gold. 70% is back in case of silver as well, as we see stability coming in for both of these metals. And then take a look at the base metal prices. But within that, you've seen tin outperform, and then it has been copper with 27% of gains. And positive cues continue for other metals as well, barring steel, which is in negative for this year. And then coal, of course, is down 13% for the same time.
All right, Manisha, thank you very much for that. That's commodities in focus. We'll take a quick commercial break here. Lata in conversation with the management of Bank of Baroda on their second quarter numbers. Stay tuned, coming up.
Bank of Baroda stunned with its margins increasing by 5 basis points to 2.96%, whereas the street was expecting a fall in margins because of this huge 100 basis point cut in the repo rate that the Reserve Bank did in June. The other, positive surprise is the improvement in asset quality for Bank of Baroda. As a result, the credit cost, which is the cost of providing for bad loans, has fallen sharply. Now, the worrying bit is how does the bank prepare for the next expected credit loss regime, where you have to set provisions depending on what you expect in terms of a loss. The bank has said that their provisions will increase by about 22 to 25 basis points, which means we have to prepare for an increase in the provisioning. For all the short and medium-term questions on BOB, I'm joined by Managing Director and CEO, Mr. Devdutt Chand. Mr. Chand, good morning, and thank you very much for joining us. Well, many congratulations on the NIMS. That has taken the market by a very positive surprise. Can you tell us what would have been the NIMS if you didn't get that income tax write-in? Therefore, if there is no write-in in the second half, may the NIMS fall?
Good morning, and thanks for inviting me. And let me tell again, we had a good quarter in terms of both top line and also bottom line. And asset quality is one of the best in many quarters. It is the lowest point now. So saying so, particularly on the margin side that you talked about, yes, this is a normalized quarter. And in the normalized quarter, what is positive is the NIA growth that the bank has given. So it's something contrary to the market in terms of giving a NIA growth. Yes, there is an impact of this income tax refund, and the gap is hardly 350 crore quarter to quarter. Every quarter we do get something. But if you adjust that also, the impact would be something around 7-8 BPS on the NIM that we have declared global. On the positive, which again I say, apart from the margin that we talked about, the NIA is positive. The cost of deposit is all-time low at 4.91. Last time also I said that we were going to pierce the 5% mark. And I would say that the prudent liability management and the asset management is leading to improvement in the quality in terms of asset also, at the same time protecting the margin also.
Okay, well, let me just persist for a minute. You are expecting income tax refunds in the coming quarters as well?
It is. Every quarter we do get some amount. Sometimes it is higher or lower. This quarter, it is higher than the last quarter by around 350 crore.
Yeah.
Every quarter we get something, and last quarter also we had something.
Oh, okay. So you're confident that you have seen the worst in margins? Second half will be higher than first half?
See, I said...
assuming no rate cut, I mean.
Yeah. Assuming no rate cut and everything stands as it is, I think we have seen the lowest point in terms of pricing, both on the deposit and also lending, barring the MCLR.
Okay.
At the same time, the impact of this repricing would have happened in the quarter at different point of time. So some of the asset liability, possibly the impact would not have been felt for the full quarter, which is going to be the full quarter next quarter.
Okay.
That's why I said while announcing the bank's result, the next quarter, the margin is going to be range bound.
Okay.
And as far as Q4 is concerned, definitely it would be upward bias. Okay. Full year basis, we said the margin would be 2.85 to 3%. That's a guidance.
Yeah, that is flashing as you speak. We have your margins. I just wanted one more word on the cost of deposits. Your bulk deposits are still 17% of your total deposits. Are you, of course, there you have said that your bulk deposits include CDs. Is there a way of reducing the non-CD bulk deposits that can improve your costing?
It is so. If you look at almost like last 2.5 years, we have been guiding that we want to reduce the dependency. Earlier, if you look at a percentage of bulk as a percentage of total deposit, it was quite high. So we wanted to reduce that because it is a volatile component and always there is a price sensitivity to it. So as on today, the impact that you are seeing on the margin, the NI, everything is because of the prudent liability management. In the current composition of the bulk and CD also, there is a higher percentage of CD, the certificate of deposit. The term is less and the pricing is also less.
Okay. No, if it is CD, it's not a worry. It is just that you'll have merged it and presented the data. I wanted to know a bit about loan growth as well. Your total advances growth is about 60,000 crores compared to a year ago. But a good 30,000 crores has come from corporate, which is a little unusual. If you see quarter to quarter, your Q1 over Q2, there is a big jump in corporate loans. Why is that? They don't normally pay well, isn't it? MSMEs and retail, the return is better, the yield is better. Which sector is this, and will not that impact margins going forward?
Let me put the context therein. Actually, our overall growth on the advances is almost 13% YY basis.
Yes.
In that, the RAM is almost growing at 16%. The retail is growing almost 17.5%. The agri also has grown at 17.2%. Similarly, the MSME almost at 14%. On a YY basis, the corporate growth is only 3%.
Yes.
Sequential basis, the corporate growth is 8%. So in terms of the growth of the bank that we are looking at on the advances, be it for Q3 and Q4, the full year again, we are keeping the guidance that the same 11 to 13%. And the RAM continue to grow stronger, maybe 15 plus, whereas the corporate full year would be something around 10 to 11%. So in that way, our incremental, what you can say, the advances would be more towards the retail asset, the MSME advances, the agri advances, as compared to corporate. But corporate, we want to do better than on a YY scale. Sequentially, it is very strong. So there are pockets we are seeing there is a good traction therein. And we typically, within the book, we look at a core corporate and the refi deal. Slightly on the refi deals, we are slightly restrictive because that's a very heavily competitive market with a lower pricing. So we are mindful of the margin, and that's why, what I say now, you can very well imagine the NIM at 2.96. That talks about our prudent management on the asset side, particularly on the corporate loan book also.
Okay. Well, it's still, it's eye-popping. Only 3% maybe when you say that, but you look at 8%, 3.7 lakh crore has become 4 lakh crore. So it is a 30,000 crore jump, which which makes you wonder, whether you'll be able to maintain margins. But let me come to asset quality. MSME numbers, of course, keep coming up. They are the highest part of your stress. Are you worried that it might increase? Can you give us some guidance, or are you... MSMEs and agri loans, any worries at all?
No, I don't think so. If you look at the fresh slippage data that we have given, that is almost 2,669 crore. It's lower than the last quarter fresh slippage and also the lower than the same quarter last year also. So that's something that we are talking about the asset quality. Inherently, the quality is really good now. At the same time, if you look at the fresh slippage, the component wise, both under retail and MSME, it is lower than that of the last quarter. Agree, there is a marginal slippage over there. So in terms of the overall book, in terms of the SMA book, we only declared the more than 5 crore acrylic SMA 1 and 2. But internally, when we look at the SMA book, this book looks quite good. So in terms of the asset quality, I don't think there is any pressure, particularly the segment of...
Not even in agri, which you admitted.
That's marginal. 100 crore for a book like us is a marginal number.
No, I agree.
That's not... No, I mean, at the same time, the denominator is also increasing, you believe. So in terms of the GNPA per se on a component of agri also would be lower than that.
Okay. Let me come to recovery from bad loans. Overall, your GNPA is like a very good picture, nothing to worry. But recovery from bad loans obviously is falling. Should we expect any positive surprise there? Because you have some 42,000 crore in various NCLT proceedings. Is there a positive surprise likely? Because all of them are written off.
See, we said earlier also our normalized the recovery out of TWO is roughly around 700 to 750 crore. And this quarter, it is slightly lower at 483 crore.
Yeah.
But going forward, we want to maintain the normalized. One-off is always contingent upon a host of factors, including the processes and many things. Look, the Q2 of last year, we had a significant one-off. That's why when we compare the net profit, we say there is a YY negative. Whereas suppose I adjust that, and then the net profit is almost 22% of positive growth this year. So one-off is always we have a good kitty, but then these are again sticky accounts. But at least one thing that I'm pretty sure that going to be, we can maintain our normalized 7 to 750 crore out of the TWO account, recovery of the TWO.
Oh, that's good to hear. Very quickly, the two major changes announced by Reserve Bank on expected credit loss provisioning. You said your provisions will increase by 22 to 25 basis points, your credit cost, sorry. Exactly what will the impact be, and for how many years will this be, this likely increase in credit cost?
Look, there is a one-time impact and there is a recurring.
What is the recurring impact, sir?
Recurring, we said the credit cost can go up by 20-25 BPS once, the ECL...
For 1 year or couple of years?
It may, we'll just look into that. It's a very provisional back of the envelope calculation as on today. One is that I said the impact, ECL impact on the CRAR is going to be 1.25. At the same time, the lower, the RWA because of the credit risk, which is again also being announced, that is going to give a positive almost 60 to 70 BPS. So net to net, it would be something around 0.75 on the CRAR, which would be again spread over 5 years' time. At At the same time, the recurring would be the credit cost can be 20-25 BPS. That's why, in spite of all this asset quality that we have announced this quarter, we kept the slippage ratio guidance and the credit cost at the same. The slippage ratio guidance is 1 to 1.25.
Okay.
Credit cost would be less than 0.75.
Okay. So that includes the ECL impact.
I mean, probable it would include that part.
Okay, got it, sir. The final question is on these ECL guidelines. The ECB guidelines. Now, foreign branches of Indian banks can also participate in acquisition financing, and banks also can participate. Of course, they are draft rules. Now, you have, a fair good network of foreign branches. So, say 1 year down the line, when both these draft rules become permanent rules, will you see more money made out of that acquisition financing?
I would not put it as a money made, but then there is a good opportunity for a bank like us to play a significant role therein. We are there in international market, and international market, this is established product. So we understand the market, we understand the product. So in that way, once it is implemented, see, we have a large book also domestically. My international book in rupee terms is almost 2,20,000 crore. So in that way, I think it's a very good product that need to have. As India getting into a mature market, I think we need to have this product. And once it's rolled out, I think a bank like us would be having I'll not put it as an advantage, but an opportunity for us to play a significant role there.
Okay. Yes, I guess there will also be advantages when deposits insurance becomes market-based. You may perhaps have lower costs, but those are yet shooting in the dark. We'll have a longer conversation some other time. For the moment, the market has given you a huge thumbs up. Your stock is up 4.4%. Many congratulations, Mr. Shah.
Thank you very much. Thank you, Lata. Thank you.
We wrap up on Bazaar on that note. Chartbusters coming.
Shriram Finance is the top gainer on the Nifty after a strong set of numbers in the second quarter. The credit costs remain stable while loan growth remains strong. The management also tells CNBC-TV18 that the demand for commercial vehicles remains very strong.
Godrej Consumer second quarter numbers largely meet estimates while also registering better than expected volume growth. The company also announced an acquisition of a male grooming brand Moustache for about 450 crore rupees over 2 tranches.
Intellect Design surges on the back of a strong showing in the second quarter, while margins expand by around 600 basis points. Profitability nearly doubles. The management in the earnings call also sees significant deal funnel of around 12,000 crore rupees.
Urban Company reports its first quarterly numbers since listing. The loss expands year on year as higher investments in the India business lead to a contraction in margin, along with the investments that the company has been making in Insta Health. The stock, however, has come off morning lows on account of good growth prospects.
Balkrishna Industries opens with cuts but recovers some ground as US tariffs and slow demand hit volumes in the second quarter. Margins also contract by close to around 200 basis points. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and we're still pumped up after yesterday's win. The girls in blue doing us proud, but we're tracking markets for the remainder of today. So Mangalam, as we can see at the top of the screen, Nifty more or less flattish.
Nifty more or less flattish, the girls doing us proud. More importantly, what we're also looking at, Amol Mazumdar, what a story, man. He was waiting for, his India jersey. That did not happen actually. And thereafter, it happened. When it did, it was as the coach of the world champion team itself. But
Mangalam, it tells you, right, at times that in fact success ultimately will come. You put in the hard work. It could be delayed, but it's never ignored. I think Amol Majumdar, wow, great achievement, and happy to see that he's part of this large success that our ladies in blue have managed to achieve.
All right, speaking about ladies in blue, let's go across to another lady who has been tracking all the charts. We have Shivangi Sada of Motilal Oswal Financial Services joining in for a quick technical check on the market. Shivangi, it looks like the market's given way to the celebrations that we're seeing in the in the cricket field right now, as a result of which the Nifty is just about flat. Where do you think that goes?
Yes, very good morning, Mangalam and Nigel. Thank you for having me. Big proud moment for India, and congratulations to the entire Indian team. Now, of course, we've seen that the markets have fairly cheered up from the lows after the correction of the last 3 to 4 trading sessions, where we saw that the Nifty has given up more than 350 odd points. But overall, there has been excellent support at 23,600 mark, which is being respected as of now. But overall, we have seen that put call ratio has sunk. So, somewhere we are seeing that follow up momentum is missing in the market, which is why we're witnessing swings from the opening tick today. But overall, we are going with buy on decline in a broader setup because the support-based buying is quite strong. So we're looking at 25,600 as a support immediately, and then positionally 25,500 would act as a good base here for an upside move towards 25,850 and then 25,950 levels. So this was the take on Nifty. Talking about Bank Nifty, of course, we've seen that this has been one leg which has supported the entire market to stand up today. And, somewhere we are seeing that PSU banking stocks have been, the star performers, and they're holding the Bank Nifty near about 58,000 levels. So till the time it holds, above 57,500, there is buy and decline to continue over here for the next targets towards 58,350 odd levels. And 57,500 would be the support to watch out.
All right. Hi, Shivangi. Good to see you. And as always, you've given us a call on indices, urban individual stocks.
Yes, Nigel. So talking about the strength in Bank Nifty, of course, my first pick would be from this pick, which is Canara Bank. We've seen excellent amount of long build up in the last 3 trading sessions. In fact, November series started on a very positive note with the positive rollovers that were carried over from October. And we've seen that Canara Bank has been one stock which has resiliently moved in the last 3 months, contributed the most in this entire rally that has, that has been seen in the Bank Nifty. And we've seen that this stock has a very strong, follow-up buying, which is kind of helping the stock to hold at the higher level. So recommending a buy here with a target of 146 levels and a support of 137 levels. And the second pick on my radar would be National Aluminium. We've seen that metal stocks have also started shining, and this has been one stock which has been fairly resilient and stable as compared to the other names. And we've seen that it has been consolidating from the last 6 trading sessions on the higher band, which is kind of making it a good base for, creating a base for the next upside move. And RSI is showing positive divergence here. So this one's looking quite positive for the next up move towards 250 levels and a support of 232 levels.
All right, take that point. Thank you so much for that, Shivangi. With that, let's go across to Vivek now. He's standing by with the MSCI rejig expectations. What are the stocks which are likely to be included, excluded? What could the likely flows be? Vivek.
Well, good morning. That's right. So, when you're looking at November 6th, early morning is when you will get the changes that will be announced by MSCI when it comes to the November index review. We will be focusing on the MSCI India Standard Index changes, given the fact that that is the one that will have the most change or will have the most impact in terms of stock price as well as volume action. Now, also remember, India has been a significant underperformer this year relative to other emerging markets, and therefore, India's weight in the MSCI Emerging Market Index has actually dropped to approximately 16% levels from the levels of almost 19.5% they enjoyed just at the start of the year. So it has been a stark underperformance by India. But hopefully this particular event is a weight up event, and you will actually see India's performance as well as weight increase in the MSCI Emerging Market basket. Now, talking about the expectations itself, first, quite a few likely inclusions, 5 likely inclusions. GE Vernova T&D, analysts estimate close to a little over $300 million of inflows. Fortis Healthcare, close to $460 of inflows, $1 million. Siemens Energy, Paytm could make the cut this time around, and Minda as well. That is a slightly lower probability compared to the rest, but in case it does make the cut, it could see inflows of a little over $215 million. On the other hand, Tata Elxsi could exit the MSCI Standard Index, and again, a low probability event, Astral 2 could come out and could see selling pressure of close to $150 million in case this particular, MSCI decides to delete it from the index.
All right, thanks a lot for that, Vivek. Well, the jury of the 21st India Business Leader Awards met in Mumbai to pick the winners. They included the biggest names in corporate India. I caught up with SBI's C.S. Sethi and started off by asking him about the banking industry's next big frontier. Let's listen in to what he had to tell me.
I think we are going through one of the most benign asset quality life cycles in the financial services. And I'm sure with a lot of improvement in underwriting and the way we are looking at and the data availability, the asset quality cycle will continue for some more time. I think the balance sheets of the banks are good and profitability has improved. What banks have to definitely look at is in terms of the customer offerings and the expectations from the customers in terms of intuitive customer surveys, personalized and hyper-personalized surveys. We are now focusing on in terms of technology, digitalization, and without losing the human touch. I think that's a unique feature of Indian banking industry now.
All right. Asset quality is looking very, very good. You all are adapting as well to the customer needs. But some bit of a niggle in terms of worry is the credit growth pickup is not yet there. The RBI has clearly pivoted towards a pro-growth focus. Do you think we're in for better times and that credit growth uptick that we'd like to see is just a matter of time?
Absolutely. I think a couple of things. Of course, as you mentioned, RBI has done, kind of banking reforms 3.0, what I called 22, announcements, which MPs, a wide-ranging announcement, which moved towards growth orientation, as you mentioned. And more importantly, I think both fiscal measures in terms of the income tax relief up to 12 lakh rupees and the GST readjustment of the GST rates, the stage is set in my view. And as far as credit growth is concerned, it's not appropriate to say that credit growth is not happening. Some sectors are doing extremely well, yes, obviously. And when we talk about corporate credit, it is waiting for sustained consumer demand in the country, and we see that a visible uptick on the consumption side. And if it is sustained, I'm sure the corporates will come back to the private capital expenditure.
Mr. C.S. Sethi sounding extremely optimistic and hopeful that corporate credit is likely to pick up, and the second half of the year we're going to see that big credit growth that we've been talking about. Well, let's move on now, and it's time to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and helps you understand the why behind the what. Here's today's chart and what it means for your next market move. Intellect Design Arena, that's a stock on the screen, showing a descending triangle pattern and a bullish breakout. As you can see, a descending triangle bullish breakout pattern forms when the prices consolidate with the lower highs but strong support, and a breakout above the upper line. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on the screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. The market's picking up pace. In fact, when we started the show, the Nifty was flattish, now sitting with a gain of almost 50 odd points. What has led it higher right now? Over the last few minutes or so, we've seen the Nifty Bank pick up. So the Nifty Bank is now up around 350 points, and that's led the Nifty to actually be higher at the high point of today's trading session. Let's see whether we cross past, what was the earlier support zone, which will now become a bit of a supply zone between 25,850 to 25,900, and we sustain above that or not is something we'll most definitely be tracking. Axis Bank, SBI and BPCL are the stocks which are at the high point of trade. But let's talk about another stock which has been buzzing around. It's Godrej Consumer Products. The company's September quarter numbers, they were largely in line with expectations. This is something that, the street was anticipating given the second quarter update that the company had given, but that itself was better than what the peers had reported, especially in light of what HUL had reported. Absolutely flat performance here, a 3% volume growth the street liked. Apart from that, the company has gone ahead and made a small acquisition, and more importantly, the management commentary also for the second half positive. But to delve more into those numbers, we do have with us the CFO Asif Malbari joining in. Thanks a lot, Asif, for joining in. The quarter that has gone by, let's talk about now the GST related disruptions. Have they ended, and what's the kind of restocking demand that you saw in the quarter so far? And on the back of that, what's the outlook that you can give for H2?
Yes, I think you're right, Mangalam. The GST impact was basically a transitionary impact on trade. And we did see that in Q2, but we are seeing actually the benefit of some of the trade upstocking coming back in Q3. So to that extent, I can say that the transitionary impact is behind us. The reduction in GST rates in soaps category is definitely a positive for us. It is going to result in better demand environment, and in the medium term, this should be kind of positive. We're seeing a normal festive kind of impact in terms of secondaries. So we've kind of guided the street that we should be on track to deliver high single-digit volume growth for the year in India, which is what we had guided in the beginning of the year.
All right, just to clarify that, Asif, you're targeting high single-digit volumes in India for the second half or for the full year?
We are. So I think some of the losses which we saw in Q2 onto a volume because of transition impact should get made up in Q3 and Q4.
All right. Okay. So the second half plus the full year, you should do high single-digit volume growth. And what about the margins? India business margins, when do they go back above that 24% normative range that you spoke about earlier?
No, so we're quite confident that from Q3 onwards, we should be able to get into the normative margin range. We also had guided the street that we should be able to deliver double-digit EBITDA for India business and for the consolidated business. As things stack up now, we're quite confident that in two of our biggest clusters, which is India and Africa, we should be in line with the guidance. We will be able to kind of stay on our guidance of delivering double-digit EBITDA in India and in Africa. And margins will kind of come back from Q3 onwards in the normative range.
Let's turn our attention to Indonesia then. How long before Indonesia returns to the growth path?
So we have fortunately held on to the volume trajectory. We have grown in low single digit in volume terms. The revenue and profits did get impacted because of competitive action and also because of some of the costs which we were incurring. We've passed it on to the dealers to incur, so that's had an impact on the revenue. We do feel that it'll take a few more months for Indonesia to kind of get into top line and bottom line growth. But structurally, the business is strong. We're gaining on volume and we're strengthening the market shares.
All right. What about the growth and scale plan for Moodstack, the one that you've acquired for about 450 crores to be paid over 2 tranches? What's the delta here? What's your expectation from this business? And how big do you expect it to be from here on?
So firstly, it's a great product. It is the #2 brand online for men's face wash. It's a very focused men's face wash play. It's a category which is aligned to soaps, and hence it is extremely strategic for GCPL from that perspective. So we are quite excited with the potential of GCPL using its GTM to kind of expand reach for this business. And hence, to that extent, the ability to scale this seems to be quite high.
Right. Ability to scale is quite high. So, the GTM difference between yours and theirs is also a lot, right? So, could you quantify that? How much could the revenue be in the next 3 to 4 years?
Mangalam, we do see this business becoming close to anything between 4 to 5 times in terms of size. So we do see a drastic kind of scale up of the business over the next, say, a band of 3 to 5 years.
But what are the current EBITDA margins for this business?
So definitely it should be margin accretive. We definitely will ensure that this business will, if nothing else, be at the same levels of EBITDA which GCPL has after significant investments being made in ATL. Because as we start scaling this brand into GT, etc., there could be scale up of ATL spends which we may do. But again, it's a unique business because a large part of the B2C businesses are currently not profitable, and this is a profitable business which we are acquiring.
Asif, what's the update on pet care? How long before the national launch?
We're in the test market, so we've launched it in Tamil Nadu, as you are aware. It's kind of meeting action standards. We are gaining sequential volumes every month. So yeah, we are on track to kind of expand the footprint in a couple of quarters.
All right, in a couple of quarters is where you will go for national launch out there. What about the further diversification plan that you have? Because, ever since the new management has taken over, you've entered a lot of new categories, which include the likes of now toilet cleaner, they have the fabric wash, etc. So do you have a sense on, what kind of revenue mix would the company have over the next, say, 3 to 5 years?
No, thanks for the question. It's an interesting one. We do have a strategy which we call as the 2040 strategy as to where do we want to see GCPL at. I wouldn't be able to kind of give a guidance in terms of a number, but definitely TAM expansion is a significant part of that strategy. Given some high growth categories where we do believe we have a right to win, and we're kind of doing that in a staggered manner in terms of entering these categories. As you mentioned that in the last quarter, we made entry in terms of the toilet cleaners market. We've launched Godrej Pick, which is a very unique formulation, which is a stain block formulation, which allows for 5 days stains to be blocked after usage, and hence a great product. We do see a higher growth coming in from some of these new age categories compared to a few categories where the penetration levels are extremely high. So you will see a shift between categories spanning out as some of these new categories start reaching a higher inflection point, which should happen in a couple of years from now.
Well, Asif, how long before volumes go to double digits?
I think the demand conditions have been, I would say, in various parts, there was a bit of consumption stress earlier in rural. Things are looking better as we speak now. With GST, there is likely to be a consumption boost. So I think if demand conditions improve and some of our new plays become into slightly more larger to kind of contribute, we should kind of get back into our North Star, which is double-digit volume growth in India. At this year, we've guided ourselves on high single-digit volume growth, and we're quite confident that we should be able to get there.
All right, confident of high single-digit volume this year, and if demand sustains, then maybe a North Star of double-digit volume in the next year itself. Wish you good luck. The street likes your numbers. More importantly, they like the outlook that you've given, Asif. And the onus is now on the second half for margin expansion and volume growth as well. With that, we'll get back on the markets and stock-specific action after this short break. That's the management of Godrej Consumer. Stock holding up with a gain of nearly 5%.
Welcome back. Markets holding with a gain of around 25 points. So earlier this morning, we had highlighted that the PCR had moved to around 0.6. Normally, when you see that, you see a bit of a bounce, at least on an intraday basis, and that's precisely the way it's panned out. The PCR had moved to the lower end. You had FI shots in the system as well, so that's a good combination actually to have. But from the broader markets, a lot of stocks are moving around. SPFC, pull up the intraday chart out there. That stock has moved to the high point of the day. So good bounce is what we're seeing on that name. You pull up another name like Suntech Realty as well. That one as well has seen a sharp correction from the top. Well, that's pulling back today, moving higher on good amount of volumes as well. So that one should be on your radar.
All right, we'll watch out for all these stocks as we progress through the day, and also keep an eye out on the auto space. Discuss that in the big story on our next show, which is Trading Hours. So we'll wrap up on this edition of Chartbusters with the news that the market's holding fairly well. Let's see where it goes from here. Take your leave, come back, and then you have the team of Trading Hour.
Good morning. Welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Fatakia. Hey guys, it's a Monday morning and we have a lot to talk about. But right now, it's a recovery that we're seeing from the lows. It's a 100-point recovery that is underway. Nifty is at that 25,750 mark as we speak. And Bank Nifty is the one which is leading the gains today, 0.5% higher on that. And PSU Banking Index, that particular space has done so well. That index is up around 2.2%. We have the mid-caps up 0.3%. Actually, these spaces are doing better than the benchmarks currently. But of course, it remains to be seen whether we'll see further recovery from the lows of the day or not. For now, it's a 100-point uptick that we are seeing. Nifty, PSU Banking Index, Realty, Small Cap Index, Oil and gas, all of them doing really well. And we do have some big numbers that we'll be talking about. But for now, this is what the market scenario is like.
Titan, Tata Consumer, Bharti Airtel, these are the big numbers to track today. And tomorrow, of course, you've got State Bank of India. But Asia is also largely positive, especially the Korean markets. That's got a gain of close to about 2.5%. Hang Seng is higher by nearly 1%. So some optimism is also rubbing off from the Asia Pac. But let's now talk about stocks. Hormus is now joining in as he puts the spotlight on the top movers in the market. Hormus.
Well, lots of news flow, earnings reactions. We start off with Dredging Corporation. Multiple MOUs that were signed by the company. 20% upper circuit on the stock. Up 40% now in the last 5 sessions. And out of those 5 sessions, the stock has gained in 4 of those. And in this 20% upper circuit, we have had close to 30 lakh shares that have changed hands compared to a 20-day average of just a lakh. And it's had a good last 3 years. It's delivered positive annual returns in all of them. Strides Pharma was up on Friday, extending its gains in today's session as well. 7.5% higher, is trading at a 52-week high, the 4th straight day of gains for the stock. And it's higher by 26% in the last 4 trading sessions. And the stock has had close to 25 lakh shares that have been traded. The 30-day average here is only 80,000 shares. And from the lows of 2023, which were around close to 150 rupees, the stock is up almost 7x from those levels. And LG Balakrishnan, will hear from the management in just a few minutes from now. The biggest single day gain in at least 5 years for the stock. Has gained in 5 out of the last 6 sessions. Almost 10 lakh shares have changed hands. 20-day average is only 35,000 shares. So good go for LG Balakrishnan. Earnings reaction and a lot of news flow dominated names as well today.
Oh, yes, a lot of them actually. And we'll keep discussing that. LG Bala, in fact, we'll speak to the management in just a bit and ask what went right this quarter, because the management had been indicating some weakness because of the US tariffs that were coming by. By the way, Naveen Fluorine is the other stock which is on our radar. Remember, reported numbers on Thursday. It was a strong set. And again, there is a 5% uptick that we are seeing. In fact, it surged 6.5% there. So that stock should be on your radar. The company upped its EBITDA guidance. It was a strong quarter, looking at revenues of $100 million in their CDMO business. Apart from that, we do have Sunteck Realty. So some of these realty names doing really well. So Sunteck Realty is the one which is up 6%. We have Mahindra Lifespace's reported numbers. That one is up around 5.5%. Also, a lot of these pharma/API names or hospital names. So you do have Wockhardt, which is up 5%. There's Sequence Scientific, which is up 3.5%. Newland Labs as well, doing well in trade today, 3.5% higher right now. There's Gland Pharma, which is up 3.5%. So some pockets which are doing really well, realty and pharma being some of them. And autos, of course, that continues to be our big focus point today. That will be our big story. And that is something we'll discuss in greater detail. But a lot of moving parts in the markets today.
A lot of moving parts indeed. And PSU banks, of course, is one such name pocket as well. Bank of Baroda is at a record high now, 4.5% higher on the stock. And Indian Bank continues to move from strength to strength. At the end of 2020, the stock was at around 85 rupees. And it's now close to 900. So in the last 5 years, it's been a 10-bagger is Indian Bank. And some analysts are also suggesting that this could potentially be an MSCI inclusion when the review comes up in just a few days from now. So that is an added trigger. And of course, the weightage change on the Nifty Bank, and that is pushing a lot of these smaller PSU bank names higher as well. Canara Bank, Union Bank, UCO Bank, all of them, and every single constituent of the PSU Bank Index doing well for itself in today's session. At the highest point of the day, they were doing the heavy lifting even in the week gone by, and they are continuing to outperform even in today's session. What is not doing so well though, among the names, of course, we'll get to those in just a bit, but a corporate conversation, as Sonal was mentioning, autos being the big story. Maruti reported numbers last week. Those are in line to a slight beat on higher realizations. Parikshit spoke to R.C. Bhargava, the chairman of Maruti Suzuki, and he began by asking him about the impact of the GST cut on sales. Listen in.
As we have seen, once the new GST rates came into effect on the 22nd of September, and this was a festival season, there was a huge rush of retail customers to buy vehicles. And in the month of September, for the last 9 days, and in October, there have been record retail sales. The dealer stocks have all come down, and the growth rates and the volumes of cars actually delivered to customers has all been at a historical high.
Could you give us a sense of the kind of growth that you're seeing in the small car segment?
In October, for example, the growth of the cars in the 18% GST segment has been as high as 30% compared to last year.
Do you expect this growth to continue for Maruti Suzuki?
I don't expect a 30% growth to continue, no. I think it'll come down because there's a lot of pent-up demand and festival effect and things like that. So it would be unrealistic to expect a 30% growth rate to happen month on month. But yeah, it may settle down to maybe around 10%.
Overall, when you put Maruti Suzuki all together, not just the small car segment, on a month-to-month basis, what kind of growth are you expecting?
Well, I would say that once it settles down, we should probably be looking at a growth rate of about 7 to 8%.
When it comes to margin pressures, we did see a margin pressure of around 160 basis point. This is because of certain costs that the company had to incur. Do you expect a favorable environment which will help margins in the months to come, sir?
You know, if the demand goes up and the car manufacturer is able to produce in line with the nature of the demand model-wise, the pressures for discounts and things becomes far, far less. Discounts happen when, in certain models, the production is higher than the demand. I think Maruti's production system has become much more flexible. And the demand also is going up much better than in the past. So probably, and I'm just saying probably, I'm not forecasting anything, probably the factors in the future are conducive for the reduction in the discounts and sales promotions which will be required.
In terms of your electric Vitara launch, could you give us a timeline for that? When are we expecting that?
The domestic sales will probably commence late December, early January. Next month. Well, it's almost next month.
Right. Recently, we had seen news of Maruti Suzuki setting aside 7,410 crore rupees to set up a third plant at Karkoda. The plan is to increase the capacity to 7.5 lakh units there by 2029. There have also been reports, Mr. Bhargav, that Maruti Suzuki was looking now at having another plant, probably outside Haryana. Could you give us the status of that, whether talks have reached some sort of finality? Has a site been identified?
We are close to finalizing the site for the fifth plant. I expect that an announcement of this should be possible within the next 3 months. We do need now the fifth plant because the total projections for the growth of the cars by 2031, compared to what the projections were made before the GST cut, will have to undergo a revision. And depending on that revision, the production capacity additions will also have to undergo a revision. And I expect that we will need the fifth plant earlier than what, production from the fifth plant earlier than what had been earlier thought would be the case.
Any states which are possible front runners?
No comments at this stage.
Okay. I would also like to ask you about export growth. We've seen a strong export growth of around 42%. What is the kind of export growth for the full fiscal year that you're expecting?
I don't know the percentage, but we expect to cross 400,000 cars, maybe get to somewhere near 420,000 cars or so. Last year was 310,000 or something. So it's more than a 25%, 33% growth.
The management of Maruti Suzuki, the stock not doing well enough in today's day, 3.5% lower after its results. Now take a short break, put the spotlight on the crypto markets. On the other side, Manisha Gupta joins in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Hello and welcome to Crypto Corner, and today we're talking about crypto mining, and that perhaps is the most important link when you talk about cryptos and blockchain, etc. So when it comes to crypto, it is a process which is decentralized network of powerful computers, verifies in sense of making transactions there. Also, it's pretty important because it records them on the blockchain as a ledger. It also is the fact that various countries now allow or don't, and there are many regulations across countries. China, for one, does not allow mining of Bitcoin or various other cryptos, but this is essential for maintaining security and, second, integrity of the network. There are various other countries which are offering subsidies or even incentives, for that matter, when it comes to mining of many of these cryptos. Now, this also is a mechanism by which new crypto tokens are introduced within the circulation. We also do understand that many of these cryptos have a limited number of supply that we will ever see, and that is how the mathematical calculation has been put in. Various type of crypto mining is what we're going to be talking about right now. One, of course, is solo mining. This is done by an individual alone, and the success rates on this one are pretty low. The other is pool mining. In this case, a group mining for pool rewards is done. A lot of individuals come together, they pool their resources, and of all the mining that they do, those mined cryptos are then distributed equally amongst all of the people who had come together. The third type in this case is cloud mining. Within this case, it is renting the mining power from a third party. This also has a 25 out of 100 in sense of a success rate, but it usually is pool mining that is the most famous and most successful as well when it comes to overall crypto mining there. The other thing also is about the kind of hardwares and softwares that you are using when it comes to mining in crypto. One is, of course, CPU mining. In this case, a standard computer processor is used. The second one is GPU mining using graphics card. And the third one in this case is ASIC mining or ASIC mining. In this case, it's slightly more specialized, slightly more expensive and complex as well, but it does use specialized hardware there. And finally, it is about creating new tokens. So within this, you're looking at two major things: certifying new transactions, adding them to blockchain, and creating new tokens. In this case, you have proof of work and proof of staking. The first one I want to talk about is proof of work. Here in this case, you're looking at more established, tested security model. Bitcoin uses this kind of a model. And in this case as well, it is slightly on the expensive side. More energy is also used, but this offers a strong decentralization. As I said, is more energy intensive and less scalable. The second one, of course, is proof of stake here. This is the one that is used by the latest of blockchains in sense of Solana, Cardano, even Ethereum too uses this. This is newer and more energy efficient model, so as to say.
Thank you very much for that. Get into a break. More on the markets on the other side.
Corner, powered by CoinDCX.
Welcome back. Let's invite the management of Premier Energies on our show now. The company reported a good Q2. The net profit surged 72%, while revenues and margins too expanded versus last year. Vinay Rustogi, Chief Business Officer at the company, is now joining in. Vinay, thank you very much for joining in. This is Rima here. Is it true that in Q2, many customers deferred module purchases to avail of lower GST on solar product? If that's true, can you quantify maybe the loss of revenue in Q2 on account of that? And therefore, how is Q3 panning out? And if you could share any guidance for FY26 second half of the year in terms of order inflows?
Sure. Thank you for having me. I think what happened in Q2, there were two big trends that we saw. One, there was exceptional rains during the quarter, because of which many sites were not ready to receive modules and the project implementation was delayed. Second, as you said, at the end of the quarter, 22nd of September, the GST rates came down, and hence many customers deliberately tried to delay the shipments. So because of these two factors, there was a slippage in shipments, I would say, of the order of about 240 odd crores. And these shipments are basically effectively moved on to Q3 of this quarter. So overall, there's no impact on the business. For the future, I think, as we have said, our order book is very strong for the year. In fact, we added 6,500 crore rupees of orders during this quarter and are nearly sold out for the next 12 months of production. So the outlook for the business is very good.
Okay. So Vinay, two-part question here. Has the GST cut that has come by improved visibility in terms of order inflows? Is it better than what you had anticipated at the start of the year? And secondly, now we are seeing a lot of competition which has come by in cell and module space, right? Some big players as well. Do you think this is something which will increase the competitive intensity and ultimately impact prices, because more the volume, lesser the pricing would be? Will that impact returns going forward? How do you manage that?
Sure. So the first question on the GST, the solar market has multiple segments. There is the utility scale, there is open access, the private market, including the rooftop sector as well. So in the utility scale, most of the benefits of GST rate reduction will go back to the power purchasers, i.e. mostly the discoms and the government agencies. So which we don't see much of an impact. In the rest of the market, which is accounting for about 50% of the total demand now, the end consumer is the direct beneficiary, whether it is a corporate or a household, of these GST reductions. So we definitely see a demand uplift coming from that segment.
Vinay, yes, please continue.
No, please ask me. Go away.
Yeah, the same question that do you think going forward, yes, that the demand is increasing because of these GST cuts in general, impact that we're seeing on consumers, but for businesses per se, do you think returns would be lower?
Yeah, so first of all, because of the GST, there is no impact on businesses like ourselves. We obviously pass on the GST, whether it is an increase or a decrease, directly to our customers. And on the contrary, if the rate goes down, the cost for the end consumer goes down, the demand goes up. So we are actually a direct beneficiary of the rate reduction. Coming to your question about competition, new companies coming in. So look, I think the sector is growing very, very strongly. We are seeing something like 50% plus growth in demand year on year. We saw that last year. We see the same trend continuing this year and possibly the next year too. So the demand is very, very strong. The government is obviously focusing on domestic manufacturing. Inevitably, more companies are going to come into the sector, which is fine because we believe the sector is big enough to accommodate new players. In terms of on the pricing pressure and the margins, there are many things that go into the mix determining overall profitability of the companies. But I would point to three things. One is the scale. Second is vertical integration, and the government has made it very clear that they want more and more of the value chain in the solar sector to come in India, and not all companies are going to be able to do that. On the scale side, we are increasing our capacities from something like 3 and 5 gigawatt right now to more than 10 gigawatt over the next 9 months. And we are also upgrading our technology. So we believe that because of these changes, including scale, vertical integration, and new technology, we will be able to stay ahead of the curve and still be able to make attractive profits.
Vinay, you have been also pushing fast on the capex bit. You are aiming for a cell capacity expansion. You have raised the size of your upcoming wafer ingots capacity as well. How much capex would that entail? And also, what and how do you fund this capex?
Yeah, so in total, our capex, including the current year and the next 2 years, is expected to be about 12,500 crore rupees. We have a very strong balance sheet. Our total debt to EBITDA number is in the negative right now, and we are also obviously generating a lot of cash. We expect to generate total cash from income from operations of more than 6,000 crore rupees over the next 3 years. So our plan is to fund most of the capex through our internal accruals, and we will raise some marginal debt, still giving us a very attractive cushion, a healthy cushion in terms of the funding capacity of the company.
Okay. All right. Thank you so much, Vinay, for joining in today and answering our questions about the outlook on the business and the industry in general. With that, we'll slip into a short break, but a quick note for our viewers, if you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts and insights to power your investing decisions. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So do not wait, scan, subscribe and make your portfolio shine brighter with Super Pro.
Welcome back. Still at 25,750 is where the index stands currently, at 25 points higher. But of course, it's a 100-point recovery from the lows of the day. So pretty much where we started off the show with. A good time to get in Mangalam, who is at the F&O desk, to tell us what exactly is the F&O data indicating for today's session.
Well, before the day started, the data did suggest that there could be some support coming in around that 25,650, 25,600 sort of mark. And from there itself, we've seen a near 100-point recovery. But where we are at right now, it tells you that the market may consolidate at these levels itself. Why do I say that? Because, the Nifty is recovered from the lows. It's been led by the Nifty Bank. And the Midcap index is doing okayish as well, with a gain of almost 0.4%. But the volatility index has spiked. Now, remember, when the market was falling, the VIX did not fall as much. But now that the market has recovered from lows and is consolidating, the VIX has seen a rise, which tells you that maybe the option writers are fairly jittery about a big breakout. Because if that were to happen, then maybe we would have seen the VIX come down as well. Right now, we are seeing the metal stocks pick pace. So just keep an eye out in the second half for names like Tata Steel, JSW Steel, SAIL. All of them have been recent movers in the last 15 or 16 minutes or so, we've seen an up move on these stocks. So which is why on an absolute basis, there's not as big a gain. But if you look at the intraday charts, you would realize that there is some buying which is emerging out here. With today's up move and the recovery that we've seen from lows, one thing is clear, that the support at around that 25,600, 25,650 is established because the 25,700 put writers are fairly active. Even the 25,650 put writers fairly active in today's trading session. So if you plug the premiums out there, 25,600 to 25,650, which is corresponding to today's low, is where we see some sort of recovery. But however, on the way up, there is supply coming in around the 25,800 to 25,850. Remember, on the way up, this was earlier a bit of a resistance. Thereafter, when we broke out, this became a bit of a support. And now there is a phenomenon called reverse polarity in technical indices, where, every time the market crosses past a certain resistance and falls below that, that becomes another resistance. So 25,850 to 25,900 is where we can see some supply emanate. A lot of individual stocks on our radar. Godrej Consumer, decent results coming in, but the management commentary positive. Shorts were caught on the wrong side out there, and which is why this up move has been led a lot more by short covering rather than fresh long build up. But there have been a lot of shorts which have added their positions on Patanjali Foods. Despite a decent set of numbers coming in, the stock is down about 5.5%. So a lot of short positions being added. And also watch out for the open interest build-up in Patanjali Foods, because it's seen a jump of nearly 30 percentage points. If it increases a little more, then maybe the stock goes into F&O ban, but we'll watch out for that.
Indeed. Mangalam, thank you for that update from the F&O desk. And let's take this conversation forward with George Joseph from ASK Investment Managers, who is now joining in to talk about markets and a lot more. George, good morning. Thank you for joining in. What do you make of the earnings season so far? It's not been the most earth-shattering results, if you could call it, but no bad news is good news if you would take that positive.
Absolutely, absolutely. So we are seeing that, after last couple of quarters, actually it's bottoming out of the earnings and the earnings picking up. And we are of the opinion that the earnings is looking interesting in a couple of pockets, especially the domestic cyclical sectors. It is looking very interesting. And, what we are seeing as a muted earnings season, specifically from the global companies and, especially exposed to, ex of US also, we are seeing some sort of slowdown.
George, where did we see the big beats in Q2? What are the sectors or stocks or themes that you're betting on for the next 12 months? I mean, what has changed in your portfolio or your recommendations to clients over the last 3 or 6 months?
What we are seeing is that, it's a very interesting time. You're seeing the festival season has started quite well. And you're having a very low inflation interest rate scenario. The NIM compression for banks is behind. The problems in MSME, SME segment, which is clearly noted in all the con calls of large banks, saying that, that is also behind. The MFI issues are behind. So we are at a situation as a cusp of massive earnings recovery. And I believe that in the next 1 year, you will see all the domestic cyclical sectors, which are predominantly into banking, financials, auto ancillaries, which anyway is showing good results. We are going to see a good tailwind of growth coming in. Cement, name it, which is linked to the domestic economy. That's where we see a good possibility of growth.
Okay, so this is about some sectors which are domestic facing. What about chemicals in general, George? A lot of these companies have reported good numbers. Specialty chemicals, let's talk about fluorochemicals. Navin Fluorine reported good numbers. Do you think finally we could see some recovery coming by in these names?
Yeah, truly so. If you see the recent results of some of the chemical companies, the names of some of them, what you have mentioned, it is interesting, across beat, across segments, and some of the large ones, what is reported also as good numbers. What we see is that 2024 was a very lull period. We have seen the sector going through a tough time in terms of earnings season, and now it is coming out of the lull period. We have exposure to chemicals. We are more bullish on chemical sector, specifically the specialty chemical sector is also called ones, which is better than the global facing pharmaceutical companies. That's the way we have positioned ourselves.
In your positioning, George, are PSU banks part of it as well? They've been doing a lot of the heavy lifting over the last couple of months when it comes to the banking sector outperformance. but also valuations being on the cheaper side, do you believe that it is time for PSU banks to see some re-rating because of the fact that the results have been okay? And of course, there are some further triggers as well with regards to the weight rebalancing of the Nifty Bank.
So a couple of things are working in the near term. What you mentioned, your weight rebalancing, the news flows around that. But if you look at the structurally from 2018 onwards, then non-performing assets have been coming down. This is one of the lowest point since the peak of 11.2% of the NPA, gross NPA. What we have seen is now 2.3%. So there is a system-led. The non-performing loans have come to one of the lowest point in the recent times. And to me, it is looking very similar to the 2000 to 2010 decade, where we are seeing the cusp of the capex cycle recovery. The last 5 years, probably the early capex cycle was visible. Next 5 years, we are thinking that the capex cycle will kick in further. And we are seeing that the capex to sales is increasing from 2022 onwards for BSE 500 companies. So PSU banks are tuned to benefit in this kind of a juncture. And that's the reason, 2003 to 10, we have seen PSU banks had the massive run. And the next 10 years, it was a bad phase. And again, that phase is coming back. 5 years into the massive return generating phase for PSU banks in the last 5 years, I believe it is still a lot more glory yet to come.
Thank you very much for joining in. Short conversation, but there's lots going on in the markets. Thank you very much. Get into a break, but as we do that, here is a quick programming note. SBI's 12th Banking and Economics Conclave focused on India's quest for self-reliance gets underway on the 6th of November and will feature conversations and insights from the biggest of policymakers and industry representatives, including Finance Minister Nirmala Sitharaman, RBI Governor Sanjay Malhotra, SEBI Chairperson Tuhin Kanta Pandey, Anish Shah of the Mahindra Group, Tata Power's Praveer Sinha, SBI Chairman C.S. Sethi will also be at the event. Tune in to CNBC TV 18 2:45 p.m. onwards on the 6th and 7th of November for all the key takeaways from the event.
Welcome back. You're still tuned into Trading Hour. One of the buzzing names in trade today is LG Balakrishnan and Bros reported a healthy set of Q2 earnings with margins back above that 17% mark. To discuss the quarter gone by and the way forward, we are now joined by Mr. B. Vijay Kumar, Chairman and MD at the company. Mr. Vijay Kumar, good morning. Thank you so much for joining in. This quarter, there was a 19% revenue growth. Profits were up 21%. Can you explain what were the factors that led to this? And for the full year, you had indicated a 10 to 14% revenue growth. Do you stick to that?
Good morning to everybody. Good morning to you. Yeah, I stick to what I said in the earlier quarter. And what I said in the earlier quarters now stands justified. We maintained our profitability, maintained our EBITDA percentages, maintained our turnover, and all the new businesses that we got into are now performing also.
Okay. So the 10 to 14% revenue guidance for FY26 stays. Particularly for Q2, 19% top-line growth. Can you break it up in terms of volume? What was price-led? What was on account of the product mix?
The steel industry has the steel company that we acquired and we are running now, that has started doing well. I forecasted that we would be doing about 200 crores. It is now coming online. So the profitability of that unit, along with the profitability of consolidated profits, are what has helped us now.
Mr. Vijay Kumar, what about margins? You had almost 100 bips expansion this time around compared to last year. You're back above that 17% mark. Does that margin remain at 17% when you close out the year? What are the trends you're witnessing for the second half going forward?
We are looking at maintaining the same 17%. See, depending on the world economy conditions, maybe a 0.25% or 0.5%. Plus or minus, but we will stick at our forecast of 17%.
Okay. You know, there was new generation, a new facility that was opened as well. What was the contribution in first half so far? What do you expect it to be in FY26 overall, Mr. Vijay Kumar?
The new facilities for manufacture of industrial chain, that should do a total turnover of about 200 crores. But at the moment, this year, we forecasted 50 crores. We hope to reach that. We've already done about 25 crores.
So so 200 crore is at peak capacity utilization?
For the short term, yes. For the end of next year, we should do about 200.
What is the current capacity utilization of this facility?
No, it's a greenfield project, so there's no pass to it. We hope to do even more, but due to Trumpution in the US, people are hesitant to commit on any business. We are waiting for all the Trumpution to cease.
What was the overall export growth in Q2 and what is the outlook for the second half of the year? Because there is some global softness in auto volumes, sir.
For us, it's been flat. We've maintained what we did last year. There's been a marginal growth in certain areas.
All right. And so exports has been flat so far in the first half. And do you expect any improvement in the second half or should we go with flat estimates for the second half too?
I think it'll be flat in the second half.
Second half.
Mr. Vijay Kumar,
could you repeat, sir?
We won't lose any turnover in exports. We will maintain what we did.
Right, Mr. Vijay Kumar, your transmission segment and your metals both grew in terms of year-on-year basis, but margins saw a bit of pressure, especially on the transmission segment. They narrowed around about 70 bips from last year. Metals also down to single digits. Do they improve as you go into the second half of the year?
You're talking about the consolidated figures or?
Yes, the transmission business in its standalone capacity, sir.
We have incurred a lot of expenses in the US because of Mexican plant. And the Nagpur plant has also got a lot of workforce that we've started taking on. So that has caused some expenses to rise.
So that figure stabilizes as we go into the second half?
Yeah, corresponding increase in turnover will be there.
And how much is US as a part of your overall business, Mr. Vijay Kumar? If you could shed more light on that.
Oh, that's very small. That's not substantial.
Just last question before we let you go. You had earlier indicated EV content per vehicle was going down. Is this something that is continuing or that has started to pick up?
No, we've not been very strong in the EV side of business. It will only go up for us.
Okay. All right. Thank you, Mr. Vijay Kumar, for joining in today and giving us those insights into the business and the outlook going forward. That's LG Balakrishnan and Bros. The stock is up 15% on the back of the numbers that the company reported this time around. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll talk about the big story of the day on the other side.
Welcome back. The big story today is auto. October auto sales numbers are out, and we saw the full impact of the recent GST cuts in the festive season. How are the numbers looking? Sudarshan joins in with a lowdown.
So overall, for the month of auto sales, if you can say in one line, the numbers have largely been in line or slightly higher than estimates. So now, which all companies are the biggest outperformers? Surprisingly, it's the CV. And two companies, Tata Motors and Ashok Leyland, have been the outperformers. For Tata Motors, there is a, in Hindi, you say, tinke ka sahara. So they are getting a support from the Indian business because JLR is doing nothing for them. For Ashok Leyland, bus segment, which has been underperforming till recently, has reversed that underperformance and saw healthy growth. As far as the passenger vehicle segment is concerned, all the companies, you take Maruti, M&M, they have reported sales largely in line. One company that has underperformed and for which domestic sales have gone down is Hyundai. For two-wheelers also, like passenger vehicle, sales have come in largely in line.
So you spoke about two-wheelers. Any more Tinke ka Sahara in the second half?
So for two-wheeler companies, the problem is like as of now, 3 companies have reported numbers: Bajaj Auto, Eicher Motors and TVS Motor. All 3 companies have reported numbers largely in line. We are waiting for the numbers from Hero Motor because that will give you the indication how the rural segment is doing, because they are the market leader in the entry-level segment from 100cc to 125cc. So they are yet to report the numbers. But as of now, all the companies have reported numbers largely in line. We'll have to see how exactly H2 pans out.
I love how Sudarshan let go of the first part of that saying, but he cared of the second part. But he spoke of wholesales, Sudarshan. What about the retail? What is the Vahan data indicating now?
So from Vahan website, you get to know how exactly festive season has been going on. So in that, we have 2 data from Ganesh Chaturthi till now and from Diwali till now, Navratri till now. And exactly the full impact of Diwali we'll get to see by November 8. But as of now, the sales for PV and two-wheelers are in the range of 20 to 23% from Navratri till now. Or from Ganesh Chaturthi, it's in the range of 12 to 15%. So the numbers so far indicate that these companies will only be able to meet the estimates, not exceed it. What exactly the estimates we had previously. For PV, it's like low single digit, and for two-wheelers, it's high single digit.
All right, and one final question, electric two-wheelers, Ola and Ather.
Oh. For Ola, the underperformance continues. Now they have slipped to number 4th position as far as electric two-wheeler segment is concerned. If you take a look at their numbers, year-on-year, their registration is down 62%, while month-on-month, there is a minor improvement. In contrary, if you take a look at Ather Energy, in 2024, their average used to be some around 8,000 to 10,000. Now it's almost nearly 20,000 units per month. And year on year, their numbers have increased by 73%. Even on a monthly basis, there is a growth of 54%. So while Ola is underperforming, Bajaj is back to number 1, followed by TVS. And at 3rd position, it's Ather Energy. And the interesting part, Hero Moto, which is at 5th position. So the gap between Ola Electric and Hero Moto, it's very minimal. I won't be surprised if Hero also surpasses Ola Electric in coming months.
Okay, interesting data there. Thank you so much for making sense of the auto numbers for the month of October, Sudarshan, and giving us insights of what's expected going forward. In fact, the jury of the 21st India Business Leader Awards met in Mumbai to pick the winners. They included the biggest names in corporate India from the sidelines of the mega event. Nigel spoke to Hyundai's MD and CEO designate Tarun Garg on the demand scenario post the GST cut. Let's listen into what he had to say.
The GST 2.0 reforms has really brought in a new boost to the demand in the economy. So I am very confident, and you can see that from a Hyundai perspective after the IPO, and now of course our CEO, global CEO Jose, has announced 45,000 crore investment, and the second phase of growth story of Hyundai in India is beginning. So I think it's all pointing to that the world is looking at India with a lot of interest and a lot of respect, and of course the supply chain challenges is also making India a destination for the world to see and take care.
Well, that's right. You know, I think if I spoke to you a few months ago, what would be on your wish list would be GST rationalization. And that's precisely what's happened as well. Tell us a little bit about India's ecosystem with regard to EV, because that's clearly penetrating more. That's clearly developing. How do you see adaptation, pan out on that front?
I think that's a very good question. And if you see globally, people have been talking about the EV chasm happening. But if you see India, last 2 years, we were stuck at about 2.5% penetration. I'm talking about the passenger cars. But this year, what happened? Suddenly, the change happened, And August, September, we looked at almost 6% penetration. So what has changed? What has changed is, I think, a huge push by the government, the PM e-Drive scheme, which means that so many charging stations will be installed. Because if you see the biggest enabler for EV adoption is the range anxiety which customers have. And once you take care of that anxiety, so by giving him the option of charging at the highways, because people are very comfortable charging at home for intracity driving, but then once they have to go out of the city, then they need that kind of a comfort. So that was one very big driver. The second thing was more and more OEMs joined the race. So we had some very exciting EVs. Even Hyundai launched the Creta EV. We already announced that in 2027 we are going to have a very dedicated EV for India.
Yes.
So I think the entire ecosystem, in terms of more products, in terms of charging infrastructure, in terms of the supply chain, if you see the battery packs, we have already localized. We are talking about cell manufacturing with a local Indian partner. We are looking at powertrains, power electronics, drivetrain. So the entire ecosystem is giving thrust to this EVs. And I believe with the government's vision of sustainability, I think EVs are here to really, really have a tangential growth.
The management of Hyundai. But that's what is on your screens. Yes. The images of the year, possibly the moments of the year, the final for the ages where the Indian women's cricket team finally emerged world champions after 2 heartbreaks back in 2005 and in 2017, finally becoming world champions for the first time in the 40-year history of the Women's Cricket World Cup. Of course, the tale of redemption for a lot of the players that were a part of this squad, not so much for the coach as well, for Amol Mazumdar, who's winning his World Cup title as well, for having been a first-class cricket colossus but never got to play for India, but emerged as a world champion coach. From all of us here at CNBC-TV18, we extend our heartiest congratulations to the world champions, our girls, and we all would say very proudly today, the girls played well.
Yes. It's women in blue that we'll talk about now. But on that note, on that cheerful note, we'll take your leave on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Stocks show mild recovery with mid-caps outperforming, realty, healthcare, energy lead gains, while consumer durables and IT drag.
The festive October spelled good tidings for car and two-wheeler makers with strong sales, though mostly in line with expectations. The big outperformance was seen in commercial vehicles and tractors.
Aditya Birla Group Chairman Kumar Mangalam Birla says that the aim is to be one or two across businesses. He is banking on thorough preparations and precise execution to achieve this as he completes 30 years at the helm.
SBI Chairman C.S. Shetty tells CNBC-TV18 there will be consolidation in the banking space, adding that it has definitely helped public sector banks. He also believes that scale is important for banks to leverage technology.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well. Mangalam, good afternoon, and beginning of the month, beginning of the week started a bit muted, but then we did see a recovery coming in. And right now, Nifty is 25,700, around and above that level is what the Nifty is continuing to trade at today. Now, obviously, in terms of sectors today, let's look at that, right? Which sectors are managing to hold on to good gains? We have realty that's doing well. PSU banks, that's also managing to hold on to very strong gains of 1.7%. So keep an eye out on that one. We have Bank of Baroda, Indian Bank, Canara Bank, which are seeing gains of more than around 2% in today's trading session. Nifty Pharma today too is managing to hold on to gains. And a lot of movers today, what we're seeing coming in is maybe for the broader end of the market, and in terms of earnings also, that we're seeing a bit of a move coming in there. So let's keep an eye out on that. Midcap also is managing to hold on to good gains of 3/10 to 4/10%. Small cap seeing better performance, 7/10% of gain coming in there as well. Mangalam, so an interesting day. Broader end of the market surely doing better.
Yep, the broader markets are doing extremely well, even as the frontline indices consolidate. We do have a couple of these cash market stocks seeing a lot of volume. So Dredging Corp, for instance, is up, locked in 20% upper circuit with a fair amount of volumes backing it. TD Power for second day running, doing extremely well. And we have Rajratan Wire as well. Management had upped their guidance. They spoke to CNBC TV18 here on Friday afternoon, and from there on itself, there has been a purchase on that counter. MAS Financial doing extremely well. And then from the F&O pack, we have HFCL, which too is doing fairly well. But let's go across to the management of United Breweries. The company reported their numbers were slightly soft. In fact, we did see some weakness in the volume and the margins as well. So let's go across to the management. Vivek Gupta, the MD CEO, now joins in. Thanks a lot, Mr. Gupta, for joining in. If you could give us a detailed breakdown of the quarter that was, because there were a fair amount of disruptions. You know, on the one hand, there was higher than expected monsoons. Then there were some state-related tailwinds and headwinds. You got a price hike in Telangana. And at the same time, your own premium push. So if you could break down how the quarter went by before telling us about the quarters ahead.
I would say that, the quarter was, if I split it into three parts, 1/3 of our business actually grew more than 15%. There are states like Andhra, Assam, Jharkhand. We saw a significant growth. So 1/3 of our business where there was less monsoon impact, good positive excise policy. Maharashtra is one of the examples. We continue to see more than 15% of the growth. 1/3 of the business got impacted by rain, specifically in the north. So Punjab and Haryana, in few months, the category was actually down 40% because 3 of our breweries were also flooded. And then I would say 25 to 30% of the business got really impacted by affordability. So states like West Bengal, Orissa, Karnataka, the beer has become so expensive, and I've been consistently repeating that affordability is the biggest challenge on the category. And we are now seeing that consumers are either switching to IMFL or consuming less beer in these states. So going forward, of course, we hope that weather is more graceful to us, though I hear that coming winters are going to be even stronger because of La Nina impact in north, and we will see that. But structurally, I feel very positive about the momentum we are seeing in the first 35-40% of our business, like Maharashtra, Assam, Northeast, in these states. And then on where the weather had an impact, we should see some recovery. On the other states, we continuously work with the regulators to provide them data information because in states like Karnataka, their excise revenue is getting hurt because of the beer becoming so expensive. So we hope that we will be able to get some positive recommendations and actions from the regulators in the coming months. But that is why the business is quite mixed right now.
All right, so 1/3 of the business grew over 15%, and the next 2/3 got impacted by the weather and regulatory challenges, respectively. But the third quarter, and because you alluded to La Nina, how are the next couple of quarters coming along? It's not stopped raining in November yet. So are beer sales picking up, or are they still stagnating?
If I have to be looking at the data and what I'm observing right now, even October, there were almost 12% more rainfall than average in the country to do that. And this time, both the big festivals, Dussehra and Diwali, has come early in October. And with the La Nina impact, predicted in North, I think the recovery to 5 to 6% volume growth in the category is probably a quarter away. However, we do feel that there is momentum on the business in the pockets of the country, and we hope that will yield a positive impact. We also know that our business, especially on premium, grew 17%, and in the first half, it has grown 33%. And we know it got impacted a lot because of logistics and rains. So we hope that momentum will continue as there is an underlying consumer demand. There is expected to be a positive impact of GST changes also on the consumer choices. So we hope with the coming festive season of especially New Year and celebrations, a lot of sports also happening. We hope the momentum will pick up, but I see the 5 to 6% growth is probably a quarter away.
5 to 6% growth is probably a quarter away, but let me ask you this straight. You're going into the third quarter with an 8% volume growth as a base. Given the weather and given the sort of challenges that you're facing, is there a risk that third quarter volumes will be negative, or you're short of positive volume growth in the third quarter?
See, we are only 1/3 into the quarter. We have just finished the October month. I'm quite positive we are going, it will not be in a negative base unless some external situations happen which we don't predict. I expect the premium business to bounce back again and grow more than 30%. Our premium brand fundamentals are extremely strong. Last week, we actually got data on brand power, and our brands Ultra and Ultra Max hit one of the max, brand power score. So our brand fundamentals are very strong. We also made a strategic choice in September and August, despite weather, to continue our investments. If you see, our brand investments actually went up by 22%. Our coolers are now in 37,000 stores, which used to be in 15,000 stores. So we are actually investing in brand fundamentals. We are investing in service to the customers. Our portfolio is extremely strong. Heineken Silver is growing 34%. So I definitely expect a very strong recovery on premium because our goal is to grow 30% quarter on quarter on premium. So we will have a very strong quarter on premium. How much weather impacts happen, it is anyone's guess right now because it's so unpredictable. But our fundamentals, we hope, are going to be much stronger. And at the same time, we're also doing some work on productivity and cost efficiencies as well to variabilize some of our fixed cost so that we can also absorb some of these shocks better going forward.
Interesting there, Mr. Gupta. But, obviously, what is it going to be in terms of bottle returns as well? Volumes, you're not worried that you'll see a negative impact in Q3, but bottle returns in Q2, what was that? And what is the target now that you're keeping an eye out on?
We are gradually seeing the progress on bottle returns. Our bottle returns, even in the last quarter, are better, despite our gross margins being lower, are better versus the previous quarter. So we have made operational discipline, we have made structural investments there, and that are working. And we are also putting some specialist focus on the or district-wise focus in the country, because there are some districts where the bottle return is as low as single digit. So we are creating a good infrastructure there. So there's a lot of work happening on bottle returns. But as you mentioned, we continue to invest in new bottles in the premium. But the good news is, because of localization of premium is now we are almost through in 80% of our portfolio. We are seeing a gross margin recovery on premium from this quarter onwards. So we always had a gap in the gross margins on premium versus mainstream because we are putting new bottles. It was not local production. So at least the local production part is almost done. And we will see a good pickup in our gross margins on premium going forward.
So then let's take that point forward itself. Vivek, what's your outlook on margins from here? There was a sharp decline in the second quarter, understandably because of the revenue decline as well. Do we see them going to double digits soon?
I think one is the raw material is getting predictable, but we know that recently government has announced the MSP increase on barley by 8%. We know the inflationary pressure on aluminum cans in particular, as cans are growing in the salience. So we expect, the commodities to be volatile, and we see the inflationary pressures coming. Now, at the same time, we will need to continue to do the cost initiatives. We need to take the pricing because we did get the pricing in Telangana. But as you remember, we didn't get the pricing what we were expecting to make the business to a green level. So we will have to continue to work with the state governments to get the right pricing, but at the same time to reduce taxation. Because increasing pricing, every 1 rupee price increase they give to us, it's actually 4 rupees they charge to the consumer. So consumer, we need to make sure affordability doesn't get impacted. So it's a tough equation where we need to manage the cost, we need to manage our revenues. At the same time, we need to make sure the affordability doesn't become a big issue to consumer. So we are actually doing a lot of cost initiatives, productivity initiatives, leveraging our scale for better sourcing. At the same time, as I mentioned, our premium mix will continue to increase. That should help us with this stuff. And last but not the least, I think it's a highly capital intensive category, the beer category. So the volume is the king. So eventually, if volume recovery is going to help our margins and better utilization of our fixed cost, because this quarter, one of the reasons our gross margins got impacted because our own breweries in the states which got impacted either by affordability or rains had less capacity utilization. So eventually, if we utilize more capacities, our fixed costs get better utilized, and the margins, it improves the margins as well. So finally, we have to get back to growth and not lose the momentum, and that is our focus as a category maker.
Right, and just the last question from my side, your market share, because in Q1 you had mentioned that you had gained around 300 basis points, more than 300 basis points in terms of market share in Q1. Premium also had seen some growth there. So now what is your overall market share and what is the outlook there?
Yeah, so this is a positive story. We continue to grow overall market share. Based on our validated data in this quarter itself, we grew almost 97 basis points of market share, which is quite phenomenal because in the full first half, now market share gains are more than 100 basis points at an overall national basis. On premium, again, we continue to grow market share. We have almost touched now 20 market share and above in certain as per the data we have. So market share is absolutely not a problem right now. We continue to grow. But as I said, our key role as United Breweries is to grow the category. I'll be happy if the category grows faster and we can fight out the market share game later. But right now, it's a positive story on market share.
Right, positive in the market share, but the underlying is always to grow the category and then thereafter fight for market share. Wish you good luck for the remainder of this year and thereafter as well on your structural uptrend journey in the beer category for the nation. Thank you, Vivek. With that, let's give a quick note to our viewers. As you can see on the screen, there is a money control stock score, which is just above the line graph. This is a score which is assigned to each stock based on the money control multi-factor algorithm calculated by analyzing over 40 parameters, which include both current and historical financial statements, price charts, and technical indicators for each stock. Each of these individual parameters then considered for calculation of the 4 factors, which are then assigned a Q score, G score, V score, and T factor score. Remember, this is not a buy or a sell recommendation. It's any investor who has a view or is wanting to make an action is allowed to do the necessary diligence on their own through a certified registered professional or a financial advisor for their investment decisions.
CNBC.
Welcome back to Halftime Report on CNBC TV18. Nifty as of now just flopping between the red and the green, but still holding on to 25,700 as of now. So let's keep an eye out on that level there. A lot of individual movers in today's trading session. And to take us through those buzzing stocks, let's go across to Vivek now. Vivek, good afternoon.
Well, good afternoon. Like you mentioned, quite a few stocks on the radar on the back of news flow, on the back of results, back of announcements that they've made to the exchanges. First on the list has to be Bank of Baroda. Extremely strong Q2, multiple updates coming in. Investec as well as Nomura have upgraded the stock and the target price. Have a look at Dredging Corporation. The company has announced a capex to go ahead and improve its own facilities, and along with that has signed multiple MOUs at the recently concluded Maritime Summit. The entire PSU bank rally, it took a bit of a halt last week, but look at them. All of them today are back in the green. SBI up over 1%, Union Bank, UCO Bank, Union Indian Bank doing very well in the session. Intellect Design Arena, stands out, especially in the mid-cap IT space. The company has said that they expect margin recovery to extend into S2 as well, almost 5% higher. And Schaeffler, the bearing space, after a while has seen a very good set. That particular stock up almost 7%. On the other hand, quite a few laggards as well. Well, Network Technologies, it's been a decent Q2, but given the fact that the stock has rallied so much in just the last 3 to 4 months, it's taken a bit of a breather today, down almost 6.5%. Zensar Technologies, again in the mid-cap IT space, very muted set of results. So this particular stock continues to languish in trade. JK Cement, again, elevated expectations from this name, but it's been a bit of a miss, almost 5% lower for JK Cement. And no still, this particular company, again, it's been a very muted quarter. Margin contraction seen that particular stock down almost 4% in the session today.
Okay, Vivek, thank you so much for taking through all those stocks in today's trading session. But the countdown to India's most prestigious business award has begun. The jury of the 21st India Business Leader Award met in Mumbai to pick the winners. They included the biggest names in corporate India. We caught up with Kumar Mangalam Birla, who said that he wants the group companies to be in the top 2 across industries. Listen in.
I think being in the top 1 or 2 in the industry that they are in, with return on equity, that's specifically each one's target. Largely, that's how we work.
Are you particularly chuffed about some of the forays that you've made, especially in the consumer space? With the GST cuts that have happened, that would boost consumption and the money that people have in their hands. Have you seen that on the ground?
Yeah, I think they had a very good Diwali. I think both paints and as well as retail, jewelry retail. It's our first time with such sort of hardcore consumer brands, and it's good to see them having taken off so well.
Right. You speak about your consumer brands, etc. The one thing that we have to learn from you, and what according to you would be the Birla playbook of entering and disrupting a category which has had a lot of incumbents. You've done that multiple times in the past, but now as well, with the consumer foray that you've made in the kind of categories that you've entered, including the likes of jewelry and paint, what according to you would be the Birla playbook?
I think the first is very thorough preparation and understanding clearly what it takes to win in the industry, what our levers to win would be, and then executing to precision almost. I think it's basically both of these. It's understanding what ticks for the customer. Consumer insights are very important to build a business model around that.
Right, that is Kumar Mangalam Birla indicating the Birla playbook for disruption in a category which has a fair amount of incumbents, saying that the consumer business has done far better so far than what they were expecting in this festive season. Take a short break, come back. Our focus on the F&O setup at midday. Stay with me.
Welcome back to Halftime Report on CNBC-TV18. Like I mentioned before as well, right? The Nifty is flip-flopping between the red and the green. Again, it's moved the green 25,730.31. Around that is what the Nifty is trading at. Bank Nifty, though, is comfortably holding on to gains of 0.5%, more than 300 points up in the trading session right now. But what are we watching out for in the world of F&O? Let's go across to Mangalam, who is at the F&O desk to give us all those details. Mangalam, over to you.
Well, the Nifty is consolidating around the 25,750 mark. The reason why I say that is because, despite the Nifty Bank and the Midcap index doing well, it's the IT index which is putting pressure on that. And every time the Nifty moves towards 25,750 and thereabout, we see the India VIX move higher. But now that the Nifty is cooled off from the highs as well, as has the India VIX. This morning, the India VIX was up around 5%, 5.5%. But now, once again, if the Nifty is in the green, the India VIX is at 4%. The Nifty, minute it moves into the red, we see the India VIX move around 3.5% as well. So, the Nifty move is fairly, congruent to the way the India VIX is moving. So to that extent, the range now is extremely crucial. 25,643, which is today's low, and 25,773 is the broad range the street is working with, at least for direction after the market has continued to consolidate. And that's where the option writers are fairly active as well. 25,700 put, I've seen a fair amount of writing, premium of almost 62 rupees, telling you that maybe there is support around 25,650, which again is today's low. But on the way up, there is some supply coming in. 25,750 call and the 25,800 call. Both of them come up for you on the screen. The 25,750 call has seen a premium erosion and has a premium of almost 35-40 odd rupees. And the 25,800 call has a premium of 50 rupees as well, telling you around 25,800 to 25,850, there would be some supply coming in. So the broad range you're looking at, 25,650 on the Nifty on the way down and 25,850 on the way up. The put call ratio, the Nifty bounced back from oversold levels on the put call ratio as well at 0.65. Now that has moved to a more respectable 0.74, still not out of the woods, telling you that we have some room on the upside all the way up to 25,850. But a lot of individual stocks, they are moving around. A lot of short covering on Godrej Consumer, Shriram Finance is the top Nifty gainer, Bank of Baroda as well. And some shorts added on names like Hitachi. So watch out for that one. Hitachi is down about 2.5% in an otherwise strong market for the broader markets. Has seen some short positions being initiated. So keep an eye out on that one.
Okay, Mangalam, thank you so much for that. Surely we'll be keeping an eye out on that. Hitachi Energy is expected to report their numbers as well. So let's watch out for that as well. But on that note, we're going to actually sip into a very short break. Up next, we'll connect with the management of Pine Labs as it opens for IPO on 7th of November. Welcome back to Halftime Report on CNBC TV18. Now shifting focus to the action in the primary market, Pine Labs rupees 3,900 crore IPO will hit the market soon. My colleague Rima spoke to the management on the use of IPO proceeds, the growth strategy that is expected there, and more. Listen in.
See, in Q1, let's keep the one-off profits away. We still were about 5 crores negative at a PBT level. However, over the last 5 years, and when you look at the specifically over the last 3 years, we have been EBITDA positive consistently. In fact, in FY24, we were at about 160 crores of adjusted EBITDA. Going into FY25, we came in at almost about 355 crores. So we've doubled EBITDA on a year-on-year basis. And in the first quarter that we've obviously published those numbers in the RHP, in the first quarter, we've come in at about 120 crores plus in terms of adjusted EBITDA. So at an adjusted EBITDA level, we've always been good. Now let's look at the line items below the adjusted EBITDA line. There what we have is obviously the ESOPs cost. We've actually taken an industry first move where just recently before the IPO, the ESOPs that we have issued, we've actually issued it not at a deep discount level. Because we believe as you go public, you need to look at not just in terms of net revenues, contribution margins, EBITDA, but also need to have a deep focus on the PAT line. So I want to let everybody know that the trend that we have shown on the EBITDA front, we would love to repeat that at a PAT level also.
When do you turn profitable at the PAT level?
At a PAT level, as I said, in the first quarter, we have turned positive. And the trend in general where we were at a PAT level negative of about 350 crores. Last year, we went to about 140 crores. And now we are at positive. I don't think so the trend is going to reverse. We will want to continue that trend going forward. So Q1 was the first quarter that we are PAT positive. As you know, Q2 is very well done and over. We would love to continue the trend going forward.
Got it. So while India's digital payment volumes is growing leaps and bounds, the monetization is shrinking, especially with zero MDR on UPI. And now even the POS hardware is getting increasingly commoditized. How do you improve your profitability from here on?
That's a great question. But let me just first set the baseline in terms of what we do. In the RHP, what we have identified is we operate in two large business lines. One of the business lines is what we do on the issuing side, where we issue out prepaid cards, wallets, we hold money, all of those services. That's almost close to about 30% of our overall revenues. The remaining 70% is very well diversified between POS-based revenues, revenues that we earn on value-added services where we enable other financial institutions, other fintech to do specific offers, campaigns, installment payments on our terminals. That's another piece out there. And then the third piece to it is largely what we do in terms of online BBPS using the DPI, the digital payments infrastructure of the country. Today, the POS-based revenues in our business has now shrunk to less than 50% of this digital infrastructure
Which
business.
is 70%.
Which is only 70%.
So POS machines, leasing it, maintaining it, you would say is less than 50% of 70%, so
that
about
is
a third of your
That
revenues.
is correct, right? So where we have it out there. So what we want to do is we want to continue to build the best technology when it comes to checkout. Let me give you one example. Yesterday I was out, in Parel in all of the malls, and you went to Zara. And there, if you see, the checkout has completely changed. You can throw goods into a box out there and you can just simply check out there. In many of these cases, there is a Pine Labs terminal. We see ourselves as a technology provider when it comes to technology. Technology does make revenues, and that's the way we've actually built our business. The other piece to it is went and bought a TV. Now that TV was bought on the installment payment services where we bring thousands and thousands of consumers. We bring in about 30 credit institutions. We bring in about 300 brands to convert transactions to installment payments. We make money out there. And then finally, we are now processing huge number of volumes, almost billions of dollars on a monthly basis when it comes to bill payment transactions, online payments transaction. There again, we are able to make money.
So what will be sustainable margins for you? We've seen your margins improve from sub 10% in FY24 to nearly 20% in Q1. What is the sustainable rate you are gunning for?
See, one thing what we wanted to do is we wanted to demonstrate that there is an ability for us to expand our EBITDA while we continue to grow the business. Over the last 3 years, we've been safely 20% plus when it comes to revenue growth. But what we've also wanted to do is we wanted to show an EBITDA expansion in our business. We've shown an EBITDA expansion where EBITDA has gone from low single digits to now at 20% in Q1 of this year. We want to continue to showcase that this is a company which has been built on two pillars. One is consistent growth and also consistent improvement in EBITDA, obviously positive EBITDA. And that's what we've actually been able to do in Q1. But the way I look at it is this is just a starting point. It's a trend that we want to continue to work on.
So global peers that you compare yourself to, whether it's in Southeast Asia, what margins do they operate at?
So we have seen internationally there are companies in the payment space which are operated anywhere from 40 basis points, 40% of EBITDA to almost about 55% of EBITDA. But that's happening in global markets. One of the things I should point out is 15% of our revenues today now comes out of international markets.
Now you're raising about 2,080 crore, Amrish. This is lower than what you had earmarked earlier in terms of a fresh issue. Are you deferring some of your growth investments to next year? And with the growth capital that you do get, you were growing at 20% comfortably on it, in terms of a top line. What will the number scale up to with the increased growth capital?
I'll make two comments to start with. First is I have more than 1,000 crores of cash on our balance sheet today. That's point number one. Point number two is when we have reduced the OFS and the sale amount, fresh issuance, when we have reduced it, zero has been taken away from any growth-related activities. So growth-related activities, when it comes to international expansion, technology investment, we made no changes. Just as our financial position has improved, what we have actually done is we have reduced some of the debt repayment activities that we had identified.
And 20% plus revenue growth, does that continue or do you think you can do better now?
See, look, as SEBI does not allow me to talk about the future, I can only tell you about the past. In the past, over the last 3 years, we've grown at almost about 20%. That's something that we want to continue to demonstrate. That is continued growth in our revenue, in the top line, and improvement on the EBITDA side, which, as I told you, we've also reached about 20% as far as the EBITDA number is concerned.
Now, competition in merchants payment space is, fierce, from Paytm to PhonePe to Razorpay. Now, PhonePe, for example, has also launched its own POS devices, and it is increasingly aggressively expanding into the offline merchants payments, which has been dominated by you. How do you protect your share and pricing power?
In the last 3 years, the volume, the GTV growth in our business has been more than 60%. The number of transactions on our platforms have compounded at more than 50%. The number of merchants which have come on board have compounded at 30% plus in those last 3-year period. I have no dearth of opportunity. The top 5 bank uses me. The top 3 e-commerce companies use us for our online payment services. We have the top 3 Q-commerce companies all using Pine Labs. So our revenue base is extremely broad-based. Growth is absolutely in place. Competition is not something which keeps me awake in the night.
Welcome back to Halftime Report on CNBC TV18. As of now, what we're seeing is that the realty pack continues to do well, and especially in the realty side, we're seeing a good up move coming in a lot of these real estate names. So let's keep an eye out on that. Phoenix Limited, so they also reported their numbers. We have DLF that's managing to hold on to very strong gains, as well as Prestige Estate. That is something that we'll be keeping an eye out on. On the flip side, Nifty FMCG today, that's a bit of a drag that we're seeing. And Colgate Palmolive, Imami, ITC, they're the drags on the FMCG side. Though Godrej Consumers managing to hold on to good gains. Radico Khaitan, that's also managing to hold on to gains of more than 1% in today's trading session. So that's what we're keeping an eye out on. Sterling Wilson, Gravita India, Schaeffler India, these are some of the names that are also managing to hold on to gains, and this is in the broader end of the market. So that is what we'll be keeping an eye out on as well. But a lot that's happening in the world of commodities. And let's go across to Manisha to take us through an interesting chat that she's planned for us as well.
Vinny, thank you so much for that. And joining us on the segment right now is Mr. Praful Vitlani. He's chairman at All India Sugar Trade Association. Mr. Vitlani, hi, thank you so much for joining in. First of all, your sense on the sugar prices itself, because when you look at the international markets, it has been constantly declining. As far as the Indian sugar prices go, it has been more or less flat to negative. And there also has been conversation about how there is not so much sugar demand this season as well. The whole festival season has gone by and we haven't seen demand pick up. How have you read overall supply and demand scenario, especially for the Indian markets?
I would like to say in two ways. One is that season 2024-25 is a thumb rule. We usually have a 6 million ton closing stock. This year we are 2024-25, we will be having 4.5. So the price will increase and it is coming down. But as far as 2025-26 is concerned, which my office has done a poll on Saturday, based on to that, if in case government now do not accept the long back demand of the industry for increasing MSP for domestic sale, ethanol procurement price, though it is like becoming a habitual of asking from last 2-3 years to the government. But in case if government doesn't accept this demand, there will be a horror show in sugar trade. There will be excess carry forward in India and entire sugar sector will collapse. According to my office poll, we are having opening stock of 45 lakh ton of sugar. We are expecting, as per my poll, is 360 lakh ton of sucrose availability for 2025-26. Maybe it could be more, but not less than 360. It looks like as on today's. So that will be total availability of 405. 290 will be our consumption. So we are left with 115. Of that, 35 will go for the diversion for ethanol. There is nothing is left for excess than that. So we will be closing at around 8 million metric ton. 8 million metric ton, and this is, I'm telling you, without accessing, the recovery and the yield, which we will come to know in December end or in January because of the season is delayed. And the numbers which are being predicted in the month of November, they are subject to error of 8% plus minus. But in January, it is have only 2-3%. The real picture will come in January. Before it get damaged, the government should immediately, even should not waste 1 or 2 days, allow 1 million ton export permission. We know that there is no parity, but at least psychology that will help. Secondly, the demand of 3-4 years of increasing MSP, if it is also not increased by 15th of November, the price will collapse like anything, because the sugar millers, we don't have the money power, and their sales above the release mechanism, that will be become another distress selling in the market and price will collapse. The ethanol procurement, our advocacy is to the point and very clearly that last year corn was imported, and there was no saving for our forex earning. But then also they are being paid 71 rupees per liter, and the foundation, the 40,000 crores investor, they are being given 65-66 rupees. So it is injustice to the sugar sector. And if such things happen, it will be very much difficult for sugar industry, sugar trade, farmer, and I am saying for government also. There are 7 assembly elections, including this Bihar one. And if such way, if the sector is ignored, then it will be definitely going to affect even the government of India. So what I feel personally, 3 things, yes, immediately should be done. That is MSP for domestic ethanol procurement price hike from the tender which is done few days back. And of course, the export being allowed. If such things happen, it's fine. Either sugar sector is going to be a collapse one.
Big problems, especially when it comes to profitability within the sugar space. I also want to come to the demand part of it now, and the sugar demand in the country seems lower as compared to previous year. Would you say that that seems to be becoming a bit of an issue as well? I understand ethanol and export are one part of it, but the Indian demand itself during the festivals did not see a hike.
No, Manisha, that's a wrong advocacy to get some policy which we don't like. There are now in poll, there was no differential on 2 opinion. We were having 80 lakh ton of opening stock. We have produced 262. We have closing stock of 45. If this all 3, there are no difference, then where the 289 sugar is gone. We have 297 of dispatch, 8 lakh ton for export and 289 for domestic consumption. Okay. Domestic consumption has not gone down, and we are looking that domestic consumption may be around 290, 292 in 2025-26. There is nothing worry about the consumption as such.
All right. I'll move on to the export part of it. And you yourself said that 1 million ton of permission immediately perhaps would do well for the sentiment, even as there is no parity in the international markets. It's not just India that we're looking at. We're looking at higher production in Thailand and Brazil as well at this point in time. With where the prices are lowest in many, many years, trading around that 15 cents a pound right now. What is your sense from the global cues?
See, global, there is definitely a, surplus of 4 million ton over there. What happens in India, we are asking that 1 million metric ton. This is from November to January. If the excess supply by the sugar mills dropping by 3-4 rupees more than the real actual price, at that time, window will open for export also. So it will not collapse such a lower level that it is become an horror show. So why 1 million ton is required immediately to check these people, the person who are selling more than the given monthly mechanism.
Allotted quota.
Yeah, so that is the thing. And we are currently, the sugar industry is at a higher price giving for sugarcane in world. Highest price retail in sugar, that is because of the release mechanism, because of the MSP in the domestic market, because of the ethanol. These are the few fundamentals which cannot be ignored by the government.
Okay. Thank you so much, Mr. Praful, as well as Manisha, for joining us today, talking to us about everything that's happening in the sugar industry. Thank you so much for joining us. But Tata Consumers, Mangalam, that's reported its numbers as well. Margins a bit of a decline, but the stock has spiked up. If you could give us any hints or details in terms of...
These are great numbers coming in from Tata Consumer, no two ways about it. Why do I say that? Because one, there has been a beat on the revenue, there has been a beat on the absolute EBITDA, and as a result of which, the beat has carried all the way down to the bottom line as well. What is it that the street likes this time around? If you look at their India business, the revenue has grown by about 18%, but the EBIT in the India business has grown by 48%. That means a margin improvement of almost 250 basis points. Why has that happened? Remember, over the last 3-4 quarters, the margins in their tea business in particular were under pressure because of the high inflation that we were seeing in tea prices. The management had said that once the tea flush season starts, then maybe there could be increased supply, and as a result of which lower tea prices, which would impact their margins positively. We saw that in the likes of Hindustan Unilever as well, and now that seems to be the case playing out for Tata Consumer. Lower tea prices would mean better margins for them. They might be sitting on some high tea inventory, but from here on, the business outlook would perhaps be that the tea margins would only improve and go beyond what the company has been reporting over the last 3 to 4 quarters and go to the range in which the company has been guiding in terms of double-digit EBITDA growth. So double-digit revenue growth with an EBITDA growth faster than that is what the company has been guiding for X of tea inflation. And now the tea business is looking at lower prices, we can expect EBITDA to increase, and that's exactly what has happened, and that's what the street is now celebrating as well. A 1% up move on the stock, a spike from the lows, but remember, from 52-week lows itself, the stock has seen a fair amount of a rally because a large part of the street was anticipating this outperformance to come by. So 10.5% growth. So we'll look at the presentation now to get in more details on how the Narishco business has performed, because my sense is that would have been impacted by higher than expected monsoons and maybe some competition as well, and how the other parts of their business have performed. But for now, what we know is that reduction in the prices of tea has impacted their margins positively. We take a short break, come back, get you more on the markets and also some of these earnings which are likely to be reported today, Titan and Ambuja Cement. Welcome back. Let's talk about Titan. The stock slightly under pressure in today's trading session ahead of numbers, but more importantly, we got to look at, what the company is likely to do. From the lows, we've seen a recovery because their second quarter update is what we have already. On that base, Titan has seen a near 20% growth in their jewelry business, and that's exactly what the street is penciling in this time around as well. Domestic jewelry business growing over 19%, surging gold prices drove substantial ticket size increases, and the second quarter had a high base, but the early onset of the festive season has offset that high base. So what you're expecting is a near 14% jump in overall revenue. Remember, this is because of some of the bullion sales, so it adjusts for that. It does not correspond directly to the second quarter update. EBITDA is likely to see a 47% jump. Why? Because same time last year, the margins were at a multi-quarter low because of the loss on account of the customs duty. So 11%, 10 to 11% is what the company has guided for in their jewelry business. So 11% is what the street is expecting. Net profit on the back of that favorable base increases by 49% as well. Studded jewelry grew in mid-teens, outpacing plain gold jewelry growth, and gold coins continued to do well as well. Watches grew 12%. That's what we know already. Eye care grew 9%. Carrick Lane grew 30%. International business on a soft base grew 86%. And this is the growth driver for the company going forward as well. Even emerging businesses, a smaller part of their business, 48% growth in fragrances. Women's bag grew about 90%. So we are expecting a decent set coming in from Titan, and the stock price tells you that. But while we were talking about Titan, there was a flash that came at the bottom of your screen on account of delivery as well. They have given a festive season update this time around, and Obviously, the festive season for players like delivery would be extremely strong given the sort of sales that we've seen in all the e-commerce platform, and for delivery in particular, the addition of e-com express would add further to their volumes, which were otherwise under pressure from Meesho moving to their own delivery platform. So all these factors doing well for them, and delivery obviously reports its numbers on the 5th of November, so we'll keep an eye out on that as well. Speaking about more numbers, Nigel joins in to tell us what Ambuja Cements is likely to do. Nigel.
Well, that's right. Ambuja Cements, actually the numbers look good, but Mangalam, as we know, for Ambuja Cements, we already have ACC, we already have Sanghi Industries, and we have Orient Cement as well. So, majority of the numbers, a large portion of the numbers are known. Though we look at the number on a consolidated basis because all sell-side analysts have put out estimates on a consolidated basis itself. So on the top line, there'll be a good growth of close to around 22%. The EBITDA number will jump up on a very low base, so it'll jump up more than 30% or thereabouts. And profitability will be up as well. Let's run you through a few factors at play. Well, volumes will be very, very good. It'll be more than mid-teens. It could be high teens as well because of the consolidation, right? They've acquired a couple of assets and those assets are ramping up. So that's why top line will look good. Besides that, even realizations on a year-on-year basis will be a little bit higher, so that's what will support the top line. However, on a like-to-like basis, actually, they will grow in line with the industry. Mid-single digits or maybe, low to mid-single digits is what they will grow. But the reason that the volumes will look phenomenal is because of, the inorganic growth that they've done. Moving to the EBITDA front, but that'll get supported because they've been focusing on the cost side. So that will hold them in good stead. And also operating leverage will play out. Besides that, the PAT number, if you look at it, the growth is not as much as the EBITDA number because depreciation is likely to spike up on that front. For Ambuja Cements, we'll keep an eye out on the management commentary because they will be commenting on Adani Cement on the whole since it owns, ACC, Sanghi Industries as well as Orient Cement. So we'll keep an eye out on commentary. I think that'll be the crucial takeaway since we already have parts of the puzzle. Back to you.
Okay, thank you so much for that, Nigel. Surely we'll be keeping an eye out on those numbers over there. But with that, we're absolutely out of time on this edition of Halftime Report. Nifty at 25,750. Don't go anywhere. Business Lunch is up next to take you through all those other actions.
A volatile start on the street with the mid-caps outperforming. Realty, healthcare and energy lead the gains while consumer durables and IT stocks drag. The festive October spelled good tidings for cars and two-wheeler makers with strong sales through mostly in line with expectations. The big outperformance was seen in commercial vehicles and tractors. Aditya Birla Group Chairman Kumar Mangalam Birla says that the aim is to be number 1 or number 2 across businesses. He is banking on thorough preparation and precise execution to achieve this as he completes 30 years at the helm. SBI Chairman C.S. Setty tells CNBC-TV18 that there will be consolidation in banking, adding that it has definitely helped public sector banks. He also believes scale is important for banks to leverage technology. And the Indian women's cricket team gets its Chak De moment, clinching their maiden Women's ODI World Cup title as Deepti Sharma and Shefali Verma star in a thrilling win over South Africa. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia, and while we all bask in the glory of what our Indian women's cricket team has achieved, the markets are in a very, very narrow range and earnings are reaching a crescendo for this quarter. Almost 200 companies reporting results this week. The Nifty has been in a very, very narrow band. It's only been 130 points in today's session. The dips are getting bought into, but again, there is some resistance around that 25,750, 25,800 mark, and that is proving to be a hurdle for the index. Earnings reactions is something that we would want to take a look at. A couple of companies that came out with results just a few minutes ago. Tata Consumer, numbers flashing at the bottom of your screen. The food business revenue well above expectations of 19% growth compared to the CNBC-TV18 poll of 12 to 14. International business growth also at the higher end of the 6 to 8% range, coming in at 9% in constant currency terms. The stock now surging to the highest point of the day. The beverages business also has grown at 12% compared to the 6 to 8% estimate of the CNBC-TV18 poll. So an all-round beat coming in for a Tata Consumer. The stock had moved almost 1.5% higher in response. In contrast to that, pull up Dodla Dairy. The numbers came in a couple of hours ago. The stock at one point was down almost 6%. It's seen a slight recovery from the lows of the day. It was 3% lower still. Thangamayil Jewelry came out with results just a few minutes back, and that stock too reacting to its numbers, and the stock has now moved 8% higher in just the last few minutes. So earnings reactions coming in thick and fast. We are still awaiting numbers from big names like Titan and from Bharti Airtel over the course of the day. But the other major announcements that came in over the weekend were the auto sales, and October saw the full impact of the recent GST cuts and even the festive season. Now, how were the reported wholesales of the auto OEMs and the PV sales? Sudarshan is here with a lowdown of all of that. Sudarshan.
So it's a full month when all the auto companies have reported sales for the month of October, and full impact of GST rate cut and the festive season. And most of the companies have reported sales, and those sales have looked largely in line or slightly better to estimates. And surprisingly, the biggest outperformer is the CV, and those companies which have outperformed are Tata Motors and Ashok Leyland. So we'll start with Mahindra and Mahindra. So both the segments have seen healthy growth. Auto segment was led by SUV, which has seen a growth of 27%. Tractor has seen healthy growth led by recent GST rate cut and rural pickup. Here also sales have increased by 13% versus our expectation of almost flat year on year. Coming to Maruti Suzuki, it has reported highest ever monthly sales. Total sales have increased by 7%. And led by compact and SUV segment. For Hyundai India, it has underperformed the peers because domestic sales have seen a drop. Even exports too have performed lower than previous few months. Tata Motors, it has done very good, and it was led by CV segment. Here, passenger vehicle segment also saw a growth of 27%, and CV segment after several months has seen a healthy growth of 10%. And companies say that in festive season, it has delivered more than 1 lakh units. Ashok Leyland, it was big bit to our expectations. Total sales have increased by 16% versus our expectation of just 11%. And the biggest positive in this was bus segment has reversed its recent underperformance, and and there also the growth was almost 34%. In two-wheeler space, all three companies which have reported sales so far, TVS Motor, Eicher Motors and Bajaj Auto, all these companies have reported sales largely in line with estimates. Biggest positive was from Eicher Motors Royal Enfield, which has said that in festive season, it has seen a growth of 26% versus average monthly growth that company sees in the range of 10 to 15%. So overall, it's a good month for these auto companies.
A good one indeed, Sudarshan. Thank you for that. Earlier, we did speak to Umesh Revankar, who is the Executive Vice Chairman at Shriram Finance, for an insight on the auto demand and its impact on the lender. Listen in.
Values of the vehicles have remained very strong. It has not changed at all. That there is no nowhere you will see idling of a vehicle, income getting reduced, or vehicle value coming down. So these three things are very important for viability in a CV business. And since we are in touch with customer, we have direct access to customer, we did not see any stress as of now. Even the sales numbers, if you look at the first half in the sales numbers have gone up. The CV demand has gone up, even though most of the demand would have come in the fag end of September. But even in October, the year-on-year sales numbers have gone up. That means there is a significant demand for a commercial vehicle. The activities in the ground is quite good. Typically, the festive period or festive time is the indicator of the mood of the customers. And this time around, the October has been all-time high sales number for all the segments, whether it's a passenger vehicle, commercial vehicle, two-wheeler, and three-wheeler, tractor. Every segment has shown big growth. Only one sector that has not shown a big growth or maybe even a growth is the construction equipment, where there has been some slowdown in the infrastructure spending.
Now, one segment that has been doing well all through last week and is continuing those gains today are the PSU banks. And on every single day, one or the other PSU bank has been putting their hand up and leading those gains. Today, that stock is Bank of Baroda. A strong second quarter results, a couple of upgrades coming in as well, 5% higher on the stock. Gaurav is here with more details on that. Gaurav.
Well, as when we look at Bank of Baroda, two key factors which actually held the stock well, and the first is that net interest margins, they expanded despite other players actually reporting decline in net interest margins, and second is the credit cost. Now we saw a sharp improvement in credit cost in this quarter. When we look at the numbers, net interest income that increased almost by 2.5% on a year-on-year basis. Now there was a component of IT returns of around 750 crores in this quarter, and as a result we saw some improvement in net interest margins as well in the range of 5 basis points. When it comes to PPOP, which is pre-provision operating profit, although we saw a decline of around 20%, this was because other income was a little bit of weak because the treasury incomes were not there in this quarter as strong as the last quarter. Apart from that, when we look at provisions, there also we saw an improvement, and this is what we saw in the credit cost as well. We saw an improvement of 26 basis points in credit cost, and as a result, when it comes to profit, now that declined just by 8% on a year-on-year basis. Remember, the profit number actually came in higher than the street's expectation. Another key thing to highlight is that when we look at the loan book growth, it has remained in the range of 11.5%. In fact, management is saying that 11 to 13% growth is what they're targeting. And at the same time, for net interest margins also, they believe that they will marginally remain stable or increase from here on with a guidance of 2.85 to 3%. When it comes to credit costs also, we are seeing some good guidance of around 0.7% credit cost guidance for FY26. And at the same time, outlook remains strong. Brokerages, now they have also upgraded the stock. We have got the brokerages like HSBC, Nomura, Investec, all of them have went ahead and upgraded the stock and also increased the target price. So definitely good push coming up from brokerages as well. Numbers were good, commentary was good, and as a result, we are seeing some uptick in this stock.
Indeed, doing well for itself. Bank of Baroda, 5% higher on the stock. Earlier, Lata Venkatesh spoke to the Managing Director and CEO of Bank of Baroda, Devdatta Chand, for more on the bank's performance.
Yes, there is an impact of this income tax refund, and the gap is hardly 350 crore quarter to quarter. Every quarter we do get something, but if you adjust that also, the impact would be something around 7-8 BPS on the NIM that we have declared global. On the positive, which again I say, apart from the margin that we talked about, the NI is positive. The cost of deposit is all-time low at 4.91. Last time also I said that we were going to pierce the 5% mark. And I would say that the prudent liability management and the asset management is leading to improvement in the quality in terms of asset, also at the same time protecting the margin also. So some of the asset liability, possibly the impact would not have been felt for the full quarter, which is going to be the full quarter next quarter. That's why I said while announcing the bank's result, the next quarter the margin is going to be range bound. And as far as Q4 is concerned, definitely it will be upward bias. The impact, ECL impact on the CRAR is going to be 1.25. At the same time, the lower the RWA because of the credit risk, which is again also being announced, that is going to give a positive almost 60 to 70 BPS. So net to net, it would be something around 0.75 on the CRAR, which would be again spread over 5 years' time. At the same time, the recurring would be the credit cost can be 20-25 BPS. That's why, in spite of all this asset quality that we have announced this quarter, we kept the slippage ratio guidance and the credit cost at the same. The slippage ratio guidance is 1 to 1.25. Credit cost would be less than 0.75.
Take a short break. More news and updates follow on the other side. Stay tuned. Welcome back. Now, India's goods and services tax collections for October grew 4.6% from last year to 1.96 lakh crore rupees, indicating resilience in consumption despite extensive GST rate rationalization during the month. Now, this keeps the GST mop-up close to the 2 lakh crore rupee milestone for the third straight month. However, the net GST revenue grew marginally by 0.6% year-on-year on the back of higher export incentives and credit settlements across the manufacturing-heavy sectors. At least 20 people were killed and over 300 were injured after an earthquake of 6.3 magnitude struck near one of Afghanistan's largest cities, Mazar-e-Sharif, earlier this morning. The earthquake has also destroyed parts of the country's renowned Blue Mosque. The earthquake comes months after an earthquake of a magnitude 6 left at least 2,200 people dead and even more injured. Rescue operations are being carried out by the military, rescue and emergency assistance teams. However, the authorities expect the death toll to rise as the rescue efforts progress. And at least 20 people were killed and several were injured after a passenger bus collided with a truck carrying loads of gravel on the Hyderabad-Bijapur highway earlier this morning. The gravel loaded on the truck fell onto the bus after the collision, burying several passengers. The injured were shifted to the government hospital. Chief Minister Revant Reddy and Prime Minister Narendra Modi expressed grief over the accident. PM Modi has also announced an ex gratia of 2 lakh rupees from the Prime Minister's National Relief Fund to the next of kin of each deceased, and 50,000 rupees for those injured in the accident. And Delhi continues to struggle due to toxic air, with stubble burning rising dramatically in the last few days. CNN News 18's Shrishti brings us the latest update.
A steady decline all through October. The number of stubble burning incidents have seen a sharp increase in the 6 neighbouring states of Punjab, Haryana, Rajasthan, Madhya Pradesh as well as Uttar Pradesh over the past few days. In fact, according to the latest data, satellite data as monitored by the Indian Agricultural Research Institute, over 230 such fire counts were reported during the last 24 hours. This, of course, is lesser than the previous day when it peaked at about 535 such incidents. Now, this is, of course, the season's highest count of farm fires reported in just 24 hours. And the data also shows that most of these cases are now coming from Punjab, where the farmers are rushing to clear their fields within a tight sowing window ahead of the sowing of Rabi crops, which is usually done before 15th of November. Now, we reported earlier that the harvesting operations were delayed in Punjab in the aftermath of the devastating floods and, of course, the unseasonal rains in October. Farmers also complained that their crops have been infected by some kind of a fungus due to the adverse weather, and they may have to set fire to the stubble to get rid of the fungus in the crops. Also, Uttar Pradesh, which accounted for majority of these cases in October, has now seen a considerable decline as the harvesting operations are coming to a close. Meanwhile, IITM Pune, which also does a daily analysis of the contribution of several factors to Delhi's PM 2.5, shows that the contribution of stubble fires has now increased to 5.8%. This was on October 28th, which was the season's highest, while all through October, the contribution of stubble fires to Delhi's PM 2.5 was hovering around 1 to 2 to 3%, but 5.8 is the highest so far. Meanwhile, as you can see behind me, the national capital continues to be blanketed by toxic haze, with the air quality index hovering over 300 for the past several days. Now, AQI between 300 to 400 falls into the very poor category. That means prolonged exposure to such toxic air can have harmful effects on the health of the vulnerable section of the society.
And before we take a short break, here's a quick note for our viewers. If you would like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts and insights to power your investing decisions. Plus, this festive season, there is more reasons to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe and make your portfolio shine bright with Super Pro. Welcome back. Now, we told you last Friday that an entire nation will be feverishly praying for the Indian women's cricket team to give us the honour of addressing them as world champions. And you bet, they did not disappoint. Now, in a final for the ages, the Indian women's cricket team emerged triumphant over South Africa by 52 runs, claiming their first ever women's world title in over 40 years of the tournament's history. Shafali Verma's golden arm and the golden bat, Deepti Sharma's all-round show, Richa Ghosh's long levers, everyone played their part at the D.Y. Patil Stadium on Sunday night. And of course the crowd, which cheered every run scored and every wicket taken with equal gusto. And these visuals on your screen may just give all of us cricket fans hope that the ghosts and the scars of the 19th of November 2023 will slowly but surely be put to rest. The victory also sparked celebrations across the country, with people bursting firecrackers and taking to the streets holding the tricolour. The BCCI has also announced a 51 crore rupee reward for the team's achievement. Shortly after the historic win, the players also spoke to the media as they were taking in the moment. Take a look.
You know, we've dreamt of this moment so much. We all as a team also together dreamt it. And now it just feels like a dream. Oh, this actually happened, that kind of a feeling. That knock was really, really special. Not just because I got 100, but I think because we defeated Australia, which always we've come in close situations, crunch moments, and we've given it away. But this Indian team changed that. So I think I love that for that reason, that we defeated them. And today we are world champions.
D.Y. Patil तो हमारे लिए हमेशा से लकी है. हम यहाँ पे आके कुछ अलग ही मैजिक करते हैं सबके सब. और एज ए टीम हम लोग अगर कोई ट्रॉफी जीतनी है तो सबको एक साथ आके स्टाफ प्लेयर सबको एक साथ आके वो मैजिक क्रिएट करना होता है, और वो वही किया हमने, तो काफी अच्छा लगा.
I really don't have words, sir, क्योंकि हम ये मोमेंट विजुअलाइज कर चुके हैं. हम लोग बात करते थे, अभी हो गया है, तो अभी इसको ऐसे सोक इन करने में बहुत टाइम लग रहा है. पर what to say, I don't have words.
Still taking us time to soak it in. You can only imagine how it must be feeling for the girls who were part of the squad. Now, here are the Prime Minister congratulating the women in blue over this historic triumph.
सबसे पहले क्रिकेट में भारत की शानदार जीत की बात करूंगा. पूरा भारत अपनी क्रिकेट टीम की सफलता से बहुत खुश है. ये भारत का पहला विमेन्स वर्ल्ड कप है. मैं हमारी विमेन क्रिकेट टीम को बहुत बहुत बधाई देता हूं. हमें आप पर गर्व है. आपकी ये सफलता देश के करोड़ों नौजवानों को प्रेरित करेगी.
And we leave you with some visuals of a song the Indian women's team decided to drop after their historic win.
Chalo, team song. I'll just tell it once. So we had decided this, I think, 4 years back, that we'd only reveal our team song when we win the World Cup, and tonight's the night. Everyone ready? Yes. 1, 2, 3, go! Team India! Team India! Kande saki hawa tight. Team India is here to fight. Koi na leta humko light. Oh! Our future is bright. Saath mein chalenge, saath mein उठेंगे. हमें Team India हम साथ में जीतेंगे. ना लेना कोई पंगा, कर देंगे हम दंगा. रहेगा सबसे ऊपर हमारा तिरंगा.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And there's some outperformance that we're seeing from the midcaps today. 0.6% higher. Bank Nifty is giving it some company. Nifty underperforming, but it has recovered from the day's low.
Good afternoon, Sonal. Absolutely right. It's all about earnings. It's a barrage of earnings that we've seen hitting our screens, especially in the last half hour or so. But we have a lot lined up on the show, an important corporate conversation as well. Let's start off with the top headlines. Volatile trade on the street with mid-caps outperforming realty, PSU banks and pharma lead gains, while FMCG, consumer durables and IT lag.
Dredging Corp hits the upper circuit after announcing capex for modernization. The company also entered into 22 MOUs with 16 organizations.
Q2 numbers boost LG Balakrishnan. The company reports a healthy set of numbers, margins back above 17% levels. The management tells CNBC-TV18 that they are sticking to their revenue and margin guidance given earlier for FY26.
Profit booking in Patanjali Foods after good Q2 numbers. Management tells CNBC-TV18 that they will see additional 300 to 400 basis points growth in FMCG revenue due to GST reduction, and FMCG biz margins should improve.
JK Cement under pressure after Q2 results missed street expectations. Consolidated volume growth at 13% continues to impress.
All right, those are the top headlines that we are tracking for you. The Nifty up 32 points, mid-caps outperforming, and banking names in focus as well. But as we've been talking about a barrage of earnings which are hitting the exchanges, this is our segment Mid-Cap Movers. Let's talk about some buzzing stocks on our radar. Sudarshan is here to take us through that. Sudarshan?
So today is the one segment which has been outperforming the large caps, and let's take a look at the companies or stocks which are outperforming or reacting to the numbers. On top of the list is Bank of Baroda. Like all the PSU banks, this also has reported earnings which were all round beat, and on the back of that you are seeing a big move. Stock is up almost 5%. Phoenix Mills, very strong internals for Q2 FY26, and that stock also has seen a sharp recovery from days low. At one point it was in the red, and currently it's up almost 4%. Godrej Consumer, like all the other FMCG names, this company has reported numbers. Those numbers look largely in line in a tough environment. That's the reason you are seeing a big move in the stock, up more than 4%. Patanjali Foods seeing profit booking. It was a good set of numbers for Q2, but still down more than 4%. LG Balakrishnan, strong numbers. Company maintained the guidance for FY26, saying that revenue will grow in the range of 12 to 14%. Also on the margin front, it has maintained the guidance, and that's the reason up more than 14%. Some of the other mid-cap movers or mid-cap gainers, HFCL up more than 4%. There are certain talks about that company is looking to raise funds. On the back of that, it's up more than 4%. Navin Fluorine has extended Friday's gains. On Friday, it was up 15%. Today also, with healthy volumes, it's up almost 5%. BSC, again, today also it's up almost 3%. And remember, on Friday, there were certain reports regarding FNO, and today also the stock has moved more than 2%. Wockhardt, there are certain reports about approval for WCK, and on the back of that also, ahead of earnings, the stock is higher, up more than 8%. Kolte Patil, following the big gains that all the other real estate names are seeing, this stock also is up more than 4%. Some of the stocks which are under pressure, first on the top of the list is Sharda Crop. After Friday's down move, today also the stock is down because Q2 earnings were below expectations. Netweb also is down almost 6%. Late revenues has been under pressure for the last few sessions. Today also it's up almost down almost 5%. Info Edge, because it has reported October job index, and that saw a downtick, and because of that this stock also is under pressure, down almost 2%.
Thank you so much, Sudarshan. It's a neat and comprehensive wrap of all of the movers as far as the broader end of the markets are concerned. Well, Ruchit Jain from Motilal Oswal Services now joins us. Ruchit, how are markets looking at current levels? Nifty at this point, do you see consolidation or do you see further upside?
Yeah, hi, very good afternoon. Well, there's no doubt about the broader trend. We are in an uptrend now post the recent bottom formation, and the Nifty has been forming that high top, high bottom structure. And in technical analysis, we always say that when your trend is positive, use dips as a buying opportunity. Last 3 trading sessions, Nifty has seen some pullback from the highs. Now, 20-day exponential moving average is around 25,600, which has not yet been breached. So I think since the overall trend remains positive, this small correction of last 3 days offers a good buying opportunity. So and clearly, stock-specific momentum in the broader markets can be seen that a lot of buying interest is there. So on the index front, also 25,600 is the immediate support of 20-day MA that we are watching out for. Until that remains intact, we think that one should use this dip as a good buying opportunity.
Okay, and what about individual tech picks, Ruchit?
So a couple of sectors which are showing a relative outperformance. One is real estate space and other is the banking. So from the realty, we like Prestige Estate, where the overall trend is quite positive. Even in recently, when the entire sector was going through a consolidation, we had seen a good relative outperformance over there. So with a stop loss below 1730, traders can go long on Prestige for potential near-term targets around 1940. And within the banking space, IDFC First Bank is where we are recommending to create fresh longs. Well, the entire mid-sized private sector banks is showing a good relative outperformance, within it, which IDFC First Bank has seen price up move supported by very high volumes. So short-term traders can still go long at current levels with stop loss below 77 for potential targets of 91.
Okay, thank you so much, Richard, for joining us, giving us a review on the markets as well as your technical trading picks. Well, moving on, here's a quick note for our viewers. If you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts, and insights to power your investing decisions. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. You're still tuned in to Midcap Radar. Affle reported a stable set of Q2 earnings despite the impact of regulatory ban on real money gaming in India. To put it in context, 2% of Affle's revenue historically came in from real money gaming. To discuss the quarter gone by and to understand how the company will offset the impact of the gaming ban, we're now joined by Kapil Mohan Bhutani, who is the Chief Financial and Operations Officer at the company. He's joining us now to discuss this and a lot more. Thank you so much for joining us, Mr. Bhutani. Barring the 2% impact that you had because of RMG, the numbers look decent. We've seen this time around 19.1% growth on a YY basis. Are you expecting that impact to continue in Q3 as well? What led to the 19% growth that we saw this time?
First of all, thank you for inviting us on your show. We have been resilient on our growth side. We posted around 19.1% growth on our revenues despite effect of RMG. But this was helped by the early onset of the festive season in the month of September itself. And we believe that we'll be able to offset the RMG effect in one to two quarters more. We'll be able to offset the deficit caused by the RMG.
Understood that. Mr. Bhutani, the other question what we want to ask you is, especially when it comes to the developed market, earlier, the growth rate over there was in the 20% range or slightly above that. But in the quarter gone by, it slipped down and it's now below around the 17-18% mark. Is that the new normal, or can we expect growth to revert back to the 20% levels?
We don't believe it's a new normal. We are gunning for 20% growth over a medium term. However, the atmosphere or the consumer sentiment is being watched carefully. It's not about the customers are not wanting to spend. It's the consumer behavior and inflation expectation, which is leading to wait and watch for release of higher budgets.
So you're seeing that impact on ad spends as well by clients?
So basically, the budgets are in the, moved from Q2 to Q3 festive season, which starts with the Thanksgiving there. Okay. So we expect we should be able to recover from there. However, the 20% goal for the developed market is on the medium term.
Over the medium term. So FY26, can you quantify a guidance for us, both emerging markets as well as developed markets, and especially EBITDA margins, the combined EBITDA margins, what can we expect?
So as stated in previously at the start of the year also, we are saying that we are gunning for about 20% growth overall, broad-based in all markets, whether it is emerging markets, India, or the developed markets on a broad-based basis. We believe that we should be in the range close to 20% plus minus some basis point. We should be there in the range of 20%.
Okay. You have 4 segments. There is commerce, edtech and entertainment, fintech, FMCG, gaming, health tech and hospitality. Amongst the 4, what was the breakup in terms of growth in the first half, and what do you expect for the full year?
So we are believing that the fintech was a little slower to start with in the developed markets. It's picking it up, and I think so. The other verticals are doing as nicely as they were supposed to do as per plan. Whether it is e-commerce, whether it is entertainment, both have been providing a good support to us, including entertainment, including gaming for us.
Okay. Mr. Bhutani, the other question and something that you just alluded to, you mentioned that there is now an early sign of a recovery as far as domestic ad environment is concerned. Q2, was that halted? Was there a wait and watch mode, especially with the upcoming GST reforms? Q3, what is it on ground, and what is it that you're looking forward to, especially from the domestic market in terms of ad spends?
So we are not saying that there was a halt from the customers for wait and watch of GST. It was only for a month of early part of September. Okay. However, with the festive season starting early, say about 20th of September, we started seeing the flow of budgets coming in, and that helped us.
Okay. So you spoke about what the revenue growth would look like, what the margins would be, and how the macros are panning out as far as the global uncertainty is concerned. You are focusing on premium offerings as well. What are the optimum cost per converted user rates? Currently, it is at 58. Will that continue to be the number?
Our aim is to maintain our CPCU rates as well as maintain our margins at the current levels. and improve the overall operational efficiencies using technology and artificial intelligence to give efficiencies on the margin side.
Okay, Mr. Bhutani, when you're talking about the average CPC rate, it hovered around the 58 rupees mark. Now, going forward, especially given the aggression that you have planned, should that moderate, or do you expect that to increase further?
No, we don't expect it to go down. We are going to maintain or increase from these levels.
Okay, and the other point is, especially when you're talking about the domestic ad environment, what we want to understand from you is, which is the segment from where you're seeing the maximum amount of growth? Is it the newer age businesses, or is it a comeback of the domestic business, of the earlier or the old age businesses, if you'd call them?
So new age businesses have always been there. Those were the first ones to adopt the digital ad ecosystem. However, in commerce side, we are seeing that the money is flowing from the traditional media to the digital side more frequently now.
Okay.
Okay, all right, Mr. Bhutani, thank you so much for joining in today with your thoughts and the outlook on company's performance going forward. By the way, those flashes at the bottom of your screen where Vodafone Idea has moved the court again. The stock is higher by 1.5%, and this is related to the AGR dues yet again. They are likely to flag inconsistency in recent Supreme Court order on AGR dues. They had indicated that Vodafone Idea or the government should do something which is in the best interest of the consumers and the company as well, and for the sector overall. So they are going to flag SC order stating it had sought relief only against additional AGR dues, that is. So this is something which is, the number is at 9,450 crore rupees. So we'll be watching out for that one. And we'll get in Ashmit as well as to what the details are on this one. The stock has seen has actually fell from the highs. It was up around 4.5% at a point in time.
Key point here is, so there were two AGR dues that's being discussed. The earlier one is a much larger amount.
Around 83,000 crore.
83,000 crore. But the Supreme Court verdict was quite clear that it is only for the additional 9,450 crore. So in case there is a clarity on the earlier and the larger AGR dues, and in case there is any relief, then that will be a material development as far as Vodafone Idea is concerned. We'll get more details from our colleague Ashmit, who's given us this particular development and who's given us this particular story. He's been tracking this for quite some time, but important flashes on the bottom of your screen, both for Vodafone Idea and also subsequently you will see some impact as far as Ind-SA is concerned. But moving on, here's a quick note for our viewers. As you can see on your screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the four factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or a sell recommendation. Any investor, viewer is advised to carry out necessary diligence on their own and to a certified financial advisor for investment decisions. Welcome back to Midcap Radar. Well, for a change, we are not discussing earnings, but we are discussing some important developments as far as the Dredging Corporation of India is concerned. Dredging Corporation of India has gone ahead and issued 2 press releases to the exchanges, which the street clearly likes. So what is it that they said? Number one, the company was an active participant in the India Maritime Week that happened in the week gone by. So now the company has gone ahead and signed Memorandum of Understandings with 16 organizations, and the company says that the total combined value of all of these MOUs signed is worth over 17,640 crore. Now remember, the company operates under a consortium of 4 major ports in Visakhapatnam, in Paradeep, the JNPA, as well as Deen Dayal Port Authority, and all of them function under the Ministry of Ports, Shipping, as well as Waterways. While that is an update as far as the business front and the opportunity is concerned, the important part is the company saying that they have gone ahead and earmarked 4,000 crore investment dedicated to the modernization of the company, and this particular investment is dedicated for the fleet modernization capacity enhancement to strengthen the dredging infrastructure of the company. So that's a key development, especially as far as dredging is concerned. Stock up 20%.
Exactly, 20% higher locked in upper circuit. We've not seen those levels in a long time on this stock. But before we go to the next big story that we are tracking, let's look at some more stocks which are buzzing on the upside. We have Finiotex Chemicals. Remember, it was higher on Friday as well, up around 15%. Today, it's adding to those gains, 11.5% higher right now. There's BLS E-Services, which is the demerged arm of BLS International. So that stock is up around 15% right now. So just wanted to highlight these 2 names. But Vodafone Idea, of course, that big update that is coming by there. Ashmit Kumar is joining us with all the details. Ashmit?
Well, here's the important takeaway. When the order or formal order of the Apex Court was published with respect to Vodafone Idea's latest demand, at that time, there was a very clear mention by the Apex Court, a clarification given by the Apex Court that while it is leaving the matter open to the government to resolve, in the same breath, in the same order, Supreme Court clarified that Vodafone Idea itself is only asking for relief against additional AGR dues, which add up to about 9,500 crore rupees, which, though significant, pales in comparison to the much larger figure of the AGR demand, which is over 83,000 crore rupees for Vodafone Idea. This had led to an assumption that Supreme Court is clarifying that the government relief shall be limited only and only to additional AGR dues. On that particular issue, we understand that Vodafone Idea is likely to move the Apex Court once again shortly. Before the Supreme Court, they're likely to clarify that even in their original petition, Vodafone Idea had said not just a relief against additional AGR dues, but they had also asked for recomputation of all the AGR dues. They had asked for both these aspects. They're likely to flag that the Supreme Court order itself at the very outset records that these are the 2 reliefs sought, but then later goes on to say that only relief that the Vodafone Idea has sought is with respect to additional AGR. This confusion is something what Vodafone Idea is looking clarity on. They're likely to flag it once again before the Apex Court. They're likely to seek a clarification from the Apex Court. Will the court oblige? Of course, that's the big question. We'll be watching the developments out of the top court closely.
Well, thank you so much, Ashmit, for joining us and giving us all of those details, important developments, especially as far as the fate of Vodafone Idea is concerned. Well, with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon. You have tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Today, in terms of the market, we're seeing a bit of an, red and green situation that keeps coming in. It's flip-flopping between the red and the green. That's what we're seeing for the Nifty. As of now, managing to hold on to gains of 0.2%. So there's no complaining on that front. We are seeing 25,770 levels. Day's highest point is what the Nifty now has moved on to. So that is what we'll keep an eye on. 50 points uptick is what we're watching out for. The Nifty 50. Broader end of the market, that's doing much better today. So Nifty Midcap as well as a small cap. Outperformance coming in there. Nifty Midcap up 0.6%. Small cap is up almost 0.8% in today's trading session. A lot of movers that are coming in from the broader end of the market as well. So that is something that we'll be keeping an eye out on. Sector-wise, Nifty Realty top sectoral gainer, while FMCG is among the top sectoral losers. So let's keep an eye out on that. But this is a show where we solve all your stock-related queries, and that is what we'll be doing. We have our experts joining in with us, Ashish Kayal, a chartered market technician and author at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Geojit Investments, to answer all those queries. Ashish as well as Gaurang, good afternoon, happy Monday, and thank you so much as always for joining us on the show. Let's get started with those stock-related queries now, and the first query for today is coming from Jay Rathod. It is on Bajaj Housing Finance. He's holding 350 shares of Bajaj Housing Finance at a price of 119 rupees. Currently, the stock is trading at around 109, 110 rupees per share. He's saying that if he continues to hold this for the next 2 to 3 months, what is the investment strategy that he should keep an eye out on? Gaurang, good afternoon, and what is your view here?
Thank you, Vinny. Good afternoon to you as well, and happy Monday to you as well. However, the markets are in a range-bound mode since the time we open up for the trade. Having said that, a small disclosure before I go any further, that all recommendations are a part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest either. But we give recommendations to our clients on similar lines. They might have their investment interest. Now, talking about this particular sector, first of all, that is HFC, housing finance companies. So, Vinny, we are in a trajectory of lower interest rates. We have had close to about 1% rate cut this year, if I'm not mistaken, by the Reserve Bank of India. Expectation of further rate cuts coming through, which will translate into positivity for finance companies as much as for housing finance companies. Real estate sector is doing extremely well. Positivities of real estate sector doing well also comes on to the housing finance companies. This Bajaj Housing Finance, of course, it comes from a great pedigree. We don't have any specific coverage on Bajaj Housing Finance, but we are positive on the sector. We like names like LIC Housing Finance and Canfin Homes. And, for 2-3 months, it's very difficult for a fundamental view to be given out. I think my good friend Ashish Kayal would be in a better position.
Absolutely. Ashish, then on the technicals, what are you watching out for? Because 2-3 months time period, right now they're making a bit of a loss. Will they be able to go above their buy price of 119 in the 2-3 month time period?
Hi, Vinny. Afternoon to you and Gaurangji and all the viewers. If you look at Bajaj Housing Finance, it has been consolidating forming a triangle pattern between 113 levels and support at around 107. It's forming a range-bound movement, and I think it's better to wait and hold on over here, because if the stock manages to break above that 112, 113, it can go par 120 as well. So my suggestion would be, from short-term 2 months perspective, hold on to the stock for the targets of 120 or higher. And on the downside, maintain a strict stop loss of around 106 levels. If that is broken, then we might see some kind of a downside move.
Okay, keep an eye out on those levels over there. Let's move on to the next query. This is coming from Mala, who's writing to us from Mumbai. She's holding 600 shares of Praj Industries. Price is 338 rupees per share. So right now the stock is trading near the buy price itself. Wants to know if she wants to hold the stock only for 1 month. Then should she hold, or maybe should she look to switch to some other name? Gaurang, your view, Praj Industries, and again a very short-term query.
Well, honestly, this company used to do well. We used to have a coverage, Vinny, as a matter of fact. But after our target price were in place, we have removed the coverage. Currently, we don't have coverage. And this is a more of an ethanol story which was blending over a period of time when the government's, inclination towards blending a higher amount of ethanol with petrol and diesel. But that doesn't seem to have worked out well. Over the last 6 months, 1 year, if you actually go to see, this has been an underperformer. If she's also inquired about whether she can switch on to some other sector. So no specific comment on Praj Industries, but I think if she's planning to make a switch, the entire BFSI segment has done extremely well, leading with the public sector banks, private sector banks, and strong NBFCs. Now, if I have to identify one particular name in the NBFC, then I think closer to where the stock prices of Praj and the recommendation, I think L&T Finance from a long-term point of view would turn out to be a better investment idea.
Okay, another investment idea coming in, maybe to switch out is the option that Gaurang is saying. But on the technicals, Ashish, 1 month time period, where do you think the stock is headed and what should the viewer do?
See, if you look at the stock performance over the period of 6 months, 1 year, it has sharply moved down from 540 levels, made a low around 330, and now just consolidating there. It's also failing to move above its 20 DMA. So the overall tone for the stock is on the downside. So my suggestion would be it's better to be out from Praj Industries and invest in something like an auto. Auto is also outperforming along with interest-sensitive stocks that Gaurangji mentioned. So something like on the auto side, two-wheeler stocks like Bajaj Auto looks to be doing good. So diversify from your exit from Praj and invest into other stocks.
Okay, that's a view there from for Praj Industries. Better to move out. That's the view coming in from both our experts for today. Let's move on to the next query. We have Ambali Matthew, who's writing to us from Kerala. She's holding 4,500 shares of Varun Beverages. Price is 530 rupees per share. She's been holding the shares for a year now. So it's been 1 year. She's continuing and she's willing to actually hold it for another couple of years as well. She's a long-term investor. So what is the view coming in on this one, Gaurang? What should she now be doing with Varun Beverages? We had the numbers also that came in for the company. What should we keep an eye out on?
So on fallback of the number, there was also a positive announcement wherein the company is planning to go into an Alco-Bev beverages. I believe it was with Carlsberg. I stand to be corrected if I'm wrong, Vinny. And in terms of performance, yes, there was a concern in the quarter gone by. That was the first quarter of this financial year. But looking at the current numbers, Q2 and the management commentary venturing into newer trajectories and products getting launched, we have a whole recommendation. From a long-term point of view, approximate targets possibly in excess of 550 is what we have in our mind. So long-term, continue to hold.
Okay, long-term, continue to hold. That's the word on the fundamentals. Technically, Varun Beverages, how is it looking, Ashish?
See, the stock has formed a very classical double bottom pattern. It managed to bounce back 2 days or 3 days back. We saw a huge uptick in the stock with enormous volumes. And that was a positive sign, but it has given away half of its gain. So right now, my suggestion would be hold on over here. On the downside, maintain the stop loss of around 443 levels. And on the upside, the stock can again move to the higher end of the range, which is near 560.
Okay, keep an eye out on those levels over there for Varun Beverages. Hold on right now is the suggestion there. Let's move on to the next query for today. We have Skandha R, I beg your pardon, Skandha R, who's writing to us from New Delhi. He is holding 950 shares of Eternal. Price is 346 rupees per share. Long-term story for this one. Gaurang?
Well, definitely a hold over here, honestly. And I think earlier known as Zomato, I guess most of us would be having the app in our smartphones, and we would definitely using that. Fast forward to the current situation and the outlook going forward from here on. There are a lot of dark stores that Eternal has opened up, and they have ventured into newer geographies. That by default increases the footprint market share, along with that increase in the subscriber base. Coming next year, 2026, Vinny, they have a lot more detailed lineup in terms of newer stores, newer geographies they will be stepping into. Definitely. And we have covered this particular stock earlier known as Zomato when the IPO was there. 76 rupees was the IPO, if I'm not mistaken. And then post that, we maintained a fundamental buy call on Eternal for a long-term point of view. So if you are in for long-term, continue to hold.
If you're in for the long term, continue to hold Eternal. That's the word there. But on the technical front, Ashish, what should one be doing? In the last 6 months, the stock has gone up 35% approximately. Should the viewer continue to hold?
Yes, indeed, because the stock has strongly outperformed its peer. If you look at Swiggy, Eternal has outperformed. And we can clearly see that there is a short-term correction which happened, and it can be a good level to add more at these levels. And on the upside, we can expect the stock to move towards the level of around 400. So the overall undertone for from the weekly, monthly, and the short-term perspective for Zomato is or eternally is positive. On the downside, the support is going to be around 300 levels.
Okay, keep an eye on those levels over there for Eternal. But quick check in terms of Storecraft. They reported their numbers, and the stock has seen a sharp spike up. Right now, you can see it at the bottom of your screens. Net profit is up around 27.5%. 21 crores is what the net profit has come in, and revenue growth of around 13-14% there. Margins have seen some bit of an improvement as well. So that is what maybe is keeping the stock abuzz. We'll wait out for more details coming in. Operationally, also a good performance, and Storecraft has spiked up in today's trading session. Was trading in the red at some point of time and then moved up to the green. 12% is the EBITDA margin versus 11.7%, 30 basis point expansion in terms of margin. So keep an eye out on Storecraft. As of now, holding on to gains of around 2% in the trading session. But on that note, we're going to slip into a very short break. But before we go into a break, here's a quick note for our viewers. You must have noticed that there's a money control stock score just above the line graph. Now, like you can see for Storecraft, there is a score that is there of 51. This is a score assigned to each stock based on money control's multi-factor algorithms. It's calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and a T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out the necessary diligence on their own or through a registered certified financial advisor for investment decisions. Welcome back to your stocks in CNBC-TV18. We had GE Vernova TND that reported its numbers as well. Profits have seen a significant uptick coming in at around 299 crores, revenue up 39%, EBITDA is up 94% as well, and a sharp improvement in terms of the margins is what we've seen coming in as well. So yes, overall a good set of numbers that's coming from the company because in terms of the revenue growth also, it's very strong and much above what we were expecting. Margins are much better than what we were expecting as well. So will be key in terms of commentary to watch out for from the management. As of now, the stock has moved to the day's highest point. 9% uptick is what we're seeing coming in for this cap good company as well. But keeping it going with all your stock related queries, and the next query for today is coming from Ria Matthew, who's writing to us from Kerala. She's holding 55 shares of M&M. This is at a price of 1,725 rupees per share. Wants to know if she should continue to hold, sell. What is the view coming in at the current levels? Gaurang, what is your view on this one? We had the October sales numbers that came in as well. So now what should they be doing with M&M? Should they book out their profits?
Not at all. If you're a long-term investor, and the best part about the investment, Winnie, is the price at which she's got invested. She's almost doubled her money, if I'm not mistaken, or a little bit higher side from here on. Fundamentally, we do have a buy recommendation on Mahindra & Mahindra. I think, first of all, they have a diversified product profile, including the BE6 and the other variant. Along with that, of course, we've got various products available in the SUV, UV, and of course, commercial vehicles. Tractor agri equipments also contributes to some certain extent as far as M&M's balance sheet is concerned. Somewhere close to about 4,000 is the approximate target price. And one more thing I would like to add over here, that in case, because she's holding just 55 shares, in case if she has investable amount, and if she's wanting to invest in M&M for a long-term point of view, she can definitely do that. Some at current levels and possibly add-on dips would be the strategy.
Okay, add-on dips maybe would be the strategy there. Ashish, what is your view coming in for M&M?
See, the entire auto space, auto ancillary, I think is just started the upward trend. And M&M has been a leader in this entire space. So I think there is a lot of outperformance that can come in even from here, these levels. And we can expect the stock to reach the levels of around 3,900 on the upside. On the downside, the important support is going to be around 3,350 levels.
Okay, keeping an eye out on those levels over there for M&M. Next query for today is coming from Ritesh Mathur, who's writing to us from Noida. He is holding 30 shares of Emphasis. Price is 1,997 rupees per share. Right now, they're making a profit on this one. Now, he wants to know if he should continue on. Is it worth holding Emphasis for a period of 3 years or more now from here on? Gaurang, your view for Emphasis and overall the IT pack as well.
So let me give you a brief view, try to give you a brief view. Well, the entire IT sector, Vinny, if you actually go to see, a lot of people had written down an obituary and advised to stay away. We at Geojit maintain that, yes, there are difficult times, but it's not like you can write off information technology from a long-term point of view. Point number one. Point number two, some of the small and mid-cap IT companies have actually delivered better numbers when you compare it with the larger boys, big boys like TCS, Infosys, Wipro, HCL Tech, etc. So we have an accumulate stance on Emphasis. Hold on to it, first of all. And if you have investable amount, you can definitely add on to it. We have a target of in excess of 1,300. Again, from a long-term point of view, if the earnings are better than what our estimates are, these targets would definitely get revised upwards.
Okay, that's there. But let's just address the flashes at the bottom of your screens quickly. For Vodafone Idea, Vodafone Idea's move to Supreme Court says that there is an error in para 6 of the AGR order that's come in there. The Supreme Court clarifies that Vodafone Idea had asked for a relief on both additional AGR dues and reassessment of all AGR dues. So that is an important update that is coming here. Now, the relief against additional AGR dues had made composite payer against additional AGR plus reassessment of all AGR dues. So an important update there coming in for Vodafone Idea, where Supreme Court has clarified that Vodafone Idea had asked for the relief for both additional AGR dues as well as reassessment of all the AGR dues. So just keep an eye out on this one. And Ashmit had also, just given us more updates on this one as well. So that is something that we will be keeping an eye out on. This is there that there was an error in para 6, and Supreme Court says that we would had only asked for relief against additional AGR dues. Let's go across to Ashmit, who is here to give us more updates on this one. Ashmit, what is this latest update now that has come in?
Well, a hugely important clarification, hugely important for Vodafone Idea coming in from no less than the Supreme Court of the country. What's important is that, mind you, Vodafone Idea, in that original application that they had moved, had made a twofold plea for relief. Number one, they had sought relief against additional AGR dues, and number two, they had sought for reassessment of all the AGR dues. There were both these reliefs that were mentioned in their petition. However, in the latest order that had come out by the Apex Court, that order made a mention that Vodafone Idea is seeking relief only against AGRs, only against additional AGR dues. That Supreme Court order led to the impression that the hands of the DoT are being tied only, that they can grant relief only to the extent of additional AGR. That is the anomaly, that is the error which was flagged once again by Vodafone Idea before the Apex Court. They appeared before a bench headed by the CJI. They mentioned that there seems to be an error. The Supreme Court seems to have caused confusion, and that Vodafone Idea is asking for relief only against additional AGR dues, and that is something that has now been reconciled by the highest court of the country. The Supreme Court saying that yes, we are now recording as a part of the order that the relief being asked for by Vodafone Idea is both additional AGR dues as well as reassessment of all the AGR dues. This stand was in fact also supported by the centre. The centre was present here before the Supreme Court. The centre stance also is that the government should be given flexibility to decide on any application for relief that may be filed by Vodafone Idea. So this effectively clears the decks, clears the hands of the DoT to go ahead and to consider any fresh application by Vodafone Idea for reassessment of all the AGR dues in question, not just additional AGR, but all the AGR dues in question.
Absolutely. A big clarification coming in there, so that certainty, both additional AGR dues as well as reassessment of all AGR dues. So an important update there. Thank you so much for joining in with us, Ashmit. And as of now, the stock has moved up. 7% up is what the stock is trading at. Look at the spike up, post this announcement that has come in, the clarification that has come in as well. Vodafone Idea, 7.6% uptick is what we're seeing coming in for the stock as of now. Okay, that's the word there. Thanks so much for that, Ashmit. But let's keep it going then with the next query. We have this one coming from Mihir Khanna, who's writing to us from Jaipur. He's holding 75 shares of Navin Fluorine. Price is 5,003 rupees per share. He wants to know what should he be doing with this one. Ashish, your view for Navin Fluorine?
See, over the past 2 days, we can clearly see the stock has shown a very sharp rally on the upside. It's trading currently at 5,900. The undertone is positive. My suggestion would be hold on to the stock here. Might be headed towards 6,400 or higher levels. On the downside, the low of yesterday, which is around 5,400, is going to be an important support.
Okay, that's the view there for Navin Fluorine. And Gaurang, a quick word from you as well. Navin Fluorine, should they continue to hold this?
Well, so it's a strong player in the sector, Vinny. We don't have any specific coverage, so I won't give specific buy, sell, and hold. But yes, the opportunity looks tremendous, not only in the domestic market, but also in the overseas market. And Navin Fluorine happens to be a very, strong contender in terms of the products that they're offering.
Okay, that's a view coming in there. But that was the last query for today, gentlemen. So thank you so much, Ashish, as well as Gaurang, for joining us on the show and helping our viewers solve all their stock-related queries. And viewers, thank you so much for tuning in. Remember, you can always email us your queries. There'll be an email ID flashing at the top of your screens for you all. So do send us your queries. But keep an eye out on Vodafone Idea. More updates will keep coming in. But as of now, a big relief there. Don't go anywhere. Last hour of trade is still left. And closing bell is up next for that.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
What we'll keep an eye out on is going to be the Trump and Xi's overall truce that comes in there. Everyone played their part as at the D.Y. Patil Stadium on Sunday night.
The one sector which really stood out over the 5 trading sessions was the PSU Bank space.
Nifty Bank will have to find its form. It's seen a decent pullback from the recent high.
So 25,720 is where the Nifty is starting. It's absolutely flat.
The activities in the ground is quite good, and therefore I feel the business is good.
In spite of all this asset quality that we have announced this quarter, we kept the slippage ratio guidance and the credit cost at the same.
It's a 100-point recovery that is underway. Nifty is at that 25,750 mark as we speak.
2 companies, Tata Motors and Ashok Leyland, have been the outperformers.
Q1 was the first quarter that we are PAT positive. As you know, Q2 is very well done and over. We would love to continue the trend going forward.
The Nifty up 32 points, Midcaps outperforming, and banking names in focus as well.
Well, that is the day so far. It's a good-looking screen with about a 60-odd point gain on the Nifty. Market breadth is comfortably in the positive. 1,800, 1,900 stocks are higher, and you got about 1,200 stocks which are lower this Monday afternoon. Last hour coming up. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. And I have to say, guys, I was walking around in that jersey, the blue jersey.
Then you realized.
I saw you guys, and I said, well, everyone's changed out. So that was the story.
That was the pump and high of the game. Now kind of back to usual, back to normal. Though the high will continue for I mean, months and years together. But speaking of highs and lows, I think no stock takes it away more than Vodafone Idea. And it's not just Vodafone Idea, you're seeing that reaction play out on Indus Towers as well. So in case when you missed the gist of the flashes on your screen in the last couple of minutes, what's essentially happened is that it seems the court has clarified that the scope of that relief that was being discussed for Vodafone Idea goes beyond the additional AGR demand, which was just about 9,500 crores. The court has clarified that it will be covering the total AGR demand as well, which went up to more than 80,000 crore rupees. We'll get Ashmit to explain to us what exactly has happened and whether this is the final clarification, which means the government can also then go about and take a holistic view on the entire AGR matter and not just that smaller quantum of 9,500 crores with respect to Vodafone Idea. That's definitely the top story. But otherwise, Nigel, market's not bad, right? We started off fairly quiet in the morning, but things kind of picked up along the way.
Well, Surabhi, if you remember the morning call that we were discussing, we mentioned 2 points, right? FI shorts in the system, not so bad. The second factor we mentioned is the PCR coming to around 0.65. That's normally a recipe that you see that, in fact, the markets do bounce. And the good news today was that the GIFT Nifty was suggesting a downtick. And we did have a downtick of 40, 50 points or thereabouts. So it's a perfect scenario to see a bit of a bounce. Can we get past closer to around the 26,000 odd mark? Now we'll have to see whether or not that can happen. But otherwise, the call was relatively easier from a bullish perspective today because of the ingredients that were in place. Soft start, and both the 2 technical indicators had moved out a little bit to the extreme. So in the near term, that bounce was expected. That's played out. Can we build on from here? Important to see.
Well, you've got Indus jumping, Voda jumping, Bharti perhaps also comes up on your screen. It's a, for the lack of a better way, a mysterious sector, telecom, but just crazy amount of volatility with this one. Order clarification, and it looks like, now the road's clear for the government to be able to offer the relief that it wants to, because at the end of the day, it owns half. It has got about 50,000 crores of market cap to defend. Its market cap now, which it owns in Vodafone Idea, that is. More in a bit. Well, let's just quickly run you through what's coming up. So markets, of course, doing well. Banking is leading the gains. And, the PSU Bank Index was up 5% Friday to Friday. That is last week. And it's no different today in that sense. Midcaps, of course, doing well. Idea is the top story. Ashmit joins us in just a bit. We'll get you some, expert perspective on this as well, whether this is now all done. at least in terms of what is allowed. We'll also talk about Vedanta, which is up a big one, 4%, 20 rupee gains, strong second quarter management commentary, etc. also looking pretty good. We had the management with us. We'll play out some sound bites as well. BOB is the other sort of earnings reaction. And again, we had the management. Shriram Finance is another one, which is up. This is actually the number one volume-led gainer across on the NSE. And we'll play out some sound bites there as well. So that's what's lined up here over the next 60 minutes. 60 points is what you have on the Nifty, 25,783. How should you position yourself in the last hour? We have Mitesh Thakkar joining us. Mitesh, good afternoon. Good to have you here. Your thoughts, quick ones on the indices and then any trades.
Good afternoon, Prashant. So two things. One, I think, we kind of bounced back from areas near 25,600. And two, I think, as was highlighted, I think the PCL was oversold. So, there was always this chance that 25,600 will hold, and the medium-term charts also very positive. Now, what we need to do to continue on the upside is to get past 25,800. I think once that is captured, then I think, the path toward 2600, 26,100 opens, and then, we can look at all-time highs. So that's the way we are approaching the markets. But till we break 25,600, I think to maintain clearly a positive bias. On the stock side, I have a buy on Astral with a stop at about 1468 for targets of 1590, and a sell call on Colgate-Palmolive or Colpal if it breaks 2185, sell with a stop of 20 points and look for a target of 2140.
Okay, all right. And those are individual trades. Well, as promised, let's go across to the big story, which is Vodafone Idea. Ashmit is joining us now. Ashmit, we were speaking on the phone 15 minutes back and, just talking about where this would go, and it's taken the last 15 minutes, it's all changed completely. What's happened, Ashmit?
Well, attribute to, as far as that 15-minute call is concerned, 15 minutes back that we were on the call, the reason I excused myself is because I saw Mukul Rohatgi and Solicitor General move towards court number 1, and that's where all the action went down over the last few minutes. The action that has gone down, what has effectively happened is that the Supreme Court has given a clarification which paves the way for the DOT to consider relief for Vodafone Idea across all the AGR dues. Now, why is this in question? Well, the Supreme Court order, the last order that had come out, had left room for confusion. The last Supreme Court order had said that Vodafone Idea itself is only asking for relief against only and only additional AGR dues. Whereas Vodafone Idea wanted to correct the Apex Court that that's not the only relief they've sought. They've also sought relief for reassessment of all the AGR dues. Now, both these aspects is something that the Apex Court dwelt on, applied its mind on, and has now corrected its earlier order, and therefore, in doing so, has paved the way, has untied the hands of the DOT to grant relief on both these counts, the additional AGR dues as well as all the remaining, all the overall AGR dues. This is important, given as how the Solicitor General was also present in Court 1. Even he too said that perhaps the ideal view that the Apex Court should take is that whatever application flows, whatever application is filed by Vodafone Idea for relief should be considered on its own merits. So effectively, this order, number one, clearing that confusion, and number two, opening the hands of the DOT to grant an overall relief with respect to the AGR issue that is plaguing Vodafone Idea. Of course, the government stance has been is that the facts and circumstances on the ground have changed. We now have skin in the game. We now have 49% stake as far as this troubled telecom company is concerned, and that's the ground on which they've asked for relief. The Supreme Court obliging, and the DOT is likely to now fall through and consider any application that comes from Vodafone Idea.
Ashmit, I, for one, quite love courtroom dramas. But I think this is something, when it comes to telecom in this country and Vodafone in particular, I think real life could really overtake real life. Beat all the series hands down. I mean, right from the retrospective case going back a whole decade back, right up till now. And then now finally it seems on the AGR matter at least, the decks have been cleared for the government to take a final new clear call. All right, Ashwin, thank you very much for the details over there. There you see, stock reactions once again on the upside. Deepan Mehta is with us. We'll discuss Vodafone and a lot more with him as we go along. But first this, Deepan, again, I mean, this has been just, I don't know, it's been maybe a smart trader's delight, an average trader's nightmare. But now it appears finally there's clarity. At least the ball is very clearly back in the government's court. So is there any reason to look at it beyond just day-to-day trading?
Yeah, that's right. I think, one should look at it, Vodafone, in much more positive light. And I think now all we can expect is more announcements from the government as to how finally they are shaping up this entire issue with Vodafone. And subsequent to that, whether any, fresh investments are coming into Vodafone. So I think many positive triggers for Vodafone at this point of time. And let's see how it plays out. But I think from investors' perspective, even Bharti Airtel could be a beneficiary because eventually whatever relaxation relief is granted to Vodafone should be offered to Bharti Airtel. Only that Bharti Airtel has already paid some of its AGR dues. So I don't know how that actually works out, whether they get a refund or not. But anyway, I think it's great news for Vodafone. And I think some maybe positive follow-up for Bharti Airtel shareholders as well.
But I'm not sure, I mean, we don't have Ashmati, I think he's gone. But from what I remember, when he was explaining the verdict, when it came out to us, the actual copy of the verdict last week, I think it was clear that this is with respect to only Vodafone Idea, it doesn't apply to the sector as a whole per se, because this is a bit of a special situation with the government now being a very large shareholder. But we'll see how this plays out and what the final interpretation really looks like. Deepan, the other stock of the day has to be Shriram Finance. I mean, the numbers look great, no complaints there. The management's very confident of 16-17% growth, quite confident on the margins as well. But then there is the story of a potential deal that refuses to die down. Your thoughts? The stock has already run up 20% in the last one month, I think more than 20%. So is the best in the price? Would you buy fresh? How are you looking at it?
Surabhi, I think first of all, Shriram Finance's track record in terms of collection has not been the best. And from time to time, whenever the sector comes under stress, their NPAs do tend to shoot up. And that has caused problems in the past. But there's a lot of interest in banks, NBFCs, investment from foreign investors' point of view. And maybe there could be a deal in Shriram Finance. But nonetheless, I think these are kind of great times for NBFCs with lower interest rates, relaxation on RBI, from RBI for risk weightages. And overall, industry is doing very well, I think, with commercial vehicles, passenger vehicles, the entire auto industry doing well. Was a big impetus for Shriram Finance. And also it's trading at a big discount. Some of its peer group companies as well, be it Chola or Bajaj Finance, although its track record is not as good as these two companies. As shareholders of Shriram Finance, I think best to remain invested. One quarter should lead to another quarter, and you could see the company going, the stock price going from strength to strength. But as I said, I think end of the day, the minute the sector turns a bit muddy, this is one company's NPS tend to start shooting up.
Okay. Well, before we move on, let's actually hear out some of the management commentary. Like I said, they've been sounding very, very optimistic about demand. They are seeing demand across the board, CVs as well as the other auto categories, and quite confident on the margin front as well. Take a look.
Values of the vehicles have remained very strong. It has not changed at all. That there is no nowhere you will see idling of a vehicle, income getting reduced, or vehicle value coming down. So these three things are very important for viability in a CV business. And since we are in touch with the customer, we have direct access to customer, we did not see any stress as of now. Even the sales numbers, if you look at the first half in the sales numbers have gone up. The CV demand has gone up, even though most of the demand would have come in the fag end of September. But even in October, the year-on-year sales numbers have gone up. That means there is a significant demand for a commercial vehicle. The activities in the ground is quite good. Typically, the festive period or festive time is the indicator of the mood of the customers. And this time around, the October has been all-time high sales number for all the segments, whether it's a passenger vehicle, commercial vehicle, two-wheeler, and three-wheeler, tractor, every segment have shown big growth. Only one sector that has not shown a big growth or maybe even a growth is the construction equipment, where there has been some slowdown in the infrastructure spending.
All right, Deepan, I want to come across to you and ask you your view on Vedanta. And let's run our viewers through first a quick analysis on Vedanta and why the stock is up. First, with regard to the results, the aluminium EBITDA number, I've been tracking it from, they were doing less than 2,000, 2,500 rupees EBITDA for a quarter. Now that number, the last few quarters, it's moved from around 4,500 crores to the last quarter, they've done 5,500 crores. Very, very encouraging. And, they're guiding for better times ahead as well. Now, what they're saying is that in this year, the EBITDA number will look more like $6 billion approximately. CLSA, they had put out an estimate, they were working with around $5.7 billion odd. Now, in the first half of the year, they've done only around $2.5 billion, which means the second half of the year, they'll do around $3.5 billion. That'll be very, very encouraging. So you're bracing for a better setup in the second half of this fiscal. Brokerages, CLSA, they are bullish on the stock. They have an outperform rating. Target price roughly around 580 rupees. But they point out that the outcome of the $2 billion bid for Jaiprakash Associates assets, that's going to be very, very important. That's key to watch, given it's going to be a diversified asset. So we'll have to keep an eye out on that. Citi as well, they have a buy rating, target price around 585 rupees. They say that the parent leverage, well, that's at comfortable levels. The potential medium-term aluminium price upside as well is there. So that's why they do like the company. So both those two brokerages fairly optimistic on prospects. The management, well, they spoke to us earlier today. They gave us a good breakdown. On the aluminium business, they said that they're expecting the aluminium prices to hover in that range of around $2,850 per ton to around $3,000 per ton, which is encouraging. And they're saying the cost of production will fall from here because the second alumina refinery, that's up and running. So that's what will help cost to further come down by close to around $100 per ton odd. On the debt reduction front, they're saying Vedanta Resources is in great shape. Remember, a few quarters ago, it was at around $9 billion. It's come down to around $4.5 billion. And they're saying in the time to come, it'll go down to around $3 billion. While on the listed entity, Vedanta Limited, the net debt is currently around 1.4 times odd. They're expected to come down to around 1 times. On the demerger, they're confident. Demerger gets done in this fiscal year itself, and they're ready to give the corporate guarantee to the Ministry of Petroleum. If that is the case, that demerger could see the light of day. To put all this together, a better showing the second half of the year, optimism with regard to the demerger and valuations in favor explains why the stock is doing quite well. In fact, earlier today, I spoke to Mr. Ajay Goel, the group CFO at Vedanta, on a whole host of issues. Let's listen in to what he had to say.
So you may have seen in the last NCLT hearing, the SEBI has approved Vedanta's demerger. And the next date of hearing, in fact, is on the 12th of November. And that hearing we see as conclusive. Vedanta is agreeable to keep the corporate guarantee in case if that's a requirement. But we are very, very confident that a demerger will reach conclusion by end of fiscal, as we have earlier committed.
Deepan, what do you say about this one? Vedanta, not a stock for the faint-hearted. Over the last 10 years, we have discussed it numerous times. You don't know what they'll do next. But now if the metal cycle is going to be, you're going to have a lot of tailwinds. And the company seems to be doing the right moves, particularly on the cost side. The LME is not in their favor, but on the cost side, they've reduced costs drastically. And you have that demerger, which gives you the optionality value as well. Your view, 515 rupees odd?
Najal, I think you summed up the investment case really well.
Not the investment case, putting the facts on the table.
Yeah, but I think the facts are very attractive. I should correct myself. Yes, it's not an investment case. The facts are pretty attractive. And I think you covered it really well. Maybe, you should look at the stock in positive light. I think there's a trading rally possible because typically when these splits take place, the kind of listed entities, the separate companies, their value tends to be more than the combined entity. So that at least in that sense, there's a little of margin of safety and massive expansion plans also going on stream. And gradually, I think uncertainty around the corporate debt is reducing. So I think you could have a good trading rally in Vedanta for the next few quarters or so. Certainly worth watching. As an investor, I think best to remain invested. Fresh investments maybe at these levels or slightly lower may give good returns.
The high which this one made, I think it's I'm looking at a yearly chart on this one, and
on Vedanta,
526, right? 526, 527 was the high.
It's closer to the it's at a 52-week high.
Basically, 500 around is essentially the point where it got to almost in 2010 as well, and then since then has been sort of meandering. So this is the place now. if this is to sort of take out.
And as I always mentioned with regard to Vedanta, there is, if you look at it in the last 5 years as well, the stock could be all about, but I think there's 250 rupees of dividend as well. So, effectively it's around 750 rupees. So sometimes when you get these things that, the promoter's tricky, promoter saying, I'm taking care of Vedanta resources, I'm giving you also the dividend. So some shareholders are pretty okay with that. I recall, Philip Capital Vikas, who joins us quite often, when the stock was around 210 in September 2023, he came out and said, I'm happy with this. And he's got the call right. So kudos on that one.
Yeah, absolutely. Well, Walcott is up some 9%, 10%. I'm not sure what's happening. In terms of timelines with the blockbuster molecule, which is, which has got a very, very large addressable market, they were waiting for some approval, and it was supposed to happen. I mean, the timeline is right about now. I'm not sure if that approval has come through. We've not heard anything. Deepan, do you have any view on Walcott per se?
No, I think that, it's great that they have got, among the few companies which are really solid when it comes to new chemical entities, and very good success is what they've got over there. Another company which comes to mind, of course, is Glenmark. But Walcott also, I think, if they get the approvals and actually sales start to trickle in, the profit margin will be quite high, astonishing for this particular molecule. And there's always a scope to expand it to smaller other markets where the regulatory or the permission requirements are slightly lower, India as well. So generally positive on Walcott, but these things one can't really get a handle on what the numbers will be and what the potential of the new molecules are. And mind you, they've got 3 or 4, exciting molecules in various stages of development. So, but one, I think I don't recollect the name exactly, has got the highest potential, as you say.
Got it.
All right. Thank you, Deepan, for that. A good conversation. You have a good rest of the day, and we look forward to catching up again soon. Right now, we do have to take a break, but before we do that, it is time to highlight the Super Pro chart of the day, powered by Money Control. Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here's today's chart and what it means for your next market move. IDFC First Bank is the stock on your screen, showing a rectangle pattern and a bullish breakout. Let's get the chart up. Yeah, there you go. So it's a rectangle pattern, which is a consolidation phase, and then a breakout above that. As you can see, a rectangle pattern bullish breakout is a signal that the consolidation phase is complete and the momentum is expected to drive a continuation of the preceding uptrend. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day can win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro. Welcome back. It's a day that really belongs to buzzing individual stocks. Lots of mid caps and small caps flying around. Wockhardt, of course, the numbers and the stock is on your screen, 10% higher. There are more names. In a bit, we'll talk about Thangamal Jewelry. Thangamal, after numbers, is up 20% on circuit. Talk about glittering and shining. And another example would be, say, an LG Balakrishna, also reacting to numbers and commentary. LG Bala is up some 15-16% as well. So really, quite a day for individual stocks.
Just one more, if you look at Stovecraft, when TTK Prestige came out with a set of numbers, the stock started moving up. And valuation, it has that comfort. Now, it ran too much ahead of itself that the 12-13% growth that they delivered is not good enough. And that's where the stock has come off. So you see the last few days, the last 1 month, I think it was up 15%. It's given up half of those gains because the numbers were not as good as anticipated. So that's why, in fact, the stock is down today 7%. 1 month, it's still up 8% after falling 7%.
Okay.
So, Street tried to extrapolate something which didn't happen.
So both ways, sharp reactions coming in on the way up and some on the way down. But talking more about the up, let's look at Dredging Corporation. Dredging Corporation also, last time I checked, was quoting a double-digit gain. Yeah, still 20% circuit. Now, Dredging has won a bunch of, I think, orders. The total value could go as high as 17,000 crore rupees. Let's go across to Vivek to understand more. Vivek, are these orders? Are they MOUs? I mean, what exactly is driving this?
Well, they are MOUs that the street is expecting and hoping that they get converted into orders soon. But let's have a look at the news itself. A couple of important developments that Dredging Corporation has given the exchanges. First one, last week we actually had the India Maritime Summit. So Dredging Corp, of course, a key participant over there, and the company over there entered into 22 memorandum of understandings with 16 different organizations, and the total value that the company says of all of these MOUs put together was over 17,645 crore. Now, this particular MOUs are important given the fact that the company operates under a consortium of 4 major ports, which was under key focus area as far as the Maritime Week itself was concerned. So Visakhapatnam, Paradeep, JNPT as well as Deen Dayal were the 4 ports, and remember, all of these ports function under the aegis of the Ministry of Ports, Shipping as well as Waterways. Now, more important as far as dredging is concerned is that there has been a earmarking of 4,000 crore rupees of capex. Now, this is dedicated to the modernization of the company's fleet as well as the company's equipment, and they expect this will help strengthen their own as well as India's dredging infrastructure. So this is an important development, especially the capex that will go ahead and augment their existing capacity.
Vivek, is this related to this shipbuilding push as well, or that is, or not really? Or have you picked up? Yeah.
Well, it is because a lot of the dredging. The company also in the press release has mentioned that they will be working closely with players like Cochin. They'll be working closely with players like Mazgaon Dock. So it'll be important to note, and it'll be important to see exactly the contours of any specific deal or any specific tie-up that the company does. What will be the scope of work for dredging, and what will be the total value that dredging itself gets. So while it's a positive development, no doubt, it's important to know that there could be some moderation as far as expectations are concerned, especially the scope of work for dredging is concerned.
The Maritime Week ended last, I think it's a few days old, but I think the releases, the exchange information has just come, right? I mean, from dredging yesterday or whenever, a couple of days back.
That's right, yes.
Yeah, Friday was a big day. Today, again, 20%. It's a small, little over 2,000 crores in market cap. So it's a small PSU with some big numbers now. So we'll see where this one is headed. As we were talking about dredging, there was a flash on Grow as well. Grow, of course, is, I think, by sheer number of users, the largest broker in the country. And there, of course, the issue is for the IPO is going to open. The anchor book details were flashing. I don't know if you can pull that up for a quick bit. So against IPO anchor allocation of close to 3,000 crores, under 3,000 crores, the demand is for 50,000 crores. So the IPO madness, whatever you want to call it, in that sense continues. Although I must also add at the same time that when you look at anchor book allotment and interest, etc. Do we have the graphics? If we can pull it up for a quick bit. Okay, I think what we'll do is we'll have the flashes. We'll discuss this with Jitendra Sriram, who's with us, Senior Fund Manager, Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thanks very much for joining us. So we'll talk about Grow when we have some of those numbers come up on the screen. But just the market, Jitendra, how are you feeling about things?
So overall, I think it is looking far more positive at this point ever since this festive season has begun. Because if we look at even the earnings picture that has unfolded so far, and I think almost about more than 50% of the Nifty names have reported, I think after many quarters, we are actually starting to see the recovery of earnings growth come in. So if I look at the large cap universe, which is ideally the Nifty 100, I think the companies that are reported, we are seeing something like about a 13% kind of earnings growth that is coming. So it's double digits after probably 3 or 4 quarters now. And Midcap is almost about the 25% mark. So I think we are at least seeing some recovery in earnings that are starting to come in, which is very heartening.
I think that Grow bit, the anchor book names, etc., we will put up. But 3,000 crores is the issue size and 50,000 crores is the demand. But institutional investors don't have to put in any money. I mean, it's not as if they have to put in 50,000 crores. I mean, it's basically, to transfer the money in the escrow. You can just expression of interest in that sense. And in that sense, I mean, a fund with the AUM of 500 crores, I mean, if it wants, it can express an interest of 2,000 crores. So it's got nothing to do with the size of the AUM or any fund managers. So in that sense, when you look at some of these numbers, don't get carried away. Of course, there is great demand and it shows interest, but you're not actually putting the money into an escrow waiting for allotment to take place. So just wanted to make that point. Some of the names, of course, who've participated or rather have put in bids are up on your screens as well, all source-based information. Jitendra, one more capital market name. Any thoughts out here on this space, and maybe if you have a view on Grow as well?
Not specifically on Grow, but I would say, the fact that market is getting very comfortable with these platforms kind of businesses, because they give you a lot of non-linearity, and you have seen multiple names, the quick commerce names, or whether it be online insurers, online brokers. I think the fact is that you're seeing very, if the model becomes successful, and I think the risk is there. The risk is that maybe not everything survives. Some of these will turn up as survivors, but if you are with the survivors, you probably make disproportionate returns in those platform kind of names. And it's true for payment systems and various other examples that you have there. I think that is what is probably exciting a lot of people towards this space, which is there. I mean, if you were to just step out from that, broking is a fairly old business, but I think the point is that the non-linearity that comes with the platforms.
Hi, Jitendra, good to have you in. Speaking about platforms, a lot of these new age businesses that are in the market or are listing, I mean, there's a fair amount of debate going on valuations, as always, right? By the way, just a while back, I think Zepto put out some sort of a release saying that they are no longer going to charge a platform fee. I'm not too sure about the details or the veracity of it right now, but if that's true, it could be very disruptive, right, for the other players as well. So when it comes to quick commerce and food delivery, I mean, what are your thoughts given the valuations?
No, I think all these businesses there will obviously, it's not going to be a linear journey upwards. In a sense, there is going to be some point of time where multiple newer entrants try to establish their foothold. There will be certain pricing pressures which come in, and again, there will be some consolidation and move back up. But these are typically structured. Sometimes these battles are not even at the marketplace. They might be in your mobile phone. For example, for any app, for example, a payment system, you may not keep more than 2 apps. Or for example, a cab hailing app, you may not keep more than 2 apps. So the point is sometimes the battle is in your mobile phone rather than in the marketplace. So if you are able to succeed and establish your share of mind share with the customers, you become the winner in that. So it's largely like a winner-take-all model. So to an extent, it might be that the first player has about a 55-60% market share, the second person with 30%, and all the others are clustered in that 10-15% market share. So it can very well turn out to be those kind of businesses.
That's nicely put, right? The battle is in the mobile phone, and that's really where the stakes are the highest. Battle in the mind, and then therefore the mobile phone. That's how I guess these internet businesses are built. Nigel?
Well, that's right. Hi, Jitendra. Good to see you, Win. I recall we had a chat a month or so ago, and you were telling us that you like some of these consumer-facing themes, discretionary themes as well. Some of them have done quite well, and clearly the street believes that discretionary spend is only going to go up from here on, and some of the discretionary consumption stocks are poised for better times. Any fresh take you have either on this sector or something new that you've started liking? The auto sales, for example, did come out, and they look pretty good.
Yeah, I think auto has been quite decent, and especially the fact that, GST has obviously been a catalyst for not only enhancing sentiment, but we are also seeing, whatever reports we get from the trade, we are seeing a lot more of showroom interest and so on and so forth. Model launches are also starting to perk up and all that. So I think auto is definitely one area that is starting to look up. I would also probably put that, consumer discretionary could also play out in a lot of other things like, whether it is hotels or jewelry and stuff like that. All these are also, we heard some very fabulous, numbers for Dhanteras and all moving around in the social media. So time will tell whether how much of it was correct or not. But I think those are at least early indicators that all these measures that the government took, right, from income tax cuts and then following up with the GST cut and so on, at least it's starting to rub off on the consumer sentiment as such.
Okay, all right. Jitendra, a final word before we let you go. You're sounding pretty optimistic on the prospects of market, and we discussed the last time around as well. Hopefully, earnings do come back. What's the biggest risk to the market? Because government action has come about. We have seen that the RBI as well, they have fired quite a few of their bullets. The global environment itself is holding out. According to you, what's the big risk to the Indian equity markets?
I think I would probably put inflation as the biggest risk because of what is happening with Trump tariffs, etc. I think there is definitely two things which are happening, which are probably a little bit of an upside risk on inflation. It may not be an India-specific factor. One is obviously the fact that you are seeing the tariffs lead to higher levels of inflation. The second is also that with Fed cutting rates, there is a weaker dollar environment which one is into, and which is leading to a surge in commodity prices also, and you can see it in all your metals index and various other indices that commodity prices are spurting, which can have with a lag effect some push up on the inflation front. So we'll have to keep an eye on that. I think that could be the big risk for markets.
Okay. All right, we'll leave it on that note for today. Thank you very much for joining in. Good to get that perspective from you on the market. Quick check back on the screen, and it seems to be pretty much the same situation, the same picture. Headline index, Nifty Sensex, not too much going on, fairly quiet, but lots and lots of action at the individual stock level, and that's reflecting in the way the midcap market is shaping up. Midcap index is still up 0.75%, though, and the advance decline ratio, of course, is also still positive. Let's get the advance declines up. More than 1,600 stocks advancing still, and about 1,200 stocks on the declining side. So broader markets are doing pretty okay. Well, on that note, let's move on and get to Nimesh for today's D Street Chatter. Nimesh, a new week. What are you picking up?
Hi, sir. Been a small recovery from an extremely oversold levels. I spoke about the PCR being at 0.65. Normally from those levels, you see a pullback, and that's a small pullback is playing out in today's market. Even from a flow perspective, I understand there's going to be a small buy figure. So watch out for the institutional data. But while the midcap index is outperforming today, the sense is that at least there seems to be sell flows from larger institutions. So, but the index is up, there could be a supply as well in the broader market. That's the overall flow perspective. PSU Bank continued to outperform. The index is up another 2%. And in general, the PSUs is a space where that's well built as well from larger institutions, which means there is buying interest from larger FIs as well as domestic funds into the PSU stocks in the last couple of days. On the upside, watch out for 60 to 200. That's a big resistance level to watch out for on the upside. But looks like there could be some small momentum back in the broader markets, and looks like some bit of FI buying is also back in the large cap stocks.
Okay, all right, Nimesh. What about individual stocks? You picking up anything?
Well, so the first stock on my list is Karnataka Bank. There was a large block in today's market. Nearly 1.5 crore shares got changed hands. I understand one of the large FPI holder was a seller in today's block. They're still left with a small stake, but in terms of buyers, I understand 60% of the book was bid by long-only funds. So the disclosures could be quite interesting in Karnataka Bank today. The second name is Eternal. If you look at the intraday charts, even that stock is recovered from the intraday lows. In fact, last whole week, the stock was under pressure on back of selling pressure. Looks like that large selling from a leading FI seems to be largely over, and hence you're seeing a bit of an uptake in Eternal today. And the last is Vishal Megamart. Well, the numbers are yet to be out, but I understand post-earnings, you're going to see a large block in Vishal Megawatt. So that's something to watch out for. In fact, in general, now that we are heading towards the fag end of the earnings season, the QIP launches, the blocks are going to start very soon in a lot of the mid-cap names.
All right. Thanks very much, Nimesh, for that. That's D Street Chatter with indication that the blocks are going to start raining down along with the primary market issuances, etc. as well. Lots of supply lined up. We'll take a quick commercial break here. We're going to get you some buy today, sell tomorrow, basically short-term trading ideas with our technical experts on the other side. Stay tuned.
Welcome back. The markets continue to chug along. More about individual stocks today, but let's find out what's happening in the F&O arena. This put call ratio that Nigel was pointing out that, every time it goes to that 0.6 level, it signals some sort of an uptrend. Nigel, what's the latest?
And it worked again, right? So it'd be, with regard to those F&O Qs. So it went to around 0.62 early in the trading session, and now it's back at around 0.8 or thereabouts. So the PCR was indicating that we could very well see a bit of a bounce. That's the way it's played out. The other factor that we pointed out earlier today as well was the Nifty Bank. That was making lower lows. It's broken the trend. After 3 sessions, it's broken the trend because today's low is higher than Friday's low. So you like that at least, and you'll count on the Nifty Bank to do the heavy lifting like it's done in today's trading session. Why did the PCR move up? That's because because the put writing is back in play. So whether you look at the 25,700 put, the 25,600 put as well, there's a good amount of writing out there, and the premium out there, has come down, which is telling you that the bulls believe that they can defend the lower levels. So the crucial support zone is at around this 25,500. The 20 DMA is there, and also you have the options data that's suggesting that that band could hold out. But you'll get a fresh breakout first when we get past the 26,000 odd mark, and then obviously the 26,300. That's the line in the sand. That's the level that the bears believe they are going to defend. So that's basically the levels that you're looking at. Stocks that we're looking at in today's trading session. Godrej Consumer, there were some shorts in the system. The numbers look quite good. They've done that inorganic growth as well of around 450 crores. Street likes it. Short covering bounce playing out on that particular name. Bank of Baroda as well. Some of these PSU banks, they're moving with good amount of momentum, and that's the case even on this one. So big short covering bounce is what we're seeing on this one. And finally, on Patanjali Foods, well, the numbers were not as good as what the street was anticipating. In fact, we are seeing some shorts gradually creeping into the system. Higher than normal, volumes is what we are seeing even in the F&O market on Patanjali Foods. So some shorts in the system. So the good news today is we have bounced on the lows of the day. However, follow through is something that the bulls will track. For now, 25,500. That's the important mark to defend on the downside. Back to you guys.
All right, Nigel. So we'll watch these levels as we get into the last 16 minutes of trade. So Mitesh is with us with what he'd want you to do in terms of short-term trading ideas. Mitesh, what would you recommend?
BTST on Indus Tower and PI Industries. So I'll take PI Industries first. Keep a stock below levels of 36.65. Look for targets of 37.10.20. And Indus Tower, I think, along with Idea, what happens. But the chart setup is quite positive. So we'll take a BTST here with a stop at 379.9 for targets of 387.
Okay. All right, Mitesh, got it. Thank you very much for that. We will see you again with all the trading action tomorrow. For now, have a good rest of the day. Let's continue to put the spotlight on buzzing stocks. And one stock that's sparkling today is Thangamile Jewelry. This happened right after numbers, and it's hit upper circuit, and it has stayed on upper circuit. Mangalam's here with more details. Mangalam, what is it? Is it their inventory being, marked to market, or something else? Or 20% circuit on the stock?
Well, it's a mix of both, So overall, gold prices on the year have risen about 52%. They also sold a fair amount of silver this time around. Silver prices have been higher as well. And add to that, as compared to the other listed peers, they had a slightly lower share of gold, which was hedged. So that has increased, and that has overall added to their performance as well. So if you just look at their performance, 45% growth in their revenue, 1,705 crores. This compares with 1,178 crores. The same time last year, they reported an EBITDA loss, but that was on account of the inventory loss that the company had taken because of the customs duty cut that was announced in the previous year's budget. So on a favorable base, the EBITDA actually looks fairly strong, a 99 crore EBITDA gain versus a 10 crore loss, which implies a margin of just 5.8%. The net profit as a result of that, 58 crores versus a loss of 17.5 crores as well. Gold jewelry sales up 44%. What was a big positive for me was gold volumes actually increased by 2% as well. At a time when gold prices are up over 50%, one would imagine that revenue would largely be led by value and not so much volume, but there as well, there's no negative volume, and that's a positive. Non-gold sales have been growing by 52%, and in that, silver volumes have actually risen by 23%, that's a positive. And gold hedging over last year was 90%, now is 95%. So from the highs, gold prices have fallen, so that should also do well for them because they've hedged at slightly higher prices. In the first half, they've opened 9 stores, total at 66 right now. Same store sales growth on an expanded store base is still double digits, that's a positive. And 3 more stores likely in the next few months in the city of Chennai itself. So far, they've actually been an outside Chennai in Tamil Nadu sort of player. But in the last 1 year or so, they've entered the market of Chennai, and that has done fairly well for them. That's reflected in their numbers, and the stock has the moves to show.
Mangalam, as you run us through the Titan expectations as well, which will report today, I mean, the question, one common thread, maybe if you can string along, there was some expectation that as, precious metal prices have gone through the roof, it'll basically impact volumes and demand, right? And some of the companies we've spoken to said sales value is strong, but volumes are... So I remember Malabar, or maybe it was the other one, volume was down 20, value was up 20. It was that stark. Do we have that volume figure as well?
Yeah, so we have, for Thangamile, the volumes have grown by 2%, even as value has grown by 44%. So it's not a negative. There is this divergence between volume and value as it would have been expected. But the good part is that there is no decline in volume as well. It's a marginal positive, obviously not as much as 20% or 30% as the value has grown, but it's still in the positive terrain. And the good part is that from the highs, we've seen a decline in gold prices. So every time that happens, following a sharp rise in gold prices, the buyer, rush to lock in at lower prices is a lot higher. So my sense is that the third quarter volumes, despite the prices being a lot higher year on year, would be a lot more positive given the decline that we've seen from the highs.
Okay, all right, Mangalam. Thanks a lot for giving us that quick update. Let's get Mangalam, but we can't let you go at that, right? Tell us about Titan.
I'll tell you about Titan, Nigel.
Later this evening, you're going to be busy.
Yes, and tracking Titan numbers, Nigel. That's all that will keep me busy. I'll tell you what, we have a cheat sheet for Titan already, where the domestic jewelry business reported a 19% growth. Surging gold prices have driven substantial ticket price increases, but there was a marginal decline in buyer counts for Titan. The second quarter had a high base due to the customs duty cut, but that has been offset by early onset of festive season. So all in all, 14% revenue growth is what the street is expecting. EBITDA jumps 47% again on a favorable base, similar to that of what we saw in the case of Thangamayil. Margins from very low numbers of 8.6% jump all the way to 11%, and the net profit on the back of that from 700 crores goes all the way up to 1,051 crores, a 49% jump. We already know that studded jewelry grew in mid-teens, and the growth in gold was led by gold coins and gold bars as against just plain gold jewelry. So all these are margin accretive for the company. What it does and what it has to say in terms of performance in the festive season would be something that we'll be tracking very closely.
Okay, all right, Mangalam, thanks a lot for that, and trust you're going to be busy with Titan in the evening.
Yeah, not the store, but the numbers.
Yeah, Sonal said, please reach home on time. The baby's waiting for you as well. Mangalam, thanks a lot. Well, let's get in Sudeep Bandyopadhyay. Hi, Sudeep. Good afternoon. Good to see you in. What are you making of some of these jewelry companies? Titan's holding pretty strong at these valuations. Thangamayil, as Mangalam said, they've been opportunistic as well. Stock locked 20% up. What do you like?
Well, I definitely like Titan. I don't too much want to venture into these smaller jewelry companies, which are typically regional players, and they have a limited, coverage in a particular geography. So it's always better to go for some of these national players. So Titan has been our favorite for a very long time. And look at the performance, in spite of the gold prices shooting where it did shoot. I think their business update was very, very encouraging. Let's look at the numbers. But whatever update we have heard from the management was pretty encouraging. And of course, when they come up with the numbers, we would like to know how the festive season sales have been. And I'm sure they will give some idea about that. Also, some of the the businesses which are smaller businesses have started performing, and that's very, very encouraging for Titan Consolidated. But end of the day, it's a jewelry company, and that studded jewelry share increasing obviously is margin accretive, and I think things are going good for Titan. So in spite of being such a huge, such a large revenue company, 19% growth is quite commendable. I would also I've been looking at Kalyan, and I think they also have performed reasonably well. And if somebody has to buy a second player, I would say go and buy Kalyan. So the choice is obviously Titan, and if you want to go for the second one, go for Kalyan.
Titan and Kalyan are the two ideas from Sudeep. We'll take a quick commercial break here. We're going to come back. More questions Sudeep's way, and there's about 9 minutes to go for the market close.
Welcome back as we're in the final lap of today's trading session. Vodafone Idea and Indus, by the way, they're still holding on to the bulk of their gains, between 5 and 8% higher. And then, of course, there are other names. RateGain is having a good session today, 6% up on RateGain. There's also Godrej Consumer, which has reacted quite well to the numbers. Still in conversation with Sudeep Bandopadhyay. Sudeep, so within the FMCG basket, did you find any one number inspiring enough to take some exposure? Anything in the staples plate?
Well, I think Godrej I did like. The numbers were decent, and the acquisition which they have done, Moustache, I think that's also pretty interesting, because that's one segment where presence and growth is definitely warranted. Their international business also is by and large looking good. For quite many quarters, they haven't been performing, and market has been punishing them also. So valuation-wise, also, I would say they are, I won't say reasonably priced, but they're better priced than many other peers. So, Godrej Consumer is one company which can be looked at post this number. Of course, the Q3, Q4 will be keenly watched. Apart from this, I think I did like HUL also. There were a lot of challenges which HUL went through, but the strategy which they have now taken with the new management in place looks interesting. Of course, the proof of the pudding is in eating, and we'll like to see third and fourth quarter.
Okay, all right. Sudeep, there's some news coming in with regard to multiplexes. And my colleague Ashmit says that there's an interim win for multiplexes against the price cap in Karnataka. So that will be some kind of interim relief, at least for PVR. They are saying that, the Supreme Court has stayed Karnataka government's rules that sought to introduce a price cap. So for the time being, that price cap will be pushed back a little bit, and they'll have to come with some other resolution. So PVR could be the stock that you'll be focusing on because of the interim relief that we're seeing. I think the stock has just perked up a little bit from there. What's your view? There was this fear of price cap, occupancy as well as down. But what do you think? People still go to the movies?
Well, absolutely. People still go to the movies, and you go on a weekend. Though the fact remains that there may not be any great movies, I think you find the multiplexes kind of full. The F&B is doing great business. And of course, as we all know, that's very, very margin accretive. So overall, I think they are at a good place. A lot of releases are lined up in Q3 and Q4. So an interesting space to watch. Valuation is not cheap, but definitely worth getting into PVR INOX.
Okay. All right. Sudeep, thank you very much for all the advice today. We just have about a minute to go before the bell goes off. So let's quickly recap what has been actually a pretty steady day. Steady with the positive bias because a lot of individual stocks, wherever earnings were hitting the mark, those stocks were rewarded in a big, big fashion. For the large cap screen, about a 45-point gain. Let's talk about the winners then. And Shriram Finance definitely takes the top honor. 6% up on Shriram Finance, taking its monthly win to 30%. That's the kind of run the stock has had. The other name that perked up after earnings was Tata Consumer, 2.5% up over here. A bunch of auto stocks had a good session today. Tata Motors and Mahindra, both of them going home with gains of about 2% apiece. Then you had a couple of financials like HDFC Life, SBI Life, HDFC Bank, Kotak Mahindra Bank. So fair amount, even State Bank of India, by the way. So fair amount of green across the financial landscape. What didn't work? Maruti Suzuki. It seems that the management saying that steady state, 7 to 10% sort of growth across the portfolio, that triggered some profit taking on the stock. So down about 3.5%. ITC, L&T, TCS, these were the other three big stocks, which were down about 1.5%. But a much better flare in the broader market, Nigel.
Well, that's right. Vodafone Idea, the relief came in, stock up 10%. Sterling Wilson, another stock that's seen a big fall from the top, that was up close to around 8%. BLS E-Services, that's the other stock that was up close to around 14%. And EPAC Prefab, that stock was up close to around 10%. So big moves on some of these names. Vedanta, we told you that, in fact, those numbers look pretty okay. The management commentary was superb. Brokerages are quite optimistic with regard to the prospects. I think the joker in the pack is going to be that demerger as well as JL. For the time being, the stock went up close to around 4% in trade. Refining margins have been improving. BPCL's numbers are quite good. That stock, in fact, went up a good deal in today's trading session. Urban Company, not on the winners list today, so that did see some selling. And IDBI Bank, after seeing a good run in the last few trading sessions, that as well came in for some profit taking. But net, you'll have to say that today was a pretty good trading session, and in fact, the bulls will be quite satisfied to see a bit of a recovery from the lows. Not out of the woods, but at least a bit of a pop.
Absolutely, and I think, decent day to start the week. 50-odd points, 25,775. It's a wrap of this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for staying with us. Markets Forward comes up in just a bit.
Dalal Street manages to end in the green despite large cap underperformance. Nifty and Sensex end mildly in the green. Nifty Bank and Midcap index outperform, gains over 0.5%.
Supreme Court clarifies on last week's Vodafone Idea order, says that the government is free to consider relief on the overall AGR dues. The Apex Court last week had permitted the government to consider relief on additional AGR dues.
The festive October spelled good tidings for car and two-wheeler makers with strong sales, though mostly in line with expectations. Big outperformance was seen in commercial vehicles and tractors.
Japan's Mitsubishi Financial Group is in advanced talks to buy 20% stake in Shriram Finance. That's a report from Money Control. The deal could be worth around $4 billion. Shriram Finance management says multiple discussions are underway and no proposal is before the board as yet. You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormas Fatakia. With me is Vinny Motiwala. Vinny, it was a quiet start to this truncated week. Of course, there are a lot of earnings reactions that have been coming in, but a fairly range-bound day for the index for sure.
Absolutely, a range-bound day, but no complaining there. Nothing as a screen of red that we should be worried about. 25,700 is what the Nifty managed to hold on to. Sensex also managing to hold on to gains. Nifty Bank, that's where we saw good performance coming in, right? 0.6% of gains there. PSU banks were the ones which were outperforming in the banking side as well. Other than that, the mid and small caps, so the broader end of the market, that did well. So that, look at it. When you look at the Nifty mid cap, that managed to hold on to gains of 0.6%, and small cap also managed to hold on to gains of almost 0.7%. Advance decline ratio was a bit more skewed towards the advances versus the declines. We had around 1,500 stocks on the advance side versus declines of around 1,000 stocks. This was on the NSE. So advance decline ratio a bit more in the favor of advances versus decline. No complaining today, a good day coming in. But let's start with the first segment for the day as well. We've Gaurav joining in with us, who's joining us from the big wall to take us through the top movers and shakers. Gaurav, over to you.
Well, yes, when we look at top movers and shakers, first name which comes in the mind today is Vodafone Idea, because we saw a big jump, and this is after the Supreme Court who suggested that government is free to consider any relief in the AGR dues. After that, we saw a sharp uptick in this counter. Apart from that, we also saw Thangamile Jewelry actually reporting its number. They reported 58 crores of PAT, and at the same time, they also said that the jewelry segment, they saw growth of around 77%. After that, we saw stock hitting 20% upper circuit. We also saw Dredging Corp. Here also we saw the stock actually hit its 20% upper circuit today, and the reason being that they said that the company is going to invest around 4,000 crores dedicated to modernization of the company, and at the same time they also signed multiple MOUs worth 17,645 crores. Other than that, a few stocks who actually deserve some shout out. First is Shriram Finance. The stock hit its 52-week high, and this is after the strong second quarter result that they reported, and at the same time the commentary also remains strong. When we look at Bank of Baroda, this stock also reported a good set of numbers, and after that today it hit its 52-week high. Let's also not forget about AB Capital. This stock actually reported its number last week, but after that today we saw some gains in this counter as well. Other than that, we also have some volume-led gainers in the likes of Vocard, SW Solar and Home First Finance. Remember, Home First Finance is likely to report its numbers tomorrow, so let's watch out for that. On the losing side, we saw Zensar Tech, and this is because of the results. We saw after stable set of results and miss in revenue, we saw some kind of hit in the stock price. NetWeb also reported stable numbers, but after that we saw the market did not take it very well. And on the flip side, we also saw Reliance Power, Reliance Infra and the stock like Aptus Value, who lost its value almost more than 5%. So definitely it was an interesting day today, but as Hormaz said, it was more in the favor of gainers in a day today.
Indeed. Gaurav, thank you for that update. To take the conversation forward, joining us now is Sudeep Bandyopadhyay and Jay Thakkar. Gentlemen, thank you for joining in. Jay, it was a very range-bound session today, but what are the important levels that you are watching out for on the index now?
Good afternoon to you, Homa. As well, Nifty, after having, bounced back till 26,100 from, previous, range of 24,500 to 25,500, we had a unidirectional move once it took off 25,000 levels, Homas, and, step by step, it gained the momentum when it took off 25,500 as well. But then after having, reached 26,000, 26,100 levels, we saw some profit booking coming in. So, the short covering move, which we have seen, Hormas, until the, October series, that went well. And as soon as the November series has started, we have seen the FI again creating short build-up in the index futures, as well as we have seen an aggressive selling in the equity cash segment as well by the FIs, and because of which now the index has taken some breather or a pause. So now the range for Nifty, Hormas, for me is 25,600 to 26,100. I don't see in tomorrow's expiry Nifty closing above the levels of 26,000. But on the flip side, I would say that 25,600 on the downside is a very critical support area as well. So this is a 400 to 500 points range within which Nifty is likely to consolidate for some time, as well as Nifty Bank as well as FinNifty. These are the three main indices which are likely to consolidate for some time. And once this consolidation is over, I'm expecting a breakout on the upside, which will definitely help Nifty to move towards this lifetime highs or maybe even beyond those levels. One thing to notice, Hormas, is that despite this consolidation, which is happening in the large cap stocks mainly, or the Nifty Bank Nifty, the mid cap stocks or maybe mid cap Nifty is inching higher day on day, and that's been outperforming the Nifty because that was earlier underperforming it. but now is outperforming. And I think that the overall broader market strength is quite there. So once this consolidation is over, I'm expecting market to provide a breakout on the upside because of the broader market, which are looking positive. So Nifty, short-term trend is sideways, but the positional trend is still positive.
Okay, thanks for those levels that we'll be keeping an eye out on in terms of the markets. But let's go across to Sudarshan now, who is here to tell us, what the auto sales numbers in October looked like, because that festive cheer seemed like it's came into this October sales numbers as well. But what is the breakup there? What did well? What outperformed? Sudarshan is here for more details.
So it was the first full month of the recent impact of the recent GST rate cut and the festive season. And most of the companies have reported numbers, and those numbers were largely in line or slightly better than expectations. The biggest positive surprise was the performance of commercial vehicle segment. And both the companies, Tata Motors and Ashok Leyland, have reported sales much better than expectations. Tata Motors, both the segments, passenger vehicle as well as commercial vehicle segments, have done good. And for passenger vehicle, the growth was led by SUV segment, and growth was 27%. Commercial vehicle segment, after several months, has seen a healthy growth of 10%. For Ashok Leyland, it was an all-round beat. And the positive surprise was the bus segment, which has been underperforming for the last several months. This month, it has seen a healthy growth of 34%. For Mahindra and Mahindra, both the segments, auto as well as tractor segments, have reported sales largely in line. For auto segment, the growth was led by SUV, which has seen a growth of 27%. Tractor segment has seen a growth of 13% versus our expectation of almost flat YOY. For Maruti, sales were largely in line, and it was led by compact and SUV segment. Entry-level segment, two cars, Alto and Espresso, sales continue to see a decline. One company that has underperformed the peers is Hyundai, because domestic sales have seen a decline, while exports have seen a muted growth of 11%. In two-wheeler space, all the three companies, TVS Motor, Bajaj Auto and Eicher Motors Royal Enfield, have reported sales largely in line. And the positive surprise came from Eicher Motors Royal Enfield, which has said in the festive season, it has done a growth of 26%, which is much higher than the monthly average. So overall, it was a good month for the auto companies.
A good one indeed, Sudarshan. Thank you for that update. The other big result that came out during the market hours was Tata Consumers, and Mangalam is here to tell us more on the fine print. Mangalam.
Well, it was a good performance coming in from Tata Consumer. It was a top-down beat. The revenues neared 5,000 crores as against street expectations of 4,800 crores. More importantly, the EBITDA followed as well, 672 crores. The street was working with a number of 630 crores. And the net profit that they reported in the second quarter was closer to 400 crores as against street expectations of a little over 360 crores as well. The India business, that's the one that led growth, 14%. In fact, 19% growth as against expected 12 to 14%. Beverages grew 15% as against expectations of 6 to 8%. And Capital Foods and Organic India continued their run rate of 356 crore as against street expectations of 330 to 350 crores. And growth businesses, which include the likes of Sampann, Soulful, as well as the Capital Foods and Organic India, along with Narishko Beverages business, grew 27%. The company has been maintaining guidance of 30% growth. Now this accounts for nearly 32% of their sales. International constant currency revenue growth at 9%, higher than street range of 6 to 8%. And the India beverages business grew 12%, which was led by 5% volume growth. Coffee continued its 56% jump, and we saw salt also grow about 16%, led by value-added salts, which grew by 23%. All in all, good performance coming in. The management commentary of lower tea prices should, bode well for margins going ahead.
Okay, Mangalam, thanks so much for that. So, Deep, coming to you, Tata Consumers, Godrej Consumers, both of them have reported their numbers. How are you looking at Tata Consumers in terms of numbers? And in FMCG, what specifically are you looking at right now?
Well, Vinny, I did like Godrej Consumer numbers. I think after many quarters, their numbers have been pretty encouraging. Also, the acquisition of Moustache, which they announced along with the numbers, is a very interesting acquisition, because that's one space where there is significant growth coming, and this acquisition should help them navigate that area. Also, the international business have shown initial signs of giving positive results to the consolidated numbers, and I think on a peer comparison basis, the valuation also looks interesting. So Godrej Consumer, definitely I would keep watching with interest. As far as Tata Consumer is concerned, I think a pretty good set of numbers. Of course, we'll have to watch how things move on from here as far as the new businesses and the international businesses. Interesting set of numbers, that much I would say, but I'll keep a watch for this.
Indeed, that was Tata Consumer and Godrej Consumer. The other sector that was in the spotlight today was the cement space. JK Cement declining on a not so good quarter, but Ambuja did well. Nigel is here with more on this. Nigel.
Well, that's right. Let's start off with Ambuja Cements. Actually, the numbers look quite good. On the consolidated basis, the revenue growth was close to around 22%, while the EBITDA number jumped up by close to around 50%. Even the profitability looked good, but keep in mind there was a tax credit that came in there, and that's why those numbers look quite good. If you look at the volumes, good growth is what you've seen. Remember, they have bought a couple of entities, so that's why inorganic growth played out, and that explains the big surge in terms of volumes. On the EBITDA per ton front, they're back over the 1,000 rupees as per what the company had reported, which compares with around 800 rupees or thereabouts. So good improvement in profitability. The management has clarified that the group synergies are playing out, and that's clearly visible in the numbers. They go on to state that in the second half of the year, they're expecting the cost of production actually to fall by close to around 200 rupees odd because of these efficiencies that they're working on, the reduced lead distance as well, and higher proportion of renewable power as well. Besides a good operational performance, they also say that currently the cost of production is roughly around 4,000 rupees per ton, which they see headed to around 3,650 rupees per ton. In addition to this, they've gone ahead and upped their capacity guidance from around 140 million tons. Now they're talking about 155 million tons, and this will be done at a sharp discount to what the current cost of setting up a cement plant is, around $48 per ton or thereabouts is the number that they're talking about. Moving to JK Cement, well, the stock had run up considerably. It saw a bit of a correction, but the numbers were a little bit soft. So the EBITDA number missed what Jefferies was working with by close to around 5%. How did that happen? Well, volume growth was actually good because they are growing at a faster clip in comparison to the industry. The volume growth was close to around 13% on a consolidated basis. Though if you look at the core grey cement sales, well, that was up by close to around 16% or thereabouts. So volumes are good, but some costs were relatively higher, which caused the EBITDA miss. The EBITDA did miss Jefferies' estimates by close to 5%, which explains why the stock did see a bit of a correction. The net debt level as well did move up. If you look at it, the standalone net debt number came in excess of around 3,000 crore rupees. So a tale of two. Ambuja's numbers quite good, while JK Cement did see some selling, or as their numbers were a little bit softer.
Nigel, thank you for that update. Sudeep, what about the cement stocks? You stick with the leader, the largest player in the country, or do you bet on the smaller options who are still acquisition targets, and or bet on the second largest player on the hopes that they would do more acquisitions and catch up with the leader?
No, almost. I will stick with the leader. In fact, I've been recommending, even on your channel, frequently UltraTech Cement. I think, it's a fantastic long-term buy, even at current levels. The performance has been outstanding, and it's been outstanding for many quarters now. The cost efficiencies, the way they have extracted, amazing. The acquisition, of course, they are doing, and consolidation they are doing. The demand is good. The sales volume have been improving. The greenfield, capacity addition, which they have announced at a very low per ton cost, I think also is very, very encouraging. So overall, I think I will rather stick with the leader than go with some of the uncertain acquisition targets and things like that. So it's better to play safe under the current circumstances.
Right. And of course, that was the cement space. The other major news of the afternoon was Vodafone Idea. And after the Supreme Court clarified that the government is free to consider relief on both additional and reassessment of all AGR dues. And the cash-strapped Vodafone Idea currently owes almost 83,500 crore worth of AGR dues. Ashmit is joining in with more on this. Ashmit, what does this mean for Vodafone Idea now?
Well, there's a big relief coming in for the troubled telecom player. Bear in mind that the last Supreme Court order had caused confusion to the extent that it appeared from that last order that the only relief that the government could grant was with respect to only the additional AGR dues, which would be about 9,500 crore rupees, and not the overall, the large mammoth figure of total AGR. That was one correction with which Vodafone Idea knocked on the doors of the Apex Court once again. Flanking Vodafone Idea counsels were also the Solicitor General appearing on behalf of the DoT. They both gave a similar view that there was indeed a correction that was required, that the Apex Court had caused confusion, and that is what needed to be rectified. The Supreme Court responding to that by saying that yes, indeed there was an issue, and towards that end clarifying that the government can go ahead and grant relief on both these counts. Additional AGR dues of 9,500 crore rupees, as well as the original total AGR figure of over 83,000 crore rupees, which includes penalty, which includes interest. So that is the flexibility that now the apex court has given the government. And this is critical, given as how when we had asked the government after the last order, they had said that we're not clear, we need a legal opinion. So finally, a legal opinion being given by no less than the apex court that yes, the hands of the DOT are untied. They can grant relief on both the counts, especially the overall large total AGR figure.
Absolutely, Ashmit. Thank you so much for that. An important relief and update coming in there for Vodafone Idea. Jay, what's your view for Vodafone Idea now? You know, with this relief coming in as well, where can we see it headed?
Sure, Vinny, there isn't much of, I would say, leverage position as far as the futures is concerned. And recently we had seen the stock when earlier the apex court had actually directed the government to take their own decision. That point of time as well, we saw the stock inching above the levels of 10. We saw some, correction thereafter. However, it managed to hold on to its recent lows and it's back to 10 levels. So derivatives data isn't much, leverage, and hence, it increases the chance for the stock to inch towards the levels of 13. Once it moves above the levels of 11, 12, Vinny, I think the follow-on public offer when it had come at around those levels, once it inches above those levels, sustains, then I think it will further inch higher only because things are positive or turning positive for the stock. In fact, even for the sector, as far as that is matter, this could benefit Indus Tower as well quite a lot because we have seen Indus Tower recently seeing good long build-up. In fact, the stock has managed to bounce back from 320 levels to almost 380 levels. And with this kind of a long build-up winning out here on Indus Towers, with this kind of a positive news with respect to Vodafone, I think this stock can also inch towards the levels of 440, 450. So both of these stocks have a good short to medium term uptrend likely. And Idea probably about the levels of 11, 12. I think many of those who might have stuck would get some relief above the level of 11, 12 levels, might inch towards 13, 14 going forward, at least in this quarter. And Indus Towers can inch towards 440, 450 as well.
That's music to their ears, indeed. Jay, thank you for sparing time and joining us. Sudeep, thank you for joining in as well. And take a short break here on Markets Forward. We get you all the top corporate voices on the other side, along with the key events that you need to watch out for going into tomorrow's trade. Stay tuned.
Welcome back to Markets Forward on CNBC-TV18. Now let's go across to the key corporate voices that we had during the day. First up is Shriram Finance. The management says all auto segments except our equipments have shown growth. They had said that they added that credit growth is expected to continue with October being a peak period for business. Furthermore, the management revealed that the NBFC is not seeing any stress in commercial vehicle segment, and commenting on Money Control report stating that Japan's Mitsubishi Financial Group is in advanced talks to buy 20% stake in Shriram Finance. The management said multiple discussions are underway and no proposal is before the board as yet.
Next up is Godrej Consumer. The management stated that they are seeing off-trade upstocking returning after GST disruptions. The company expects high single-digit volume growth in India, while the margins are expected to return to the normative range in the second half of the year. However, it expects the revenue and margin growth in Indonesia to take a few more months. GCPL is set to buy Mujtaq from Trilogy Solutions for 500 crore rupees. The management said that this acquisition will be margin accretive for the company.
And meanwhile, Vedanta's Group CFO Ajay Goel says that its aluminium EBITDA is now at 5,500 crore rupees a quarter, and the focus on a cost of production has aided in cost per ton producing by 27%. He added that Vedanta Resources' debt will trend lower towards $3 billion, while Vedanta Limited's net debt to EBITDA has also come down to 1.4 times. He adds that the demerger is expected to be done by FY26.
And before we wrap, we bring you some important events to watch out for going into tomorrow's session. Gaurav is here with the key details. Gaurav.
Well, yes, when we look at tomorrow, we have many earnings and important earnings. First, if we look at Nifty and the big companies, we have got SBI, Mahindra & Mahindra and Indigo. All these companies will come up with the earnings, so we'll watch out on that. But apart from that, we have got players like Allied Blenders, Adani Enterprises, Adani Ports, Home First Finance. Then we also have Payment Gateway District Park, Indian Hotels, Bluestone. All these players will come up with the earnings along with others. So definitely, it is going to be a day full of earnings, specifically if we look at financials as well as the consumer segment. But other than that, action from IPO segment is also likely to come. First is that Grow. It is likely to come up with the IPO. The IPO will open tomorrow for subscription. And on the other hand, Lenskart's IPO. Now tomorrow will be the last day for subscription for retail users. Remember, the IPO size is around 7,270 crores. So let's watch out on that. We have already seen IPO actually getting subscribed completely. Other than that, when we look at some of the action, stock specific, Hyundai Venue will be launched tomorrow. So we have already seen some movement on the back of the volume numbers. So definitely on the back of this news update also, we will be watching out on Hyundai Motors tomorrow. Lastly, from the global market, we do not see any major events. But first is that now US government shutdown. Now this will mark as a historic day because tomorrow will be the record day for the longest shutdown that we have seen for US government. So let's get ready to record a history. And also OpenAI. Now, that will make ChatGPT go free for Indian users from tomorrow. So that is also something which is not going to be a significant, impactful thing, but let's watch out on that as well.
Absolutely, Gaurav. Thank you so much for their key earnings to watch out for and other events as well. But with that, we're absolutely out of time on this edition of Markets Forward. Thank you so much for tuning in. Don't go anywhere. We'll be back with more news and updates on the other side.
Welcome to Business 360. I'm Shireen Bhan, and of course, the victory of the Indian women's cricket team is the big story, but here's what else we're tracking for you this evening. The Sensex and the Nifty end with marginal gains, but the Midcap index hits a 52-week high. The rupee hits a record low against the US dollar. Dealers say the rupee is not slipping further only because of the RBI's intervention. The Supreme Court clarifies on last week's Vodafone Idea order, says the government is free to consider relief on the overall AGR dues. The Apex Court last week had permitted the government to consider relief only on the additional AGR dues. The cash-strapped Vodafone Idea currently owes total AGR dues worth 83,500 crores. The stock sees its biggest single-day gain in the last 18 months. Days after disaster from the board of Tata Trust, Maheli Mistry sets the stage for a battle, files a caveat with the Maharashtra Charity Commissioner seeking a hearing before any change in trustees at the Tata Trust. Car sales hit a record high in October after the GST rate cut. Sales of Maruti, M&M and Tata Motors surge, even as Hyundai underperforms. Two-wheeler sales and tractor sales also meet estimates. Aditya Birla Group Chairman Kumar Mangalam Birla wants his group companies to be in the top 2 across industries. His business interests span metal, cement, paint and retail. That's an exclusive. Consolidation has helped PSU banks, and there will be more, says SBI Chairman C.S. Setty. Believes scale is important for banks to leverage technology. That's another exclusive. Japan's Mitsubishi Financial Group is in advanced talks to buy 20% stake in Shriram Finance. Money Control reports a deal could be worth around $4 billion. Shriram Finance management tells CNBC-TV18 multiple discussions underway. No proposal is before the board yet. At least 19 people dead after a bus accident in Telangana. The bus rammed into a truck carrying gravel. This comes just a week after 20 people died in another bus accident in Andhra Pradesh. Political parties pull out all stops days ahead the first phase of the Bihar elections. Prime Minister Modi, Home Minister Amit Shah and top BJP leaders hold rallies. 121 assembly constituencies across 18 districts head to the polls this Thursday.
The Indian women's cricket team with their very first ICC Women's Cricket World Cup trophy.
The Indian women's cricket team are the champions of the world after losing 2 finals. Harmanpreet Kaur's team beat South Africa and emerged third time lucky. Well, the celebrations continue around the country, but first up, the market action of the day. The Large Street managing to end higher, but the large caps underperformed today. The Nifty and the Sensex ending the day flat, just about in positive territory, 40 points higher on the Nifty. The Sensex up 40, 461 high on the Nifty Midcap. And the Nifty Bank up by about 0.5% or so. So the strength there continues, hitting a 52-week high. The Nifty Bank outperforming the blue chips. But let's talk a little bit about the rupee, because it's fallen to its all-time low of 88.80 against the dollar. Now, this is higher crude oil prices as well as the outflow of foreign capital weighed on the Indian currency. But a late intervention by the RBI managed to stem the fall. Lata's here with the money market wrap for us. Lata, what's weighing on the rupee?
Well, it's not a big fall from the Friday levels of about 88.78, but the rupee throughout the day was flirting with the all-time low of 88.79 and even crossed over to 88.80 per dollar. What makes it significant is that in the past week, that is on October 27th, it had touched a high of 87.75, largely because of the Reserve Bank's huge dollar supplies. The reason for the fall today is, the usual. We have seen consistent FII selling equities and buying dollars and taking it back. Likewise, importers' month-end demand for dollars. Corporates as well wanting to buy dollars because it's not showing any signs of becoming cheaper. Exporters who had earlier sold the dollars are now buying back. So just about everyone is turning dollar bullish. The Reserve Bank, when it had taken the dollar all the way to 87.75 on October 27th, the market apparently was in the mood that maybe the Reserve Bank knows something about dollar flows or trade deals or something, which is why it was supplying dollars with such force. And therefore, a lot of people had gone out of their short dollar positions, had gone out of their long dollar positions, and had become even short dollar. So now there is a frenzy of buying dollars globally as well. The dollar has become stronger. The DXY has moved up from about 96 and change levels 2 weeks ago. It has come almost to 100 levels, 99.70, because the Fed has turned a little more hawkish. The December rate cut is now a bit doubtful. All this is leading to further pressure on the rupee, and it looks like the Reserve Bank is the only reason why it is not crossing 88.80. The market believes that if the Reserve Bank allows it to cross 88.80, perhaps 89 will come very soon.
All right, Lata, many thanks. And from the currency markets now to commodities, oil prices gaining after fears of oversupply eased following OPEC Plus's decision to hold off production hikes in the first quarter of the next year. Oil producers group agreed to raise output by over 1.3 lakh barrels per day in December. This is the same as the hike for October and November. Ukraine's ongoing strikes on Russian energy infrastructure also pushed prices higher, so that's the latest on crude. Now, India's manufacturing growth picked up pace in October. The HSBC India Manufacturing Purchasing Managers Index rose to 59.2 in October from 57.7 in September. This was driven by strong domestic demand, export growth and GST relief during the month. However, international sales rose at the slowest pace in 10 months, and this signaled some moderation in external demand. India's goods and services tax collections for October grew 4.6% year-on-year to 1.96 lakh crores. This has kept the GST mop-up close to the 2 lakh crore rupee milestone for the third straight month. However, the net GST revenue grew marginally by less than 1% on the back of higher export incentives and credit settlements across manufacturing-heavy sectors. And staying with GST, automakers' sales accelerated in line with expectations for the month of October as festive demand and the GST rate cuts bore good tidings for the sector. Sales in the passenger vehicle industry reached a record high in terms of volumes. The big outperformance was seen in commercial vehicles and the tractor segment. Sudarshan is here with the Motown report card. Sud.
First full month where we have seen the impact of recent GST rate cut and the festive season, and these companies have reported sales, and those sales were largely in line or slightly better than expectations. Biggest positive surprise was the performance of commercial vehicle, and both the companies Tata Motors and Ashok Leyland have reported sales much better than expectations. Tata Motors, both the segments have seen a big outperformance. Passenger vehicle segment has seen a growth of almost 27%, while after several months commercial vehicle segment has reported growth of almost 10%. For Ashok Leyland, one segment that was underperforming is the bus segment, and this month that segment has seen a growth of almost 34%, and for Ashok Leyland it was an all-round beat. Mahindra and Mahindra, both the segment have reported sales. Those were largely in line. For auto segment, it was led by SUV, which has seen a growth of almost 27%, and tractor too has seen a growth of almost 13%. For Maruti, domestic sales were led by compact and SUV segment, whereas entry-level segment, where two cars are there, Alto and Espresso, both sales of both these cars have come down year-on-year. One company that has underperformed the peers was Hyundai, and that's mainly because of domestic market, where it has seen a decline in the sales YOY. In two-wheeler space, all the three companies, TVS Motor, Bajaj Auto and Eicher Motors, which have reported sales so far, have reported numbers, and those numbers were largely in line. For Eicher Motors, the positive part was in the festive season, it has seen growth of almost 26%, much higher than the monthly average. So sales were better than expectations for the month of October, but the expectation would be what exactly these companies say about FY26 outlook, because the expectation is that these companies are likely to increase the FY26 outlook from the current outlook. Current outlook is for PV, low single-digit growth, and for two-wheelers, it's a high single-digit growth.
Well, Motown clearly in top gear. So many thanks for joining us. And speaking of being in top gear, shares of Vodafone Idea surged over 9% in trade today. This after the Supreme Court clarified that the government is free to consider relief on both the additional AGR dues as well as reassess all AGR dues. The cash-strapped Vodafone Idea currently owes total AGR dues worth over 83,500 crore rupees. Ashmit joins us now to take us through what transpired in court today. Ashmit, I mean, this is just unbelievable. Just last week, we got the order which seemed to suggest that the relief was going to be limited to the additional AGR dues, and today, the Supreme Court clarifying on its own order.
Well, there's a big relief coming in for the troubled telecom player. Bear in mind that the last Supreme Court order had caused confusion to the extent that it appeared from that last order that the only relief that the government could grant was with respect to only the additional AGR dues, which would be about 9,500 crore rupees, and not the overall, the large mammoth figure of total AGR. That was one correction with which Vodafone Idea knocked on the doors of the Apex Court once again. Flanking Vodafone Idea counsels were also the Solicitor General appearing on behalf of the DOT. They both gave a similar view that there was indeed a correction that was required, that the Apex Court had caused confusion, and that is what needed to be rectified. The Supreme Court responding to that by saying that yes, indeed there was an issue, and towards that end clarifying that the government can go ahead and grant relief on both these counts. Additional AGR dues of 9,500 crore rupees, as well as the original total AGR figure of over 83,000 crore rupees, which includes penalty, which includes interest. So that is the flexibility that now the Apex Court has given the government. And this is critical, given as how when we had asked the government after the last order, they had said that we're not clear, we need a legal opinion. So finally, a legal opinion being given by no less than the Apex Court that yes, the hands of the DOT are untied. They can grant relief on both the counts, especially the overall large total AGR figure.
Well, massive relief there for Vodafone Idea. Ashmit, many thanks for joining us. And speaking of relief coming in for multiplexes, the Supreme Court has granted a stay order on the Karnataka government's rules that sought to introduce a price cap of 200 rupees on movie tickets. The Apex Court granted protection to the multiplexes and has restricted the state government from implementing the price cap. So good news coming in there for movie theatres in the state. Lenskart's 7,300 crore rupee IPO offer witnessed robust demand on day 2 of bidding. Overall subscription now nearly 2 times the share on offer. This was led by the retail portion, which was subscribed over 3 times, followed by the portion reserved for QIB, which was subscribed 1.64 times as of 4 p.m. And more. Brokerage firm Grow has received bids worth 50,000 crore rupees from large domestic mutual funds and foreign funds for its anchor book before the IPO opens, which is tomorrow. Sources say the anchor book is estimated to be around 3,000 crores, has been oversubscribed more than 15 times. It's seen participation from 8 out of the 10 large mutual funds, including SBI Mutual Fund and major US investors like Sequoia Capital. Market regulator SEBI has approved Shiprocket's 2,400 crore rupee initial public offer. Sources tell CNBC-TV18 that the courier delivery firm's IPO will be equal parts a fresh issue and an offer for sale. Marquee investors Sensex, Zomato and InfoEdge will not sell their stake. The offer for sale will be made solely by early investors and the founders. The 3,000 crore rupee IPO of Pine Labs will open for subscription from the 7th of November to the 11th of November. The Gurugram-based Fintech company has set the price band in the range of 210 to 221 rupees a share. The IPO comprises a fresh issuance of 2,080 crore rupees, down from 2,600 crores in June. Existing investors peak 15 partners, PayPal and MasterCard will look to sell a total of 8.23 crore shares. Pine Labs is seeking a valuation of over 25,300 crore rupees. Speaking to CNBC-TV18, CEO Amrish Rao explained why the issue has been downsized.
I have more than 1,000 crores of cash on our balance sheet today. That's point number 1. Point number 2 is when we have reduced the OFS and the sale amount, fresh issuance, when we have reduced it, zero has been taken away from any growth-related activities. So growth-related activities, when it comes to international expansion, technology investment, we made no changes. Just as our financial position has improved, what we have actually done is we have reduced some of the debt repayment activities that we had identified. So when it comes to P&L and growth in our business, we made no changes out there.
Well, that's Amrish Rao. Now, days after he was ousted from the board of Tata Trust, sources say Merely Mistry has filed a caveat with the Maharashtra Charity Commissioner. Mistry has sought a hearing before any change in trustees at Tata Trust. The trust has to inform any change in trustees to the Charity Commissioner's office within 90 days. The Charity Commissioner will likely hear Mistry's case once Tata Trust informs about the change in the trustees. Now, Adani Group-led Ambuja Cements has posted a record profit in the second quarter. Net profit increased multifold to 1,766 crore crore rupees on an annual basis. According to an exchange filing, the surge in profit came on the back of one-time income tax provision. Reversal revenue also increased 22% during the quarter. So that's Ambuja Cement for you. Japanese major Mitsubishi UFG Financial Group is set to be in advanced talks to pick up a 20% stake in Shriram Finance. As per a money control report, a deal is likely to be announced soon. The report also says that MUFG will likely invest $3 to $4 billion in Shriram Finance through a fresh capital issue and secure 2 board seats. Umesh Revankar, Executive Vice Chairman of Shriram Finance, speaking to CNBC-TV18 this morning, said that while they are exploring talks with banks and institutions, there is no proposal that is before the board just yet.
We are in discussion with many of the banks and institutions all the time. And this time we have not even discussed this in the board. So there is no question of raising equity at any point of time. First of all, we need to discuss this in the board meeting. And since it has not come to the board, I cannot further comment on that.
Well, that's Shriram Finance for you. India's women's cricket team have been crowned the World Cup champions for the first time. A 52-run victory over South Africa in the finals, giving the team that historic victory in a tournament that has seen women in blue on the brink of an early exit. From 3 straight defeats in the group stage to a flawless run in the knockout stages, India's comeback was as dramatic as it was record-breaking. Navi Mumbai's D.Y. Patil Stadium, where the Women's Premier League began, roared as skipper Harmanpreet Kaur's catch secured the victory in the 45th over, kick-starting the celebrations. Veteran cricketers Anjum Chopra, Mithali Raj, Jhulan Goswami also joined in on the celebrations on the field after the team lifted the trophy.
Always we've come in close situations, crunch moments, and we've given it away. But this Indian team changed that. So I think I love that for that reason that we defeated them, and today we are world champions.
I really don't have words, sir, क्योंकि हम ये मोमेंट विजुअलाइज कर चुके हैं. हम लोग बात करते थे, अभी हो गया है, तो अभी इसको ऐसे सोक इन करने में बहुत टाइम लग रहा है. पर what to say, I don't have words.
As a team, हम लोग अगर कोई ट्रॉफी जीतनी है तो सबको एक साथ आके स्टाफ प्लेयर सबको एक साथ आके वो मैजिक क्रिएट करना होता है और वो वही किया हमने तो काफी अच्छा लगा.
Well, what a fabulous victory there for India. And of course, I think this is a seminal moment, not just for Indian cricket, but for women's cricket around the world. It's time for us to head into a break, but coming up next, political parties pull out all stops days ahead of the first phase of the Bihar elections. Prime Minister Modi and top BJP leaders hold rallies. More details when we return. At least 19 people have died and several have been injured after a passenger bus collided with a gravel-laden truck on the Hyderabad-Bijapur highway. The bus belonged to the Telangana State Road Transport Corporation and had 70 passengers on board. Several passengers injured in the accident were shifted to a government hospital. Rescue teams had to cut through the bus to retrieve the bodies. Prime Minister Modi has announced an ex gratia amount of 2 lakh rupees to the kin of the victims. Days ahead of the first phase of elections in Bihar, political parties have pulled out all the stops to woo voters. 121 assembly constituencies across 18 districts will head to the polls in phase 1 this Thursday. Prime Minister Modi, Home Minister Amit Shah and top BJP leaders held rallies in the state. Addressing a public rally in Saharsa, the Prime Minister urged first-time voters to vote for the NDA alliance. Meanwhile, Congress General Secretary Priyanka Gandhi Vadra also held a rally in Saharsa. She alleged that Bihar's youth is being forced to leave the state as unemployment remains rampant.
अभी नौजवान बेटे बेटी जो पहली बार वोट डाल रहे हैं उनको मेरा विशेष आग्रह है कि इस बार आपका वोट एनडीए की सरकार बनाने वाला वोट होना चाहिए।
सब लोग चाहते थे कि हमें सरकारी रोजगार चाहिए। क्यों? यहां बुजुर्ग बैठे बताएंगे, क्योंकि उससे सुरक्षा मिलती थी, पेंशन मिलता था, ऐसे लगता था कि अब नौकरी लग गई है, जीवन भर हम ठीक होंगे, हमें अब चिंता की जरूरत नहीं होगी। आज की परिस्थिति क्या है बहनों और भाइयों? आज जितने भी वो बड़े बड़े उद्योग थे, सब मोदी जी ने अपने बड़े बड़े दोस्तों को, उद्योगपतियों को दे दिए हैं।
Well, that's the elections in Bihar. Meanwhile, the Enforcement Directorate has attached 40 properties worth over 3,000 crore rupees linked to an alleged money laundering probe against Anil Ambani's Reliance Group. Sources say these properties include the Ambani family's Pali Hill residence in Mumbai and the Reliance Centre in Delhi. Timsy standing by with the details. Timsy, take us through the attachment that has been made by the ED.
Well, that's right. The Enforcement Directorate has provisionally attached more than 40 properties linked to entities of Reliance Anil Ambani Group valued at 3,084 crore rupees. According to sources, the attachments include Anil Ambani family's residence at Pali Hill, the Reliance Centre property in New Delhi and multiple assets spread across Delhi, Noida, Ghaziabad, Mumbai, Pune, Thane, Hyderabad, Chennai and East Godavari. As per sources, the orders of attachment were issued on October 31st under Section 5(1) of the PMLA Act, which allows the Enforcement Directorate to temporarily attach properties suspected to be linked to proceeds of an alleged crime. The Enforcement Directorate claims that the case involves diversion and laundering of public funds raised by Reliance Home Finance Limited or RHFL and Reliance Commercial Finance Limited or RCFL. The ED is probing the deals between Yes Bank and RHFL and RCFL between 2017 and 2019. Yes Bank invested 2,965 crores in RHFL instruments and 2,045 crores in RCFL instruments, which later turned into non-performing investments. According to sources, the Enforcement Directorate is also looking at investments by the erstwhile Reliance Nippon Mutual Fund into Reliance Anil Ambani Group financial companies, which were considered to be routing these funds indirectly through Yes Bank, allegedly in violation of SEBI's mutual fund conflict of interest guidelines. ED claims that the funds were ultimately traced to the Anil Ambani Reliance Group linked entities. The ED has further alleged that RHFL and RCFL extended loans to connected companies with serious control lapses and procedural violations. We also learned that the Enforcement Directorate has also intensified its probe into the Reliance Communications, that is Arcom loan case, alleging diversion of over 13,600 crore rupees through evergreening of loans, connected party transactions and misuse of bill discounting facilities. We'll keep you posted on the matter.
Timsy, many thanks. A quick check of the international headlines. Israeli forces continue to bombard Gaza despite the ceasefire. The death toll in the enclave has now risen to 236 since the ceasefire was agreed on. 2 Palestinians, including a teenager, have been killed in attacks in occupied West Bank. Meanwhile, Hamas has handed over the bodies of 3 more captives after a complex search operation in Gaza City. Ukraine has said that Russian attacks killed at least 4 across the country. Kyiv has also said that overnight Russian strikes hit key energy infrastructure, causing power outages that impacted 60,000 people. Meanwhile, Russia's defense ministry said its air defenses intercepted 164 Ukrainian drones overnight. A powerful 6.3 magnitude earthquake struck northern Afghanistan, killing at least 20 people and injuring more than 300. The Taliban-run health ministry has confirmed the casualties, adding that the tremors were felt strongly in the city of Mazar-e-Sharif. The Balkh and neighboring Samangan provinces reported the most damage. The death toll could rise further as rescue operations continue in remote villages. This quake follows a 6.0 magnitude tremor in eastern Afghanistan in August that killed more than 2,200 people. Well, with that, it is time for us to wrap up this edition of Business 360. Do stay tuned. The news will continue right here on CNBC-TV18. We're back in a minute with plenty more.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, those of you who follow equity markets here in India and around the world would know that the AI theme has been dominating investor psyche around the world, particularly in the United States. Stocks that are relating to AI or deep tech, analytics, they've been really going through the roof. We all know the story of NVIDIA becoming the most valuable company in the world. Now, the issue here is that in India, while we have a large number of traditional IT services companies, do we have enough options when it comes to cutting-edge technology? If yes, and what are these options? How should we look at them as investors? And how should we ensure that our portfolio is in sync with the time when technology is the name of the game? Well, that is exactly what we're going to discuss on the show today. Investing in the innovation theme here in India. Well, helping us demystify some of these aspects are Shreyas Devalkar, Head of Equity at Axis Mutual Fund, and Ashish Nayak, who is a fund manager and actually manages Axis Mutual Fund's Innovation Fund. Gentlemen, good morning. Great to have you with us. Thank you so much for joining in. And I want to start with that opening question, actually. Shreyas, with you first. This last 1 year has been a year of patience for the investor. He's quietly sat and looked at the screen with very range-bound returns in the Indian market while watching the NASDAQ gallop away, the US market gallop away. So what are the lessons from this 1 year, and what are some of the investor behavior trends that you picked up?
Sure. So yeah, it was 2025 actually it witnessed a mix of euphoria and consolidation in the equity market. So typical of market consolidation phase it is. You'll notice that in large cap, actually, it gets unnoticed. One part is the large cap, it gave you a 12% return YTD versus mid cap 4% and small cap was down 2% YTD. I'm talking about the frontline benchmark indices. A key dampener was actually the reciprocal tariff by US on India. And after that steep tariff, there was also increase in the tariff. Apart from that, though the investor sentiment actually got boosted because of the GST rationalization. And there was a festive season, the current festive season. It has been so far record-breaking for many industries, not all, while it has signaled a strong consumer demand. So this has been really good news. As far as corporate earnings cycle is concerned, I think that earning downgrade cycle has now bottomed out. So though the earnings are subdued relatively in this quarter so far, but the downgrade cycle, which started almost 1.5 years ago, I think that is broadly getting bottomed out. So India, because of this underperformance YTD, actually, and we have seen, and as you highlighted, the AI theme globally, India has actually underperformed by 20 to 25% compared to Asian market, as well as obviously the US market. And hence the relative valuation of India has emerged now relatively better. So in response to this market volatility, what investors have done, actually, investors, especially when you analyze the flows of the investors have diversified into multi-asset allocation funds like gold, as well as silver and multi-asset allocation fund. Industry has launched multiple products, factor-based products, quant model, narrow thematic products, fund-of-fund structures in both active and passive space. So the exposure to equity-oriented mutual fund might have got slightly trimmed, but it got into the other schemes, which I talked about, and overall exposure remains good. And that's where, despite the trimming of the exposure to the equity-oriented funds, the passive fund gained, this multi-asset allocation funds gained, and overall SIP of the system remains intact. And that indicates a sustained confidence as well as disciplined investing by investors.
Okay. Ashish, what about you? How has this year been for you as a fund manager? And what are the interesting trends, nuggets, investing patterns? What did you pick up? What's the highlight of 2025 for you?
Sure, thank you so much. So yes, I mean, from investing in this year, one has really seen how euphoria, as Shreyash mentioned, was there at the start of, let's say, earlier year, and over the years, things had actually subdued in the Indian markets, where investments were actually going lower from the public investment side, and the other side, expectations were much higher. From there on, with the global situation on the tariff side being worse off, also meant that there was some more pressure from that end. Over time, what we saw is that there was resilience in the consumer demand, especially which was visible post the GST rationalization and the festive demand, which has again kind of picked up sentiments across various sectors. Even when we look at some of the specific areas such as multi-asset fund, which incidentally I also manage Nexus, there was obviously a lot of interest. The returns in the gold and silver were quite surprisingly positive, and that really helped the fund. On the innovation side, if I have to look at also, there were many companies that have started to get listed in the Indian space, not just this year, but over the last 2-3 years. But how they have evolved and sort of matured is an interesting phenomenon that we have seen in this year, especially.
And we'll talk about this. We'll talk about some of these businesses which are looking interesting, which are adopting innovation in various ways, and how to analyze a lot of this. But, you know, Shreyas, I want to start with an even more fundamental question, right? As investors, there's a tendency to chase returns. Everybody has this major FOMO when you see a market running away and you realize, oh, I don't have those kind of stocks. So now, first of all, let's talk technology in a broad sense. Technology or cutting-edge innovation. One way of playing that would be straight away to buy the NASDAQ, right? I mean, you have ETFs here in India. You can just go invest in the US market, in those US stocks. Is that the approach? Should we be looking at Indian technology and innovation bets at all? Or is it too late now in the game? I mean, where are we in the cycle? Because globally, there's a debate playing out, whether there's already an AI bubble which is about to burst.
Sure. So always when it comes to such themes that the bubble, etc., that when it comes to valuation, definitely a lot of froth may be there in most of the spaces. However, this space is here to stay, that one should recognize. And its applications will evolve. First, now we are in the phase of actually developing the deep tech and the large language models. There is a investment which is going to happen in the infrastructure, including data center. So we are in that investment space. And I think a lot of material you already must have seen and read regarding how the amount is humongous. And compared to that, if you want to generate a return on capital employed, and especially when these investments are going to be depreciating, right? So unlike any other plant and machinery, it doesn't depreciate so fast. While here, whatever investments are there, they are going to depreciate a lot. And accordingly, if you want to generate a return, it will be a challenge. However, there are companies who are funding this out of their existing cash flows. Most importantly, what they are trying to do is they're using their current cash flows so that in future, their ability to generate revenue as well as ability to sustain improves, and that's where the entire focus of the market will be. So initially there may be euphoria in some of these spaces, but there may be more focused approach which will emerge once this valuation bubble dies down, in particular areas like chips as well as the developer of AI, and obviously the backward investment into the data center. So this entire revolution, in my opinion, will have a role to play in investors' portfolio. But having said that, as of now, yes, there is sort of high valuations as of today.
Okay, and that's why we have to be extra cautious. So with that caveat being placed on the table very, very carefully, let's now go step by step. Now, Ashish, the first issue with finding some of these ideas in India is that you don't have a direct one-on-one play. I mean, you don't have a company that's making these big GPUs, graphic processing units, or these big, supercomputing chips. So there's no direct play. But then there are indirect plays. There could be vendors that in some way are part of the NVIDIA ecosystem. So where do you start looking when you're talking cutting-edge technology, deep tech, AI, etc.?
So completely agree with you. Yes, I mean, India does not have a global deep tech or AI investment plays or the wave that we have seen in some of the other countries like US and China, where we have seen hundreds of billions being poured into these foundational AI models and various deep tech platforms. In India, what we have seen, or Indian companies have actually lagged on the R&D side. There has been, in terms of the tech, there is a services-led mindset and also some level of risk averseness in terms of the funding ecosystem. So for instance, if you look at, let's say, by 2023, India just got about $1.1 billion in AI funding in terms of the entrepreneurs. That is also to do with the fact that we do not have that many highly profitable internet companies, as Shreyash mentioned, who are able to pump in capital into these kind of innovations. But that does not mean that there is no promise. We also have a great digital infrastructure in India, the India Stack. We also have a vast talent pool as well as a growing ecosystem of startups. So at the end of the day, what it will come down is, with the help of the government's AI mission, which is about $1.2 billion being spent over the next 5 years, we should start seeing more and more industry partnerships happening, especially starting with the unlisted space where the foundation is being laid for probably a GPT movement or a DeepSeek movement for India. We are seeing sectors like, as you mentioned, data centers. There are companies in EdTech as well as Fintech who are adopting to AI quite strongly in terms of applications. What we should watch out for probably in terms of emerging plays are maybe AI infrastructure plays, localized models, as well as sector-specific applications. So it will be a play that will happen over a period of time, which will depend on policy support, maybe some level of private capital appetite for deep tech, and some level of cultural shift in terms of long-term innovation. So it's a mix of all. It's yet to happen.
No, absolutely. But it gives us a starting point. And like you outlined, some subsectors of innovation and, deep tech. So let's do one thing. Let's, talk about the valuation debate for each of these subsegments. Like you said, there could be data centers, there could be EV, there could be several other facets of it. Fintech, there is obviously the internet companies, there is, food tech, food delivery and quick commerce, so on and so forth. So, Shreyas, let me open with you and maybe Ashish chip in on this. As stock pickers, when you look at these individual buckets, which are either internet-related businesses or beyond internet businesses, where do you see excess euphoria, where you would be cautious, and where do you see some value, some visibility of growth, and at least reasonable valuation or not over-the-top valuation? So if you could go segment by segment. Shreyas?
Sure. So when it comes to a space like innovation and investment into this, it's very difficult to find out, so to say, growth at reasonable price. It's probably growth is there everywhere. As far as valuations are concerned, you have to make a judgment based on multiple factors. So just to give you an example, in some of these spaces, especially the application space, more so. So you take a consumer tech company, which is applying tech to develop a consumer tech model. Now, in most of these spaces, what is happening is these companies are initially not making money. What we tend to observe is these spaces where there is loss-making phenomena is there. During that phase, these companies are mostly in the unlisted space. While in the listed space, what is happening is the companies are using their cash flow or potential cash flow from the existing businesses and they are reinvesting into the new. So when it comes to the valuation, we have to be very careful on the path to profitability. So in most of these cases, what we look forward is the path to profitability, and that path to profitability depends on what? It depends on one, the intention of consumer to pay, because initially, as you're observing, that consumers are not paying for most of these things. So the intention of consumer to pay, one. And secondly, once that path starts for few companies in the vast sector, and like here we can use the example of quick commerce industry, even in the ride-hailing industries, and that also we have seen that when few companies start going to that path, the others who tend to fall out, and then there emerges a structure of duopoly or so. So this is what the end game we need to watch out for. Now, whether that end game is near term, 2-3 years, in that case, the argument of yes, there is a reasonable value that comes in at 4, while in other cases, the valuation look really high.
Okay, all right. So, well, determining whether something is overvalued or adequately valued, that will always be a tough call. But we'll keep discussing this as we go forward. We'll ask Ashish, which are some of the themes, these innovation themes that he likes the most? And then the big question for us investors. Do you play this through regular, diversified mutual funds? Or is the theme ripe enough and interesting enough to actually play via a dedicated thematic sectoral fund? We'll discuss this on the other side.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week we are discussing the innovation theme and whether we as investors need to look at it far more closely, whether we need to have a more dedicated approach towards investing in companies that are leading innovation here in India. And as you've just heard the experts tell us, innovation can have several definitions. It's not limited to AI or to internet commerce alone. So on that front, Ashish, let's get your thoughts, because you track the whole gamut of all these companies. Which sub-segments of innovation are you most bullish on?
So as you rightly said, it's not just a theme about new age companies. It is cutting across so many futuristic fields which are at the cutting edge, including AI, Fintech, EV, digital platforms, clean energy, and advanced manufacturing. So when we look at our Axis Innovation Funds, it also has exposure not just to the Indian companies, but also to global companies, where we invest across the chain, starting from core tech disruptors. So for instance, if we take a pharma company in let's say, the developed markets like US, who is working along with Indian pioneers such as the CDMO players in India, you're playing across the supply chain. And that's how you really make the most out of the innovation theme. Where we do not have access to some of the companies in the Indian market, you can take that in the global side. Having said that, this is not just about the innovators or the new age companies. We also look at the enablers of innovation. So what we mean by that is companies who are, for instance, into semiconductors, battery technology, chemicals, R&D plays, for instance. All of these are enablers for, say, innovation in electric vehicles or, for that matter, electronics. Similarly, one can play with aerospace or defense component suppliers at the high end of technology. And also, if we want to play the green economy-led innovations, we can look at companies in the recycling space or even solar component manufacturers. On the other side, we can also look at companies who are adapting to innovations. So one of the examples that comes to mind is the Indian financial services space, where there are companies who are leveraging the digital infrastructure in the form of the India stack as well as UPI, and they are able to transform their businesses. So all of these kind of include the gamut of innovation theme.
Okay, so those are all the examples of the innovation theme out there. But then really the question, gentlemen, that as an investor, I mean, I'm okay to take moderate risk, but I don't want to get too caught up. And like you said, many of these companies may not even be profit-making at the time that they start their listed market journey. So Shreyas, if, not a conservative, but say a medium risk investor wants to have a portfolio which is future-ready, then what should he or she do? I mean, how do you add this piece of innovation to the portfolio?
So definitely the thematic fund like innovation fund definitely add a value to it. If you look at even Axis Innovation Fund, we have exposure to even foreign equity into it. So some part of the exposure actually is given to these new age technology businesses. Broadly, when it comes to the exposure to this space, what we believe is the investors should have exposure, but in a limited manner, and to the entire thematic space. It is not only about innovation. So that thematic includes multiple narrow themes. And in that context, in my opinion, innovation is definitely a broad-based theme wherein we touch upon right from consumption-oriented investment companies to EVs, to some other companies which are into the capital goods space, and obviously the foreign activities. So you get a great diversified exposure in this kind of theme. So one should have exposure to this, but in my opinion, in a limited, to the limited extent in the thematics.
Okay. Ashish, what would you say? I mean, what should the right mix be? And also talk to us about the right amount of allocation, because you don't want to have too much risk in the portfolio as well. So would you argue, I mean, you manage the innovation fund, of course, so would you argue playing it through the thematic route, and if yes, and you should be capping it at what level?
So absolutely. So the way Shreyash mentioned, I completely agree that overall thematic basket of the equity portfolio should not exceed about higher double digits, maybe 15% of the portfolio, given that that is the prudent amount which one can have into some of these sectors while innovation can give us exposure to high growth disruptive sectors, and while maintaining diversification and also managing volatility. What is also important is the time period that we have when we are holding these investments in the portfolio. There should be a time investment horizon of at least 5 years. The reason I say that, and as you rightly mentioned, some of these businesses are still evolving. They are still not yet profitable and not yet generating sustainable cash flows and profitability. So to that extent, there might be entry points which might require, let's say, higher valuation entry points, and then over a period of time that gets factored into the stock. So to that extent, to scale these longer gestation periods, one needs to have a slightly longer period of time horizon so that one can ride the valuation cycles and capture the full potential of this compounding growth.
Okay, fair enough, and it's important to keep those risks in mind as well. And on that, Shreyas, to sum it up, I mean, if you talk about the riskometer, right? So if we were to map the innovation theme vis-a-vis other thematic areas like consumption or let's say defense or manufacturing, then does it carry higher risk because it's a very futuristic theme? And if yes, finally, what are the checks and balances, and what are the final tips that you'd like to leave our viewers with, investors with, for investing in innovation?
Definitely at current juncture, since globally innovation-oriented stocks has gone up and the valuations are high. So standing today, definitely the valuation risk is one of the at the higher end when compared to the other themes as such. The good part is, as I highlighted, that unlike consumption or manufacturing or any other narrow thematic like defense, etc., this theme has investment across the multiple segments of economy, right? From consumption so it is well diversified compared to other thematics or narrow thematic schemes which are available in the market. However, because there is an element of innovation and there is an element of valuation re-rating which has happened over last 6 months to 1 year, because of which we definitely carry a valuation risk. And that's where Ashish explained that the time horizon for such investment in such theme should be up to 5 years.
Okay, all right. That explains the concept quite well, the risks and the potential rewards as well, if one looks at investing in the innovation theme here in India. Gentlemen, thank you so much. This was a very helpful conversation. Good to have perspective on this subject. Well, with that, we're out of time on this edition of Let's Talk Money. Thank you very much for joining in. Keep sending us your feedback, your comments and queries. We'll see you again next week.
Let's Talk Money.
Welcome to Business 360. I'm Shireen Bhan, and of course, the victory of the Indian women's cricket team is the big story, but here's what else we're tracking for you this evening. The Sensex and the Nifty end with marginal gains, but the Midcap index hits a 52-week high. The rupee hits a record low against the US dollar. Dealers say the rupee is not slipping further only because of the RBI's intervention. The Supreme Court clarifies on last week's Vodafone Idea order, says the government is free to consider relief on the overall AGR dues. The Apex Court last week had permitted the government to consider relief only on the additional AGR dues. The cash-strapped Vodafone Idea currently owes total AGR dues worth 83,500 crores. The stock sees its biggest single-day gain in the last 18 months. Days after disaster from the board of Tata Trust, Maili Mistry sets the stage for a battle, files a caveat with the Maharashtra Charity Commissioner seeking a hearing before any change in trustees at the Tata Trust. Car sales hit a record high in October after the GST rate cut. Sales of Maruti, M&M and Tata Motors surge, even as Hyundai underperforms. Two-wheeler sales and tractor sales also meet estimates. Aditya Birla Group Chairman Kumar Mangalam Birla wants his group companies to be in the top 2 across industries. His business interests span metal, cement, paint and retail. That's an exclusive. Consolidation has helped PSU banks, and there will be more, says SBI Chairman C.S. Setty. Believes scale is important for banks to leverage technology. That's another exclusive. Japan's Mitsubishi Financial Group is in advanced talks to buy 20% stake in Shriram Finance. Money Control reports the deal could be worth around $4 billion. Shriram Finance management tells CNBC-TV18 multiple discussions underway. No proposal is before the board yet. At least 19 people dead after a bus accident in Telangana. The bus rammed into a truck carrying gravel. This comes just a week after 20 people died in another bus accident in Andhra Pradesh. Political parties pull out all stops days ahead the first phase of the Bihar elections. Prime Minister Modi, Home Minister Amit Shah and top BJP leaders hold rallies. 121 assembly constituencies across 18 districts head to the polls this Thursday.
The Indian women's cricket team with their very first ICC Women's Cricket World Cup trophy.
The Indian women's cricket team are the champions of the world after losing 2 finals. Harmanpreet Kaur's team beat South Africa and emerged third time lucky. Well, the celebrations continue around the country, but first up, the market action of the day. The Wall Street managing to end higher, but the large caps underperformed today. The Nifty and the Sensex ending the day flat, just about in positive territory, 40 points higher on the Nifty. The Sensex up 40, 461 high on the Nifty Midcap. And the Nifty Bank up by about 0.5% or so. So the strength there continues, hitting a 52-week high. The Nifty Bank outperforming the blue chips. But let's talk a little bit about the rupee, because it's fallen to its all-time low of 88.80 against the dollar. Now, this is higher crude oil prices as well as the outflow of foreign capital weighed on the Indian currency. But a late intervention by the RBI managed to stem the fall. Lata's here with the money market wrap for us. Lata, what's weighing on the rupee?
Well, it's not a big fall from the Friday levels of about 88.78, but the rupee throughout the day was flirting with the all-time low of 88.79 and even crossed over to 88.80 per dollar. What makes it significant is that in the past week, that is on October 27th, it had touched a high of 87.75, largely because of the Reserve Bank's huge dollar supplies. The reason for the fall today is, the usual. We have seen consistent FII selling equities and buying dollars and taking it back. Likewise, importers' month-end demand for dollars. Corporates as well wanting to buy dollars because it's not showing any signs of becoming cheaper. Exporters who had earlier sold the dollars are now buying back. So just about everyone is turning dollar bullish. The Reserve Bank, when it had taken the dollar all the way to 87.75 on October 27th, the market apparently was in the mood that maybe the Reserve Bank knows something about dollar flows or trade deals or something, which is why it was supplying dollars with such force. And therefore, a lot of people had gone out of their short dollar positions, had gone out of their long dollar positions, and had become even short dollar. So now there is a frenzy of buying dollars globally as well. The dollar has become stronger. The DXY has moved up from about 96 and change levels 2 weeks ago. It has come almost to 100 levels, 99.70, because the Fed has turned a little more hawkish. The December rate cut is now a bit doubtful. All this is leading to further pressure on the rupee, and it looks like the Reserve Bank is the only reason why it is not crossing 88.80. The market believes that if the Reserve Bank allows it to cross 88.80, perhaps 89 will come very soon.
All right, Lata, many thanks. And from the currency markets now to commodities, oil prices gaining after fears of oversupply eased following OPEC Plus's decision to hold off production hikes in the first quarter of the next year. Oil producers group agreed to raise output by over 1.3 lakh barrels per day in December. This is the same as the hike for October and November. Ukraine's ongoing strikes on Russian energy infrastructure also pushed prices higher. So that's the latest on crude. Now, India's manufacturing growth picked up pace in October. The HSBC India Manufacturing Purchasing Managers Index rose to 59.2 in October from 57.7 in September. This was driven by strong domestic demand, export growth and GST relief during the month. However, international sales rose at the slowest pace in 10 months, and this signaled some moderation in external demand. India's goods and services tax collections for October grew 4.6% year-on-year to 1.96 lakh crores. This has kept the GST mop-up close to the 2 lakh crore rupee milestone for the third straight month. However, the net GST revenue grew marginally by less than 1% on the back of higher export incentives and credit settlements across manufacturing-heavy sectors. And staying with GST, automakers' sales accelerated in line with expectations for the month of October as festive demand and the GST rate cuts bore good tidings for the sector. Sales in the passenger vehicle industry reached a record high in terms of volumes. The big outperformance was seen in commercial vehicles and the tractor segment. Sudarshan is here with the Motown report card. Sud.
First full month where we have seen the impact of recent GST rate cut and the festive season, and these companies have reported sales, and those sales were largely in line or slightly better than expectations. Biggest positive surprise was the performance of commercial vehicle, and both the companies Tata Motors and Ashok Leyland have reported sales much better than expectations. Tata Motors, both the segments have seen a big outperformance. Passenger vehicle segment has seen a growth of almost 27%, while after several months commercial vehicle segment has reported growth of almost 10%. For Ashok Leyland, one segment that was underperforming is the bus segment, and this month that segment has seen a growth of almost 34%, and for Ashok Leyland it was an all-round beat. Mahindra and Mahindra, both the segment have reported sales. Those were largely in line. For auto segment, it was led by SUV, which has seen a growth of almost 27%, and tractor too has seen a growth of almost 13%. For Maruti, domestic sales were led by compact and SUV segment, whereas entry-level segment, where two cars are there, Alto and Espresso, both sales of both these cars have come down year-on-year. One company that has underperformed the peers was Hyundai, and that's mainly because of domestic market, where it has seen a decline in the sales YOY. In two-wheeler space, all the three companies, TVS Motor, Bajaj Auto and Eicher Motors, which have reported sales so far, have reported numbers, and those numbers were largely in line. For Eicher Motors, the positive part was in the festive season, it has seen growth of almost 26%, much higher than the monthly average. So sales were better than expectations for the month of October, but the expectation would be what exactly these companies say about FY26 outlook, because the expectation is that these companies are likely to increase the FY26 outlook from the current outlook. Current outlook is for PV, low single-digit growth, and for two-wheelers, it's a high single-digit growth.
Well, Motown clearly in top gear. So many thanks for joining us. And speaking of being in top gear, shares of Vodafone Idea surged over 9% in trade today. This after the Supreme Court clarified that the government is free to consider relief on both the additional AGR dues as well as reassess all AGR dues. The cash-strapped Vodafone Idea currently owes total AGR dues worth over 83,500 crore rupees. Ashmit joins us now to take us through what transpired in court today. Ashmit, I mean, this is just unbelievable. Just last week, we got the order which seemed to suggest that the relief was going to be limited to the additional AGR dues, and today, the Supreme Court clarifying on its own order.
Well, there's a big relief coming in for the troubled telecom player. Bear in mind that the last Supreme Court order had caused confusion to the extent that it appeared from that last order that the only relief that the government could grant was with respect to only the additional AGR dues, which would be about 9,500 crore rupees, and not the overall, the large mammoth figure of total AGR. That was one correction with which Vodafone Idea knocked on the doors of the Apex Court once again. Flanking Vodafone Idea counsels were also the Solicitor General appearing on behalf of the DOT. They both gave a similar view that there was indeed a correction that was required, that the Apex Court had caused confusion, and that is what needed to be rectified. The Supreme Court responding to that by saying that yes, indeed there was an issue, and towards that end clarifying that the government can go ahead and grant relief on both these counts. Additional AGR dues of 9,500 crore rupees, as well as the original total AGR figure of over 83,000 crore rupees, which includes penalty, which includes interest. So that is the flexibility that now the Apex Court has given the government. And this is critical, given as how when we had asked the government after the last order, they had said that we're not clear, we need a legal opinion. So finally, a legal opinion being given by no less than the Apex Court that yes, the hands of the DOT are untied. They can grant relief on both the counts, especially the overall large total AGR figure.
Well, massive relief there for Vodafone Idea. Ashmit, many thanks for joining us. And speaking of relief coming in for multiplexes, the Supreme Court has granted a stay order on the Karnataka government's rules that sought to introduce a price cap of 200 rupees on movie tickets. The Apex Court granted protection to the multiplexes and has restricted the state government from implementing the price cap. So good news coming in there for movie theatres in the state. Lenskart's 7,300 crore rupee IPO offer witnessed robust demand on day 2 of bidding. Overall subscription now nearly 2 times the share on offer. This was led by the retail portion, which was subscribed over 3 times, followed by the portion reserved for QIB, which was subscribed 1.64 times as of 4 p.m. And more. Brokerage firm Grow has received bids worth 50,000 crore rupees from large domestic mutual funds and foreign funds for its anchor book before the IPO opens, which is tomorrow. Sources say the anchor book is estimated to be around 3,000 crores, has been oversubscribed more than 15 times. It's seen participation from 8 out of the 10 large mutual funds, including SBI Mutual Fund and major US investors like Sequoia Capital. Market regulator SEBI has approved Shiprocket's 2,400 crore rupee initial public offer. Sources tell CNBC-TV18 that the courier delivery firm's IPO will be equal parts a fresh issue and an offer for sale. Marquee investors Sensex, Zomato and InfoEdge will not sell their stake. The offer for sale will be made solely by early investors and the founders. The 3,000 crore rupee IPO of Pine Labs will open for subscription from the 7th of November to the 11th of November. The Gurugram-based Fintech company has set the price band in the range of 210 to 221 rupees a share. The IPO comprises a fresh issuance of 2,080 crore rupees, down from 2,600 crores in June. Existing investors peak 15 partners, PayPal and MasterCard will look to sell a total of 8.23 crore shares. Pine Labs is seeking a valuation of over 25,300 crore rupees. Speaking to CNBC-TV18, CEO Amrish Rao explained why the issue has been downsized.
I have more than 1,000 crores of cash on our balance sheet today. That's point number 1. Point number 2 is when we have reduced the OFS and the sale amount, fresh issuance, when we have reduced it, zero has been taken away from any growth-related activities. So growth-related activities, when it comes to international expansion, technology investment, we made no changes. Just as our financial position has improved, what we have actually done is we have reduced some of the debt repayment activities that we had identified. So when it comes to P&L and growth in our business, we made no changes out there.
Well, that's Amrish Rao. Now, days after he was ousted from the board of Tata Trust, sources say Merely Mistry has filed a caveat with the Maharashtra Charity Commissioner. Mistry has sought a hearing before any change in trustees at Tata Trust. The trust has to inform any change in trustees to the Charity Commissioner's office within 90 days. The Charity Commissioner will likely hear Mistry's case once Tata Trust informs about the change in the trustees. Now, Adani Group-led Ambuja Cements has posted a record profit in the second quarter. Net profit increased multifold to 1,766 crore crore rupees on an annual basis. According to an exchange filing, the surge in profit came on the back of one-time income tax provision. Reversal revenue also increased 22% during the quarter. So that's Ambuja Cement for you. Japanese major Mitsubishi UFG Financial Group is set to be in advanced talks to pick up a 20% stake in Shriram Finance. As per a money control report, a deal is likely to be announced soon. The report also says that MUFG will likely invest $3 to $4 billion in Shriram Finance through a fresh capital issue and secure 2 board seats. Umesh Revankar, Executive Vice Chairman of Shriram Finance, speaking to CNBC-TV18 this morning, said that while they are exploring talks with banks and institutions, there is no proposal that is before the board just yet.
We are in discussion with many of the banks and institutions all the time. And this time we have not even discussed this in the board. So there is no question of raising equity at any point of time. First of all, we need to discuss this in the board meeting. And since it has not come to the board, I cannot further comment on that.
Well, that's Shriram Finance for you. India's women's cricket team have been crowned the World Cup champions for the first time. A 52-run victory over South Africa in the finals, giving the team that historic victory in a tournament that has seen women in blue on the brink of an early exit. From 3 straight defeats in the group stage to a flawless run in the knockout stages, India's comeback was as dramatic as it was record-breaking. Navi Mumbai's D.Y. Patil Stadium, where the Women's Premier League began, roared as skipper Harmanpreet Kaur's catch secured the victory in the 45th over, kick-starting the celebrations. Veteran cricketers Anjum Chopra, Mithali Raj, Jhulan Goswami also joined in on the celebrations on the field after the team lifted the trophy.
Always we've come in close situations, crunch moments, and we've given it away. But this Indian team changed that. So I think I love that for that reason that we defeated them, and today we are world champions.
I really don't have words, sir, क्योंकि हम ये moment visualize कर चुके हैं. हम लोग बात करते थे, अभी हो गया है, तो अभी इसको ऐसे soak in करने में बहुत time लग रहा है. पर what to say, I don't have words.
As a team हम लोग अगर कोई ट्रॉफी जीतनी है तो सबको एक साथ आके स्टाफ प्लेयर सबको एक साथ आके वो मैजिक क्रिएट करना होता है और वो वही किया हमने तो काफी अच्छा लगा.
Well, what a fabulous victory there for India. And of course, I think this is a seminal moment, not just for Indian cricket, but for women's cricket around the world. It's time for us to head into a break, but coming up next, political parties pull out all stops days ahead of the first phase of the Bihar elections. Prime Minister Modi and top BJP leaders hold rallies. More details when we return. At least 19 people have died and several have been injured after a passenger bus collided with a gravel-laden truck on the Hyderabad-Bijapur highway. The bus belonged to the Telangana State Road Transport Corporation and had 70 passengers on board. Several passengers injured in the accident were shifted to a government hospital. Rescue teams had to cut through the bus to retrieve the bodies. Prime Minister Modi has announced an ex gratia amount of 2 lakh rupees to the kin of the victims. Days ahead of the first phase of elections in Bihar, political parties have pulled out all the stops to woo voters. 121 assembly constituencies across 18 districts will head to the polls in phase 1 this Thursday. Prime Minister Modi, Home Minister Amit Shah and top BJP leaders held rallies in the state. Addressing a public rally in Saharsa, the Prime Minister urged first-time voters to vote for the NDA alliance. Meanwhile, Congress General Secretary Priyanka Gandhi Vadra also held a rally in Saharsa. She alleged that Bihar's youth is being forced to leave the state as unemployment remains rampant.
अभी नौजवान बेटे बेटी जो पहली बार वोट डाल रहे हैं उनको मेरा विशेष आग्रह है कि इस बार आपका वोट एनडीए की सरकार बनाने वाला वोट होना चाहिए।
सब लोग चाहते थे कि हमें सरकारी रोजगार चाहिए। क्यों? यहां बुजुर्ग बैठे बताएंगे, क्योंकि उससे सुरक्षा मिलती थी, पेंशन मिलता था, ऐसे लगता था कि अब नौकरी लग गई है, जीवन भर हम ठीक होंगे, हमें अब चिंता की जरूरत नहीं होगी। आज की परिस्थिति क्या है बहनों और भाइयों? आज जितने भी वो बड़े बड़े उद्योग थे, सब मोदी जी ने अपने बड़े बड़े दोस्तों को, उद्योगपतियों को दे दिए हैं।
Well, that's the elections in Bihar. Meanwhile, the Enforcement Directorate has attached 40 properties worth over 3,000 crore rupees linked to an alleged money laundering probe against Anil Ambani's Reliance Group. Sources say these properties include the Ambani family's Pali Hill residence in Mumbai and the Reliance Centre in Delhi. Timsy standing by with the details. Timsy, take us through the attachment that has been made by the ED.
Well, that's right. The Enforcement Directorate has provisionally attached more than 40 properties linked to entities of Reliance Anil Ambani Group valued at 3,084 crore rupees. According to sources, the attachments include Anil Ambani family's residence at Pali Hill, the Reliance Centre property in New Delhi and multiple assets spread across Delhi, Noida, Ghaziabad, Mumbai, Pune, Thane, Hyderabad, Chennai and East Godavari. As per sources, the orders of attachment were issued on October 31st under Section 5(1) of the PMLA Act, which allows the Enforcement Directorate to temporarily attach properties suspected to be linked to proceeds of an alleged crime. The Enforcement Directorate claims that the case involves diversion and laundering of public funds raised by Reliance Home Finance Limited or RHFL and Reliance Commercial Finance Limited or RCFL. The ED is probing the deals between Yes Bank and RHFL and RCFL between 2017 and 2019. Yes Bank invested 2,965 crores in RHFL instruments and 2,045 crores in RCFL instruments, which later turned into non-performing investments. According to sources, the Enforcement Directorate is also looking at investments by the erstwhile Reliance Nippon Mutual Fund into Reliance Anil Ambani Group financial companies, which were considered to be routing these funds indirectly through Yes Bank, allegedly in violation of SEBI's mutual fund conflict of interest guidelines. ED claims that the funds were ultimately traced to the Anil Ambani Reliance Group linked entities. The ED has further alleged that RHFL and RCFL extended loans to connected companies with serious control lapses and procedural violations. We also learned that the Enforcement Directorate has also intensified its probe into the Reliance Communications, that is Arcom loan case, alleging diversion of over 13,600 crore rupees through evergreening of loans, connected party transactions and misuse of bill discounting facilities. We'll keep you posted on the matter.
Timsy, many thanks. A quick check of the international headlines. Israeli forces continue to bombard Gaza despite the ceasefire. The death toll in the enclave has now risen to 236 since the ceasefire was agreed on. 2 Palestinians, including a teenager, have been killed in attacks in occupied West Bank. Meanwhile, Hamas has handed over the bodies of 3 more captives after a complex search operation in Gaza City. Ukraine has said that Russian attacks killed at least 4 across the country. Kyiv has also said that overnight Russian strikes hit key energy infrastructure, causing power outages that impacted 60,000 people. Meanwhile, Russia's defense ministry said its air defenses intercepted 164 Ukrainian drones overnight. A powerful 6.3 magnitude earthquake struck northern Afghanistan, killing at least 20 people and injuring more than 300. The Taliban-run health ministries confirmed the casualties, adding that the tremors were felt strongly in the city of Mazar-e-Sharif. The Balkh and neighboring Samangan provinces reported the most damage. The death toll could rise further as rescue operations continue in remote villages. This quake follows a 6.0 magnitude tremor in eastern Afghanistan in August that killed more than 2,200 people. Well, with that, it is time for us to wrap up this edition of Business 360. Do stay tuned. The news will continue right here on CNBC-TV18. We're back in a minute with plenty more.
Talk about that moment in the couch when you had your eureka moment.
I couldn't find anything to watch on TV, and I did what most great Jewish kids do when they face a huge challenge. I went to my mom.
That sounds like India, by the way. We go to our moms here as well, and particularly Indian men. Let's talk about the big inflection point, which was around 2012, 2013 for Taboola.
Right. 3 times I faced the moment when we just have the money for about a month. I find myself in Sand Hill Road, and I'm meeting 30 of the best investors in the world. They all said no. And I met this one more investor, and I told them I need $1.5 million to launch an advertising model. And that was the tipping point of the company. It was the last time we needed to raise money, and it was just a rocket ship from no revenue in 2011 to almost $2 billion 10 years after.
Taboola is very different from Google ads or from Meta ads, etc.
You're a startup. You want to find clients. It's easy to buy Google. It's easy to buy Facebook. It's uniquely complicated to buy the open web. So our purpose is to try to bring the power of the walled garden, like a Facebook or Google, to the rest of the world, the open web.
It's increasingly difficult for publishers to exist in this era where platforms like OpenAI and so on and so forth really have the control. You're saying you're our friend, right?
Best friend you got. As opposed to all these guys, I have no other business. My only business is open web succeeding. You win, we win. You fail, we fail.
From a startup that almost shut down 3 times to a tech powerhouse powering over 1 million recommendations every second, Taboola has redefined how the world discovers content. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. It all began with a simple idea, helping people find things they may like but didn't know existed. Today, that idea fuels one of the most powerful open web advertising platforms. Founded in 2007, Taboola reaches 600 million people, has over 9,000 premium publishers, and trades on the Nasdaq. In India, it partners with top publishers like Network 18 and global brands like Samsung and Amazon to help reach audiences beyond search and social. With Deeper Dive, the company is taking on tech giants in the world of AI. On the show today, the incredible journey of a former Israeli intelligence officer who turned curiosity into a global business empire. Joining me now, Adam Singolda, the founder and global CEO, right here with us on the Young Turks Reloaded podcast. Adam, it's great to have you here in India.
Thanks for having me. This is fun. This is a good time to be in India.
It is a good time to be in India. We'll talk about your plans in India in just a second, but I want to go back to 2007, Adam, and talk about that moment in the couch when you had your eureka moment of deciding that look, this is a problem that needs fixing, and you decided to be part of the solution. Take me through what happened then.
Yeah, it's. I remember it like it was yesterday. It was. I was living in my parents' house because I didn't have any money to do otherwise, and I did save money to buy a big TV, so that was a great accomplishment. And I was
the priorities, a big TV, no money but a big TV.
It's a big deal, go back in time. Those 29 inches played a big role in my childhood. So I couldn't find anything to watch on TV, and I did what most great Jewish kids do when they face a huge challenge. I went to my mom. And then I told her, Mom,
That sounds like India, by the way. We go to our moms here as well, and particularly Indian men.
That's why we were good with each other. We understand each other culturally. And so, I said, you go to Google if you know what you want, but what happens when you have no idea what you're supposed to be doing next? And my mom couldn't really know how to help me, but she did say, there's an investor. His daughter, at the age of 12, coming of age, it's a big event. It's called Bat Mitzvah. She was having a Bat Mitzvah, and she said, I can get you an invite. Now, mind you, I do not know the girl or her family. But she said, the dad, I know someone knows that I'm going to get you an invite. So here I am, a week after, at this Bat Mitzvah event. It's 7 p.m. I do not know anyone. I'm asking myself, when is a good time to pitch an investor? At his most important.
While you're singing Hava Nagila,
dancing with everyone as if we're all best friends. And I said, a few glasses of wine in, and I'm going in hot. So I was waiting. I was dancing. And then I told him, his name is Danny. I said, Danny, you go to Google if you know what you want, but what happens when you have no idea what you're supposed to be doing next? The world needs a Google search engine in reverse. Like the perfect search engine would be a blank page because it would just know me and recommend me things to do next. And his response was, who invited you? And I said, my mom. I said, who is your mom? I told him my mom's name, and I don't think he recognized my mom either. Kindly asking me to get the hell out of there. But he was kind enough to also invite me back to his house. So I came back to his house a few days after. And, back then, seed money was not what we all.
No.
The world is so, this, it's like so crazy now.
Yeah.
Back then, I asked for $108,000, which was huge to me. I couldn't imagine anyone giving me so much money. And what would I do with it? And he agreed. And that was the beginning of the Taboola journey with Danny. And up until now, we're best friends. He's a big shareholder. He's truly an angel to me, not only as an investor, but an angel in my story.
Yes, and a mentor to you as well. But let's talk about the big inflection point, which was around 2012, 2013 for Taboola, right. And things really started to kick off from then. Take me through that point.
The first 4 years of the company, we were 5 people, 7 people. You have to go back to those days. We're just a small group of team. And we're just trying to get anyone to use the product. The product was a video recommendation engine. Sales cycle was so long, 9 months, 12 months to get a publisher to agree to integrate this recommendation engine on the page. And during that time, I'm raising the money all the time. Because, we always had money for 6 months, 9 months, a year. And 3 times I faced a moment when we just had the money for about a month. And the third time was November 2011. I find myself in Sand Hill Road, and I'm meeting 30 of the best investors in the world, the best names out there. And if you've been there, it's kind of like a concrete island. It's like all the same.
Looks like nothing.
Yeah, it's like Alice in Wonderland. You open one door, you go in, you close the door, you open another one. So I did that for 2 days, and I got a perfect rejection from all. They all said no. And I found myself sitting on a bench asking myself, what do they know that I don't? And I was very lucky. I came back to New York, and I met this one more investor. And I told them I need $1.5 million to launch an advertising model so that when someone reaches a recommendation engine, it can also say you may like from all around the internet.
Yeah.
And that was the tipping point of the company. It was the last time we needed to raise money. And from that moment on, if you were at Taboola, we had a revenue record day every week. And it was just a rocket ship from no revenue in 2011 to hundreds of thousands of dollars a month in 2012 to $200 million in 2014 to almost $2 billion 10 years after.
And you believe that things are going to get even better, which is why you've been on an aggressive buyback spree, haven't you?
I love it. I personally, earlier this year bought shares of the company. The company's we bought 12% in the first half of the year as part of our, repurchase buyback program. We think that we have this conviction that the future has a lot of upside, thanks to AI as a technology and what it means to the open web, to us, as an ecosystem of trusted publishers, and how much growth, engagement, and revenue could come over the next decade or two. And we think, there's the best buy we can have.
Yeah, well, let's talk about this growth opportunity that you speak of. And for the benefit of all of our viewers, explain to us how Taboola is very different from Google ads or from Meta ads, etc. Because you're basically looking at the open web. They're not.
If we oversimplify this, think of the world as 3 different areas of consumers. You're either searching, because you have high intent, you want to find something. That's when you go to a Google or ChatGPT. You're either browsing, you have no special intent, you're on Instagram or TikTok in some countries, and you're just scrolling through, you have no specific intent. Or you're in a consideration mode. You want to get educated on something, you're watching a CNBC episode, you're reading about something you care about, you're curious. It's this curiosity graph, and that's the open web. It's all the publishers, sports, national sites, commerce, entertainment, finance, healthcare. And that's referred to as open web. It's everything outside of search and social. And today, for advertisers, if you think about a small business, you're a startup, you want to find clients, it's easy to buy Google. You go there, you can put $5,000, $10,000, and just try to see if you can get clients. It's easy to buy Facebook. You can go and put $5,000, $10,000 and see what happens. It's uniquely complicated to buy the open web. Even though it's very lucrative to imagine your ad on a CNBC podcast because it has great passion and great guests and anchor, it's very hard to reach that moment of the open web and do a good job. So our purpose is to try to bring the power of the walled garden, like a Facebook or Google, to the rest of the world, the open web. So it's easy for advertisers to spend, to find success, and then even more importantly, to drive growth to journalism. So we can, get the open web to be rocking and rolling.
Talking about powering journalism and bringing the power back to newsrooms and to publishers, because it's increasingly difficult for publishers to exist in this era where platforms like OpenAI and so on and so forth really have the control. So, there are many existential questions here that we need to talk about. Right. So you're saying you're our friend, right?
Best friend you got.
Best friend.
I only win if you. I have, as opposed to all these guys, I have no other business. My only business is open web succeeding. You win, we win. You fail, we fail. So we're as aligned as possible.
How do you see this evolving? How do you see the power balance shifting and changing in this AI-driven world with all of these models?
You know why I'm very optimistic about this moment in time? I think the biggest, if you think about innovation, so much of innovation is really execution. It's think about classical music we're listening to. We're still listening to Chopin and Bach and Mozart, which was written 200 years ago. Yeah. Because it's really hard to create something so amazingly new. So execution is really, innovation of our times. So when I think about publishers and this moment right now in time, if I told you 2 years ago, let's put AI on every page, let's give consumers access to AI and bring it to the most delicate and important part of an organization, which is the editorial team, I think it would be a difficult conversation, because then there's this tension of what does that mean to the editorial team? How do we use personalization and technology? But now, when consumers are having access to AI on Gemini and ChatGPT and Perplexity, we have no choice. We have to evolve. We have to change. And I think in many ways, search traffic going down. Whether Google kills Google or ChatGPT kills Google, the way we know it.
Will it kill Google? Will search be killed? That's one of the big existential questions at this point in time.
I think Google will try to kill Google as fast as they can, because the traditional version of Google, the search engine as we know it, because the birth of Gemini and LLM could mean so much more to them. The value of a query versus the value of a conversation is, I think, 10 to 100x. If I converse with Gemini, it means so much more to Google and to Google's advertisers. And I think that value will translate to publishers.
So let's talk about Deeper Dive, because that's your big bet in a world where we're seeing Grok and Perplexity and ChatGPT. How are you different?
So one, I think there's obviously, these companies are direct-to-consumer companies. They're trying to be the next Google, if you will, just in the LLM space. And I think, look, we'll see winners and losers in that world. Obviously, OpenAI is already very successful. Gemini is already very successful, and Grok is very successful. I think we were seeing some smaller companies that are making their waves, like Perplexity and others, and we'll see what happens to them, because I think it's going to be difficult to compete with the giants.
You believe this is going to be a winner-takes-all market?
It always is. Look at any other market we know, search, social, computing. We tend to see 2 or 3 companies get most of the market and then the rest. And especially in market when the investment requires billions of dollars of hardware and billions of dollars in foundational models, even if you have one. Remember that some of these smaller companies like Perplexity, it's really a llama reseller. They don't really have their own model. So it's going to be very expensive to compete. And these companies are well-funded and motivated to capture market share. But we'll see some winners in that space. And then I think there's going to be the rest of the world, utility apps, OEMs, mobile devices, publishers, a lot of great companies that want to offer AI to their consumers. But it's going to be very expensive to do it.
Yeah.
They may not have the data to do a good job at it. And most importantly, they need to monetize it.
Yeah.
So I think this is an opportunity for companies like us, and Deeper Dive is our attempt at going after that market, which again is a big bet we're taking, that there's a universe of companies that will need an LLM offering, or it's going to be expensive. They may not have the data or the monetization to do it, and we want to do it with them and for them. Also, remember, many of these companies, they got burned over the last 20 years by giving too much access to these walled gardens. Too much data, too much advertising access. And, like Karl Marx said, history tends to repeat itself. We can't always make the same mistake again. And this is too important. Content. This is the pulse of our existence, the content we create. So I think they need a really good friend, that's not competing with them. And I hope we can be that one.
always we've come in close situations, crunch moments, and we've given it away. But this Indian team changed that. So I think I love that for that reason that we defeated them, and today we are world champions.
I really don't have words, sir, क्योंकि हम ये मोमेंट विजुलाइज कर चुके हैं. हम लोग बात करते थे, अभी हो गया है, तो अभी इसको ऐसे सोक इन करने में बहुत टाइम लग रहा है. पर what to say, I don't have words.
एज अ टीम हम लोग अगर कोई ट्रॉफी जीतनी है तो सबको एक साथ आके स्टाफ प्लेयर सबको एक साथ आके वो मैजिक क्रिएट करना होता है, और वो वही किया हमने, तो काफी अच्छा लगा.
Well, from the knife of elimination dangling precariously to a World Cup triumph, the women in blue have scripted what will perhaps go down as one of the greatest comebacks in sporting history. Hello and welcome to this special broadcast on CNBC-TV18. I'm Shireen Bhan. India's triumph against South Africa in the finals last night was not just a flight to glory for the team, it was also a triumph of individual tribulations. Shefali Verma, whose all-round performance in the final bolstered India's claim to the trophy, was not even a part of the team and had been on the fringes for a year before being pulled in to replace the injured Pratika Rawal. Deepti Sharma, the player of the tournament, is the first person with a half-century and a 5-wicket haul in an ODI knockout match, one of the top contenders for women's cricket today. Deepti was originally a medium pacer who transitioned to off-spin on her mentor's advice. And here's some more trivia. 3 years back, it was the D.Y. Patil Stadium in Navi Mumbai where the first match of the Women's Premier League was played in 2022. The WPL has played a significant role in making these women a household name in India and now globally. And today, the same stage, India has emerged as the world champions. The highlight of the night were the visuals involving the veteran cricketers Anjum Chopra, Mithali Raj, Jhulan Goswami, all joining the celebrations. The victory last night in many ways is a culmination of the collective dreams of the past, the present and the future of Indian women's cricket, and a testimony to the grit and determination that these women and many others like them have shown for decades. Thanks very much for joining us on this special show. With us tonight, a legend, Mithali Raj, with us here this evening. Mithali, what an absolute pleasure. You captained the women's national team for 18 long years, the only Indian skipper, men or women, to have led India to 2 World Cup finals in 2005 and then 2017. Mithali, I want to go back to that moment last night, when that catch happened, what was the feeling running through your mind, through your body as you saw that catch being taken?
Well, Shireen, firstly, I didn't want to watch it because I was in the comm box. And when it was 2 more wickets and India was leaking few boundaries, I decided not to watch the game because it was sort of, I was getting nervous. And I just walked out of the box and I was just waiting when the stadium will roar. And then once it did, and I realized, okay, the match is ours and we are finally the champions. So actually, I didn't see the last few moments, but it was a very special night for all women cricketers, former, current, because this is something all of us lived for, trained all through these years. Even times, I'm sure, from the times of Shanta Rangaswamy, Diana Edulji, Sandhya Agarwal to Pramila Bhatt, and years trying to strive to make people come and watch women's cricket or know about this sport. And finally, last night when India became champions, I'm very happy that that the trophy will have India engraved on that. It's just not Australia, New Zealand, England. Now it has a 4th team, India.
Absolutely, it has India engraved and history has been created. And Mithali, you were talking about what this has done, not just for Indian women's cricket, but for women's cricket globally. I mean, look at the numbers, not just people in D.Y. Patil Stadium watching the match. Look at the number of people who tuned in, a record in itself, to watch that match between India and South Africa. Do you believe that this is in many ways a seminal moment, not just for Indian women's cricket, but for women's cricket globally?
Yes, indeed, because every game India played, whether it is in Vizag, Indore, wherever, whichever venue India has played, is we were able to get people to the stadium. The stadium was filling up, especially India, Australia, India, New Zealand, and of course the final. I mean, it was a fitting sort of an atmosphere, that electric buzz around in the stadium, and a sea of blue, everybody in blue jersey. And a day before, because I was staying close to the ground, so I've seen people a day before queuing up, which you usually get to see for any men's game in our country. A very similar sort of atmosphere just before the World Cup final. And when you have the home team in the finals, everybody want to be part of that moment, be part of that day. And globally, yes, because the prize money is 4 times fold, has increased just before the tournament. ICC chair Mr. Jay Shah has announced the global pay parity in terms of the World Cup prize money for men and women. I mean, that is also such a big step before this marquee event.
Absolutely, it is a big step, and we're glad that we've seen that happen. But Mithali, you know this team deeply. You know these players inside out. I want to understand from your vantage point why you believe this has ended up being the winning squad.
I think there are a lot of factors this team was able to pull off and cross that line. One is, of course, the belief that each and every player spoke about coming into the tournament. Second is the preparation. Like for the past 1 year, they've been playing good quality cricket. The results were in favor of India. We were doing very well, just not at home, but overseas as well. And it is one of the biggest contingent, I think, in this tournament with 18 member support staff. We've never had that before. BCCI playing its role, very supportive, trying to give everything that they could in terms of resources and training camps for the girls. I think WPL played a huge role in shaping the attitude that the players get to the field in this tournament, which we got to see. Because if not for that platform, you wouldn't have unearthed talent like Charni or Kranti Gaur, these youngsters. They're not overwhelmed with the occasion of playing their first World Cup final or first World Cup at home. It is itself is a huge expectation, and the pressure is so much when you're playing World Cup at home. Every player has spoken about it. And then you see these youngsters fearless, and that comes from putting them through those experiences, through these franchise league. It's just been 3 seasons, but you've seen this rapid strides each and every player was able to do. The players who've come into that into the side in the last year, like Pratika Rawal as well, may not be part of a franchise league, but the domestic setup, reviving red ball cricket as well, test matches for women's cricket. In this last 3 years from the start of WPL, you've seen a lot of addition to women's cricket in our country, whether it's domestic, international, resources, everything. And that is why I think everything came together for women's cricket for this Indian team.
Well, yes, a lot came together. And speaking of coming together, Mithali, I messaged you and I told you one of the most memorable moments for me watching what happened last night was seeing you and Jhulan and Anjum on the field with the team raising the cup. And I think it spoke to so many of the collective aspiration and, of course, a nation's sort of pride there in a full form and in full force being exhibited. But what was it like for you, for Jhulan and Anjum to be there? I mean, what was that moment like?
Well, see, I mean, every World Cup since all of us have been part of 2000, 2005, every time we would want to get a step closer to the trophy, and then the twice we are in the finals and we don't get to cross. It's painful, when you're just so close and you don't make it. And once Indian team qualified, when they played that brilliant semi-final and then got into the finals, we were like, this time, third time, lucky, India should cross the line. And, as I said before, everything sort of was destined for all of us, is because we were there, we were in the commentary box, all three of us doing commentary for the game, and then the girls doing so well. There were moments where we felt like, what is she doing? Why is she leaking out runs? Which is, you know, it happens. It's still like, you know, you want the team to do well. And then when finally that last wicket fell, and we were so happy to see something that we aspired, we dreamt of, we've finished our careers, and we still wanted at some point India should, you know, sort of get the hands on the trophy. And it happened at home, nothing bigger than this platform. Like, you know, you have the World Cup at home, and then you win your first, you know, World Cup trophy at home. And then you have all the cricketers, like the former cricketers, just not three of us. I've seen a lot of former cricketers in the stands. I mean, what a fitting thing it is for them to see the evolution of the sport from where they were seen in 80s to, India winning a World Cup at home in 2025.
Yes, a very, very fitting tribute to all the work that's gone in over the last several decades to take women's cricket to where it has now sort of emerged, broken out, so to speak, quite literally. But, you know, Mithali, you talked about the journey, and you talked about so much that's changed specifically in the last few years. I remember you and I talking about the lack of kits, train rides, no locker rooms, and so on and so forth. As you see this next generation of women cricketers, and as you said, you know, fearless, aspirational, confident, ready to take on the world. What are the things that you believe are now pending that need to be done to just take us to the next level?
Well, I think it's just a little more time need to be given, because as I said, WPL is just 3 seasons old, and you've already seen the transformation into the players. Everyone in the domestic circuit are aiming to get into the franchise league. As it expands, the bench strength starts to get more stronger, more competitive. We've already have under 19 players, like twice, 2 editions of the under 19 World Cup India has won. So we have the young team there, the under 19s also doing well. So it's just a matter of sort of being more consistent. Yes, I feel like Australia and England probably will go into the transition mode. Now is the time for India to be very consistent at the top, like how at one point Australia was invincible. And that's what I would sort of envision going forward for India, to be consistent, to be that invincible team for a long time. And for that, we need to have more players. The pool of players, the quality of players should expand, and that will in coming times. The more number of teams, if we can expand the WPL as well, a lot more players from the domestic circuit can get that exposure and experience, which the players currently in the 5 teams are able to get. And more robust domestic structure. Of course, we've revived the red ball cricket. There is India Shadow Tours as well, which is again started in the last 2 years. The under 19 teams, zonal camps. So everything is going. The state associations probably will take a lot more interest now in tapping those grassroots levels. That is where I think we will probably identify a lot more players, get a structure in place where, like how it is for the boys, the inter-school school teams, and then they get into the 14, the 16 level. Maybe if we start to have that sort of a structure in the coming years, it will be a pretty strong women's cricket in India that I get to see. Like where the men's team stand today is probably another 3-4 years. I would see the women players of women's cricket in India at that level.
Well, an invincible team India. Mithali, I know you have to go, but finally, you know, the moment that you will hold close to your heart, the one defining moment from not just last night, but perhaps in the last few days, in the run-up to the finals as well, that will stay in your memory forever.
I would pick the semi-final, because I was nervous the morning of the semi-final. How would it go? So for me, that semi-final was so important. And I think Jemima Roderick's 100 is what I would pick in the tournament, because, you know, a little ups and downs during the tournament for her and for the team, and then come out and adapt yourself in the all semi-final, the knockout, and then getting into the finals. Of course, Deepti Sharma's consistency throughout the tournament. She's been one player all through seasons for India. She's always contributed, whether with the ball or the bat. Pretty precious player for India. She's been in the last few years.
Well, each one of them champions, and of course, forever champion.
And of course, sorry to
Raj.
But Shefali Verma, I think, of course, the batting that she got, but those 2 wickets, I mean, nobody expected her. I think that probably was the game changer in the finals. She's been sort of a wild card for us.
And the wild cards came through. Mithali Raj, it's been an absolute pleasure. Thank you so much for joining us, and congratulations to you as well on what has been a seminal night for Indian women's cricket, for India, and for women's cricket around the world. Appreciate your time, and we wish you the very best of luck. We are going to head into a break, but when we return, we continue to talk about India's historic win. Don't go anywhere. We're back in a moment. Indian women are champions of the world after beating South Africa in the finals at the Navi Mumbai D.Y. Patil Stadium 2 years ago. CNBC-TV18 had felicitated the team at the India Business Leader Awards. Captain Harmanpreet Kaur, Smriti Mandhana, Jemima Rodrigues, and former cricketing legends like Mithali Raj and Jhulan Goswami were all there with us on the IBLA stage. It was then that the BCCI General Secretary Jay Shah had addressed the issue of pay parity in cricket. Harmanpreet Kaur had said that winning the World Cup was going to be the top priority, and Team India has managed to do that. And how? Take a look.
Ladies and gentlemen, what a proud moment it is to see these women standing tall here. I mean, this truly deserves a bigger round of applause to see them here. But Mr. Shah, I want to ask you, you know, it's a very significant move, the move towards gender parity. What was the thinking behind that? What made you want to get this done?
So honestly, I took over as a secretary of the board in 2019. So first, women player played their first ever ping ball test in Australia, and we nominated in Australia. And when I took over once again as a secretary of the board in 2022, there was no same match fees. So I just told my colleague that we can't allow discrimination. So entire board agrees to me, and we did pay parity for men and women. And after that, in next meeting, we launched successful WPL. So all agreed, and this is a result.
is absolutely the result. So let me come to the pioneers of cricket for women in India. Mithali, it's so good to have you back here at India Business Leader Awards. I want to understand from each one of you, and we've spoken about this previously as well, but do you believe that today we stand at an inflection point where it is no longer something that parents will consider as a possibility for their daughters to do, but there is a dramatic, visible change that's taken place?
Well, good evening, everybody. I think, as you rightly said, it's a revolutionary step by BCCI. Past 2 years, we've seen, a lot of changes for women's cricket. Big thanks to our leader, Jai Shah sir, and the rest in BCCI who've taken the initiative. And yes, women's cricket has come a long way from where we've started, and it's more a viable sport now, a lucrative offer for a lot of young girls who look up to these girls as role models. We get to see them on television putting up the best standard of women's cricket, and I'm sure there are many girls who want to sort of walk in their path.
Well, I'm sure many girls do want to walk down that path. Jhulan, aapse पूछना चाहूंगी, what is the message that you would like to send out to young girls who are watching each and every one of you today on this stage?
Well, good evening, everyone. I think WPL is going to be a game changer, definitely, because I have an academy in Kolkata, and every time young girls is coming, 2017, they want to play for India, and now they are saying they want to participate in a WPL. So this is a game changer moment, and we must celebrate this moment. And thanks to BCCI, Jai sir and Arun sir and everyone. And definitely in coming years, these girls will definitely participate in the World Cup, and hopefully they're going to do well in that platform also.
We have the ODI World Cup next year in India, so I want all of you to cheer for our national side.
So, Smriti, all set now to be the game changer, so to speak?
Well, firstly, good evening, everyone, and firstly, thank you for this award. And yeah, I think the times have changed for women's cricket, but we are the game changers. That's what people think. But I think all thanks to people who have played before us as well. I think that's a big one, because they kept women's cricket going and they kept it alive. And I think we are benefiting out of it. Definitely this generation. So we are all really thankful for the generations which have played before us. And definitely we'll try our best to be a good role model for people, for the girls, young girls, and hopefully all the young girls start picking up bat and ball and start playing cricket and have a dream to play for India more and WPL a little less.
Well, a little bird tells me that it's not just the bat that you're picking up, Jemima. I understand that you pick up the guitar pretty often as well. And we do have a little bit of a surprise for you. Can we have the guitar coming out? And Jemima playing for women and inspiring women here. And you've got all of your colleagues to accompany you. So we've got the guitar coming right out. And
if you all know the song, please join me. आशाएं खिले दिल की उम्मीदें हंसे दिल की अब मुश्किल नहीं कुछ भी.
Ladies and gentlemen, the fabulous Jemima, thank you so much. And I'm going to hop across to the two of you as well. Thank you so much for joining us here. What's the next milestone?
I think जैसे अभी जैमी ने बोला कि अब मुश्किल कुछ भी नहीं, बिकॉज जैसे हमें BCCI से और सबसे सपोर्ट मिल रही है. एंड ऑफ कोर्स नेक्स्ट जो हमारा टारगेट है वो वर्ल्ड कप ही है, क्योंकि जब भी हम कभी भी किसी भी टूर्नामेंट में जाते हैं वही एक मोटिव रहता है. और एवरी टाइम कमिंग टू क्लोज स्टिल टू फार. और आई थिंक द नेक्स्ट वर्ल्ड कप, जैसे मिताली दी ने बोला, अभी इंडिया में होने वाला है. वी वांट एवरीवन टू कम एंड वॉच अस, चीयर फॉर इंडियन टीम, एंड होपफुली ये जो वर्ल्ड कप होगा हम जीतेंगे.
That was Captain Harmanpreet Kaur in 2023 and delivering on that promise here in 2025 with the Women's Cricket World Cup now in India. We're joined by author, writer Joy Bhattacharya and K. Srinivas Rao, head of sports at the Times of India Group. Gentlemen, appreciate you joining us here on the program. Joy, to you first. I just had Mithali on, and Srini was there with us at the IBLA 2023 when we awarded the Indian women's cricket team as the game changer. So So it's really lovely to see what has transpired overnight. But Joy, to you, what makes this winning squad so special that they finally managed to cross the line?
Thanks so much, Shireen, for having me here. I think there's so many things. I think the first is we got close twice. 2005, 2017, and 2017, I remember, was particularly galling because we fell just 9 runs short. And I think the things that had made this tournament even more special is because I think social media in between 2017 and 2025 has changed dramatically. So I think it's a much more, there's much more awareness of the game, much more around the game. And therefore, the highs and the lows are being celebrated more. And what is, I think, most interesting about this tournament is that it had that roller coaster, it had that masala Hindi movie feel. I mean, we lose to Australia, we lose narrow games to Australia, to England, to South Africa. We have a must-win game against Australia, the greatest ever team in world cricket, men or women. This Australian women's cricket team is the greatest ever team in world cricket, and we beat them. So there's so much that has happened as a result of that roller coaster has made it even more special. And I think that's why this is such a big moment. In fact, my biggest fear was the semi-final was so emotional. It was such a roller coaster that you have to ask yourself that, there's still a final left. Will they hold their nerve? Because when you are up, you're going up and down, to come back, to come to a parity and then be able to play calm cricket in the final was very important. And I think they did amazingly. So this has been a really emotional journey, not just for these players, not just for women cricketers, but for everyone who celebrated their journey. And what a journey it's been.
And what a journey it has been. But Srini, just to take that point forward, as Joy was pointing out, there's been many ups and downs. It has literally been, in his words, a roller coaster. But for this team to come through in the manner in which they did, to stay together, and it was not just camaraderie that was very visible and very evident. They were rooting for each other. They were standing up and standing by each other. And I think that reflected in the eventual victory. Wouldn't you agree?
Of course, Shireen. First of all, thank you for having me here. And I was watching the video and I was just grinning ear to ear. What a moment that was at CNBC. And it's so delightful to kind of see what has happened. And when the match happened, when the final happened, when the girls broke down, those visuals, I think they sum up what had been missing from this cabinet for the longest time. And they were hungry for this. They were hungry for this. For the longest time, BCCI had gone, women's cricket had gone without the support that was actually required to a large extent from the administration. And I think in the last 4 or 5 years, the one thing that possibly changed where the needle.
Yeah, we'll come back to you. But Joy, the point that Srini is making, and that was what Mithali was talking about as well, that the support from the BCCI, from the administration, the WPL, each of these has played a significant contributing factor in achieving the result that we saw being delivered last night.
No, absolutely. Can I tell you a very interesting one? Because I'd interviewed Mithali many times. And between 2008 September, or August, September, and between 2014 September, do you know how many test matches Indian women's cricket played? Not a single match, not one match. Okay. I think Indian cricket, the men's team had played about 65, 70 test matches in that period. I mean, so the difference is that stark. Forget everything else, forget equality. The first thing you ask any women's cricketer, what do you want? They'll say more games. And I think that is the one thing that has happened over the last 4 or 5 years. They've got more games. They've got the WPL. Just the opportunity to play is so important. I mean, Mithali Raj got 6,000 ODI runs. She played for 18, 19 years to get that runs. And you look at Virat Kohli's career. It started in, his international career starts in 2011. I mean, 2011 to 2025, in that period, 2008 to 25, 17 years. Mithali's played from 99 till 2020, 21 odd years. So what we are saying is that the opportunities are so much more in men's cricket. The first thing that has changed in the last 4 or 5 years, lots more has to change, is just the number of matches they play, the number of opportunities they get to go to a cricket field and play.
No, absolutely. And Srini, just to take that point forward on what has changed, which has resulted in India being able to deliver this victory after coming so close a few times previously. Srini, when you look at this team, and each one of us has seen them, we've of course seen that brilliant knock by Jemima Rodrigues. We've talked about what Dipti's been able to do, how Shefali Verma pulled through when it was required the most. But, what would stand out for you in terms of what each of these individual players has brought collectively to this result?
Belief. I don't think anything goes beyond the single most important term, self-belief. These girls, again, going by the CNBC platform where they had come and where they had said that the most important thing that they're eyeing over the next 2 years is participation in the World Cup, which is going to be in India. In fact, Harman mentioned it on the CNBC platform that, I would request you all to come out and support us because this is what we want to do and this is what we want to achieve. And if I were to go back to Smriti's words from the IBLA Awards, where Smriti said that, support IPL, but support Indian cricket a little more, And I think that is where the sentiment flowed, that this was all about kind of, the pinnacle is about what you do for the country. And I think that hunger was there from where the self-belief began to kind of, fester. And see, the important bit is these girls, they were always mentally prepared for it. It's just that they had to kind of get into the rhythm to pull it off. If you look at the earlier match against England, Shireen, the way they lost it, chasing 289, that was such a disappointing moment early on in the tournament. And from there, I thought, are these girls in the right frame of mind from there to kind of do what they did to come and pull off that victory against Australia? Well, I mean, I don't have any words to describe that moment. I really don't have any words to describe the spirit that they came up with. I think it was spectacular. The last 4 days, I think, as I said earlier, this is India's 83 moment for women's cricket. And sky's the limit from where we can go from here.
Well, India's 83 moment, for the women's cricket team. Joy, would you agree? And more importantly, I was asking Mithali this as well. It's not just a seminal historic moment for Indian women's cricket, but I would think that this has actually changed something for women's cricket globally. Just the sheer number of people watching, tuning in. What will this mean now for the cricket ecosystem when we talk about women's cricket? Broadcast rights, sponsorships, all of the good stuff that the men are used to. What does this do now to change that, Joy?
I think it does two huge things. And Srini is absolutely right in saying it's not just about Indian women's cricket. It's about women's cricket, but also very largely, hugely, it's about women's sport in India. It's a breakthrough moment for women's sport in India because, see, we've had individual champions. We've had, we've had the Sainas and Sindhus of the world. We've had Vinesh Phogat. We've had Mirabai Chanu, but a team winning, the closest, I think, was the Indian women's hockey team during the Tokyo Olympics. And just before that, I think those are the kind of performances that bring a nation together. Because if you see this team, they're kids from Moga, from Siliguri, the girls are from all over, from Andhra Pradesh, small village in Andhra Pradesh, from Sangli, all over the place. And therefore, they represent not just Indian women's cricket, they represent India in its most beautiful form, in its most complete form, that, from a carpenter's daughter in Punjab to, a villager's thermal power station or employee's daughter in Andhra Pradesh. So many different kinds of people have come together to do it. So the journey is bigger because it's not an individual journey, and the journey is so much more emotional. And I have to keep saying that because we went up and down, had we steamrolled through, it wouldn't have had the same impact. So this, I was a part of the first IPL, and that first IPL needed 3-4 things. It needed Brendan's knock, and like that, there's a Jemima's knock. It needed a certain amount of drama, a certain amount of controversy. We've had drama, we've had controversy, we had people, just telling this team that this team is rubbish, they can't play, they're paid far too much. So you've had all that. Now, therefore, what has happened together is, with all that and the social media being so much larger than it was, say, 7-8 years back when India was last in a final, you've got a mega moment. And I think it's going to reflect in every which way. my biggest hope is that it reflects not just in, say, women's cricket, because a lot of those deals are already done across the globe, but I hope it reflects in women's sport in India, and more companies saying, you know what, there's a lot of support here for women's sport. It's something which is something viable that we can invest in, not just at the top level, but also at the grassroots level, because that's really going to make a difference.
I think that could perhaps be the game changer. Srini, would you agree that this could perhaps end up being the mega moment for women's sport outside of cricket in India? It will wake up the state administrations. It will wake up the grassroots movement to try and encourage, nurture talent across different sports, specifically when we talk about women.
Well, Srini, two things. First, I'd like to quote, the one thing that comes to mind is Baba Saheb Ambedkar when he says that I measure the progress of a community by the degree of progress which women have achieved. I think that underlines what happened over the last 24 hours and what this could mean. It's not supposed to be quantified, but to be experienced. And let me explain this, why I'm saying, until now, whatever was happening in women's cricket was very top-heavy, coming from BCCI. BCCI said, we're ready to support, we're ready to bring in the pay parity, we're ready to do the right things and see where Indian women can take us. And World Cup was that one hurdle that they had to cross. Having done that, today, I think we are perfectly poised going forward to start taking inspiration from this and building things at the grassroots level. I think the perspective going forward, as Mithali mentioned to you just a while back, I think the route forward will have to be about how we build on this and how we take it forward at the grassroots level. Can we sustain this over a period of time? Can we go on to kind of build on this? And then once we get those basics right, once we understand, take a leaf out of what 83 did to India. 83 took India to cricket, to every single home, to the last mile, to every nook and corner of this country. And in a country where every 200 meters the dialect changes, I keep saying this, that cricket is possibly the only constant. And in that, women coming and achieving this, you can think about what this can potentially do to women wanting to pick up any sport, every 200 kilometers around the country. And I think sky's the limit to what we can do from here. So I think from that standpoint, I don't know where.
It is a big moment, and you're absolutely right. It's a moment that can't be quantified. It truly has to be experienced. But, I was watching a clip on social media of Smriti talking about what her aspiration was. And she said, one day I would like to see women across this country play gully cricket just as the boys do. And I think that's the point that both Joy and you are making. So let me end by asking you your most memorable moment of this tournament. Joy, I'll start with you.
Look, it has to be, whatever you say, it has to be Jemmy's innings, because, from being a member of the Indian team to going out to coming back just before such an important moment, and the way she played, the way she held herself through everything, because this is Australia. Remember, Australia is not the best women's cricket team in the world. This Australian team is the best cricket team the world has ever seen, men's or women's. The record shows it out. To beat them after they scored so many runs is an incredible moment. And the emotion and drama that came along with it, very few things will rival that. Very few things I've seen in sport will ever rival that.
Srini, for you?
I totally agree with Joy. It has to be Jemmy getting those winning runs, looking at the crowd, taking a bow. And I tweeted exactly, I said, tonight, Jemmy, the guitar will play itself. For what you've done and what you've achieved. I think that song which he sang, Ashai, that keeps coming back to mind. What a brilliant moment. And to see it kind of turning a full cycle, I can't explain what kind of a feeling it is. It is absolutely fantastic. And yeah, it has to be the moment, Jemmy getting those runs.
Well, a magic was created on the field and off the field as well. And it is a victory that we will all remember, we will all cherish as a nation, not just for the history that was created by this women's cricket team, but for the seminal moment this is for women in this country. K. Srinivas now and Joy Bhattacharya, always a pleasure. Many, many thanks for joining us here on the CNBC-TV18 special. Appreciate your time. We are going to take a break. There's a lot more coming up. Don't go anywhere. We'll join you right back.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space.
7,300 crore rupee initial public offering witnessed a robust demand on the second day of bidding. Overall subscription is now nearly 2 times the shares on offer. This was led by retail portion, which was subscribed by over 3 times, followed by the portion reserved for the QIB, which was subscribed 1.64 times as of 4 p.m. today.
SEBI has approved Shiprocket's 2,400 crore rupee initial public offering. Sources tell CNBC-TV18 that the courier delivery firm's IPO will be equal parts of fresh issue and an offer for sale. Marquee investors Temasek, Zomato and InfoEdge will not sell their stake. The offer for sale will be made solely by early investors and the founders.
Brokerage firm Grow has received bids worth 50,000 crore rupees from large domestic mutual funds and foreign funds for its anchor book before the IPO opens tomorrow. Now, sources say the anchor book is estimated to be around 3,000 crore rupees and has been oversubscribed more than 15 times.
The 3,900 crore rupee the IPO comprises a fresh issuance of 2,080 crore rupees, down from 2,600 crore rupees in June. IPO size is cut, but growth plans stay intact, Pine Lab CEO tells CNBC-TV18.
Gaming and entertainment platform Zupi has acquired Australian AI startup New Canon. It strengthens Zupi's expansion into AI-powered interactive storytelling, extending its ecosystem beyond social gaming.
Well, those were the headlines, but the big news we're tracking today is Shiprocket's 2,400 crore rupee IPO, which has received Securities and Exchange Board of India's approval. Let's get to the details now. Shiprocket has received SEBI's approval for its 2,400 crore rupee IPO. The e-commerce enablement platform, which supports D2C brands and small sellers through its full-stack tech infrastructure, had confidentially filed in May this year and will update its draft prospectus soon. Around half of the issue will be a fresh capital raise. The company's emerging business that includes cross-border shipping, marketing technologies, and omnichannel logistics is growing. And to strengthen its leadership, sources tell me that Shiprocket plans to raise 2,400 crore rupees through its upcoming IPO, evenly split between a fresh issue and an offer for sale. Some of Shiprocket's larger backers, including Temasek, Zomato, and InfoEdge, are sitting out of the IPO and will not be parting with their stakes. The offer for sale will be made solely by early investors and the company's founders, who will be selling stakes partially. My source also tells me the company plans to invest the fresh capital in its emerging businesses, which now contribute to around 20% of the overall revenue. For fiscal 2025, the company reported a 24% increase in its operating revenue to 1,632 crore rupees. The Gurugram-based company also reduced its net loss to 74 crore rupees in FY25 from 595 crore rupees in the previous fiscal. Now, driven by revenue growth and lower exceptional expenses, the company attributed most of the losses to ESOP expenses of 91 crore rupees. Also on what's brewing, Bengaluru-based Optimo Capital has raised 150 crore rupees in Series A funding, led by its founder and MD Prashant Pitti, with backing from Bloom Ventures and Omnivore. The Fintech NBFC uses AI and digital land records to cut property loan approvals from weeks to hours and has already built a 350 crore rupee loan book across 56 cities. To talk about how property-backed lending could unlock India's biggest untapped assets, its land, joining me now is Prashant Pitti. Prashant, welcome back to Startup Street. You recently stepped down as managing director of Ease My Trip, saying you wanted to focus on mentoring startups, urban traffic solutions, and new ventures. Now, with Optimo Capital raising 150 crore rupees, you've made a bold pivot from travel tech to fintech lending. What gap, Prashant, did you see in the loan against property space that traditional lenders or even other fintechs weren't addressing?
Well, firstly, thank you for having me on the show. And of course, it's a big step. And, this big step was basically fueled by the data and conviction which I was able to build in the last 2 years of running Optimo Capital. See, any country's biggest asset is its land and property. For India, 53% of our land and property, our assets become land and property. However, in our country, the mortgage to GDP ratio is less than 9%, while for all other developed nations, it is above 50%, which means that we are not utilizing our biggest asset to grow our GDP. This statistics itself was enough for me to build the conviction on creating a digital journey for loan against property. Currently, most NBFCs and banks have digitized the unsecured business loan or personal loan journey. At Optimo, we are digitizing the journey of giving loan against property to businessmen.
Prashant, you've highlighted that nearly 75% of India's 4.8 crore small business owners lack a formal credit history, yet they own property that often sits idle as an asset. How is Optimo helping them unlock that wealth to fund business growth? If you could take us through your tech stack, how are you compressing approvals to just hours and disbursals under a week versus the traditional 4 to 6 week cycle?
We have picked up the right states to do it. The southern state, which is Karnataka, Tamil Nadu, Andhra Pradesh, Telangana, they have digitized their land record. Now, using those digital land records and building a proprietary AI-enabled technology on top of that, we are able to give in-principle sanction letter within hours of person applying. To be able to do that, we need to check what is the valuation of the property and also what is the title check of the property. Remaining all things, the civil check, account aggregator, and the other things were already built in. Now, using our AI tech and the massive database of digital land records, we were able to crack it. And now we are able to offer in-principle sanction letter in a matter of few hours to the customer.
Prashant, you've made borrowing as simple as sending a WhatsApp message. Tell us what kind of adoption are you seeing from smaller towns and first-time borrowers through that channel?
So we have started the channel, which is a WhatsApp number. I don't want to promote it right now. Rather than, I just say there's a WhatsApp number which is available on our website. People can just message on that number. There's a QR code which is available. We are basically promoting that QR code which people can just scan, and immediately after scan they will land to the WhatsApp page. And over WhatsApp they can just have a conversation with our chatbot. And in that conversation they are just sharing the information which we need. It's a 5-minute information. And just like you would give your address to Swiggy, Zomato, or Blinkit, quick commerce companies, you would just give us your address. And on the basis of your address and your information, we will verify whether you actually own that property and what is the worth of that property. And on the basis of that, we will give you in principle sanction letter in a matter of a few hours.
Okay. Now, Optimo Capital has built a 350 crore rupee loan book in 18 months, expanded to 56 cities, and has been profitable for over 15 months. Prashant, tell us what's driving this operational discipline and early profitability.
Well, most of the operational discipline is coming from my experience at Easemarket, which was also bootstrap profitable since the month one. Optimo is also profitable from second month onwards. It's been 15 months of consistently running profitable company. Most of it is coming from the technology which we have built in, which we are able to utilize, unlike any other banks or NBFCs, and also the discipline of running a very financial prudent company. Plus, the other thing which is happening is that the word of mouth is spreading very fast, where people are realizing that Optimo Capital is giving sanction letter much, much faster compared to any other, and which is why a lot of customers are coming by themselves.
Prashant, India's mortgage to GDP ratio is just 9% compared to over 50% in developed economies. That's a massive gap. In fact, the mid-ticket loan against property market is pegged at 22 lakh crore rupees, with only 28% being served today. So what's Optimo's roadmap to capture this wide space, especially as you move deeper into tier 3 and beyond?
What we have done is we have created a tech company, and that tech company owns the NBFC. So, of course, right now we are in the process of building our own book. But however, very shortly we will allow others to use our software, our AI system, and our database to basically offer loan against property for their customers. We would allow banks and NBFCs as well to use our system, because in order to meet this massive gap of 22 lakh crore, just one Optimo Capital will not be enough.
Absolutely. So one final question. If you were to look 3 years ahead, what's your vision for Optimo? Do you see this becoming the default way for India's MSMEs to borrow against property, and any growth targets that you can share with us?
If there is one NBFC space which is left, almost untouched at this moment, it is loan against property. It is done in a physical way for far too long. And Optimo is over here to redefine that. 3 years ahead, we would want to be known as the pioneers of doing digital loan against property. And I believe that in future, even the lien market and the mortgage will also become online. Once they become online, then this entire journey will truly be digital. where customer, while sitting at his home, can get a loan against his house without even moving an inch, and his house is already mortgaged to an NBFC or a bank. So that is what I am looking forward in the future.
Okay, on that note, it's time for me to wrap up our conversation. Prashant, many thanks for joining us on Startup Street and wish you the very best.
Venture debt firm Stride Ventures is stepping onto the global stage. The fund has raised $300 million from global institutional investors, including sovereign funds, banks, and asset managers, and is now eyeing a $600 million close across India, the GCC, and the UK. With over $1.6 billion committed to more than 200 companies so far, Stride is emerging as a key bridge for innovation capital, connecting Indian entrepreneurship with global funding and setting new benchmarks for governance, scale, and sustainability in venture lending. Joining me now to discuss this further is Apurva Sharma, the managing partner at Stride Ventures. Apurva, thank you so much for taking time out and being here with us on Startup Street. You know, Stride Ventures has raised an impressive $300 million from global institutional investors, right? What does this milestone mean for your vision of building a truly global innovation capital bridge from India?
Thank you so much for having us on this, series. We are very excited about this achievement because Stride Ventures had this vision of becoming global and, mostly the largest player in sponsor-backed credit globally. Because today, all sponsor-backed credit players are largely regional in nature, which essentially means that companies and startups which are scaling beyond borders, it becomes very difficult for them to kind of prove their credit worthiness across regions and raise money in different currencies. So Stride is that player that will become the largest global sponsor-backed player, sponsor-backed credit provider, and we'll be able to do cross-border, synergies in INR, US dollars, as well as sterling.
Sure, and you're targeting a $600 million close across India, the GCC, and the UK, right? How are these markets sort of complementing each other in Stride's global expansion strategy? And when do you hope to, close this?
Sure. So this is across 3 funds. We do expect to close it, by March, April of next year. In terms of closure for all these 3 funds in India, GCC, and in UK. The reason we've selected GCC is because the policy is very supportive. The economy is diversifying from oil economy. There's a lot of support and focus on really boosting financial services. Debt as an asset class has evolved beautifully in the last decade or so. And there are very few players who have entered that region. There's a lot that can be done, a lot of interesting structures. So we see it as a first mover advantage. And we see a very, very strong deal pipeline in GCC. In UK, we think that there is scope for players in the sub 15-20 million range. Of course, there are global private credit players that are operational in UK and Europe. But in the sub 15 million range, there is a gap. And there are not enough players backing that ticket size, which is also very key for any sponsor-backed credit player.
Sure. And Stride has already committed over $1.6 billion to over 200 companies, right? If you could take us through what kind of sectors or themes are showing the strongest demand for venture debt globally right now?
So this has a very regional nuance also to it. So in India, the biggest sector in terms of quantum of deployment for us has been consumer because of the inherent working capital need, capex, the fact that they have to hold inventory, there is offline presence, so that you have receivables from offline players, modern trade players, etc. So working capital is a very important use case for consumer companies. The second important sector for us is fintech or financial services because of FLDG requirements or onward lending, book building, etc. And the third important sector for us has been clean tech, essentially across OEMs, battery recycling, battery swapping, because of the capex-oriented nature of the industry. So these 3 sectors are the most prominent in India. In GCC, the most important the sector which has the maximum amount of credit requirement is fintech and financial services because it's evolving there in a big way. And there are multiple facets of fintech companies that are evolving in the GCC. UK, it's more, I would say, tech and enterprise SaaS kind of companies because of the nature of companies that thrive in these regions.
Sure. And how do you see your AUM shaping up over the next year? And what does that signal about investor appetite for private credit and venture debt out of India?
Sure. So, we expect the AUM to grow significantly now that we have funds in GCC and UK also. And from the UK fund, we will be able to do a little bit of Europe investing also. So we think it'll grow leaps and bounds from here on. Also, with respect to access to capital, the fact that the 300 million is largely from sovereign funds, asset managers, corporate treasuries, they have deep capital, and it essentially means that the future fundraisers can potentially be bigger, which will essentially result in a higher AUM. And we also see a lot of interplay in the UK, Europe, India corridor, as well as the GCC India corridor. We are already seeing a lot of Indian companies choosing GCC as a natural hub for organic extension.
Sure, and Stride is among the few Indian firms to also voluntarily align with the UN-supported principles for responsible investment, right? So how is this ECG commitment influencing your investment approach and governance model?
So essentially, we are trying to inculcate this in our portfolio companies with respect to what are the parameters that we want to monitor. And as a UN PRI signatory, there are lots of different parameters with respect to obviously, using renewable sources of electricity, with respect to nuance of measuring those parameters, because a lot of early stage companies don't really look at monitoring a lot of these parameters. But if you can train them and guide them to capturing some of the basic metrics, it helps you, be a responsible investor. And also it is a mandate now with a lot of global AMCs. When LPs look at you, when sovereign funds or, DFIs look at you, they will expect you to be a responsible investor.
Being a responsible investor. But, if you could quickly tell us, we're running out of time. From an India perspective, how do you see Stride's growing global network helping Indian entrepreneurs scale internationally? And what kind of companies are you looking at?
Sure. So in fact, we've already seen a lot of Indian companies, who are building from India for the world, right? Now, when they open a subsidiary in the GCC, UK, US, Europe, they will need access to capital in US dollars or sterling, etc., apart from INR, which is their base currency, where the holding company would be there, or say the expense center would be there. So it has helped us attract a lot of different kinds of deals, who are actually truly global in nature, and founders definitely prefer somebody who can help them grow, go cross-border, and also help them with relationship coverage globally,
Sure.
right? So we can connect them to VCs or private equity investors or banks in those respective regions.
All right, Apurva, thank you so much for taking time out and being here with us on Startup Street.
Thank you so much. Pleasure is all mine.
All right, up next, we're going to take a short break. But, coming up after that, fintech platform Salary has raised about $11.3 million in a Series A funding round. We'll put the founder on the hot seat when we return. Welcome back. You're watching Startup Street. Now, fintech platform Ancillary has raised $11.3 million in a Series A funding round that was led by Flourish Ventures along with others. The company plans to use these funds to further its target of reaching 100 million salaried employees in India for financial management solutions. Now, Ancillary claims its solutions, launched in partnership with top banks in India like HDFC and RBL Bank, have already seen traction among 100-plus multinational corporations, GCCs and Indian corporates so far. For more on the company's plans ahead with this new funding, joining me now is Piyush Bagaria, the co-founder at Ancillary. Piyush, welcome to Startup Street. Thanks for your time here. You've said Ancillary aims to empower 100 million salaried workers in India. Can you break down how this new round is going to tangibly move the needle on that target that you have?
Thank you so much for having me on the show. It's a great pleasure to join you. So Ancillary has now completed a funding round, our Series A round led by Flourish Venture and SIG, and our existing investors, Peak 15 and Praviga Ventures also participated in the round. We are on a mission to revolutionize the financial product experience for 100 million salaried users, like you said. Our core belief is that the salaried Indian is the backbone of the Indian economy, and they deserve better financial product, better control over their life, to handle day-to-day challenges of urban India. And, we will use this capital towards this, furthering this mission of ours. Our product, which was launched a couple of years back, has already seen good traction amongst, 100-plus multinational and Indian corporations. And we want to scale this base up to 1,000 corporates in the next 2 years.
Well, let me ask you, what makes your platform really any different from, what's traditionally out there in the market, traditional credit, BNPL players, in what is a very crowded fintech ecosystem? What really stands apart for you?
Sure. So Ancillary is a very differentiated business. Instead of, sort of taking the vanilla distribution approach, we reach the salaried customers by partnering with their employers. So it's a deeply integrated product wherein, the features are very different. Like, our core flagship product, credit on UPI product, is designed particularly keeping the salaried Indian in mind. Our view is it's the best sort of salaried focused product in the market today, and which is what is creating our appeal within the salaried class. Typically, if you look at any salaried Indian, especially working in sectors like IT or healthcare, and young Indian, they need products which are tailor-made for them, and this is where our specialty is.
All right. And, in terms of your plans to scale this and also how employees are responding to your model, I mean, is there some kind of ROI or retention benefits that these companies are already seeing thanks to, the kind of services Ancillary is providing?
Yes, absolutely. In fact, a lot of corporates position us as a benefit product for their employees. It has seen good traction, across different demographics. Like 70% of our users are young users between the age of 22 and 35. 35 to 40% of users on our platform are, young working women, which is a very interesting sector for us. So we're seeing good traction amongst multiple corporates. They see benefit from using Ancillary, and that's really the USP of our model, which is, the corporate, the employee, everyone is benefiting out of this differentiated model.
But in terms of product diversification, the kind of services you offer to these salaried employees, credit on UPI is something you're focusing on in a big way. But apart from that, are there new launches that that you've got lined up in the next year or so?
Yes, absolutely. So if you look at the overall financial services gamut, we are focused so far mostly on payments and credit. I think as we expand our core credit on UPI payment offerings, we will also focus on two key areas in a very big way. First, we are using artificial intelligence in a big way to, drive what we call as insights vertical, where we will give personal financial insights to the salaried Indian in a very curated and personalized manner, which is not there in India historically. Second, we will also build a lot of wealth and savings products, again, to create a complete gamut of solutions tailored for the salaried employee in India.
Okay, Piyush, let me ask you about your own financials and how those have panned out since you started, the kind of revenues you're generating, and what does profitability look like?
So we are in the scale-up phase. We now are operating at GMP of around 700 crores annually. So scaled up pretty fast.
Okay.
We're looking at, doing revenues of around $5 million in the next 12 months.
Okay, and the kind of AUM that you have currently and the targets for that going ahead?
So, we want to scale this, overall GMV on the platform from 700 crore to close to 10,000 crores in the next 1 to 2 years.
Okay. Okay, all right. Lastly, let me quickly ask you, as a fintech, on what you make of the regulatory environment. It has been tightening around some of the lenders, especially. How are you navigating this framework, and do you see it more of as a headwind or an enabler of sorts for a company like Salary, say?
For us, it has been a great enabler. I think NPCI, which is our primary regulator, has been one of the most forward-looking regulators, RBI and NPCI. Our core product is enabled by a technology which they built in a way. So we see great support from the ecosystem, from NPCI. They're very receptive to what the industry wants. I think globally also, if you compare, it's amongst one of the most forward-thinking regulators which is there.
All right, Piyush, we'll leave it at that. Thanks very much for your time here today. It was a pleasure speaking with you. Thank you.
Thank you so much.
The other big story from the startup world, OYO has rolled back its controversial 6,000:1 bonus share plan after backlash over perceived gains for Ritesh Agarwal and other promoters. Aishwarya Anand is here with all of those details. Aishwarya, take us through what you're picking up.
OYO's parent company Prism has announced a major change in its upcoming bonus plan, one that aims to be simpler and more inclusive for all shareholders. Prism says it will soon roll out a new and unified bonus structure that includes all shareholders, both equity and CCPS holders, regardless of how much stock they own. The move comes after feedback from investors as they called for transparency and equal participation. A Prism spokesperson said that the company is withdrawing its earlier resolution and will instead bring a fresh proposal for shareholder approval. Prism says this decision highlights its focus on governance, fairness, and long-term value creation. Previously, the company's bonus issue was linked to a potential IPO pathway for equity shareholders involving an opt-in process. This update follows Prism's recent decision to extend the opt-in deadline to November 9th and simplify participation terms. Back to you.
Thank you, Aishwarya, for those details. With that, it's a wrap from Ritu, Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
gentlemen, it's wonderful to be here as we mark the 21st edition of the India Business Leader Awards, one of the most coveted awards in India, something that we're particularly proud of at CNBC-TV18. And, thank you to Standard Chartered for partnering with us for all these years, for a greater part of the 2 decades to make the India Business Leader Awards happen. As part of the India Business Leader Awards, we've also been taking our conversations, our dialogue to different parts of the country. We call it the India Business Leaders Collective. And the idea really is to get all stakeholders on board to discuss what the roadmap for India should look like. You know, whether you call it Viksit Bharat, and there are all kinds of nomenclatures, but what we are asking leaders across the country to do is to deliberate and put forward their thoughts, their ideas, their priorities on what India needs to focus on to ensure that we can, in fact, achieve our true potential. We've just finished the India Business Leader Awards jury presentation. We had our esteemed jurors decide on who the winners will be. We will reveal those shortly. Not today, but you will see the awards being held in December, and so you'll have to wait a little bit. We'll keep the suspense going. But what we're going to now address is what the playbook for India should look like as we look at global dominance or achieving global dominance. And we've got a wide array of leaders here representing different sectors. So let's get straight to it. Arundhati Bhattacharya, 2025 has been the year of artificial intelligence. If you look at the kind of capex that big tech is putting into artificial intelligence, $500 billion. I mean, the mind boggles at the kind of numbers that these companies are talking about. In that context, then, what role, what relevance will India have as this global pecking order takes shape?
Well, one thing that India definitely has going for it is tech talent. We have very deep pool of tech talent amongst Indians, and the skill levels here are in no way less than whatever you can find in the rest of the world, okay? What we really need to go after, though, is to try to see how we can create a certain amount of technology here that is not as resource rich as what is being done maybe in the Western world. And this is entirely possible because in a matter of weeks, you saw where OpenAI and DeepSeek, the way it disrupted the whole story, it tells you that there are ways of getting the same things done, but not having to be, so resource intensive. There are ways of doing these things in a more frugal manner, and we need to look at what could be the models for enabling that. But having said that, I have to say that when artificial intelligence is concerned, there is always an element of fear. People are asking, should industries be worried? And there is one thing that I really want to tell industries, and that is, you should not be worried. You should be excited. Because artificial intelligence, by the way, is not something that's here now and will go tomorrow. It's here to stay. Now, it stays in what form and how it evolves is something that will come in the future. We don't know, but it is not going away, okay? So first and foremost, get excited about it, lean into it. Second, we have to understand that the way the developed world looks at artificial intelligence could be entirely different from the way we look at it. And the reason for that is, in the developed world, there is a lack of labor. So what they really need is maybe the robotic agents who actually can make up for that lost labor. In India, it's not a paucity of labor. We have enough people. What is it a paucity of? We don't have the ability to take the best of services to the last mile. You look at 1.4 billion people, you look at 600,000 villages, you look at 8 million SMEs. How is it possible for us to enable all of these numbers to really come up to potential if we don't use technology and we don't use AI? Preetha is from the healthcare industry, and she can tell you the kind of breakthroughs AI can do for individuals on an individual level is unimaginable if you try to do it in the brick and mortar way. So for countries like us, which are already has the kind of population that we have to look at using AI to enable our population to come up to potential. And therefore, being afraid of it is not going to help us. We need to really and truly internalize it to see how can we bring the best level of services right down to the last person and ensure that everybody has an equal platform and an equal chance to come up to their potential.
You know, that's an important point that you make, Arundhati Bhattacharya, that, you know, in India, the models will be very different on the use cases as far as artificial intelligence is concerned. And the hope is that it will bridge some of the access deficits that we know of. But, you know, you talked about the fact that you shouldn't be worried about AI, you should be excited. Let's talk about how companies are looking at India. OpenAI now offering ChatGPT free to the Indian market. Google, Gemini tying up with Jio, Perplexity tying up with Bharti Airtel. Clearly, big tech is excited about India, correct?
It is. And one of the reasons for that is because, you know, the more you use all of these things, by the way, you are creating data for them.
So it's the Indian data that they're excited about.
Absolutely. Because India is a great market to sell to. Where will you find 1.4 billion people that are willing to consume? You look at the internet penetration in this country. You look at the mobile penetration of this country. You look at the amount of goods that are bought on the offline or the online channels in this country. You look at the number of UPI transactions in this country. This is a great country of consumers. Everybody will want data on this country.
Well, yes, data clearly is the new currency, and which is what has got a lot of the big tech companies excited. Preetha Reddy, let's talk about the AI opportunity as far as healthcare is concerned, and whether India can in many ways take the lead on being able to converge the use of AI as far as the healthcare sector is concerned. And I know Apollo has its own intelligent brain and intelligence engine that you're hoping to leverage.
So the problem in India is that we don't have enough trained manpower. We've got a large consumer base, but not enough people to service that. So the obvious answer is to be able to use AI or technology to help us navigate a lot of work where we need human skill to do. So I think that's where we can probably give answers to the rest of the world. What we have created internally is what we call the Clinicians Intelligence Engine, which you were referring to. So what it has done up to now is about 260 pathways. So if somebody comes into emergency rooms and people are struggling with what to do, at least it will tell you, please move in this direction. And so when we have pathways within our healthcare systems, and it's not only us, I think the entire gamut of what is available, and especially in the public sector hospitals, they are growing in leaps and bounds. They're investing into technology. They're investing into AI. So these answers, I think, will help the rest of the world. There are already pilots happening with the NHS and Indian institutions, a little bit with us, about how can we use AI, because, there's a huge wait list. They're struggling with lack of capacity. So AI is going to give, it may be grown in India, it may be an answer to a lot of healthcare problems globally. And I think if we work really hard and not move away from the ethics of what it should do, we should be really coming up with a whole lot of answers.
So you believe that India could write the playbook as far as the use of AI is concerned, really to address the paucity of healthcare professionals, the backlogs that we're seeing in the developed world, not just in India, but in the developed world as well?
I totally believe we can do it.
Okay. Mr. Sethi, let me move a little bit away from AI and talk about the financial sector. And, the expectation is that what we've done in digital payments, where India clearly has led the way, is it time now for the physical sector to also lead the way? And I think the government is basically focused on the fact that size matters, and size will matter even more as we go forward. Do you believe that the next 10, 15 years, consolidation will be the necessary imperative going forward?
You're talking about consolidation of banks, I suppose.
Yes.
So the consolidation obviously had helped the public sector banks. There were 26 public sector banks, now reduced to 12. And some of the scale benefits the consolidation has given to them. And we must also remember that the scale is important to leverage what technology people are talking about. If you don't have the scale, the investment in technology is impaired. And the return on technology investments are difficult to realize. So from that angle, probably going forward, there would definitely be some consolidation. What is the timeline? We do not know. So, but it is also important that there are fairly large banks like SBI, which have been adopting technology in a big way. The scale can be handled only by adoption of digitalization. What Mrs. Bhattacharya mentioned about UPI, SBI alone does almost 24 crore transactions on the UPI every day. And you can't handle this kind of scale and volumes unless you are constantly innovating and investing in that. And from a limited perspective of such investment, maybe going forward, some consolidation is required.
Well, you talked about 26 down to 12, Mr. Sethi. And I know that a lot of people are asking, and I know the DFS secretary has said that we need to have Indian banks in the top 10 ranking as far as the global banking space is concerned. By when do you believe that's possible? And do you believe that SBI will take the lead yet again in playing consolidator?
Absolutely. I think if it is one particular bank from a public sector space, but there are private banks also, which I don't think government is talking that only public sector has to be there. Yeah. They're talking Indian banking system, at least a couple of banks to be globally in there. So there are two categories of, two categories when we talk about top global banks. One is by assets. I think SBI is eminently positioned to be going there. And the second is market capitalization. Couple of private banks are, having a good market capitalization, and SBI is one of them, which will join that club. So from that point of view, SBI is well poised to be in the top category.
Well, we wish you the very best of luck with that ambition. But Mr. Singh, let me address the issue with you in terms of taking the lead across some of these sectors that we spoke of, some of these spaces that we spoke of, digital payments being one of them. Gift City is the other aspiration that the Indian government has put forward on being able to create those linkages between India and the world. I know Standard Chartered is focusing on that as well. What would you see as the next steps? What are you most excited about?
So firstly, I think a very strong stamp of approval on the India financial system. So with a lot of investments coming in, with a lot of innovation happening in India, it is now incumbent on us to also take that overseas. So we are seeing this in, for example, what is happening with UPI. So we already have 7 or 8 countries with UPI live. We have about 8 lakh transactions that happen on UPI cross-border. There are 1.5 million merchants who are already onboarded on this international UPI angle. We are also seeing the internationalization of the rupee, which is again something that has been accelerated by establishing of Gift City. Gift City, by the way, is one of the few international financial centers, and India is lucky to have established one of these well in time. When you look at the other international financial centers, and you see what sets them apart. So what India has done here in the foreign currency settlement system, so as to not have to wait for the US to wake up, we have a 24/7 US dollar clearing, which is already active amongst the banks in the Gift City. The Gift City has a sandbox. Gift City has various innovations that are coming in, which is all going to be a big game changer for the way we see investments coming into our country.
India, let's address the issue of 2025 has also been a seminal year where India is now being branded the IPO factory of the world. What do you make of this trend that we're seeing? How sustainable is it likely to be? And what kind of value unlock does it bring to the table?
Well, from a law firm's perspective, I hope
It's
it
great
goes on
news for you.
forever. But I think that, a lot of us thought the frothiness would cool down, but it hasn't. In fact, you see listing after listing every week. And I think the attractiveness of India globally to all the FIIs and FPIs is both one, to see the energy with the young ones that are going to market, and the second is the lack of an alternative to such a large market. So if you feel that there is global disaffection to China compared to India as a comparison, then the only other market to really monetize and invest in would be this country. As Arundhati said, 1.4 billion people, there is a market there to be looked at. I think that it's not just IPOs, Shireen, it's even private equity. Private equity allocations have geared more towards India. South Asia funds have been hived off so that they don't have to have Indian deals compete with the global deals with their ICs. Yeah. And the hot sectors remain the same. Healthcare, life sciences, education to some extent, all these startups which say 1 minute, 2 minutes, whatever, and real estate, evergreen. So we have seen a very positive upsurge of activity when it comes to this year. How much tariffs and the global geopolitics will change, but I am quite confident we will dance as we have danced, effectively.
We'll dance as we have danced, and I certainly hope that's the case. But Rahul, coming to you, speaking of dancing, which are the sectors that you believe are poised to dance into the future when we talk about India being able to dominate globally? Where do you have the most confidence?
Yeah, I think India is seeing a very wide array. It's not, unlike many economies, it's not very narrow. If I can categorize sectors into 3 or 4 groups, the first group is the whole indigenization group. If you look at one of the biggest pushes of recent times have been to reduce our import dependence, and everything that comes in, whether it is semiconductor chips or is it any kind of capital goods or defense equipment, all of them are getting localized, and the whole intent is to build private sector and strong players in that space. So that's, I think, very poised to grow. The second piece is the manufacturing piece in the global context, which appears to have hit some headwinds with the American situation, but in reality, it has forced us to take up reforms with a second, round of rigor. And the FTAs that we are signing with different other parts of the world do open up wider opportunities. So it is our chance where for the first time in the world, all the corporates are looking at resilience over cost competitiveness. I think it's the first time that people are realizing the value of managing risks, managing diversification in their supply chain. India has to be a player. It's the only place where you have such strong talent base, such strong young working and manufacturing population. So that bodes well for us in the global context, as long as we continue to be cost competitive and R&D wise driven. And the third is anything that is based on the consumer base of India. I think 1.4 billion and growing, not just growing, but the income pyramid moving to the income diamond, which means people consume more and more as they get richer and affordability goes up. We are seeing everything from basic healthcare to accessories to education to consuming class, aspiration levels driving, urbanization driving. So that is anyway staple base case growth for the Indian economy. So that piece again is a big part of the puzzle. And fourth and last but not the least is everything tech in the future. With our talent base that is there, with the whole, and I think in some ways the whole H-1B visa thing might actually help us to retain some more talent in the country and create greater innovation, greater investment, which I think we've always done in the context of IT services and the whole GBS wave that you are seeing. But with the AI wave coming, it could create a new group of industries which could be great for us in the future.
Yes, yeah.
You know, Shireen, I think maybe this audience appreciates it, but I've always marveled at the fact as to how underpenetrated we are still for so much. Arundhati will tell you how underpenetrated we are for insurance, for example. We are the lowest energy consuming per unit country in the world. Our mutual funds are less than double digit. So while we are seeing this only take us to, we have to do nothing to achieve this growth.
So I so agree. 6.5%. People often ask us, when will India's GDP start to move to the orbit that China grew for the 20 years? I think for us, 6.5% is our, we have to do nothing to do 6.5%, because our consuming class will take it the 6.5%. The other pieces of energy transition, semiconductor, the export, international opportunity, indigenization, they are all on top. And if that plays out well, this could easily go to 8 or 9%. But I think we are one of the fewer bright spots in the world where you find a certain both risk profile in an acceptable zone, but also the base case growth, really attractive.
Well, the base case growth, as both Zia and you are pointing out, we can perhaps do 6.5% even on autopilot. But Arundhati Bhattacharya, we're talking about companies like NVIDIA crossing over to 5 trillion, and we're talking about the Indian economy at 4 trillion. So you've got companies that are bigger than most economies, even including some of the fastest growing economies like ours at this point in time. What will it take to get us from the 6.5% now to the 8.5%, 9%, 10% aspiration? If we do want to create the kind of penetration that all of these companies are hoping for, if we do want to go from the per capita of 2,500 to 5,000 and really become, middle income, so to speak, what will it take at this point in time?
So, that's exactly why I think AI is so exciting for us. What it takes initially is for us to be able to give our people the basic quality of services that they need. Education, healthcare, absolutely important. Look at the quality of education that we are able to deliver in even the tier 2, tier 3 cities. Unless we are able to improve that, how can we expect people to become more productive, more innovative, more, capable of holding businesses and actually ramping them up? So, starting from education to healthcare to making available to people the resources that they need, AI can play actually a very, very large part. And it can all happen pretty quickly. It's not something that's going to take years and years and ages and ages. And that's what's very exciting about India, the way we can exponentially grow. If you look at all of the online e-commerce companies today, the number of PIN codes that they're already serving. And I know, for instance, this is a home story, but still, the lady who looks after my house, she comes from a remote village in West Bengal. And I had never even thought that, a person in a remote village would be using a hairdryer. Just the other day, she sent a hairdryer home, and the address is above the high school, village so-and-so, district so-and-so, and it gets delivered. The name of the person and the only address is above the high school. Okay, so the fact of the matter is, this is the way that you are seeing unmet demand being met. There is so much of unmet demand in India that you cannot even imagine. And that is getting, released on account of the digital stack that the government has created, on the basis of which so much innovation is taking place. As you make this digital stack richer, if you look at ONDC, the biggest job it will do is to bring all of these mom and pop kirana shops onto the online medium. Now, when that happens, can you imagine the amount of consumption that will increase? And all of this has a knock-on effect. And that's why, actually 6.5%, you're very right. You do nothing, it will still happen. 9.5% also, I believe you don't have to do much as you formalize the economy. Because just the formalization of the economy is going to add to it. Okay? Today, so much happens in cash which is still not formal. The more you can formalize the economy, the more this will come about. Going double digits, yes, that's where it will need more of infrastructure, more of ease of doing business. Many more of these things need to come in. But whether it's doable or not in a country like India, eminently doable.
Can I add 3 or 4 points which are very specific? Firstly, you talked about NVIDIA. For that to happen, we need more large companies and corporates to think at scale, vision at scale. I think it has been an area where we have lagged in very few industries. We have global dominators, right? And with our kind of tech base, with our kind of skill set that we have, we need our biggest, we had the entrepreneur event today, we need people to envision at scale, think, can we be number 1, number 2, number 3 in the world? And that requires a mindset shift. Second, I think we need the whole MSME space to come up. We cannot grow with only large companies because the whole, if you go back to the auto industry, which is one industry which has done well, it is not Maruti alone that drove the growth. It is a full ecosystem. And we need the MSME to grow, and we require a holistic set of actions to happen, both from financing to skilling to manpower, etc. Third, we need to get our 50% rural agricultural population more productively utilized. They are, today the value of skilling is not being felt. We have a dichotomy where on one hand, most companies will say, like you said, there is not enough skilled manpower. On the other hand, we have a lot of people unemployed or sitting in villages doing nothing and twiddling their thumbs because it's just more convenient. So how can we have that kind of a dichotomy? And the answer lies in skilling and getting them out of villages to urban centers to work and create that attractive proposition, which again needs to happen. So in my view, and the last is catching the wave early, right? We've caught this time the semiconductor wave, the energy transition wave, right? If you look at where China went ahead, 20 years back, we talked about the rare earth, we talked about EVs. They caught that wave ahead and invested when the sectors were not mature. So for the first time, I'm seeing we are taking lead in newer spaces, and that requires innovation. And if you look at the R&D spend of India, it is 0.4% of GDP. You contrast that to Korea, it is 6% of GDP, right? So more companies need to invest in innovation to really drive. So those are some of the points I have.
Has there been a mindset change? Does Apollo want to globally dominate? Preeta, of course, you already dominate in India, but has there been a mindset change on wanting to be a global dominator?
I think everybody wants to be a global dominator. It depends on which part of what you're doing. And I think skilling, India is really poised to heal the world with the kind of manpower we have and the capabilities and a large English-speaking population. If we really get it right, we will be able to send skilled workforce not only for our country, but we can do it for the rest of the world. So there is an aspect of world domination there. Can we be the back office for a lot of what is happening in the healthcare space? It's already beginning to happen. So I think we'll end up just doing more and more of it. Can we deliver healthcare at the point of care? Then again, that depends on global policies. It's going to evolve with time, so I'm not even going there. But world dominance in our space, in the healthcare space, if you take any great hospital in the US, so many of them are of Indian origin, who've gone to colleges here and who've graduated from here. So in a way, we are doing it. But as a group, as a company, can we do it? I think in a different way, not exactly in being able to, run hospitals or deliver healthcare, but I think we can do it for labor, we can do it for back office, we can do it with, the right way of usage of drugs, for intelligence, in different ways, yes.
growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value.
Hello and welcome to CNBC-TV18 Conversations. Our conversation today is with an iconic banker who is in the thick of the global economy and the financial markets, who will perhaps have all the answers that Indian financial investors are seeking. My guest is Vis Raghavan, the Executive Vice Chairman and Head of Banking at Citigroup. Mr. Raghavan, thank you very much indeed for joining us.
No, thanks for hosting me.
Well, I want to ask you about a lot of things about Matunga. You come from Matunga, where I come from, but we'll keep that conversation for later in in this chat. Let me start with what our viewers really want to know, the growth story. I mean, you must be talking to the largest number of bankers since you head banking at Citigroup. Are you getting a sense that the corporates are willing to invest? Is the growth story intact in the US and in, the global economy in general?
Absolutely. I think, you clearly, we will not go, there's a whole AI-fueled, AI-powered boom that is, absolutely omnipresent. You can feel it everywhere, and almost you get the sense that if you're not part of that entire AI regeneration, you're going to get left behind. And that is very, very real. It's palatable. And everyone is investing, everyone is focused on it.
Okay, 1 minute.
Yeah.
That part of the growth everyone is buying in.
Absolutely.
I'm asking you, outside the AI part, when you talk to corporates, what's the sense?
So look, I think there too, you are seeing growth across the board. And if you look at, that growth engine, technology, I'm not talking AI, technology is very much at the heart of it. So if you look at a major industrial in the US, they're looking at acquisitions in the tech adjacencies. So software, so if you take a real diehard, core industrial company, they will look at the tech adjacencies. If you take retailers, it's e-tail. So if you look at the autos, it is kind of, autonomous driving, driverless cars, it's really a tech nexus there. Same with healthcare. So I think a tech undercurrent is very much at the heart of, the growth, but there is growth everywhere.
Okay.
The biggest wild card is M&A. So with valuations where they are, if you're not growing organically, then it is acquisitions. And that is really a big part of the growth theme.
Okay. No, I'm persisting on the growth story simply because when this tariff issues cropped up, there was a sense of uncertainty in the world.
Yeah.
And there was a lot of fear that global growth will slow down. You're not seeing signs of that. I mean, give me US and global separately if you wish.
I think US, what you're seeing is 20%, maybe even up to 25%. You're seeing tariffs generally are being absorbed in most cases, in some cases passed through. The inflationary impacts of those remain to be seen. Okay. But right now, you're keeping a lid on it, and most companies are assimilating the tariff impacts. If it is beyond that, then the question is, you have to rejig your trade channels. You look at your supply chains, and then say, okay, what do I do? Do I friendshore, nearshore, onshore, offshore? How do I, play with the mix so that I'm still competitive and I can keep doing whatever I used to do? But what you're seeing is there is an element now prevailing that, in most cases, sanity will prevail. There is kind of a base tariff that will stick. But beyond that, reason will prevail. There's a deal to be done. There'll be negotiations, and you'll land somewhere which is acceptable.
Actually, in the past 2 weeks, there have been a series of deals,
that,
especially in the ASEAN countries. The president has also tweeted that something is coming with India. So it clearly looks like the ruffled feathers are getting softened at the moment. But let me come to financial markets itself. What have you made of this rally in gold? You think it continues?
I think multiple drivers there, and it's a bit complicated. I think clearly gold benefits at times of tumult when there is uncertainty. You flock to that asset, and there's an element of that. The other point which is relevant here is clearly there's a lot of government debt, Western government debt, that needs to be rolled, refinanced. You take it. I mean, 30 trillion plus in the United States. There's France, there is the UK.
Yes.
And a lot of that debt will come up for redemption, rolling over, refinancing and the like. And a key kind of factor there is not all the traditional buyers of this paper are natural buyers of this paper in the same magnitude going forward, because of geopolitical tensions, because of different stances. So I don't think it's been I've not seen any kind of calculation, but it's not entirely, just a coincidence that, you have gold at $4,000, $4,000 at a time when, you have got, government debt also kind of piling up. So the question is there any kind of rebalancing that's happening within those portfolios?
So gold's higher, this big run, this 50% rise in the past year is likely to remain that way. You don't see it getting corrected.
I don't see any catalyst that kind of, drives that. Bar some, very stable world where all the conflicts get resolved and,
which doesn't look anytime
and everyone
soon.
is in a happy place and, and we go about, holding hands and.
Let me couch the question in the context in which you've come now. We just saw NBD buy 60% stake in an Indian bank, RBL, and then we saw before that SMBC buy about a 24% stake in Yes Bank. So foreign bank interest, not just private equity, which is of course Blackstone is buying. Foreign bank interest has increased. Can you just explain, would Citi be doing more? What explains this interest?
So I think this is a pivotal moment because just like in 91, 92 was a pivotal moment for the equity markets. I think this is a pivotal moment for FDI liquidity flows into India. So I think, really kudos to RBI and, really I think the whole kind of regulatory framework for enabling this to happen because this will be a watershed moment for liquidity flows, just like the gates were open for equities, a few decades ago.
Yes.
So I think you will mean more liquidity flows. I mean, yes, you talked a few about the bank investments and the like, but I would say this is auspicious for broad liquidity in general. And this is good for corporates. This is good for inward investment.
Absolutely.
And this has come at the right time and really hats off to.
Yeah, we could do with more banking capital.
Absolutely.
If this growth story rolls the way it is, which is going to be my next question. I mean, I know you're looking more at deals and banking rather than, FPI flows, portfolio flows.
Yeah.
But actually, lately the flows have been attracted to. China and some of the ASEAN countries.
Yeah.
Do you see the reversal?
Absolutely. I think it's a no-brainer. I mean, if you look at there are pockets, when you look at the big pockets of investment, America rules right now. I mean, this is where...
Outsized.
It's outsized. I mean, nearly, close to 70% of the world's capitalization is in the United States. I mean, U.S. corporations, take 40-50% of the world's profits are generated by U.S. corporates. The pools of liquidity, whether it is in public markets, private credit, private equity, public credit, all the walls and pools of liquidity are there. And the point is, if you wanted to invest, where do you go? So I think Europe is kind of, soul searching a bit. The UK has its own kind of nuanced post-Brexit kind of problems and issues that it is navigating. France, you've seen the story. Germany is kind of rediscovering its kind of industrial, strengths and the industrial framework. So I think Europe is kind of, right now, it needs to refocus and rejuvenate. China, you cannot ignore. I mean, it is an incredible economic power. We will figure out how to navigate China better and better. And right now, I think most folks are figuring out how to navigate it in the current, even more so in the current tariff framework. And then where else do you go? It's India. So there is an inevitability to India ruling the waves, its relevance, massive consumption economy. When you got 1.4 odd billion people, whatever we can produce, we can consume, within this country. And also most folks are actually going up the consumption curve.
Yes.
So disposable incomes are going up, and quality of life is increasing and improving. So I think you cannot ignore.
So the portfolio flows will come.
The portfolio flows will come, and there has been the market has had an incredible run.
Yes.
Retail interest has been super strong. I don't have a view where how much leverage sits in that portfolio, in that framework. But clearly, retail have been big buyers, herein. So I think India, medium, long term, you simply cannot ignore. And you can see the other region which is absolutely blossoming is the Middle East. I mean, Saudi, I think they are just fresh on the back of FII. I think incredible momentum and a real kind of a energy in that market. And likewise, UAE is kind of is booming, and also benefiting from a lot of money flows outside of coming from Europe and the UK, where within our wealth management business, within our kind of private bank, etc., we've seen a lot of money flows, out of the UK, flock to the Middle East.
Okay, that's important. Well, speaking of buoyant financial markets, how much would you worry about something like this? First Brands or Tricolor or generally private credit in general? They had an exuberant run. This is a market which you should be looking at very closely. Are you worried about anything?
I won't make any reference to any insects and stuff like that in this discussion. But I mean, look, I think in all of this, there is a lessons learned exercise as to could this happen at Citi? What went wrong? And every institution kind of on the back of every one of these events, looks through their portfolio, runs the kind of the cleanse and makes sure that, are we robust? Are we buttressed? And is this kind of going to be? So I think a lot of that, Citi, we have done at Citi, and we made sure that, our defenses are intact.
But it's a minor.
It is.
Hiccup, or is it a big problem?
There's fraud here, and at the end of the day, my view on fraud is somebody's going to rob your house. They're going to rob your house, and all you can do is put all the defenses and the bells and whistles and the controls around to make sure it doesn't happen. But there's elements of fraud, from what I understand, in these instances. Are these? Is there kind of a ripple effect of any form? Yes, there are a few lights kind of, flashing.
But not a big domino.
But there's not a big domino, and all you got to do is you'd be very remiss to not kind of take this and make sure that you are, running your sanity checks and making sure.
Okay, fair point. We have to take a quick commercial break, but I'm back with more questions on the financial markets. Our viewers will be dying to hear a lot more about the Fed in particular. Back in a minute. Welcome back to this CNBC-TV18 Conversations. My very special guest is Vis Raghavan, the Executive Vice Chairman of Citigroup. We've been speaking about the global growth story, and Mr. Raghavan has been very positive on the global growth environment in general. But let me come to the financial markets yet again. You don't see this AI boom tripping markets. Is it like overdone to such a point, like we saw, at the turn of the century with the dot-com stocks? You don't see anything like that it can.
I mean, famous last words. If I had a crystal ball, what is incredible is look at the dot-com boom. If you look at the whole internet revolution, and it started 97 or thereabouts, it really got hold. You saw frenzy. Any company with a dot-com could go get an IPO done, and then you saw a bit of a correction, and then look at where the 2 decades of prosperity, e-commerce, was invented just then, and it is now, it's mainstream.
Yes.
You do not, most of us, that is our, our consumption channel.
Our way of life.
Our way of life. So I think AI will do something similar. It'll be seismic in the impact it has, and it'll be incredibly accelerated. So this will be, you know, it took us 2 decades. This will be much more compacted, and new leaders, new champions, new heroes will emerge, and certain legacy models will get crushed. I mean, so there's a natural. It's a bit Darwinian in a sense, and there's a natural evolution that comes on the back of that.
Fair enough. So the concept will survive, but the fittest will survive.
But exactly, and the point is, within that, fasten your seatbelts. There'll be rally correction. There'll be a lot of volatility. You know, it'll get overdone in some cases, and it'll get oversold in some cases. And when it gets oversold, there's a whole bunch that are waiting to pile in, and then, you know, and life goes on. So I think we get too kind of besotted by kind of the, you know, the short term, and the, you know, it's too myopic to kind of just say, you know, is this overdone? Is this gonna, the revolution is absolutely here, and within that, you know, it's a roller coaster. I think it'll have its moments, and you got to approach it eyes wide open. The one thing, as I said, I do think though that, unlike the whole, you know, internet era or the kind of, you know, pre-dot-com era, I do think that the early winners will also feature. Many of the early winners will also feature as late-stage winners.
Oh,
whereas you remember with that, you remember
with the dot-com, that was not the case.
AOL and Netscape and all of that, and then you had some real champions come through, you know, after. But here, I think the investors and the companies that are really kind of leading us into this revolution have the wherewithal, the financial wherewithal, and the economic might to really invest and kind of, you know, see through this journey.
You know, it's difficult to see a world in our own lifetime without the Magnificent Seven. I mean, they're too solid to be wished to be.
And does the mix change? You know, there'll be somebody more magnificent that, you know, that comes, and someone who loses and falls by the wayside. I think that's inevitable. That's kind of a fact of life. So.
Absolutely. Okay, let me come to perhaps one of your older favorites, debt markets and Fed. What are you expecting? Do you think the Fed is going to continue? I think the broad market expectation, if you go by CME Fed Watch, is another 100 basis. Do you think that's coming, or do you think inflation is going to be? I mean, it's 3% inflation.
Look, 100 basis points everyone is pricing that in. I think that is widely anticipated. The inflationary aspects are unknown. You are seeing energy prices, oil at about $60 or thereabouts, is almost kind of a damping mechanism around kind of inflation and the like. And then you have, within the mix, you have things around productivity, efficiency gains, and all
the tariff-led inflation that everyone is worrying about.
We don't know that. We don't know what the unintended consequences of that are. And then the question is, what happens to employment, and what happens to consumption? Because I think that is the wild card. And generally, if the macro environment is uncertain, you tighten your fasten your belt, and then you consume less. And so I think that equilibrium will be attained. Mm-hmm. But you're still looking at, even if it is a 3-handle yield curve, that's a healthy yield curve. And what you will see on the back of that is a much more robust M&A environment, because financing becomes more attractive.
Yes.
Your cost of capital becomes more attractive. And then with equity valuations where they are, boards today have to justify their share price. Yeah. So if your share price is near lifetime highs, near historic highs, is fully valued, fairly valued, whatever you want to call it, with that comes responsibility. So the question is, where is the growth? And
therefore more deals.
More deals. Because if it's not coming organically, I better go buy my growth. Because if there's no growth, investors work with their feet, and they punish you for not delivering on that lofty share price you have. So you have a very deal conducive environment, especially with a getting more benign yield curve. And then on top of that, you have the whole macro around tariffs, supply chains. Do I have to make in America? Do I have to buy in America? And the ultimate kind of, fuel for the deal environment is the firepower of private equity. Private capital, whether it's private, there's about $2.5 trillion plus of dry powder, which they're paid to deploy.
Yes.
I mean, that's their job, is you got to go spend the money. So then with the yield curve, your spending becomes a bit easier, better. So there is a very healthy underpinning of, if valuations come down, there is buyer interest. Whether
golden period for deal makers.
I hope so, but the key is a relative certain backdrop, because uncertainty is the worst, and it's a deal killer. Because boards will say, we don't have to do anything now, let it pass, let's wait. And that let's wait is dangerous from a deal making point of view. Okay. So I think you are in an environment where the macro, the micro, the share prices, the yield curve, the amount of liquidity there is in the market, all kind of is pointing to, at least in the United States, a very healthy kind of dealer environment. Okay. Then one other last point I'd make there is the relative valuations. So you have, pockets of Europe, et cetera, where you have fantastic companies that are undervalued. And there was a big move, last year and beyond, where they were looking at redomiciling, listing in the United States and the like. And they suddenly look very attractive when you have the currency to say, hang on, you got some very nice houses in bad neighborhoods
yes.
that you can go and prey on. So, and I think even for Indian corporates, the time is fertile to really kind of, if you wanted to, really kind of, spearhead your growth agenda and have a global kind of growth agenda. I think it's a fantastic time.
No, actually, the Indian government, the Reserve Bank has liberalized foreign loan rules.
Yeah.
And now we can take, Indian corporates can take foreign loans for M&A, which they couldn't earlier. And they can use even Indian bank loans
to
fund acquisition. So,
which is important, because that means deals of size are eminently doable, eminently financeable, and the valuations are very attractive for if you want to prey on an overseas corporate.
Okay, I believe I'm running out of time, but I have to ask you the stable coins and crypto coins questions. With the Genius Act coming in, stable coins is a reality. Well, crypto also may come because there is the Genius Act also coming. Would you worry that you're lending against something which you're not sure?
I think the question is, lending against any asset is a function of the liquidity of the underlying asset.
No, but this one has been more volatile.
It's got more volatile, but then the question is, what is the collateral? What are the collar levels for the margin calls and the like? So I think there's a price for everything.
Yes.
Just kind of. So it is so long as you're risk managing it appropriately, you should be.
Now one hopes the world will figure it out.
And the question also is, increasingly, folks are going to provide custody against these digital assets and the like, and then it's a payment. It's more of a payment mechanism. Yes. So you cannot ignore this. This will slowly become mainstream.
Oh, okay. We have to be prepared for that, and I think India is preparing for that. Well, it was a pleasure having you here. Since we both belong to the same suburb in Mumbai, have you done are you doing the usual rounds in Matunga? What are your favorite spots?
So I have my dosa fix on my way back to the airport. I go to Ramanayak, the Udupi place, okay. and I it's a free commercial for Sai, who owns it. He went to school with me, so it's kind of so it's kind of it's a fantastic community. So I usually haunt the same places, and it's really fantastic to see they're all still standing there.
Yes, Ramanayak has not changed. Concern's coffee has not changed.
No, exactly. And then I kind of it's the Hanuman temple near Don Bosco, where I have to go, and then the Ganesh temple near Matunga station on the way to Ray College. So it's kind of it's the same drill, and all of my friends are still kind of, in different guises still there or about.
So good to hear that. Those are my favorite places too. Thank you very much, Mr. Raghavan, for joining us and taking us on a global tour as well as the Matunga tour.
No, thanks for hosting me. It's been a pleasure.
Well, that's it on this edition of CNBC-TV18 Conversations. I'm sure you enjoyed it as much as I did talking to Mr. Raghavan.
But the much-awaited Lenskart IPO opens for subscription later this week. Remember, the company is seeking a post-money valuation of almost $8 billion and 7,300 crores worth an IPO size as well. We have with us the CEO or the founder, Piyush Bansal, and the CFO of the company joining in as well. Gentlemen, thank you so much. It is a fairly momentous occasion in the journey of the company. And to be very honest, it's a brand that needs no introduction. Everyone in India, the nooks and crannies, do know about Lenskart. And at the same time, if I look at your revenues, 18% comes in from sub 2,000 rupees a pair and 18% above 10,000 rupees a pair. That tells you that it's been accepted as widely across the price range. And the only other brand that comes to one's mind is Decathlon, which has cut across this price value positioning equation. So congratulations on creating that business. More importantly, let's talk about the growth from here on, because what has happened so far is great. Now you're entering the world of capital markets. Now every quarter people will be asking you tougher questions. So the growth that you guys have been, reporting over the last 3 years on a compounded basis, do you think that sustains, or can you grow faster than that?
See, I think overall, if we look at eyewear as a problem, or eyewear as a...
Shireen Bhan, the other headlines that we're tracking for you this evening. The Sensex and the Nifty end with marginal gains, but the Midcap index hits a 52-week high. The rupee hits a record low against the US dollar. Dealers say the rupee is not slipping further only because of the RBI's intervention. The Supreme Court clarifies on last week's Vodafone Idea order, says the government is free to consider relief on the overall AGR dues. The Apex Court last week had permitted the government to consider relief on additional AGR dues. The cash-strapped Vodafone Idea currently owes total AGR dues worth 83,500 crores. The stock sees its biggest single-day gain in the last 18 months. Car sales hit a record high in October after the GST cut. Sales of Maruti, M&M and Tata Motors surge, even as Hyundai underperforms. Two-wheeler sales and tractor sales meet estimates. Days after his ouster from the board of Tata Trust, Mehli Mistry says the stage is set for a legal battle, files a caveat with the Maharashtra Charity Commissioner seeking a hearing before any change in trustees at the Tata Trust. Japan's Mitsubishi Financial Group is set to be in advanced talks to buy 20% stake in Shriram Finance. Money Control reports the deal could be worth around $4 billion. Shriram Finance Management tells CNBC-TV18 multiple discussions are underway. No proposal is before the board yet. Airtel beats estimates in the second quarter. Average revenue per user grows by over 2% to 256 rupees a month. Subscriber addition in line with estimates. Online trading platform grows. Anchor book of 3,000 crore rupees receives bid worth 50,000 crore. Sources say marquee mutual funds and global investors like Norway's pension fund, Abu Dhabi Investment, Sequoia and others have bid. The Enforcement Directorate provisionally attaches over 40 properties linked to entities of the Anil Ambani-run Reliance Group in connection with the loan fraud case. The properties worth 3,000 crore rupees include Anil Ambani's family residence at Pali Hill. US President Trump's approval ratings decline ahead of key elections in New York, New Jersey and Virginia tomorrow. US government shutdown enters day 34. The US Supreme Court will hear a case against Trump's tariffs on Wednesday. Political parties pull out all stops ahead of the first phase of the Bihar elections. Prime Minister Modi, Home Minister Amit Shah and top BJP leaders hold rallies. 121 assembly constituencies across 18 districts will head to the polls this Thursday.
The Indian women's cricket team with their very first ICC Women's Cricket World Cup trophy.
The Indian women's cricket team are the champions of the world after losing two finals. Harmanpreet Kaur's team beat South Africa and emerges third time lucky. Well, we'll get to the cricketing action in just a bit, but the market action to start with. The Large Street managed to end higher, but the large caps underperformed today, and that continued with the Sensex and the Nifty closing the day flat. The Midcap index higher by about 460 odd points, and the Nifty Bank was up by about 300 points or so, hitting a 52-week high. Nifty Bank is also outperforming the blue chips today. But let's talk about the rupee. Fell back to its all-time low of 88.80 against the dollar. This is higher crude oil prices and outflows of foreign capital weighed on the Indian currency. But a late intervention by the Reserve Bank managed to stem the fall. Lata standing by now with the money market wrap. Lata, what's weighing on the rupee?
Well, it's not a big fall from the Friday levels of about 88.78, but the rupee throughout the day was flirting with the all-time low of 88.79 and even crossed over to 88.80 per dollar. What makes it significant is that in the past week, that is on October 27th, it had touched a high of 87.75, largely because of the Reserve Bank's huge dollar supplies. The reason for the fall today is, the usual. We have seen consistent FII selling equities and buying dollars and taking it back. Likewise, importers' month-end demand for dollars. Corporates as well wanting to buy dollars because it's not showing any signs of becoming cheaper. Exporters who had earlier sold the dollars are now buying back. So just about everyone is turning dollar bullish. The Reserve Bank, when it had taken the dollar all the way to 87.75 on October 27th, the market apparently was in the mood that maybe the Reserve Bank knows something about dollar flows or trade deals or something, which is why it was supplying dollars with such force. And therefore, a lot of people had gone out of their short dollar positions, had gone out of their long dollar positions, and had become even short dollar. So now there is a frenzy of buying dollars globally as well. The dollar has become stronger. The DXY has moved up from about 96 and change levels 2 weeks ago. It has come almost to 100 levels, 99.